Hello, boys and girls. Welcome to BCCA. I'm Manideep. I'm a chartered accountant and cost accountant. So, welcome to the IDT Marathon exclusively for CMA final. Why I'm saying exclusively CMA panel? Because in this marathon, the problems I discussed, the areas I focused, the considering the trends of the exam papers, so it is specifically coined for you guys, the CMA finalists. This is one Brahmastra which you could rely for your CMA final preparation. Okay, now let us see what are the contents I discussed in this marathon. Coming to the contents, the first one is introduction to GST, supply chapter I discussed, exemptions, place of supply, value of supply, ITC, refunds, assessment and audit, demand and recovery, appeals and revision, advanced ruling, anti-profiteering. So you could see there are two sets here. The first set is quite important as we all know, and sir, where APK chapter, it's not like I'm covering only few topics and leaving the others. I covered all the topics from the chapter. And coming to the other set, generally the second set, many students will neglect those chapters and will not prepare perfectly for those chapters. That's why I picked here. So these chapters are very easy comparatively to the earlier chapters or to the first set of chapters, and the questions which they are going to ask are also having some kind of trend. Okay, so we could rely on these chapters very much, so that's why I discussed them very well, perfectly in a crisp manner. You will understand it very well. Next, coming to the highlights of this marathon, there are n number of marathons available. Why BCCA? Why Manideep Sir's IDT? Because the first reason is like, sir, in every chapter I given the areas of focus. 3 to 4 areas I picked what are the areas to be focused. With this picking, you can able to revise the important topics effectively on the day before exam. Okay, it doesn't mean I covered only the areas of focus. I covered all the topics and still I'm mentioning the areas of focus for you to have an effective preparation. Second one, sir, I even solved practical questions. Okay, in many marathons, you see, practical questions were not going to be solved. So, to give you a holistic approach, to understand the concept much more better, and to know which problems are of more importance, I even discussed the practical questions, at least 2 questions. Sir, you may see like for introduction and supply chapter, I may not discuss many questions. For supply, I discuss only 1 or 2 questions. Why? Because those chapters are more on theory. But when you go further, I discuss so many workbook questions and problematic questions which are going to be really helpful to you guys. Okay, and I explained it through my handwritten notes and through my primer and applicator books. Sir, primer is the concept book and applicator is my workbook. From that books I discuss, sir. Okay, and the material also very well coined for you. Next, what I want from you is from wherever you're watching, either from Mars or from Jupiter or from some other galaxy, just put a comment from where you are listening. Okay, we'll see how far this marathon goes. Now, if you like the marathon, I know you're definitely going to like the marathon because I put so much effort, sir. I took so many days for recording. I just didn't recorded it in a single day to give some output in a hurry. So I took time. I crafted it very well to provide you a better experience and to give better understanding and to share you the knowledge. So if you like the video, share the video with your friends and share the knowledge, and subscribe to the BCCA channel for more marathons. So there are already SFM marathon uploaded, law marathon uploaded. So there are so many marathons being uploaded in BCCA channel. Don't miss to subscribe. And at last, if you want our materials, BCCA materials, especially the IDT material or other materials, or if you want our classes, contact this number or you can post a comment. Okay, now without wasting time, let us dive into the topic. But one last 1 minute, sir. I wish you really great success. I wish you all the best in your upcoming June exams as well as December 2024 exams. Okay, I want you guys to be successful. So never ever take a step back. You are in this journey and you are at the final step. definitely you're going to clear. Never lose that fight. I made the IDT easy. I give you assurance. Follow this marathon perfectly. The both part 1 and part 2. You are definitely going to clear exams with flying colors. Okay? Thank you all. Meet you in the concepts. Hello all. So now we are into the topic basic concepts. Even we can call it as introduction to GST. So first of all, we look at the areas of focus. So instead of ABC categorization, I'm first mentioning the areas of focus. Constitutional provisions, the articles, numbers, and why they are. Next one, GSTN. So with respect to goods and service tax network, why GSTN? What are the functions of GSTN? What is the vision of GSTN? Advantages of GSTN? There are 3 to 4 questions with respect to GSTN, sir. Because in new syllabus there is a separate chapter called GSTN, but the important concepts from there are only 3 to 4 questions. So that was discussed here itself. Need for GST, why GST has to be introduced, and what are the benefits of GST. These are the areas which we are going to discuss now. Mainly these areas we are going to discuss, sir. Even the other areas also I am going to cover, because in first chapter is the base. If I cannot link it with the other chapter, means then the flow will not get, then the flow will not go, it will get affected. So that's why I will cover the other topics also, but for you to revise it for a second time, I am mentioning these areas of focus. Almost for every chapter, I'll tell these areas of focus. So you should focus more on these areas. It's not like I'll be dealing only with these areas and I'll be skipping the other areas. I'll cover all the other areas as well, but you should be more focused on this. Now, let us see, sir, first how the indirect tax mechanism will work. If you see here, sir, there is a supplier. A supplier supplied goods and services to the recipient or buyer. Now this buyer or recipient paid, if you see the tax, 1 lakh rupees is the good value. On that, if the 10% is tax, then that is 1,10,000. Now the buyer pays to the seller 1,10,000. Now the supplier, out of 1,10,000, he will pay the 10,000 to government. If you see, the obligation is on supplier and the burden is on buyer. Okay, you could see the accounting entry also. Cash or bank account debit 1,10,000, because the seller received 1,10,000. Whereas sale is to be recognized is only 1 lakh, and the other 10,000 is the tax he need to pay to the government. So 10,000 recognized as payable. So this is the basic indirect tax mechanism, sir. By default, the supplier is the one who is responsible to pay tax, whereas the buyer or the customer actually bears the tax burden. If he is also a business person, if he is also carrying out business, then he'll pass on that burden to his customer. Okay. Now we'll see what are the taxes that were there prior to introduction of GST. Okay. If you see, what is called tax means, tax is the sum or fees charged by government. Okay. What are the taxes that were there, sir? The mnemonic code here is CA laws. Okay. So now we'll see what is called C for central sales tax. It is levied on interstate sales and it is levied by central government. Countervailing duty. It is levied on imports by central government, which is equivalent to excise duty. Advertisement tax. It is levied on advertisement. It used to be levied by state government. Lottery tax, which is levied on lottery, betting, gambling, used to be levied by state government. Luxury tax. These are levied on sale of luxury goods in addition to VAT by state government. Octroi tax. Whenever a person from other state or different states coming to this state, to allow such person to sell goods in this particular state, the state government used to levy octroi tax, allowing to sell goods originated from other states, state governments. Next, value added tax. It is levied on intra-state sales, levied by state government. Entertainment tax used to be levied by movie tickets, levied on movie tickets, circus and exhibition related tickets by state governments. So understand, entertainment tax used to be levied by state governments as well as central, as well as by local authorities. In certain states, it used to be levied by states. In certain states, it used to be levied by local authorities. Next, excise duty. It is levied on manufacture of goods except alcohol for human consumption and certain drugs, which is levied by central government. Then on alcohol, who used to levy, sir? Is there no tax? No. There used to be state excise duty on manufacture of alcohol for human consumption and certain drugs. and service tax, it is levied on provision of services by central government. So if you see, these are the taxes. C for central sales tax, countervailing duty. A for advertisement tax. L for luxury tax, lottery tax. O for octroi tax. V for VAT. E for excise duty, entertainment tax. S for service tax. Okay, now entertainment tax levied by local authority is not subsumed. So all these taxes are now subsumed into GST, I mean merged into GST. However, entertainment tax levied by local authority is still continuing even after introduction of GST. Entertainment tax levied by local authorities is subsumed. Entertainment tax levied by state government, levied by local authorities is not yet subsumed. Next, central government has retained the power to levy excise duty on tobacco. That means even after introduction of GST also on tobacco still there is excise duty, even though there is double taxation. And the third point also, sir, even the state government retain the power to levy state excise duty even after GST on opium, Indian hemp and other narcotic drugs. Okay, on them still the state government reserves the right. So on tobacco there will be excise duty, central excise duty as well as GST. On certain drugs, Indian hemp and all. So there used to be both. There will be both state excise duty and as well as the GST as well. Okay. Now we'll understand first the concept of double taxation and cascading, sir. Very important. If you see here, sir, there is a manufacturer, wholesaler, and retailer. The manufacturer cost is 900, whereas he has his markup of 100 and he sold it to 1000. Now on this indirect tax, let us take it as 20%, which is 200, and the total invoice price came to 1200. Now the wholesaler, since the manufacturer sale price is 1200, wholesaler purchase price is also 1200. Now he added his margin 100, so the sale price of wholesaler came to 1300. Now if tax is levied on 1300, it came to 260 rupees. But if you see, sir, this 260, it is levied again, once again, because on this 1300, the previous stage selling price 1000 is also included. The previous stage tax is also included. So on previous stage 1000 rupees, again there is a tax of 200. I mean out of this 260, 200 is nothing but again the previous stage got getting taxed again. So which is nothing but double taxation. So out of this total 260, 200 is up to the extent of double taxation. And again if you see in this 1300, 1000 is previous stage selling price, whereas 200 is nothing but the previous stage tax. So again on tax also there is tax. If there is tax on tax, it is called as cascading. When the same amount getting taxed for twice or more than twice, then it is called as double taxation. If there is tax on tax, it is called as cascading. Next, only the value added. I mean at the wholesaler stage, the value increase, the value addition which is made is only 100. On the 100, if you levy tax, that is only 20. I mean out of 260, 200 is the previous stage taxed amount again getting taxed, which results to double taxation. And out of 260, 40 rupees is related to tax on tax, because the previous stage 200 is also included in the 1300 value, which is again getting taxed. So tax on tax, cascading. Whereas the value addition which is being taxed is only 100 rupees. On the 20% if you do is nothing but 20 rupees. Now input tax credit. Understand the concept of input tax rate, sir. Input tax rate means when a registered person is having inward supplies, the tax on the inward supplies will be given as input tax credit. Okay, the tax on inward supplies will be given as input tax credit, which will be utilized to discharge the tax liability on his outward supplies. Understand, sir, what is input tax rate? Whenever a person is having, registered person is having inward supplies, either goods, service or both, the tax component on them can be availed as input tax credit, which can be used to discharge the tax on outward tax liability. Next, with ITC. Let us see the same example, sir, with ITC. If you see here, sir, the same cost, profit 100 rupees, selling price 1000, indirect tax at 200 rupees, the total invoice price came to 1200. But since there is a concept of input tax credit now, so in this 1200, sir, I mean at the time of sale from manufacturer to wholesaler, even the goods value is only 1000, whereas the tax component is 200, which the tax component 200 can be availed as ITC. So the wholesaler availed ITC. That means out of 1200 rupees he paid, 200 he is getting back as input tax rate, which he can use it to discharge his liability na. So since he is getting 200 back, you cannot take cost as 1200, you can take only a cost as 1000. Again now he added margin of 100. So total it came to 1100. Now tax is levied on 1100 which came to 220. Sir, you said double taxation previously, so the tax came to 260. Now here it came to 220. What is the difference? Sir, in previously the 260 again you should pay in cash. That means the real money from you will go out. But here you need not to pay the actual 220. What you do to pay 220, you are already having input tax rate of 200. Now you will adjust this. That means effectively the tax you are paying from your pocket is only 20 rupees now. Effectively the tax you are paying is only 20 rupees. That means which is nothing but on the value addition. The extra amount which they added at the wholesaler stage is 100. On that if you multiply it with 20%, it will come to 200. It will come to 20 rupees. That is the tax actually you paid. Okay, so with input tax credit, only the value added will get taxed. So there will not be double taxation and there is no cascading. So the reason behind introducing ITC is to eliminate double taxation and to reduce and to eliminate the cascading effect. If you see, sir, the total price previously to customer is 1992 without ITC, whereas with ITC it came to 1440. So with ITC it is better now. Now if you see the government revenue, sir, in first stage the government revenue 200, second stage 260, third stage 332. Overall the revenue to government is 792 in this stage. Whereas here if you see the government is getting here 200 rupees, here some 20 rupees, here 20 rupees. The total the government revenue is only 240 rupees. Whereas the business profit remains same 100 at any place. So with ITC, ultimately the customer will get the goods at a lower price because of elimination of double taxation and elimination of cascading effect. Okay. Now India definition, sir. India has 28 states and 8 union territories. Those union territories are Pondicherry, Andaman Nicobar Islands, Lakshadweep, Delhi, Chandigarh, Jammu and Kashmir, Ladakh, Daman and Diu, Dadra and Nagar Haveli. However, even though technically there are 8 union territories, there are 3 union territories with separate state legislature. What are those, sir? You could see here Pondicherry, next Delhi and Jammu and Kashmir. So these 3 technically they are union territories, but for the purpose of GST, those 3 union territories with state legislature also has to be treated as states. So if it is a general knowledge question, there are 28 states and 8 union territories. For the purpose of GST, the 28 count plus these 3 union territories which are to be treated as states has to be added. So the count of states will come to 31, whereas union territories will be only 5. There are only 5 union territories. Okay, so India includes its territorial waters which extends up to 12 nautical miles from baseline. Even its exclusive economic zones which extends up to 200 nautical miles from baseline. Continental shelf, seabed and subsoil. Continental shelf means the sloped areas, sir, and the seabed, the soil which is under the waters, and even not only the seabed and subsoil underlying the waters, even the airspace above the India and its territory is also called as India. Now we'll understand what is the need for GST in India. Sir, previously excise duty used to be levied by central government, sir. You can see excise duty used to be levied by central government, whereas it is allowed as input tax only to manufacturers. It is not allowed or to service providers. It is not allowed as input tax to wholesalers. You could see the same MRF company sold tires to Tata Motors. Since Tata Motors is a manufacturer, they are allowed to take as ITC. Whereas if it is sold to a wholesaler of tires, then he is not eligible to get the excise duty as ITC. That is one problem. Next, even the central sales tax which is levied on interstate supplies is also not allowed as ITC. The central sales tax which is levied on interstate sales is also not allowed as ITC previously. Next, non-integration of VAT and service tax. What happens with non-integration of VAT and service tax means, sir, if there is a construction contract which involves both supply of goods and service, previously what happened means, since it involves both supply of goods and services, VAT applicable with respect to sale of goods, service tax applicable with respect to provision of services. Since in this contract both goods and services are involved, they used to levy both VAT and service tax. So there is double taxation, double time levies, and even double compliances are there. So that is one problem. If they might have integrated VAT and service tax, then one compliance might have been enough, one tax payment might have been enough. So that is one drawback, so which have created the need for GST. Next, under indirect taxes, there are multiple taxes, sir. I mean, there are, you could see how many taxes are there here. This many taxes are there. and in each tax there is some compliance system. That means you need to file returns, you need to maintain the records, data, and even though, and again, every act will remains will be different. And even the VAT acts also, the VAT act in AP may not be the same in Tamil Nadu. It may differ from AP to Tamil Nadu, Tamil Nadu to Karnataka. So that business used to follow various laws, and which made the whole indirect tax system as complex and clumsy. So in order to streamline the whole indirect tax system, there is the need to bring one single tax. Okay, so that is the reason why GST has been introduced. I said 4 reasons, sir. There may be other reasons also, but we picked some 4 important reasons. Because first one, previously excise duty is not allowed as input tax credit or VAT credit to wholesalers. That is one problem. Second one, the CST, central sales tax paid on interstate supplies, is also not allowed as ITC. Non-integration of VAT and service tax. VAT and service tax are not integrated. So because of that, on certain contracts which involve both supply of goods and services, there used to be both VAT and service tax. And again, there are many indirect taxes here. It's not one tax. So because of that, the whole system became complex and clumsy. Next, federal structure, sir. You should know federal structure. Federal structure means, sir, the government structure and how our constitution has been framed with respect to governing. So let's say we all know there is state government, central government, and local authorities. So all these three will be having different kind of responsibilities, and they are not dependent on each other. They are independent. So to maintain their independent status, even the constitution has given them the right to generate their own revenues. They can generate their own revenues. They are not dependent on others. So to maintain their independence, such provision also given. Federal structure. The concept is called as federal structure. Okay. So now federal structure. Understand this point, sir. It gives us the power to function central and states separately, and to generate their revenues also separately. Now Article 246A, it gives the power to central government and state government to levy taxes, to central and state government to levy taxes. So Article 246 7th schedule consists of 3 lists: union list, state list, concurrent list. Union list gives the items or transactions on which central government can levy taxes, or with respect to which central government can frame laws. Okay, union list consists of items or transactions or a list of items with respect to which central government can frame laws. State list consists of items or transactions on which the state can frame laws. With respect to concurrent list, on those kind of activities or transactions, both central can frame laws as well as states can frame laws. Now if you see, sir, with respect to the previous indirect tax system and GST, there is a significant change, because the government promoted it as GST as a single tax, one nation, one tax. Now the problem is with the state governments, because once you merge all these taxes, previously there are certain taxes which are to be levied by state government and which are to be levied by central government. Now they are mixing all these and they are bringing one single tax. Now the question is, who will be levying this one single tax? Either the state government or the central government. Obviously, since there are many state governments, central government will only levy. Now states will have a problem. It affects their federal structure, the federalism. Okay, it is against to the federal structure of India, because the constitution has given state governments to generate their revenue themselves. But if you make it as a single tax, the right of state governments is going and it is going to the central government. That means the revenue will be generated by central government and it will be distributing. Now states will be in a taking position, so they always rely on central government for their funds. So that's why states are against it. So because of this, instead of introducing a single GST law in India, they came up with a dual GST law. Okay, so what does it mean by dual GST law, sir? In India, so now, while introducing GST, they categorize the transactions into two types. One is intrastate, other one is interstate. For a layman understanding, so either in place of supply chapter will understand these definitions in better. But as of now, interstate means when the supplier and recipient are in same state, then it is called as interstate. That's what we learn in inter level also. Okay, when the location of supplier, but actually the definition is when location of supplier and place of supply, that means destination of such good and service, and the supplier are in the same state, then it is called as intra-state supplier. When they are in two different states or union territories, or one state and union territory, then it is called as interstate. So since the revenue, since they cannot levy one single tax, the government came up with a proposal like dual GST model. That means on a single transaction, they used to levy both CGST and SGST. CGST revenue will go to central government, SGST revenue will go to state government. So on a single transaction, they used to levy both CGST and SGST. Okay. However, sir, this concept will not work on interstate transactions. It will have a problem with interstate transactions. So that's why on interstate, IGST will only be levied, which will be collected by central government. Now again, the states having the problem. No. So the main reason is like, why you are levying single tax? By levying single tax, the state's independentness is going. Okay, so that's why they want separate taxes. Now by introducing IGST, again the same thing is happening. No, so the states are not ready for it. Then central government promised them like they are going to insert a constitutional provision. Even though IGST is collected and levied by central government, it would be distributed between center and states. So if you see Article 246A, since GST is a new thing and new kind of law, because the central law and state law will be the same kind of things and they will be following same situation, same kind of provision. So Article 246A empowers the central and state governments to frame laws with respect to GST. Which article, sir? Article 246A empowers the central and state governments. 246A. Next, Article 269A. What is Article 269A, sir? The tax on interstate is levied by central government and collected by central government, but it is distributed between center and states equally. Next, Article 279A. Article 7, sir. Okay, now the problem, half of the problem is solved, because the revenue which has to go to state governments in intrastate, since it is CGST and SGST, the state revenue is going directly as SGST. In case of interstate sale, IGST will be levied. Even though it is levied by central government, half of that will be going to the state governments. So revenue wise, there are no issues. Maximum issues are sorted out. Now the problem is with the decision making. Till now, since they are state levies, the state has the control or the state has the right to take decisions. But now, if it is kept with the central, now the central is the decision making authority. States has no involvement. So states are again not ready for it. Now they thought of it and they decided like, no, individually, it's not individually the state or central will take decision. They'll take decisions collectively. So that's why they formed GST Council. Article 279A empowers the president to form GST Council. So GST Council consists of Union Finance Minister acts as chairperson. One. Union Minister for State Finance acts as member, again central minister. Now, state minister or any other representative minister from each state acts as a member. Okay. So, to take decision in council, 3/4 of the vote should be in favor of such resolution. Next, voting power of central government is 1/3 and state government collectively is 2/3. And quorum, to call it as a valid council meeting, the minimum members to be present are 50% at least. What are the functions of council? The council will give recommendations on tax rates, threshold limits. Okay, tax rate. What should be the tax rate? Threshold limits means the registration limit, composition scheme limit. So those limits are there. Those are called threshold limits. Principles of levy and taxes to be subsumed and date from which petroleum products can be brought into GST. These are the areas on which the council can make recommendations. Next, Article 366. Article 366 defines GST, sir. What is called GST? GST is a tax levied on supply of goods, services or both, except alcoholic liquor for human consumption. Next, we'll see about the goods which are out of the ambit of GST, sir. The goods which are out of the ambit of GST, currently these are not under the coverage of GST because, sir, alcoholic liquor for human consumption, on this state governments are only levying taxes. State excise duty will be there on manufacture of it, and on selling of it there used to be VAT. Okay, so now why it is not brought into GST means, since on this alcoholic liquor for human consumption the total revenue is going to state government still now, but now if they introduce into GST, 50% of revenue will go to central government. States are not ready for it, so that's why they said like alcohol will not be under the GST. So alcohol will always remains out of the scope of GST. Next, petroleum products. Then why petroleum products are kept out of the scope of GST means, sir, petroleum products are one of the major source of revenue because on them higher taxes are being levied by all the states and central as well. Now the council and all the states together thought like it's not it's not the right way to introduce even the petroleum products also into GST now itself. We'll first introduce GST and we'll see how GST is performing and all. Once the GST law gets settled, then they are going to look at the petroleum products. Then even the petroleum products will also be slowly taken into GST. To does not impact the revenues of states. Okay, so they maintained it in this way. So petroleum products, H for high speed diesel oil, petroleum crude, motor spirit, aviation turbine fuel, natural gas. So petroleum products. So these are also out of the scope of GST. HP man, high speed diesel oil, petroleum crude, motor spirit, aviation turbine fuel, natural gas. Sir, all these together can also be called as non-taxable supplies. At several places, this word we will be using. Non-taxable supplies means petroleum products and alcoholic liquor for human consumption. Evolution of GST. How GST is evolved. You know, 101st Amendment has been made to Constitution to bring or introduce GST. That's why Article 246A, Article 269A, those are introduced. Na? Okay, so GST is the introduced by in making 101st Amendment to Constitution. France is the first country to introduce GST. India opted Canadian dual GST model. GST is implemented from 1st July 2017, whereas in Jammu and Kashmir from 8th July 2017. GST is a destination based tax. I mean, GST revenues will be going to the destination state, which is contrary to the previous laws. In previous laws, I mean the CA laws, central sales tax, advertisement tax, in those taxes, the revenue is to go to the origin state, whereas in GST it is contrary, the revenue will go to destination tax and destination state. And GST is a value added tax. That means because of the concept of ITC, only the value addition at each stage will get taxed effectively. Not the whole amount, only the value addition at each stage will only get taxed effectively. So that's why GST is called as what? Value added tax. So now we are into the concept called GSTN. GSTN means Goods and Service Tax Network. GSTN acts as a clearing house. I mean, till now we said like council is the helping in taking decision making. I mean, council is formed to have a collective decision making from both states and center. And the tax model also designed in a way like dual GST model. The taxes will go separately to the central and state governments. Now, how effectively those revenues are going to be settled? Let's say IGST revenue has to be distributed between center and state. How effectively they will settle? Yes, constitution says like it has to be distributed. But what if the government, the central government wantedly delays such distribution? So that's why GSTN is formed, which makes timely settlements, okay, of revenues between central and states. So it acts as a clearing house for timely settlements of revenue between central and state governments. So this GSTN is formed as a Section 8 company. Section 8 company means non-profit organization, and it maintains the website called www.gst.gov.in. So there are 4 kinds of questions: are functions of GSTN, mission of GSTN, vision of GSTN, advantages of GSTN. Once again repeat it: functions of GSTN, vision of GSTN, mission of GSTN, advantages of GSTN. You cannot think like you can read one question and whatever it comes to your mind in exam, that you can put into a question whichever is asked. So it doesn't work in such a way, especially for theory questions. Okay, so they will definitely cross check along with the key. If your point does not tally, they are not going to give you marks. So that's why read separately and remember at least 2-3 points from each point, from each topic. Functions of GST: it facilitates the registration. I mean, it doesn't grant registration, facilitates. That means it helps in getting a taxpayer registered. Next, it matches the tax payment with bank network. When I am paying taxes, the amount which got deducted in my bank will automatically be reflecting in my GST portal also as well. Now, so that matching system will be done. Next, forwarding the return to central and state authorities. The return filed by a taxpayer will be forwarded to central and state authorities for their verification. Next, runs the matching engine. What does it mean by matching engine? Sir, you all know a supplier reports his supplies or his transactions in GSTR1, which will be reflected by the portal into the corresponding recipients GSTR2A and GSTR2B. So here the concept, the law is like they are not going to believe the buyer. Okay, they are going to believe the seller only. So whatever the seller reports through his GSTR1, that would be auto-populated to all the buyers as their purchases. So on that only input tax rate will be given. So that matching the seller with corresponding buyers is called as matching concept. Next, settlement of revenues between central and state governments, the IGST revenue. Next, provide various MAS reports. MAS means Management Information System. What is the need of these MAS reports? These Management Information System reports are like summary reports, which will help the council and government in taking decisions and analyzing the taxpayer's profile. This analysis means like every taxpayer's profile will be created. So every profile will be analyzed so that are there any discrepancies, are there any unusual patterns or trends, so they will be identified, and those guys will be, and those taxpayers will be selected for the purpose of scrutiny. So these are the functions of GSTN. Facilitates registration, matches the tax payment with bank networks, forward the returns with both central and state governments, runs the matching engine, settles the revenue between central and state government, provides various MIS reports, and analyzes the taxpayer's profile. Next, vision of GSTN. What is the vision? Sir, you should know this. Vision is a larger statement. Vision is a larger version. The vision, when it is break down into mission. Okay, vision is a long-term objective. Mission is comparatively a short-term objective. So see, based on the vision, the mission statement will get ready. Okay, to become, the vision of GSTN is to become trusted national information utility which provides reliable, efficient, and robust IT backbone for the smooth functioning of GST. So what is the vision? It should become, GSTN should become as the trusted national utility. That means they could say like whatever the issue they have with GST, that GSTN is the one solution. Either it is to the state government, central government, or to the taxpayer. So in such a way they want to be such national, trusted national information utility. And their vision is to provide a reliable, efficient, and robust, unmatchable IT backbone for the smooth functioning of GST. So they provide all the tech support, IT support, and even they leverage the entire nation as one market, because now there are no different kind of portals that a person from Assam will be using one portal and a person from Andhra Pradesh will be using different portal. No such concept. Everybody will be interacting with the GSTN only, no? So with the same kind of portal. So it's leveraging the market. Since everybody deal with the same kind of website and the same kind of procedure, so it reduces the gaps to leverage the entire nation as one market. And last one, sir, with minimal indirect tax compliance cost. What is called compliance cost? The amount which they spend, the amount which the taxpayer spend on consultants, on making tax calculations and filing returns is called compliance cost. So such compliance cost has to be keep minimal. That means the portal should develop utilities and softwares or the return formats in such a easy way that the taxpayer himself has to file. Okay, that is the vision of GSTN. So the long-term vision is what? So they should become as a national trusted information utility, and they should provide reliable, efficient, and robust IT backbone for the smooth functioning of GST. The last one, sir, to leverage the entire nation as one market. So there are no barriers. Everything will become one, and to reduce or to minimize the compliance cost. Next, mission. So okay, to achieve vision, they will be breakdowning it into mission statements. So what it is here, provide common and shared IT infra with central and state governments and other stakeholders. Since everybody is involving with them, they are leveraging the whole market. Providing common registration, returns, and tax payment services. So everything through with that portal only. Because of this, cost will come down and even leveraging is happening. And collaborate with GSPs. GSPs means GST Suvidha providers. They are certain IT companies which are identified by council. So they are providing various applications or softwares which will help to fastly communicate with the GST portals. Okay, so collaborate with GSPs to roll out various GST related applications. And next, the mission is provide efficient backend services to departments of central and state governments. Okay, for whenever they want reports or whenever they want some information, they would be providing efficient backend services. And developing taxpayer profiling utility for central and state governments tax administration. So for every person, a profile will be created. Next, assist authorities in improving compliances and transparency. Once again, see the mission statement, sir. Provide common and shared IT infra with central government and state government and other stakeholders. Provide common registration, returns, and tax payment services. Collaborate with GSPs to roll out GSP applications. Provide efficient backend services to departments of central and state governments. and develop taxpayer profiling utility for central government and state government tax administration, and assist authorities in improving compliances. Advantages, sir. One of the easy question. Simple. The advantages of GSTN. These advantages are coined by in the material, the question what is there, I copied it here, sir. I wrote it in little simple way. So what is the advantages of GSTN, sir, from taxpayer perspective? These are given from taxpayer only. So the GSTN will enable the user to lodge a complaint whenever he is having some problem or facing issues. He can lodge a complaint, and for such complaint a ticket number will be raised. Okay, and provide required information. This ticket number is raised to provide required information and helping to reach a faster resolution. Now with this ticket number, whenever he wants, he can go and check the status. So enable the user to check the progress and check the resolution comments. So from the back end, the officer might have kept some comments. What is the how to resolve that issue, or whether the issue has been resolved, or if you want any additional details and all. So the check the resolution comments in case ticket is closed. And even the GSTN provides relevant FAQs, user manual for self-resolving even without raising a ticket. These are the advantages of GSTN. So now these two questions are which I didn't discuss. Okay, which I didn't discuss initially, but now since we are towards the end of the chapter, we'll cover these areas also. Features of indirect taxes. First one, regressive in nature. What does it mean by regressive in nature, sir? Irrespective of whether a person is rich and poor, there will be common indirect tax rates or even GST rates. There is no differentiation whether you are rich and poor. So that is called as regressive in nature. Next, inflationary. Whenever indirect taxes are levied, so let's say if there is no indirect taxes, we'll get a good at only 100 rupees. If you levy indirect tax on it, even 10%, then the price will go to 110. If levy 20%, then the price will go to 20%. So because of indirect taxes, the prices are going to increase now. So it is leading to inflationary situations. Next, indirect taxes are not only levied on goods, they are levied on both goods and services. So it is called as commodities and services. Next, shifting of tax burden. Shifting of tax burdens are always the seller will collect the taxes from his buyer. So now the buyer will take it as ITC, and again the tax part he is going to pay will be collected from his buyer. So always every supplier will collect taxes from his recipient. Again the recipient becomes supplier and will collect taxes from his customer until it reaches the end consumer. So the tax burden is going to be shifted from one person to supplier to buyer until it reaches end consumer. So ultimately the burden has to be paid by the end consumer. Next, higher tax base. Sir, not like in indirect taxes, here there is lot of scope to levy taxes. In indirect taxes, if you see, sir, okay, there are various incomes exempted. That is one reason. And the second one, there is basic exemption limit. Okay, because of basic exemption limit, many persons are being exempted. Many individuals or many are being exempted. But in indirect taxes, there is no such concept, no. So only the richer or the middle class is getting taxed, not like that. Even the poor will also get taxed under indirect taxes. Next, welfare. How it is contributing to welfare, ma'am? On sin goods such as tobacco, pan masala, alcohol, the government will levy high taxes, high tax rates. Because of that, the high tax rate, the price of such products will get increased. Once the price increases, then automatically their demand and consumption will fall down, no? Which is welfare to the society. No? So in such a way, indirect taxes are contributing to the welfare of the society. So there are total 6 features of indirect taxes are regressive in nature, inflationary, commodities and services, shifting of tax burden, higher tax base and welfare. Next, sir, benefits of GST. Let us see what are the benefits of GST. First one, it is boost to Make in India initiative. How GST is giving boost to Make in India initiative, sir? Because of GST, double taxation cascading has been came down, and they are offering seamless flow of credit. Seamless flow of credit means previously with respect to interstate, no credit is given. But now it is intrastate or even it is interstate, credit is allowed without any barriers. So which boosts the Make in India initiative. How? Since there are no double taxation and cascading, you can produce goods in India at a cheaper cost. Since you can produce the goods at a cheaper cost, you can export your goods, and even within India also the supply, when the prices are becoming competitive, then automatically demand will increase. And even when demand increases, you should even increase your supply. So to increase supply, you will be expanding your operation. So in such a way, they are encouraging or giving boost to Make in India initiative. Next, increased revenue to government. So when double taxation and cascading has taken away, then how the government revenues will get increased in GST? In GST, sir, yes, there is no double taxation, there is no cascading, but still the tax system has been made foolproof. I mean, it has made it several places wherever the loopholes are there, they got filled and okay, so that's why it became stringent. The tax law became stringent first one, and their base also has been increased. That means, like I could explain in this way. Even now, the state government have revenues on services also, but previously they'll get revenue only on goods. But now, in the increase, I mean the trend, the economy having more turnover from the service industry also, but on which the state government has no revenue previously, but now they can also have revenue from the services also. No? Even the central does not have any revenue share on the sales of goods, on the sale of goods, but now they are also getting the share now. So in such a way they are getting increased revenues. And elimination of double taxation, I already said how elimination of double taxation is, since we are getting ITC and there are no multiple taxes at all here. There is only one tax which is going to be levied on the same common base value. Okay, because of this there is no double taxation. Next, mitigation of cascading. How cascading is mitigated? Since at every stage the tax paid on prior stages is allowed as input tax credit. Because of it, the tax is not being included into the cost. So there is no tax on tax cascading. Third one, sir, creation of unified national market. How? Sir, across the country there are no barriers, because interstate allowed credit, intrastate allowed credit, and across the country same set of procedures, same set of provisions, same set of formats. So there are no barriers now. You can buy goods from Assam and you can sell the goods in Jammu and Kashmir also, no problem. Everywhere the same law, common law. So there are no barriers now. The whole India is united as a single market. So creation of unified national market. These are the benefits of GST. Sir, let us understand the concept of compensation, sir. Sir, in pre-GST era, it used to be origin-based tax, sir. In post-GST, it is a destination-based tax. So now see what happened. Tamil Nadu, let us take an example of Tamil Nadu state. Origin, destination. Okay. Pre-GST, post-GST. Let's say they produce 1000 units, even in pre-GST era, even now. And out of those 1000, 700 are sold within the state and 300 are sold to different states, interstate. Okay, and let us assume the tax revenue is common before GST and after GST also, the tax rate at least. Okay, they used to get 5 rupees on each unit. If you see pre-GST era, sir, since it is origin based, they are not bothered about where the good ultimate destination is. Since it is originated in Tamil Nadu, on 1000 units, the Tamil Nadu government used to get revenue. That is 1000 into 5, it got 5000 rupees as revenue. But whereas now in GST era, it became destination. Out of 1000 units produced, 700 only intrastate. That means only for 700 units, the destination is Tamil Nadu. For the other 300 units, the destination is some other different state. So the revenue will go to such other state, not to Tamil Nadu. So if you see, now the revenue is coming only on 700 units. That is 3500 only. Because of GST, the revenue of Tamil Nadu is getting down now. So that's why Tamil Nadu is against to GST. They don't want GST. And simply they are saying like, they are saying like, because of GST, we are suffering. We are having losses. Our state revenues are falling down. So we don't want GST. Then the central promised them like compensations as leviable on both. The central promise like whatever the losses suffered by state government will be compensated by by central government for a period of first 9 years. First 9 years, the losses to the initially it is 5 years, sir. Then after COVID, it was increased another 4 years. So total it became 9 years. So whatever is the losses suffered by state government because of introduction of GST will be compensated by central government. How central will compensate, sir? To compensate such loss, central government other than CGST, SGST, IGST, UDGST, an additional tax called compensation cess will be levied on both intrastate and interstate supplies to compensate the revenue loss to states arising on implementation of GST. It is leviable. Sir, compensation is not leviable on each and every item. It is levied only on specified luxury products or demerit goods, and it will be enforced for the first 9 years from date of introduction of GST. Sir, see here, GST Council, it will give what? Recommendations. Whereas central and state government will take a decision, will implement such law or frame rules based on the recommendations of council. Okay, next CBIC is the actual person who implements such law framed by central and state government. GSTN helps the CBIC in effective implementation of law and even acts as a common platform for all the stakeholders and distributes revenue between central and state government. Okay, so technically first chapter concepts are completed, but as like I discuss in my regular classes or even exam oriented classes, I mean my approach is like generally in the first chapter itself I give introduction to ITC and how the ITC credit can be utilized and all. So even in this marathon also I'm giving some input regarding ITC, maybe some 5 to 10 minutes. Okay, that is completely regarding what ITC related. Input tax credit, sir. So when you will be getting input tax rate, I already said, but once again, the tax which is suffered on inward supplies, and such inward supplies may be either goods or service. To further say, they can be even capital goods. Tax on this will be given as what? ITC to the registered person, and this ITC can be adjusted with the payment of tax on outward supplies. So remember it as a thumb rule, sir. ITC can be utilized only for payment of tax on outward supplies. Registered person alone is eligible to get ITC on inward supplies from another registered person. Only registered person is allowed to get ITC. Next, tax component on inward supplies will be given as ITC. So now see how input tax credit will be apportioned. First, the IGST credit. Okay, the input tax credits are here. We might have three, sir. Then we might have intrastate purchase, interstate purchase. I mean intrastate inward supply or interstate inward supply. So based on the type of inward supply, the input tax rate you will get it may be IGST credit, CGST credit, SGST credit, or it can be even compensation cess credit. How they could be utilized? IGST credit has to be first utilized for IGST tax, and the balance credit if any can be utilized for what? CGST or SGST in any ratio and in any order. Next, unless until IGST credit is completely utilized, only when IGST is completely exhausted credit, then only you can start utilizing CGST credit or SGST credit. Now CGST credit has to be first utilized with CGST tax. Then if still CGST credit is there after adjusting CGST tax, such credit can be utilized for adjustment of IGST tax. Next, SGST credit. Same SGST credit also has to be first utilized with SGST tax. After that, if any balance is there, that can be adjusted with IGST tax. Now, understand the situation, sir. CGST can never be adjusted with SGST. Now, understand the situation, sir. If IGST balance is there, surplus IGST credit balance, first we'll adjust with IGST. Let's say it got adjusted. I'll take it as an example. Let's say IGST tax of 5 lakhs is there, whereas we are having IGST credit of 10 lakhs. So, out of this 10 lakhs, we adjusted 5 lakhs. Still, how much credit balance is there? 5 lakhs. Now this 5 lakhs can be adjusted for both CGST liability or SGST liability in any ratio, in any proportion, in any way we want. But we'll do generally as per the question. Okay, our ultimate objective here while doing this adjustment is to get the least cash outflow. I mean our tax payable through cash ledger should be minimum. Okay, in which way if you adjust, then you will get the tax payable will be minimum. So in such way you should adjust. Next, whenever the IGST credit is not sufficient, let's say the IGST tax liability is 10 lakhs, but the credit available under IGST is only 5 lakhs. So you adjusted. Still you are having tax liability of how much? 5 lakhs now. So how this 5 lakhs can be adjusted? You are having CGST credit after adjusting CGST liability and even SGST credit after adjusting SGST liability. Let's say you are having still IGST liability of 5 lakhs and you are having CGST some 3 lakhs and SGST credit also 3 lakhs. Now which has to be adjusted? First adjust CGST. You understand my point now? When IGST is to give, both are same. I mean you can give no priority and all. Give to CGST or SGST in any way the question requires. Now when IGST has to take, I mean there is no surplus with IGST, liability is only there. It should take from CGST grade or SGST grade, then take first from CGST. If CGST grade is also not enough, then take SGST grade. Okay. So look at the examples of compute the GST payable in cash considering the following details: IGST, input tax rate, tax liability, input tax rate, tax liability. Sir, generally these type of questions will solve in 3 steps. Sir. Step 1. First, in a question, sir, this is like a simple one, but actually the question may look like they give some inward supplies they give some outward supplies. So on inwards and even they give opening balance of ITC. May give or may not give. So what we have to do, the first step, computation of ITC. In that step, you will take the opening balance of ITC and even you will calculate the ITC on your inward supplies. That is for step 1. Next you will do step 2. In step 2, on your outward supplies, you will calculate the tax liabilities. And step 3, with the liability you calculated, adjust the input tax credit. But while doing step 2, sir, while arriving the tax liabilities, you should calculate separately the FCM liability, RCM liability. Now see, computation of GST payable in cash. First they are taking the liabilities, sir. 90,000, 1 lakh 80, 1 lakh 80. Now they are adjusting first what? IGST credit 1 lakh 40. Here 90,000 adjusted. Still there is the surplus of 50,000 which is adjusted equally. Then CGST adjusted with CGST and SGST adjusted with SGST. So the tax payable in cash is nil. Okay. So this is okay. You can see the section 1, sir. When we go into the supply chapter, scope of supply section 7, we are going to start. So let us see what are the first 6 sections. The first section of GST is, CGST Act, sir, because throughout the syllabus we are majorly focused on CGST, except the place of supply and in some interstate supply definition, intrastate supply definition, OIDR services, except those, everything we are discussing is on CGST Act only. Short title, name, applicability. The section name, CGST Act. Okay, and applicability, applicable to whole of India, including the state of Jammu and Kashmir. It came into force from 1st July 2017. In Jammu and Kashmir, 8th July. Section 2 consists of definition. Section 3 consists of officers. These are the officers under GST, sir. Principal, Chief Commissioner, Principal Commissioner, Commissioner, Additional Commissioner, Joint Commissioner, Deputy, Assistant Inspector. This is linked to again appeals chapter, appeals and revision. Okay, since there will be timestamp now, just go to appeals and chapter. In the appeals chapter initial part also, again I'll revise it once again. Next, section 4, appointment of officer. Who can appoint the officers under GST? Board, or even board can delegate such power to some other officers who are specified above. Next, powers of officer. The powers of officers are not like specified. The powers which are mentioned at various provisions or at various places of this act, those are the powers to the officers. Section 6, authorization. That means, sir, for assessment, every time CGST officer need not to go separately and SGST officer need not to go separately. An order given by CGST officer will be considered as given by SGST officer, and order given by SGST officer will also be considered as given by CGST officer. So that authorizations has been given under section 6, like they can act interchangeably. Okay, that are the first 6 sections. Now when we go to supply chapter, it will start with section 7. Okay, hope you got some clarity regarding ITC. Sir, I don't give you the whole concept of ITC here. What my objective is, in the coming chapters, till we go till ITC chapter, if at a place where there comes like about ITC and all, you should be in a blank, you shouldn't be in a blank state. So that's why I gave some basic intro to the ITC. From the chapter supply, the areas of focus are like the definitions, sir. Here we'll be discussing quite a few definitions. Out of these definitions, goods, service, consideration, distinct person are of more importance. And comes to section 7, sir. The whole section 7, schedule 1, 2, 3, all of these are important. Section 8, you know how important it is. Composite and mixed supply. And there are many clarifications in this chapter, sir. Okay. Do we need to understand or study all these clarifications? Sir, I would say the newly added ones are of most importance. Okay. There are many clarifications. Okay, let us dive into the topic, sir. First, okay, if you see the definitions here, sir, let us see the definitions. Okay. The first definition we need to start is with goods definition, sir. You could see here the definition of goods. Good means what? Every kind of mobile property. If it is mobile, then it is called as good. But it excludes money. So money means the cash equivalents like check, DD. These are excluded from the definition of money. And even it excludes securities. That means shares, debentures, options, futures, swaps, forward contracts, all these. Next, it includes actionable claim. What is called actionable claim? Actionable claim means a claim to any debt. With a piece of paper, I can go and demand some person to pay me 5 lakhs or 10 lakhs. Then the paper I'm holding is called as actionable claim. However, it should be an unsecured one. Then only it is called as actionable claim. And then growing crops, grass and things attached to land. Okay, even though they are attached to land, if they are agreed to be separated before making supply, then they are called as what? Goods. Next is the service. What is called service? Service means anything other than good, money and security. Service means anything other than good, money and security is called as service. So if you see, goods definition has some boundaries because they are starting with means and they are trying to cover a limited extent. But service is unlimited, sir. Anything can be called as service if it is not good, not money, not security. Let's say a building. Let us take an example of building. Sir, a building is not good because it's not a mobile property. It's not even money and it's not even security. Then obviously it is called as what? Service. You understand the value of this definition or no? Let us take the example of land. Land, again, it's not a mobile property, so it's not a good. However, service definition, if you see anything other than good, money and security, then land also will become service. Okay, so means anything other than good, money and securities. But even it includes, service includes where any consideration is received separately for conversion of money in one form to another, one denomination to another, then that is also called as service. Let's say I give some 10 lakhs to you and you are paying me 12 lakhs. I mean, the additional 2 lakhs you are paying is interest. Then for the 2 lakhs extra consideration you pay in the interest part, that can be called as service. Next, I deposited 1 lakh rupees with the bank and I took a demand draft. For that, the bank charged 700 rupees as charges. That 700 rupees is called as service. Okay, conversion of money in one form to another, one denomination to another, for which separate consideration is involved. To the extent of separate consideration, it is called as service. Next, facilitation or arranging a transaction in securities. I mean, you are not just directly buying and selling the shares. This guy, what is this business means? He'll connect a buyer and seller who are willing to buy and sell securities. Okay, so he acts as an intermediary. So whatever the commission he gets, okay, it is called as service. Facilitation or arranging a transaction in securities for separate consideration. Nothing but stock brokerage, demat account charges. All these are amounts to service only. Next, consideration. What is called consideration? Any payment made or agreed to be made. Any payment made or promised to be made. It can be either in money or even otherwise. It should be in relation to supply of goods, services or both. And it may be paid by recipient or maybe by any other person. However, it excludes subsidy given by central and state government. So if you see, Raju bought solar panel for 50,000 as consideration. Okay, however, in this, if government is giving any, okay, if government, sir, Raju paid 50,000 to Dinesh and Dinesh supplied solar panels. But what happens, sir, here? Actually, the solar panel value is 1 lakh. Now, Dinesh is getting from government another 50,000. Actually, the solar panel cost is 1 lakh. But Dinesh is selling it for only 50,000 because he is getting subsidy from government 50,000. Now what the provision is saying, exclude this 50,000. Only the 50,000 paid by Raju alone can be taken as consideration. So consideration means any payment made or agreed to be made, either in money or otherwise, in relation to supply of goods, services or both, either as a principal or as an agent, but exclude subsidy given by central and state government. Sorry, sir, I think I said it mistakenly. Consideration means any payment made or agreed to be made, either in money or otherwise. It should be in relation to supply of goods, services or both, whether by recipient. I mean, the consideration need not to be paid directly by the recipient. It can be even by any other person, but exclude subsidies given by central and state governments. This is called consideration. Next, consideration has the second part also, sir. Any monetary value of any act or forbiddance to act. Sir, any amount paid for, okay, monetary value paid for non-performance of an act, monetary value for non-performance of any act, or forbiddance to act, or tolerating an act, for tolerating or for non-performing or forbidding to act, if any amount is paid, that also can be called as what? Consideration. Next, business. Okay, business means trade, commerce, profession, vocation, adventure, wager, or any other similar activity, whether or not for a monetary benefit. Even business includes, sir, the incidental activities carried out to the main activity are also called as business only. Let's say a grocery store, sir. The main business is selling groceries. The trade they will be carrying on. But they even started delivering that. For deliveries also they are getting little amount of delivery charges. So that delivery charges and the delivery operations can also be called as business. And next, how much trade has happened, how many times a transaction has been happened, whether it is repetitive, okay, those are irrelevant. Irrespective of volume, frequency, regularity, it can be called as business. Next, clubs and associations providing services to its members, okay, can also be called as, okay, and even admissions into premises, I mean, like entry tickets collected, those all, and activities by way of totalizer, a person organizing a bet, and activities by central and state government. All these are called as business. Now, listen, sir, very important definition. Many times it will be coming distinct persons. What is called distinct persons? Sir, first of all, understand in GST, there is no concept of centralized registration. When you are having branches in, like, let's say 3 states, AP, Telangana, and Maharashtra, then you should register separately in all the 3 states. I mean, AP you will be having one registration, Telangana another registration, Maharashtra another registration, 3 registrations. And within the state also, even if within the AP also you are having number of branches. So within AP also you may go for 2 registrations, registration 1 and registration 2. But all these will be linked with the same PAN. Okay, you understand now? A person will have only one PAN, but he might have several number of GST registrations. Where a person with a single PAN is having multiple registrations under GST, then each of such registration has to be treated as a distinct person, as a separate person. You understand my logic now? Okay. Now, establishments of distinct persons. Let's say, sir, if you see a person has registration, a person has registration for an establishment in one state. Let's say he is having a restaurant and bar in one state. So since restaurant is a taxable supply, he is registered. Whereas he is having only wines in another state, which is not required to register. In such cases, they are treated as establishments of distinct person. Okay. Now, related persons means members of a family, sir. Family means spouse, children, parents, brothers and sisters, and grandparents only when they are dependent. Spouse and children need not to be dependent. Only parents, brothers and sisters, and grandparents needs to be dependent. If they are sole agent and distributor, legally recognized partners, if they are officers and directors of one other's business, if they are holding and subsidiary or holding and associates, I mean greater than 25% voting power, employer and employer relationship, then they are called as related persons. Next, sir, we are into the concept of works contract. Works contract. What is called works contract? Contract related to immovable property involves supply of both goods and services. Works contract means a contract related to immovable property and it involves both supply of goods and services. So if you look at the material, there may be an alternative definition here which says like a contract which involves like alteration, fabrication, modification, installation, such kind of. Okay, but the essence of this definition is like it should be related to immovable property and it involves both supply of goods and services. Next, taxable person. Taxable person means a person who is already registered under GST or who has the liability to register under GST. I mean necessity. Next, principal. On whose behalf an agent carries on the supply of goods, services or both. Let's say on my behalf, if some other person supplies goods, services or both, okay, if such guy name is the agent, then I am called as principal. Next, who is called agent? Agent means a person including broker, auctioneer, delegated agent, commission agent, mercantile agent, by whatever the name you call. If he is acting on behalf of some other person, then he is called as agent. Broker, auctioneer, delegated agent, commission agent, mercantile agent, by whatever the name is called. If he is acting on behalf of some other person with respect to supply of goods, services or both, then he is called as what? Agent. Now, I already said the areas of focus, sir. Now we are into the scope of supply, section 7. Under section 7, subsection 1, okay, under section 7, subsection 1, okay, 7 subsection 1A, 7 subsection 1AA, 7 subsection 1 clause B, and 7 subsection 1C. So first of all, see 7 subsection 1. Sir, if you see here, these 3 parts, okay, let me round off this. These 3 subsections will be, I mean, under these 3 subsections, we can call it as supply only when there is consideration. Whereas under 7 subsection 1 clause E, we can call it as supply even though there is no consideration. So to sum up, there are to establish supply under 7 subsection 1A, 7 subsection 1A and 7 subsection 1 clause B. In these 3 sections, it is called as supply only when there is consideration. Only when there is consideration. But when it comes to 7 subsection 1c, it is called as supply even though there is no consideration. There is no consideration. Still it can be called as what? Supply. So first look at 7 subsection 1a. What does it say? Supply includes sale, transfer, barter, exchange, license, lease, rental, disposal. To call it as supply, out of these transactions, one of such transaction has to be happen. Okay, either it may be sale or transfer or barter or exchange, license, lease, rental, disposal. Out of this, one should have been happened. Next, carried out by a taxable person, and this transaction should be carried out by a taxable person. Who is called taxable person? A person already registered or who has liability to register for a consideration, and it should be in relation to goods, services or both, and in the course or furtherance of business. So repeat with me. Okay. To call it as supply under 7 subsection 1 clause A, supply includes sale, transfer, barter, exchange, license, lease, rental, disposal. Okay. Out of these activities, one of such activities should be carried out by a taxable person for a consideration, and such transaction should be in relation to goods, services or both. Okay, and it should be in the course of furtherance of business. Let's say I am selling an air conditioner from my house. I'm a registered person. Okay, I'm doing business. Okay, but I sell an air conditioner which became old from my house. Sir, it is not in the course or furtherance of business, so not a supply. Whereas I sell the same kind of air conditioner from my office, which is used in my office, then it is related to business only, so it can be called as supply. So sale, transfer, barter, exchange, license, lease, rental, disposal. Okay, sir, sale means the usual sale transaction, sir. Transfer means transfer also has the more or less same sale definition. Barter means there is no money involved. For one good, another good, or for one service, another good or service will be exchanged. Exchange means, okay, here a good or service will be exchanged as consideration along with some monetary amount will also be paid. License, okay, license is to operate or to give a right to us, license will be issued. Next, lease, comparatively long term in nature. Rental, we know. And disposal, sir. What is called disposal? Sir, in a business, generally if stock is sold, then it is called sale. Whereas the assets kind of, such as plant and machinery or the furniture, if those type of assets are being sold, then it is called as disposal. Okay. Next, 7 subsection 1 clause A. What this provision is saying, sir? Any person other than individual. Any person other than individual. So other than individual means it may be AOP, it may be BOI, or it may be AJP. Okay, or a partnership firm. These kind of persons, or they are carrying out any activity with respect to transaction, goods, services or both with respect to members and constituents for a cash or deferred payment, it amounts to supply. Sir, here the problem is there is a concept called principle of mutuality. What does it say? Means, I mean, in different kinds of interpretations, some courts have decided like principle of mutuality means where in certain cases we also know firm and partners are same. Okay, several places we say like firm and the partners are same. The partner have joint and several responsibility with respect to the liabilities of firm. That means we are not differentiating them. We are saying like firm and the partners are same. That means they are like principle of mutuality. So now the question being asked is, since you are treating like the firm and partners are same, now firm supplies if any goods to partner, if both of them are same, then it is not a supply. No? To call it as supply, to different persons has to be there. No. Here firm and partners are treated as one person. If any transaction happened between them, we cannot call it as supply. Now that's the question raised. And one particular high court decided it like, yes, here principle of mutuality applicable. So in these cases, we cannot call it as supply. It's a high court judgment, sir. Then immediately the council has decided to clarify it, and they inserted a provision in the 7 subsection 1 clause A itself to does not develop any furthermore litigations, so to make it settle. Okay, so what it says now, what's the law here, sir? Even though firm supplies any goods, services or both to its partners for any consideration, the principle of mutuality concept is not applicable. Even between them also it is called as supply. Okay, now 7 subsection 1 clause B. What this section says means import of service. Import of service. What is called import of service, sir? Supplier should be outside India. Recipient should be in India. And the place of supply, I mean destination of such service also shall be in India. Import of service means supplier outside India. recipient in India, and even the place of supply shall also be in India. So when there is an import of service, not goods, import of service, for a consideration, you need not to check whether it is in the course or furtherance of business or not. It is called as supply. So we discussed now 3 points of 7 subsection 1 clause A, clause AA and B. What is 7 subsection 1 clause A? Supply includes sale, transfer, barter, exchange, license, lease, rental, disposal carried out by a taxable person for a consideration in relation to goods, services or both, okay, in the course of furtherance of business. What 7 subsection 1 clause A says, sir? Either any person other than individual, that means AOP, BOI, firm, those kind of persons, carrying out any activity or transaction of goods, services or both with its members and constituents, and if they are paying for any, if they are paying any cash or deferred payment for such amount, it is called as supply. Now 7 subsection 1 clause B says like import of service for a consideration is supply, whether or not in relation to business. Okay, now there is an exemption also linked to this import of service. Sir, let us understand this. Sir, first of all, when we decide supply, then we'll decide whether it is taxable or exempted. So import of service, with respect to import of service, there is an exemption. But you should understand this point first clearly. Import of service, first, if there is consideration, it becomes supply. Once it becomes supply, then we'll decide whether it is taxable or exempted. So you cannot say like not a supply if it is exempted. What you should do, first decide whether it is a supply or not. Yes, it's a supply. Then in the next step, you will decide whether it is a taxable supply or exempted supply. So here import of service, sir, supplier located in non-taxable territory, that means outside India, and he provided service to a recipient in taxable territory. This is nothing but called as import of service. And if the recipient is central government, state government, union territory, local authority or government authority, or a charitable entity under 12AA, or an individual who is receiving such services for other than for the purpose of businesses, then if recipient is any of these 3 kind of persons, then such service they imported will be exempted. So first it is a supply because there is consideration. But since the recipient is government or charitable entity or individual other than for the purpose of business, it is getting exempted. However, you should understand here, sir, the exemption is not available to OIDR services. The exemption is not available to OIDR services. So if it is OIDR service, online information, data access and retrieval services, exemption is not available. If it is other than OIDR service, then exemption is available. So let us see what is called OIDR. Online information and data access and retrieval service means the delivery of such service is mediated by information technology. I mean, such service can be performed only through digitally. You cannot perform such kind of service manually or physically. Okay, only through internet or electronic network. First one. And the nature of services make it essentially automated, and there is no human intervention at all. Let's say I am playing a movie in Netflix, sir. It doesn't mean like there is a guy in the Netflix office who, whenever I clicks on a movie, he'll not be inserting such pen drive or inserting such CD. Then the movie is getting played. It's not like that, now. Automatically it's get played. So there is no human intervention at all, even at the time of payments also. Okay, and it is impossible to ensure in the absence of IT. So without IT, we cannot even consider this kind of service. So then it is called as online information, data access and retrieval services. The delivery of such service is mediated through information technology, and the nature of service essentially makes it automated with minimal human intervention, and it is impossible to ensure with the absence of IT. So, but includes what are called as OIDS services, advertisements over the internet, YouTube ads, Instagram ads, all those. Providing cloud services. I mean, the cloud services, storing our data, even in Gmail also, Drive also, we are storing our data. Now, Google Photos, all these are cloud services. Digital data storage, provision of ebooks, movie, magazines, Amazon Kindle, Amazon Prime, Netflix or Spotify, next online gaming, all these amounts to OIDR services only. So what's the point? Exemption here, sir, where if there is any import of service, if the recipient is any one of these 3 persons, then it is exempted supply. Otherwise, taxable supply only. And even though if the recipient is one among these 3, if it is the OIDR service, then again exemption is not available. Sir, one point, sir. I have a small question here, sir. Sir, you are saying here Import of service if other than these three recipients. Let us assume recipient is company and there is import of service. Then you are saying it as taxable. Okay, I am saying that only. Na? Import of service by other than these three is taxable. Sir, but supplier is outside India. Na? Then how can he pay tax? He will not be registered now. Yes, in those cases, RCM is applicable, reverse charge mechanism. That means the recipient, the importer has to pay tax under the RCM. Okay, you getting my point now? Now, we are moving into schedule 1, sir. 7 subsection 1 clause C. Transactions which are treated as supply even though there is no consideration. These are even called as what? Deemed supplies. See here, sir. Supply of goods by agent to principal or principal to agent without consideration, where the agent supplier receives them on behalf of principal or principal supplies. Okay, so the transaction between principal and agent can be called as supply even though there is no consideration. That is this point says. However, there is a clarification given, sir, which says invoice is the deciding factor whether a transaction between principal and agents amounts to supply or not. To decide what is the deciding factor, sir? Invoice. Let's say principal send goods to agent without any consideration. Now agent supplies these goods to customer. Okay. Now to decide whether this transaction between principal and agent amounts to supply or not, we should check who is raising the invoice. So if you see here, sir, I took two scenarios, scenario 1 and scenario 2. In scenario 1, what happening? Principal itself directly raising the invoice in the name of customer. For example, agent, a customer went to the agent and he took goods. When he asked for invoice, agent simply calls to the supplier and asks him to raise and send an invoice. Then principal sends an invoice directly in the name of customer. So agent has no work. He's just acting as a storekeeper. And the second case, sir, okay, customer comes and take goods from the agent and agent raises an invoice in the name of customer, directly in the name of customer. So principal will be raising an invoice in the name of agent. So here if you see there are two invoices involved. Whereas here if you see there is only one invoice involved. So in situation 1, sir, principal to agent goods transferred. Yes, agent to customer also goods transferred, but invoice is the deciding factor, na. But with in scenario 1, between whom the invoice is there, between principal and customer invoice is there. So the transaction between principal and customer is supply in situation 1. In between principal and agent there is no supply. Whereas in scenario 2, principal raised invoice in the name of agent. No, principal to agent goods transferred and invoice also raised. So it amounts to supply in between principal and agent. In between agent and customer also there is consideration and even invoice is raised. So it is also supply. Whereas in between principal and customer, directly between principal and customer, no invoice has raised. So it is not a supply. Next, transfer of goods and services between related persons or distinct persons also amounts to supply even without consideration. Any goods and services are supplied between distinct persons or related persons, that also amounts to supply. Let's say from Hyderabad branch, the stock transferred to Vijayawada branch without any consideration. Still it amounts to supply. Okay. However, there is a proviso here, sir. In related parties definition, I said related persons, employer and employee are related persons. Let's say, sir, employer on the occasion of company's anniversary or on the occasion of some festival, he is giving some gifts to the employees. Now, these gifts are given without consideration only, no? And employer-employee are related persons only, no? If any such kind of gifts are given without consideration, what the above provision is saying, any transfer of goods and services between related persons without consideration also amounts to supply. Let's say employer gave a sweet packet to the employee. It also amounts to supply. Yes or no? By interpreting the above provision. So now the proviso says like, no, we cannot tax the small kind of gifts. So that's why in a year, aggregately, the total value of gifts by employer to employee in an annum is less than or equal to 50,000. That is not a supply. Only if it exceeds beyond 50,000, then the whole amount will be treated as supply. Gifts not exceeding 50,000 per annum, okay, given by employer to employee shall not be treated as supply. Okay. Next, permanent transfer or disposal of business assets on which ITC has been claimed. Sir, I purchase certain goods, on them ITC away, but those goods I am transferring to recipients, sir. 1 second, guys. So permanent transfer. So let us see here the example. Bharat Electronics. Okay, this company, this guy purchased 10 LED TVs at each 50,000 each, and he availed ITC also. Out of this one TV he capitalized, sir. So even though capitalized also we can avail ITC. Out of the other 9 TVs, 3 TVs he sold. With respect to this also ITC can be availed. But look at the other. 3 TVs he donated, 1 TV he gifted, 1 TV he used for personal purpose, and 1 TV theft. All these are like permanent transfer from the business. These are removing from the business permanently. So actually when you are taking ITC, the intention is like you are going to use it for the purpose of business, or they are going to be taxed once again. Since to eliminate double taxation, they are giving ITC. When you are removing them from the business, and that also without consideration, there is no double taxation. When there is no double taxation, you shall not get ITC. Since you already took ITC, to reverse that, what they are saying simply, okay, whenever you are removing the assets or the goods from business, again treat it as supply and pay tax. So the impact is the ITC which you took will get reversed. Okay, that thing to make the ITC to be reversed, they are simply saying like whenever you remove your business assets on which ITC claim from your business permanently or disposing them permanently, then you need to pay tax. You need to consider it as supply. Next, fourth one, sir. Import of service without consideration. Sir, in 7 subsection 1 clause B, we already said about import of service with consideration. Here it is without consideration. Import of service without consideration can also be called as supply. But you should check 2 conditions. How many? 2 conditions. What are those? First one, it should be from your related person and it should be in the course or furtherance of business. Let's say I took an architect service from USA, sir, and he is my brother. Okay, and I took an architect service from USA, and such service is for my house. Then if you, and no consideration has been paid since my brother na. So import of service from outside India I took. Next, no consideration from a related person. Yes, but whether it is in the course of furtherance of business, no, it's for my house now, so it's not a supply. Whereas if the same architect service, if I took it for my office, then in the course of furtherance of business, it can be called as supply. Sir, here FCM, RCM, I think you know. FCM means forward charge mechanism. The obligation to pay tax is on supplier. In RCM, reverse charge mechanism, the obligation to pay tax is on recipient. Now, import of service, the whole consolidated chart. Import of service with consideration, without consideration. With consideration, it is a supply. Blindly, you can call it as supply with consideration. However, there is an exemption available. If the recipient is government, central government, state government, union territory, local authority, government, or charitable entity, or individual other than for the purpose of business, and the service is other than OIDR service, then it is exempted. Import of service without consideration, then if it is related person and in the course or furtherance of business, then it is a supply. Next, sir, we completed section 7 subsection 1. Now we are into 7 subsection 1, supply to be treated as either supply of good or supply of service. Sir, since we decided that a transaction as a supply, now further we should divide whether it amounts to supply of good or supply of service. In any transaction where along with possession, the title, ownership also being transferred. Let's say I went to a mobile shop and I bought a mobile, sir. Now not only the possession of mobile, the ownership also I got. So when the ownership is transferred, then it is called a supply of goods. First thing. Next, the ownership may be transferred at a future date. That means in a hire purchase system, the ownership will transfer only after the payment of last installment. In such case also, since maybe now or in future, since the ownership is being transferred, it has to be treated as what? Supply of good. So simple points are, remember, when the ownership or title is being transferred, then it can be called as supply of goods. Next, only possession transferred, no ownership, no title is being transferred. Just given to you, you can use it for 10 days or 15 days. After that, you should return to me. Then it is nothing but renting or leasing. So it is called as supply of service. Whereas with respect to intangible assets such as like trademark, patent, okay, license. So with respect to these kind of intangibles, irrespective of title transferred or not, it is a supply of service. With respect to patent, trademark, license, whether the ownership right itself being transferred also, it is called as supply of service. Next, even development of a software is treated as supply of service. Whereas when you are buying a software which is pre-packed in a CD or in a pen drive, that is called as supply of goods. Next, composite supplies such as food and beverages, okay, non-alcoholic, has to be treated as supply of service. I mean, restaurants, they are providing food and beverages, now they have to be treated as supply of service. And works contract is a contract related to immobile property, involves both supply of goods and services. It also has to be treated as what? Supply of service. Now 7 subsection 2. What 7 subsection 2 says means, sir, 7 subsection 2 talks about transactions which are neither supply of good nor supply of service. I mean, first we decided a transaction as supply. Then we decided it as supply of good or supply of service by using 7 subsection 1 clause, nothing but schedule 2 help, with the help of schedule 2. Now we are into 7 subsection 2 with the help of schedule 3. What this says means, even though it is covered in the 7 subsection 1, it satisfies all the conditions to call it as a supply. But if it is mentioned here, if it is specified here, that is neither supply of good nor supply of service. So what are those? Sir, the one code we can frame for is claims. Funeral, burial, crematorium services or mortuary services including transportation of the deceased. Okay, on death of a person, these kind of services will happen generally. These are not supply. Next, sale of land and building. Important one, sir. Understand. Sale of land and building. Where the building is sold and either the consideration wholly or partly received before its completion. Where the consideration wholly or partly received before its completion, then it is a works contract. It is a supply of service only, not covered under negative list. So when sale of building is not covered under negative list, sir, when the consideration either wholly or partly received before completion, then it is covered under the negative, it is not covered under the negative list. Next, where the entire consideration is received after completion, then it is covered under schedule 3. Okay, next, sir, with respect to actionable claims, there is a small amendment came here, sir. Actionable claims other than specified actionable claims are covered here. Previously, it used to be actionable claims other than betting, gambling, lottery, like that. But now, instead of using the betting, gambling, lottery, they said like actionable claims other than specified actionable claims. Now, we need to decide again what are called specified actionable claims. Specified actionable claims means betting, gambling, casinos, horse racing, lottery, and even online money gaming. Online money gaming is the point where there are several amendments took place. Okay. I mean, with respect to online money gaming, there is a provision in place of supply, there is a provision in value of supply. With respect to online money gaming, there is a provision even in supply sector. Betting, gambling, casinos, horse racing, and lottery. These are called as specified actionable claims. Now, the interesting point here is online money gaming. We'll look at this. Online money gaming means an online game. I mean, the game which is played online through internet. The player pays or deposit money or any virtual digital assets. I mean, you for participating in such game, you should deposit some money. You should deposit some digital kind of currency or some points. Okay, and in the expectation of winning, and your expectation is what? Winning. So such as like the Dream 11 kind of applications. So many betting apps are also coming now. In many YouTubers are also promoting them. So those kind of betting apps, online rummy, any other kind of betting apps. So all this will come under the online money gaming with an expectation of winning. In an event, it can be a game or even a scheme. Whether or not the outcome is based on your skill or chance. Irrespective of whether you are winning it based on skill or on a random chance. They didn't bother about it. When you are playing an online game and in that you are making some deposit or paying some money with an expectation of winning. It may be a game or scheme. It can be called as what? Online money gaming. Okay. Next, the service by employee to employer is in the negative list. I mean, the salary employee gets for the services he offered is not a supply. Next, functions performed by MPs and MLAs. MPs and MLAs for discharge of their functions, they also will be getting certain amount as salary. That is also not a supply. And even any other person who has entrusted in such position by the provisions of constitution, such as like a president of India, governors. So these kind of persons also will be getting some salaries. So the amount they receive is also not a supply. Next, services by Supreme Court, court or any tribunal. Okay, if any services they provide and for getting such service, if any amount is paid, judiciary services for that, it is also not a supply. Next, 789C. Look at them, sir. Supply of goods from a place in non-taxable territory to another place in non-taxable territory. Sir, I am in India. I purchase goods from Australia and sells in US. Purchase goods from where? Australia and sells in US. Australia is also non-taxable territory. US is also non-taxable territory. But in this transaction, they never entered India. From Australia directly, they went to US. Just me being in India, it's not a supply in India. Next, high sea sale. High sea sale means, sir, I am importing goods from Australia. Okay, so they started from Australia, but before those goods enter into the customs water of India, the goods were sold. In the sea waters itself, I sold them to X. Now it is not a supply because the goods not even entered into the territorial waters. Next, supply of warehouse goods. So the goods imported. Okay, I'm an importer. I imported goods, but in the customs, without payment of duty, I warehouse those goods. Okay, now the goods are in the warehouse. When the goods are in warehouse, I sold those goods to Mr. X. Now the transaction between me and Mr. X is not a supply because only the GST Act applicable when the goods crosses customs frontiers. Okay, so still since the goods are within the customs borders, it cannot be called as a supply. Hope you are understanding my points. So now we are into composite and mixed supply. But first understand what is called composite supply. Composite supply means a supply made by a taxable person, and it comprises of two or more supplies of goods, services, or both. Composite supply means a supply made by a taxable person, and it comprises of two or more supplies of goods, services, or both, and they are naturally bundled and supplied in conjunction with each other. Two or more. Okay, in a bundle there should be two or more, and they should be naturally bundled. Okay, and in the ordinary course of business, and one of them is a principal supply. So composite supply means supply made by a taxable person, comprises two or more supply of goods, services, or both, naturally bundled and in conjunction with each other in the ordinary course of business, and one of them is a principal supply. What is called principal supply? Out of the bundle, whichever is having predominant nature is called as principal supply. So now, how could we find out whether it is naturally bundled or not? Naturally bundled or not will be found out based on the indicators. So there is no standard rule. Based on the perception of the consumer, how customer is expecting them, how majority are supplying either as a bundle or separately, how the price is there, whether separate price is available or a consolidated price is there, how they are advertised, whether they are advertised as a package or separate prices available. Next, elements, whether the elements available separately or not, or whether the elements are connected to each other, integral. So these are the indicators for whether to decide it is a naturally bundled or not. What perception of consumer, or how the goods are being supplied generally by the manufacturers or suppliers in that area, how the pricing is made, single price or not, whether they are available separately or not, how they are advertised, whether they are integral, I mean connected to each other. Okay, these are certain parameters. If it is a composite supply, then on the whole bundle, it has to be treated as the supply of principal supply. That means whichever is the principal supply, the tax rate applicable on it has to be levied on the whole bundle. Next, mixed supply. When two or more supply of goods, services, or both made in conjunction with each other for a single price. For a single price, two or more goods, services, or both are supplied as a bundle, but it is not a composite supply, then it is called as mixed supply. How the mixed supply is taxed, sir? They are treated as supply which attracts highest tax rate. I mean, in a mixed supply, there may be 5-6 goods. Out of them, whichever is having the highest tax rate will be levied on the whole bundle. So these composite supply and mixed supply definitions are very important, and institute also expects us a standard definition from here. So please try to remember them. So what is called mixed supply? Two or more supply of goods, services, or both made in conjunction with each other by a taxable person. So mixed supply carried out by a taxable person where two or more supply of goods, services, or both, and they are in conjunction with each other for a single price, and it is not a composite supply. What is called composite supply? Made by a taxable person, comprises of two or more supply of goods, services, or both made in conjunction with each other. Okay, and they are naturally bundled in the ordinary course of business, and one of them is a principal supply. Okay, now we look at few problems, sir. Sir, This is the straight theory question, sir. Explain related persons and distinct persons. They gave related persons definition and distinct persons definition. This is last written mock test paper question, sir. So you could go through it once. Straight theory question. So I am not again reading it further. And next, you could see another straight question, sir. I think this is asked in the last attempt, sir. This was in the last attempt exam question also. This is, and even mock test paper question also. So that's why I asked you guys to look at the mock test papers, recent mock test papers. There are chances of directly picking from 14 to 20, 25 marks. In last time, there are 28 marks from mock test papers. 28 marks directly picked from mock test paper, which were there in the exam paper. Okay, so that's why look after the mock test papers once. So this is the mock test paper question also, like composite supply and mixed supply. Now, look at the question number 12. Sir. Question number 12. In the following cases, based on the information given, give your comments on the taxability under GST and the rate of GST applicable. Space Bazaar offers a free bucket with a detergent purchased. It is composite or mixed. What rate to be taken? Sir, whenever we went to a store, do we expect bucket with detergent? Or detergent, when we buy a bucket, do we expect detergent? Or the integral, does the bucket will be used only to wash the clothes? Maybe for other purpose also, no? So they are not naturally bundled. So it is what mixed supply. That is mixed supply, we should take what? Highest tax rate applicable. Next. Mr. A booked a Rajdhani ticket, which includes meal. It is composite supply or mixed supply? Sir, in Rajdhani ticket, you should understand here, sir. The problem with composite and mixed supply, sir, we should have an understanding of such business. Okay. In exam question, if you don't know about that business exactly, then it may go wrong. But the same way here, Rajdhani train, sir, if you are traveling in Rajdhani train, you doesn't have an option to book only ticket only for transportation without a meal. You should book a meal also. I mean, the price is inclusive of meal cost as well. So in such case, they are not available separately. You cannot get transportation separately and meal separately. They are combined. Okay, and the transporter, I mean, that train provides only such kind of service. So they are not available separately. So they are naturally bundled. So it can be called as what? Composite supply. Okay. Next, Ravi being a dealer in laptop, sold laptop bag along with the laptop to a customer, 55,000, and the laptop at 18% and laptop bag at 28%. So generally, maybe these days the trend is decreasing, but generally, whenever a laptop has been bought physically, the companies used to provide laptop bags, and this is the usual thing which is carried out in their businesses, like a camera box along with camera. Okay, these are something which were given by the supplier usually in their business. It is a trend. Okay, so it's a common phenomenon. So then we can call them as naturally bundled. So it is also a composite supply. Next, renting of vacant land to a stud farm. Is it a supply of service? Will GST be leviable? Sir, it comes in the agriculture services, sir, in exemptions. But I'm saying, so stud farm means it is for horses. So taxable. If the land is given for cattle grazing, it is exempted only agriculture land. But it is for other than horses, then exempted. If it is for horses, then taxable. Next, a contract awarded by Kolkata Municipal Corporation for repair of particular road. Okay, and it has to be completed within 30 days. However, there is a delay in 10 days. So KMC charged some damages penalty of 1,20,000 and recovered. So they are asking whether it is taxable or not. Sir, again, this is also an exemption which comes in government exemptions chapter, but I'm saying now itself, where government charges any penalties, fine, damages, government is collecting any penalty, fine, damages, those are exempted. So the 1,20,000 being a municipal or corporation, state government, central government, local authority, being a part of government, it is also exempted. Next, X Limited paid penalty under section 49, 2 lakhs to the department. Is it taxable under GST law? No, it is not even a supply. Sir, to call it as a supply, 2 lakhs paid. For what? Okay, maybe you can call it as like for tolerating an act, for non-performance of an act. So whenever the penalty is levied, the intention of the guy levying penalty here in GST is not just allow him to do such kind of violations whenever he wants and just they are okay with the penalty. It's not like that. Why they are levying penalty? Their intention is not to tolerate. Their intention is they're simply threatening him that we will levy penalty so that he will be discontinuing such kind of acts. They are not encouraging him, and they are giving him a free hand that you pay penalty and do whatever you want. So it's not the law. Okay, so that's why this penalty is not a supply. Next, M and Co is sole proprietor is in the business of selling furniture. It owner took a set of furniture for his house permanently. Yes, if already ITC availed on purchase of that furniture, now transfer of such furniture to his house will amount to permanent transfer or disposal of business assets on which ITC is claimed. So it amounts to what? Supply. So now our part is about clarification, sir. Sir, in clarifications, with respect to printing contracts, so printing contracts can be classified as supply of good or even supply of service based on the principal supply, sir. Okay, so can be either classified as supply of good or even as supply of service. So how? Based on the type of printing. If the printing is with respect to pamphlets, books, brochures, annual reports, and the content is provided by recipient. So here on a paper with respect to book or pamphlets, the printing is the main activity, sir, which gives the value addition. So that's why here it is treated as supply of service. Printing is the principal supply. Whereas when it comes to envelopes, printed boxes, and paper napkins, in restaurants we'll see this paper napkins, sir. On this paper napkins in middle, they'll be printing the restaurant name and all. So even though restaurant name is printed, the usage is not changing. Okay, we'll use it for the same to wipe our hands and face only we are using it. So there is no additional use with it. Even if it is printed, the same way we'll use. Even if it is not printed, also the same kind. So printing is not giving any value addition. So the good is the main activity there. So inputs belong to printer, logo, design provided by recipient. Good is the predominant product. So it has to be treated as what? Supply of good. Next, clarification on fringe benefits. Clarification on fringe benefits. So it is not fringe benefits means that in tax language we call them as perquisites, such as like gifts are given. If they are covered in the offer letter, if they are covered in the employee's offer letter, contract of employment, so then they are part of salary, so not taxable, covered by Schedule 3. And if they are not covered by offer letter, additionally these fringe benefits are given by employer to employee. If they are in money form, not a supply. If they are in non-monetary form, if the aggregate value of those fringe benefits which are given in non-monetary form in a year, financial year, exceeds 50,000 with respect to each employee, then it is a supply. Otherwise, not a supply. Next, interstate movement of various modes of conveyance. Sir, in Schedule 1, if you remember, where there is any interstate transfer of goods, service between distinct persons or related persons, it amounts to supply. Now, if you see from Hyderabad branch to Bangalore branch, a bus is being traveled every day. Okay, it goes to Bangalore and drops the passenger there, and again from Bangalore it will come to Hyderabad. Now the question is whether every time on the bus value, let's say the bus value 40 lakhs, on bus value GST has to be levied because every day the bus is moving from one branch to another. Okay, transfer of good between distinct persons, it amounts to supply now. However, the clarification says like interstate movement of conveyances such as bus, train, aircraft, vessel, trucks, tankers, etc. If they are moving from one distinct person to another distinct person in the course of carrying goods and passengers or both, then it is not a supply. Or if they are sent for repairs and maintenance, then to the extent of repairs and maintenance, it is supply. If they are sent for sale, further supply. Okay, from Hyderabad, the bus sent to Bangalore. Why? It is going to be sold in Bangalore. In such cases, it is a supply, the total conveyance value. Next, clarification on sale of grant of alcoholic liquor license. Sir, the state governments will issue licenses to sell alcoholic liquor for human consumption. For issuing such license, they will be collecting certain amount from the licensees. Okay, so the amount they collect for issuing the license for sale of alcoholic liquor is not a supply. Grant of alcoholic liquor license for license fee, application fee charged by state government is neither supply of good nor supply of service. Sir, only with respect to liquor license. Whereas any other license with respect to mining or with respect to parking, so this kind of any license given by state government is a supply. Only liquor license is not a supply. Next, clarification, sir. So this clarification is about, let's say that a guy donated some 20 lakhs to a temple. So temple, to express gratitude for making such kind of donation, the temple kept a name plate or kept a hoarding of such person. Now the GST department came and says like it amounts to supply. The temple is in a shop. situation and is asking why it is supply. Because you are keeping his nameplate, you are keeping his photo there. So by doing that, you are promoting such guy for receive by taking 20 lakhs. It is the argument of department. So the question is whether it amounts to supply. See here, sir. Objective of placing nameplate is to express gratitude and to give recognition to the donor's philanthropic act, to the donor's act of philanthropy. And it is not aimed at giving publicity to the donor or his business. So this is one reason. And the second one, even from the donor perspective also, there is no consideration. Now, donor given 20 lakhs. If the temple doesn't keep his name, means can the donor go to court and ask like the temple has to definitely keep my nameplate and all? So there is no such kind of obligation. No, temple with gratitude they are putting that name. Even temple doesn't put such kind of name also, the donor cannot go and ask the court to put or to give his name now. So that kind of possibility is not there, so there is no quid pro quo, so hence it is not a supply. Next one, sir. Next ones are tenancy rates. What tenancy rates are pagadi system? Sir, if you see here, Anil owner, Dharma tenant. Okay, so Anil, okay, to Mr. Anil being the building owner, this Dharma pays tenancy premium. This tenancy premium will be paid one time, sir. So when tenancy premium is paid, then Anil will be giving his building on rent to Mr. Dharma. So here the point is, it's not a normal rental agreement, sir. Along with this rental agreement, the tenant will have an additional option to sublet it for some other person also. This is the right available to tenant, right to sublet. Okay, and okay, sir, the owner giving the building on rent to the tenant. Now for this, the tenant is paying the tenancy premium. So by paying tenancy premium, what the tenant is getting? The tenant is getting an additional right to sublet to any other person also. So the agreement here it is there now, it will be registered and stamp duty charges will also be paid. Okay, now Dharma will be subletting it to some other person, and the rent which he gets on sublet may be shared between the tenant as well as the original owner as per the contract. Okay, now if you see, tenancy premium will be paid by the tenant to the owner now on giving the tenancy right. It is supply. Even though registration has been made, stamp duty charges are paid, it is supply. Now, when the tenant is vacating, I mean this Dharma is vacating, then Anil has to pay. Anil has to pay him the tenancy premium. So when tenancy premium is made to tenant on surrendering tenancy right, this is also amounts to supply. Now, clarification on artwork sent to gallery. Sir, an artist, he makes designs and paintings. Na? So those designs and paintings he sent to gallery. Not yet sold. He just sent from his place to gallery. Not a supply, since no consideration has been flown. Sir, here the clarification is with respect to petroleum gas. Sir, here oil refineries, sir. Okay, oil refineries will send petroleum and petroleum gases to some manufacturing companies. These manufacturing companies will be manufacturing petrochemical products. Okay, so they manufacture, okay, they get the raw material of petroleum gas from oil refineries. These manufacturing companies will refine it and prepare certain petrochemical companies. So what is the consideration to these manufacturing companies? Means out of the raw material, petroleum gas which they received, a part of such will be retained. So understand here the consideration to the manufacturing companies is in the form of petrol. So the question has been raised because of that. So petrol is out of the scope of supply. I mean, they are not under the coverage of GST. So if consideration is received in the form of petroleum product, is it amounts to supply? Sir, here consideration to this company is to retain a part of raw material. It is a supply, even the consideration is petroleum gas. Next, with respect to joint ventures, there are two scenarios in joint venture. Assume there are 4 members in joint venture. Each contributes rupees 100 and an operating venture. So joint ventures, one of them will be taking an active role. So the guy who takes active role is called as operating member. So from 4 members, the 400 rupees will be collected and the operating member will purchase a machinery for 400. Okay. So now the cash call is nothing but this operating member will be asking money from the other joint venturers also. No, give me 100 rupees. So asking the money is called as cash call. So now asking, I mean, this operating member taking 100 from all the other 3 members will amount to supply. No, not a supply, because he is not using it for his purpose. He's collecting all the 400 and buying a machine, and it is used for the purpose of all the four. But whereas situation 2, 4 members in joint member, each contributes 100 and operating member. So in this case, the operating member collects 300 from all the 3 other joint ventures. But instead of buying a machine, he uses his own machine. Now, if you see what's the transaction is happening, sir, is operating member giving his machine on rent or giving his machine to the joint venture in a consideration of 300 rupees. So the cash calls made will be supply. Okay. Here operating member recovers cost towards use of machinery and service. So therefore it is a supply. Okay. Next, GST applicability on damages penalty arising out of breach of contract. So liquidated damages. If there is no agreement to refrain to act, amount paid to compensate injury, then it is not a supply. So just because let's say you are going on you're driving a car, you hit a bike or something and you paid some 5,000 rupees as damages. Will it amounts to supply? No, because there is no contract, nothing. So to call it as a supply for taking damages, there should be a contract. Here there is no contract, there is no agreement, so it is not a supply. Where it is contemplated by the contract and agreed for termination, late payment. So in the contract itself, it is clearly said like where the contract is not completed by this date, they have to pay damages. Or if the contract gets cancelled in the middle, then they have to pay liquidated damages. Like that, if the contract specifies, then it is a supply. Next, check dishonor charges and fine penalty. There is no, sir, my customer gave me a check, sir, for 5 lakh rupees. Now I went and deposited in the bank and the check got dishonored. So my time got wasted. No, if he said like I cannot pay now, give me some 10 days, I might have given. But he given me a check and the check is not honored. So my time is getting wasted because of this. Now, so I levied some 20,000 as fine or penalty on him for giving me a check which is not honorable. So now the question is whether the 20,000 which I charged from him amounts to supply. Whether it is the amount I collected for tolerating the act. Whether it is for tolerating the act of his dishonorance. No. Why I am collecting this 20,000? Just to give him a warning like don't repeat this kind of thing once again. So I am not tolerating his act. I am not encouraging. I am not okay with the dishonorance just because he paid 20,000. Okay. So why I am leaving 20,000? Just giving him an instruction like not to repeat. So fine penalty is levied to discourage such act. Okay. Hence it is not a supply. Next, penalty imposed for violation of law. Sir, penalty imposed for violation of law. Here there is no express or impressed willingness. So penalty is levied to discourage here also. So it is also not a supply. Next, certain companies, sir, when a new employee joins, they'll ask him to write a bond for 3 years. When the employee terminates early, he needs to pay the bond amount. So let's say an employee left the organization after working 1.5 years. So he paid the bond amount 3 lakh rupees. Now whether the 3 lakh rupees received by the company amounts to supply? No. Here also look at the company point of view. They want to hold the employee. That's why they are keeping the bond amount. They want to discourage early termination of employees. Okay, that's why they are levying such bond amount. And there is no intention from the point of view of employer like okay, whenever the employee leaves the organization, it's okay, fine. I'm getting the 3 lakhs bond amount now, so I'm happy. The employer intention is not that. Why he is keeping such bond amount? Just to retain him for a longer periods. Okay. And even from the recipient, I mean the employee point of view also, just because he paid the bond amount, he doesn't get anything. No, he has no consideration at all. So it is not a supply. This clause is to discourage non-serious candidates, and there is no consideration for tolerating the act. So employee does not get anything in return, so it is not a supply. Okay. Now late payment charges or fee. Almost all service providers, sir, let's say when I take an internet connection, if I didn't pay by due date, they'll be levying some fine. Electricity bill, if you didn't pay by due date, again they'll be levying some fine or penalty. Okay, in all the cases with respect to service industry, levying late payment charges and fee became a common phenomenon. So that's why it has become across the world, it's an accepted one. Okay, so that's why the late payment charges collected are considered as an ancillary supply. So the late payment charges are also includable in the value of supply. They are also taxable. Next, cancellation charges. Sir, I booked a ticket to go to Hyderabad from Vijayawada in through Avigas. The ticket cost is 1500. Okay, so I booked in advance, like 20 days before to the day of transportation. I booked the ticket for 1500. Now, just one day before the day of transportation, I cancelled it. So when I cancelling the ticket, they retained 300 rupees as cancellation charges and only refunded me 1200. So now whether the cancellation charges 300 rupees they collected amounts to supply. Yes, the provision says like yes, it amounts to supply because, sir, the transporter is offering a bundle of services there. What bundle of services is just transporting now? Understand here. He is not transporting you to Vijayawada to Hyderabad. He is transporting you in the seat you want. Okay, in the way you want. Okay, so his service started that day he reserves a seat for you. Okay, it's not when the bus starts, the service starts. It is started the day when the seat got reserved for you. Okay, so till 13 days the seat is reserved for you. So a part of service is already provided. Okay, so the 300 rupees which they collected as cancellation charges are for the part of service which they provided. So it is a supply only. This can be considered as the charges for costs involved in making arrangements for the intended supply and the costs involved in cancellation. So facilitating service of allowing cancellation is also natural part of this bundle. So it is a supply. Now we'll understand about loans and advances. Extending loans and advances is a transaction in money, hence not a supply. However, the interest and discount earned on a loan and advance is like separate consideration for in a transaction of money. So it is the supply of service, but it is exempted. Whereas the charges by banks such as DD charges, locker charges, processing and documentation charges are supply of service only and they are taxable also. Now understand here. When goods and services are supplied on credit basis, I mean, a car showroom guy is selling a car, cash price 10 lakhs. Whereas if you want to pay it in installments, then higher purchase price is 12 lakhs. The difference between cash price and higher purchase price, the 2 lakhs is nothing but interest only. Na? So when he is selling the car on higher purchase, he is making two supplies. One is supply of car, the other one is financing. Okay, giving advancing or loan also is providing now. So now it's a bundle of services. Out of this, the principal supply is car. So even though interest is exempted, since the principal supply car is becoming taxable, the interest is also getting taxed. So taxable supply. So here three. One is goods and service and the other one is extending credit. So both becomes taxable. Next, interest, penal interest charged on supply of goods and services on periodical payment. Okay. That also same thing, sir. Composite supply and it is a taxable supply. Now taxability of transactions with respect to forward contracts. Sir, forward contracts or even in future contracts where it requires ultimate settlement of the transaction by way of delivery of underlying good or commodity, then it is supply. If it doesn't require the supply of underlying commodity, let's say, sir, I took a forward contract with respect to gold. On the day of settlement, if actual delivery of gold is involved, then it is a supply of goods. If there is no actual delivery of gold, just the difference of prices will be taken and the margins will be settled. In such cases, it is not a supply. And sale of secured debt, it is a security, so it is not a supply. Interest rate swaps and foreign exchange swaps, these are also derivatives, that means securities, not a supply. And the next one, sir, clarification with respect to no claim bonus. No claim bonus, sir. Insurance companies like put a clause in their contracts, sir, stating like when I didn't make a claim for the insurance in a year, then in the subsequent years they may be offering me no claim bonus. Let's say I paid premium of 10,000 for insurance policy, but I didn't made any claim during the year. So they are offering me 10,000 rupees as no claim bonus. How much? 10,000 rupees as no claim bonus. So now what they are saying means whether this no claim bonus is the amount paid for tolerating an act or forbidding to act. Okay, so whether this amount can be called as supply. Understand here, sir. Why I didn't made a claim for insurance in the current year? Because such event to make a claim didn't arise. That's why I didn't made a claim. If at all there is a situation arise also, okay, let's say I took an accident premium, accident policy. even though accident has made or accident occurred, still if I didn't make a claim means then I'm forbidden to act, then it can be called as forbidden to act. Here there is no situation at all arise. That's why I didn't make a claim. So it cannot be called as forbidden to act, okay, or for non-performance of a contract. Okay, so the amount of no claim bonus which they paid cannot be called as supply. Next, supply of food and beverages at a cinema hall, where food and beverages are part of service and independent of cinema exhibition. Okay, I mean the ticket and these kind of food items are separately. Okay, sir, in theaters, in case of new releases, high expectations movie is being released. That times the movie theaters will sell the ticket as a combo ticket. I mean, you need to buy the ticket for some 700 or 600 rupees, which includes the popcorn price and the cool drink. All those will be provided to you. If those tickets are not available separately, that means food and beverages and cinema tickets are clubbed. Then there is the composite supply and taxable as cinema. Whereas food and beverages are part of service and independent of cinema. Okay, they are not related. In such case, food and beverages taxable as separately restaurant services. This is the new clarification introduced. So important. Next, HSN means Organized System of Nomenclature, which is a coding to goods, 8 digits. SAC is the Service Accounting Code, coding for services, which also consists of 6 digits. So now, the point is, sir, in SAC code, I mean Service Accounting Code, taxability of shares held by a holding company in a subsidiary company. No service, just the holding company holds shares in subsidiary company. In Service Accounting Code 997171, there is a SAC code for holding company holding shares in subsidiary company. Just because there is a service accounting code, if there is no consideration, if there is no event actually arising to call it as supply, it cannot be called as supply. So a SAC code or a HSN code is not the base for supply. Section 7 is the base for supply. So just because for a transaction there is service accounting code, we cannot call it as supply. The same way, if holding company holds shares in subsidiary company, for that if a service accounting code is there, maybe, but still it is not called as a supply.
Hello all. So we are into one more interesting chapter called exemptions, sir. In exemptions, there are lot many areas, but I pick these are the areas which are being focused by the examiner. So these particular exemptions or related exemptions are most important for the purpose of exams: charitable, health, education, artistic related, entry to various events, agriculture, construction related, transportation, goods as well as passengers, as player providing services to a sports body, and business facilitator or business correspondent. So by looking at the past problems and the other questions, I think these are of more importance than compared to the others. Okay. So before going further, so let us once again let me explain what is called exempted supply. Sir, an exempted supply consists of, by definition, exempted supply consists of three parts. One is an exempted goods, services, or both. Exempted goods, services, or both. Sorry, in simple, goods, services, or both, which are exempted by way of a notification. Which are exempted by way of a notification. So, through which a notification is issued, sir? By using the powers under section 11 of CGST Act, a notification will be issued. Next, second one, sir, nil rated supplies. What does it mean by nil rated supplies? The supplies for which the rate in the classification, the rate itself is nil. For certain essential goods, the rate will be given as nil. And the third ones are non-taxable supplies. What are called non-taxable supplies, sir? Non-taxable supplies are petroleum products. That means HPMAN, high-speed diesel oil, petroleum crude, motor spirit, aviation turbine fuel, natural gas, and alcoholic liquor for human consumption. So all these are called as non-taxable supplies. Okay, exempted supply includes goods, services, or both which are exempted by way of notification, nil rated supplies, non-taxable supplies. Sir, in exemption chapter, we are going to discuss the goods or services which are exempted by way of notification. Next, there is one more thing, sir, called zero rated. Okay, don't mistake zero rated and nil rated supplies are as same. No, zero rated and nil rated are different. Zero rated means exports or supplies made to SEZ unit or SEZ developer. Supplies made to SEZ unit or developer. Sir, let's say if I'm importing a laptop to USA, laptop might have the actual tax rate as 12% in the classification, but since it is being exported, to encourage exports, it will be taxed at zero rate. That's why it is called as zero rated supplies. So zero rated supplies are not exempted supplies. In fact, zero rated supplies are to be treated as taxable supplies. These are part of taxable supplies. Okay, so zero rated supplies and nil rated supplies are not same. Okay, so section 11 gives the power to levy an exemption. So I am going into the first exemption, sir. Charitable and religious activity related services. Okay, so first one, an entity carrying out charitable activities should be registered under 12A, 12AB or 1023C of Income Tax Act. 12A, 12AB, 1023C of Income Tax Act, and it should be providing charitable activities that also in relation to public health. Okay, public health means providing care to the affected person, counseling to the persons to create awareness and all, and family planning related. So these are with relation to public health. Okay, so an individual, if he is providing any such kind of service, it cannot be called as charity. To call it as charity, the entity which is providing such care, counseling or awareness should be registered under 12A, 12AB or 2023C of Income Tax Act, which is into advancement of religion. That means when an entity is carrying out religious gatherings, or in temples also there will be like darshana tickets, archana tickets. Okay, so whatever the amount they are collecting will be treated as charity, and they are religious related and they are exempted, provided the temple trust should register as 12AB or 12AA or 1023C. Next, providing charity means that there should be activities should be provided with respect to education. So normal education means, it doesn't mean the education which is provided by the missionary schools at a low cost. Okay, here education means it covers where the education is provided by a charitable trust to abandoned. That means the parents left that child abandoned. Orphans, a child who doesn't have parents, homeless. I mean, who live on the roadside of the streets and all. So for them, if any education is provided, and if the education is provided to a person of age more than 65 years and residing in rural areas, then if the education is provided to those kind of people, then it is called as charity. Next, if the charitable activity is provided with respect to environment or spiritual or yoga camps or yoga classes, then they amounts to charity and they are exempted. Sir, here you might have a question like, sir, whenever they are providing charity, then there will not be any consideration. No. So if there is no consideration, first of all, it is not a supply at all. Then why we are discussing whether it is exempted or taxable? Sir, charity doesn't mean always a service would be supplied without consideration or for zero consideration. Sometimes it would be provided for a consideration, but the consideration will be nominal. Let's say, sir, you might have seen across like certain clubs, okay, Rotary clubs, okay, with different names, clubs will be from. So these clubs will be providing charitable activities by way of selecting the elderly people who are having eyesight issues. So for these elderly people, these clubs will try to provide eye operations. Eye operations. They will be providing the eye operations at a nominal cost of some 3,000 to 4,000. Okay. So if 3,000 to 4,000, if this is provided, then they are called as what? Charitable activity. Because in a normal hospital, if you went for those kind of operations or surgeries, they may charge 20 to 25,000. But these clubs are providing you at a nominal cost or at a lesser cost of only 3,000, 4,000. So these are called as charitable activities. So charitable activities also, there might be consideration, but the consideration will be nominal. Next, specified organizations, if they are providing services to religious pilgrimage. With respect to religious pilgrimage, the notified institutions here, KMVN and Hajj committees. KMVN is a Uttarakhand state government undertaking, sir. Kumal Mandal Vikas Nigam Limited. So, if these two entities are offering religious pilgrimage, that also KMVN to Kailash Manas Sarovar Yatra. Kailash Manas Sarovar. Okay, and Hajj committees to Makkah. So, if religious pilgrimage offered by those two entities, that also KMVN to Kailash Manas Sarovar and Hajj committees to Makkah, then the whatever is the amount collected, it would be exempted. So let's say Hajj committees, what they'll do means they'll identify a group of Muslims every year.
Let's say normally to go and visit Makkah, it may cost around 5 lakh rupees. The first committees, what they will do means they will take only 1.5 to 2 lakhs from the person and they'll take them to Makkah and okay and bring back. Okay, in such cases, they are providing at a concessional cost. It is a charitable activity, so they are exempted. So more or less, they are also providing a service of tour operator. But since they are notified KMVN and Hajj committees, and they are taking the religious pilgrimage to either Kailash Manas Sarovar Yatra or Makkah, then they are exempted. Next, service by a person by way of conducting a religious ceremony. That means a priest providing services with respect to religious ceremony, irrespective of the religion, they are exempted. Next, renting of religious premises, owned and maintained by a 12A or 12AB entity, where any premises of charitable or religious entity are given on rent. So not charitable, only religious premises are given on rent. Let's say in temples, rooms may be given to the devotees who visit the temple, and even Kalyan mandaps will be there because many devotees will have some will be marrying near the temples and all. So and there will be shops also. So if the premises of temple are giving on rent for these rooms or for Kalyan mandaps or function halls or for renting of shops, then if it is for renting of rooms, then if it is less than 1000 exempted. If it is greater than or equal to 1000, then taxable. Next in premises, then if it is less than 10,000, if the premises are given on rent or for Kalyan mandaps given on rent, then less than 10,000 exempted. These are per day, sir. And if it is shops, then they are exempted only when they are less than 10,000 per month. Equal to or greater than also becomes taxable. Sir, one more point. Only if the rooms are provided in a temple, they are exempted. Let's say the normal hotel rooms. Okay, the normal hotel rooms, even if 1 rupee charge, it is taxable with respect to hotel rooms. First one. Next, the next question is about hostels. Yes, hostels also will come under the hotels related clarification only. So, hostels will also be taxable irrespective of the amount they charge. Okay, next services by way of training or coaching with respect to a recreational activity in arts, culture, sports. Okay, in the fields of arts, culture, sports, and if it is provided by either by an individual or by charitable entities. Okay, who should be providing recreational activity services or training or coaching, sir? Either individual or charitable entity in the fields of arts, culture, and sports. Then they are exempted. Okay, next. Here the points to be noted, sir. Only the services provided by charitable and religious trusts are exempted. If they receive any kind of service, unless specified, they are taxable. Next, residential programs will be offered by the spiritual and yoga organization, committees, sir. What they are providing means nowadays the spiritual organizations they are taking up a residential program of 21 days, 42 days like that. So a person will be staying in their premises and will be attending the spiritual classes as well. So for these 42 days, they will be charging for accommodation, charging for food, and even for spiritual classes. Since it is supplied as a package, we are applying composite supply and mixed supply logic here. The principal supply here is spiritual and which is exempted. So the incidental accommodation and the food are also becoming exempted. Next, we are moving into the next exemption, sir. Services provided by an artist. Sir, an artist should be providing services in the fields of, the performance should be in folk, classical, or art form. It should be in folk, classical, or art form, and that also with respect to musical, dance, or theatrical performance. Let's say that a dancer performed Western dance. Okay, an artist performed Western dance and the consideration he charged is only 1 lakh. Still, it is taxable. And there is let's say, Anirudh. Anirudh performed in a show as a musician and he's a singer also. So, with respect to music, he performed in a show, but which is not classical music, the regular music which we get in the movies. So, and the consideration he charged may be less than 1,50,000, but still it is taxable. So, if they are provided in the fields of folk, classical, or art form, either music, dance, or theatrical performance, and the consideration they charge for a show or for an event is less than 1,50,000, then it is exempted. Less than 1,50,000 per show, then it is exempted.
However, sir, the exemption is not available if they are acting as brand ambassador. I mean, they are performing to promote a brand. Then exemption is not available. Only if they are if they are providing such kind of performance to promote such art or to promote such dance or to promote such kind of music, and if the consideration they charge is less than 1,50,000, then they are exempted. If they are acting as brand ambassador, then they are taxable. Next one, sir. Healthcare services. Healthcare services provided at a veterinary clinic to animals and birds are exempted, but only healthcare services are exempted, sir. These days there are pet care. Okay, so many pet clinics are there which provide so many other services to the pets, such as like nails, removing the nails and the hair, and grooming them. So all these services are taxable except health. Next, services provided by way of transportation of a patient in ambulance, private ambulances which provide transportation of patient services. These are also exempted. And healthcare services provided in a clinical establishment. Clinical establishment means, sir, it can be a hospital, diagnostic center, nursing home, or whatever the name you call, where the general health related treatment is carried out is called as clinical establishment, and the treatment should be provided by medical practitioner or paramedics. So medical practitioner means the person who is having recognized qualification. I mean generally a doctor. Paramedics means like these are not doctors, but they'll be doing some support kind of activities, maybe the nurses or or the physiotherapists, they'll come under the paramedics. Okay, now if you see here, sir, healthcare services means the service by way of diagnosis, treatment, or illness. Sir, one more point to be remembered: palliative care. Sir, palliative care means it doesn't try to diagnose the issue or treat the issue, but it looks after improving the life, quality of life of the patient. Okay, it cannot cure, palliative cure, but it improves the life of the, okay, I mean it decreases his suffering. Okay, it gives him a better way of living even with the disease also. That is called palliative care. Palliative care services are also exempted. However, healthcare services does not include hair transplantation, cosmetic and plastic surgery. They are taxable except when they are provided to reconstruct the anatomy. That means a person got affected in an accident, sir. Then plastic surgery is needed for his face. Then it is exempted. But in general, if the celebrities will be taking these kind of surgeries and all for nose and all to look attractive, beautiful. So those kind of surgeries are taxable. Next, recognized medical system. So the healthcare services which are provided should be in recognized medical system. What are called recognized medical systems? Ayurvedic, naturopathy, allopathy, Siddha, Unani, Yoga, homeopathy. Okay, Ayurvedic, naturopathy, allopathy, Siddha, Unani, Yoga, and homeopathy. These are only called as recognized medical systems. Okay, what are the other kind of systems? Or there may be stone therapy, which is not recognized. There may be pranic healing, which is not recognized, and there may be acupuncture. Okay, by putting needles at the pressure points, they try to relieve the pain, and even there may be by doing some pujas. Okay, black magic kind of. So they are also not hypnotizing. Okay, those kind of are not recognized medical systems. So these services, if the treatment is going to be provided in these kind of ways, then it is taxable. Next, in hospital, sir, nowadays in multi-specialty and super specialty hospitals, they are providing luxurious rooms. Okay, since it is becoming more and more luxurious, the government wants to, the council thought of taxing them as well. So what it said means, when the rooms in a hospital are given on rent except the ICU or CCU, intensive care or critical unit rooms, the normal regular inpatient rooms, if they are charging rent for that room is less than 5,000 per day, then exempted. If it is equal to or more than 5,000, then it is taxable. Next concept, sir. Sir, let's say a patient got admitted in a hospital. Okay, he is having a serious issue, sir. Immediate surgery has to be done. Now the hospital said like there is a senior doctor or a specialist doctor who is in Mumbai. He should come. If he provides the surgery, then the chances of treating the patient will be high. So then even the patient family said okay for it, and the hospital charged 5 lakh rupees as fees to the senior doctor. 5 lakh rupees as fees to the senior doctor. But out of this 5 lakhs, only 3.5 lakhs paid to the senior doctor and the 1.5 lakhs retained by the hospital. Now the question is whether the amount which is charged by the senior doctor is exempted or not. Okay, what about the part of amount which is retained by the hospital which has to be paid to the senior doctor, whether it is also exempted or not? Both the amounts are exempted. The amount which is taken by senior doctor, because it is also in the process of giving treatment only, exempted. Again, the amount retained by the hospital is also exempted, because when a senior doctor is performing such a surgery or operation, the hospital is providing him the infrastructure, the nursing staff, and the amenities. So that's why both the amounts got will be exempted. Next, food supplied in hospital canteens. The food supplied in hospital canteens is exempted only in one situation, sir, where the food is supplied to inpatient. I mean the patient who is admitted in the hospital, and the canteen is owned and maintained by the hospital, and the food is supplied as per the prescription of doctor. Then they are exempted. Canteen owned and maintained by hospital to an inpatient, and the food is as prescribed by the doctor, then it is exempted. In all the other cases, the food supplied from hospital canteens, whether it is owned or outsourced, it is taxable. Next, entry to various events. I mean, entry tickets will be collecting, no? So, with respect to such entry tickets, if it is for a museum, national park, wildlife sanctuary, tiger reserve, zoo, protected monuments, for museum, national park, wildlife sanctuary, tiger reserve, zoo, and protected monuments, irrespective of the amount, they are exempted. Whereas if it is for a circus, drama, theatrical or musical performance, award function, concert, sporting event, planetarium, let's say for a musical event, or for a IPL match, or a pro kabaddi match, or for a movie theater, or for a circus, drama, planetariums, here it is exempted if the consideration charge is less than or equal to 500. Okay, whereas in the above box, museum, national park, sanctuary, tiger reserve, zoo, there it is exempted irrespective of the amount. If it is covered in the second box, it is exempted only if the amount is less than 500 or equal to 500. So now exemption is educational services. Sir, with respect to educational institution, so if educational institution is providing any services to staff, their faculty, their students, or to a probable student by way of conducting entrance exams for a consideration, all these are exempted. Sir, what services would be provided to staff and faculty? Let us assume that they may be training may be provided. Okay, to both staff and faculty, training may be provided. Then along with training, accommodation might have been given, and food might have been provided, or even transportation may also be provided. So these kind of services may be provided to staff and faculty. These are exempted. To students, the normal education, transportation, accommodation, food, all these services provided to students are exempted. And by way of conducting entrance exams, so all the services provided by educational institution to staff, faculty, students, and transport and conducting entrance exams are exempted. However, here the educational institutions can be classified into three types. One is up to 12th, sir. Okay, up to 12th, including the preschools up to 12th. Okay, next, here it is providing a qualification which is recognized by law. Here they are providing a qualification which are recognized by law. And here it is vocational educational courses. So if they are like up to higher secondary school, if they are providing qualification recognized by law, and if any vocational educational courses, then here all the four are exempt. Okay, so let me tell you, based on the category of educational institution, whatever is the service, okay, irrespective of educational institution, if they are providing services to their staff, faculty, okay, students, and conducting entrance exams by way of entrance exams for consideration, these are exempted. But when they are getting inward services, so you'll understand it here better way. So if you see here, these are educational institutions. In the middle, there are educational institutions. Okay, if the educational institution, again they take services and ultimately they are providing to staff, students only. Okay, so they may be having so many inward services to educational institutions, but only these 5 different inward services only exempted. And understand, sir, Here, these are input services to the educational institution. So the exemption is not to educational institution, exemption is to the supplier. Okay, so to a supplier providing certain kind of input services to the educational institution, then he is eligible to get exempted. So why we are discussing here, sir, here we already said the outward of educational services are exempted. But just because the recipient is the educational institution, certain services will become exempted. So let's say I'm a supplier, I'm not an educational institution. If I provide a service to educational institution, then it may get exempted. And if I provide the same kind of service to others, it may be taxable. Let's say, sir, transportation. Okay, transportation of students and faculty, sir. Let's say the supplier will give this bus on rent to, okay, to educational institution. Now educational institution will use this transportation facility for its staff and students. So staff and students will be paying monthly 1,000 or something to the educational institution, okay, which is exempted. And even the supplier giving this rent onto educational institution for a lump sum amount of monthly 40,000. So even this 40,000 is also exempted where the educational institution is up to 12th. Where the educational institution is up to 12th. Next, supplier providing catering and midday meal scheme. I mean, they are providing food to the educational institutions. I mean, lump sumly. Okay, for this they are charging every month 1 lakh rupees. Now, what this educational institution do? It will provide again such food to staff, students based on a meal. Based on meal. So per meal, this educational institution charge rupees 70 per every meal. So now, whatever the educational institution will get also exempted, and even the amount charged by the supplier from educational institution is also exempted. So the same supplier, if he supplied the same kind of food for a function, a marriage or something, then it is taxable. Only if he supplies to educational institution, it is taxable. The same, sir, in the first case, if the transportation service is given to educational institution up to 12th, exempted. If the same kind of buses, if they are given on rent to a tour operator, then they are taxable. Next, the same, sir, the supplier is providing security and cleaning services to educational institution for a 50,000 rupees. It is also exempted. Sir, if you remember, if you see, all the first three type of educational institutions, exemption is available only when the educational institution, receiving institution is providing education up to 12th. Up to 12th. Next, fourth ones are conduction of exams. With respect to conduction of exams, even for ICMA exams also, if you see, they are taking exam centers on rent. So I'm a college, sir, I'm having a college and everything. So I'm giving my college on rent to CMA institution for organizing their exams. Then the rent I'll get will be exempted. Next, maybe I'm acting as a paper sector. Then the consideration I'll get is also exempted. Even the amount which they'll get as an examiner, invigilator or evaluator. So all those amounts are exempted. Even printing of question papers. So only services are here. Next, a supplier providing online periodicals and journals. Sir. Online periodicals means, sir, periodical means a weekly magazine or a monthly magazine, that is called as periodical. There may be the recent updates will be there in these magazines. So when these magazines are taken in online form, that also by an educational institution about 12th, which provides recognized qualification or degree such as like MBA colleges, degree colleges, engineering, medical, law colleges, our ICMA institute, if they are taking any online periodicals and journals, then they are exempted. And again, if they are providing to staff students for a consideration, that is exempted anyhow. Education institution to staff students always exempted part. When a supplier providing services to educational institution, then also it may be exempted in those 5 situations. Okay. Next, services provided by private coaching centers and unrecognized institutions are taxable. Where boarding schools means that they provide education, and even residential schools are there, residential schools and colleges. They may charge for accommodation, food, and as well as for education. Since the predominant activity here is education, which is principal supply, and since principal supply is exempted, the whole bundle will become exempted. In many schools, sir, we might have seen in your child, okay, when you are in school age, okay, you might have seen in your school like there may be hobby classes such as like training of martial arts, karate, taekwondo, and even dance classes. So for that, the schools used to charge a little amount more than the fees, like let's say monthly 100 or 200. So the amount which they charge is also will be considered as naturally bundled, so they are also exempted. And vocational courses are here. Educational institution means even vocational educational institution. Vocational institutions means institutions which offer skill based courses like ITI and all.
Next, maritime training institutes, sir. These institutes will offer the graduation along with the training to select in army or navy or air force. So those training will also be provided along with graduation. So they charge some more quite more fees than that of the normal regular graduation colleges or degree. Okay, so whatever is the fees they charge, that would be exempted. These are also treated as educational institutions. With respect to this MES ones are already discussed. Next, IAMs. Sir, IAMs offer various types of MBA programs, sir. Not only to their full-time students, even we can take classes online. Sir, if they are providing long duration programs for which the duration is more than 1 year, exempted. If they provide short duration programs, then they are taxable, IAMs. Next, sir, many educational institutions nowadays are providing campus placements. So for a campus placement, when a company is coming for campus placement, this educational institution will charge certain fees from the company which is coming for recruitment. Let's say ICMA sir organizes campus placements at various cities. Let's say now Vedanta is participating in it, IDC is participating in it. So to participate in campus placements, they may be paying some fees to the institute. Okay, whatever the fees they charge will be taxable because their institute is providing services not to the students. It is providing services to that particular company by way of providing them the skilled force. Okay, a skilled employee, the qualified people. Okay, so it is provided services not to staff, students, or faculty, to an outsider. So they are taxable. Next, coming to electricity, sir. Sir, irrespective of whether it is transmission, distribution, whatever it is, the electricity is exempted from GST. Electricity is exempted from GST. Only when you are changing the meter from one place to another, then it is taxable. I mean, when you are charging application fee or rental fee for the meters, or if you are asking for a duplicate bill, for that if any charges are there, only these kind of charges are taxable. See, application charges, rental charges for meters, testing fee for meters, labor charges for shifting the meter from one place to another, and charges for duplicate bill. Only these are taxable. Whereas the actual charges for electricity, consumption of electricity is exempted. Next, legal services. Sir, here there may be arbitral tribunal, advocate, and firm of advocates. So all these may be under the legal services. So if they are providing services to any person other than business entity, okay, let's say a guy who is not a business entity is applying for divorce. For such divorce, a lawyer provided services. It is exempted because he is other than business entity. Next, even though he is a business entity, even though recipient is a business entity, if his aggregate turnover in the preceding financial year is less than 22 subsection 1 limits, less than 22 subsection 1 limits means less than the thresholds which are required him to registration. They are like 40, 20 and 10 based on the type of state. Okay, let us assume in the preceding financial year, a person's, even though carrying business, his turnover is within 40 lakhs. Okay, in the current year, if you took any legal service, even though related to business, it is exempted. Next, the lawyer services, if they are provided to central government, state government, union territory, local authority, or government entity, then also they are exempted. Next, a firm of advocate providing services to another firm of advocate, exempted. An advocate providing to another advocate, exempted. Sir. But where a senior advocate providing services to a firm of advocate or a junior advocate, then it becomes taxable. Next, leasing services. Leasing services, sir. I mean, where land has been given on lease for long term. When it is called as long term, sir, when the period is for more than 30 years or equal to 30 years, then it is called as long term lease. So I given my land on lease to government, sir, to government. So the government will be developing such land. Okay, let's say a farmer from Amaravati given his land to the Amaravati to the Capital Region Development Authority (CRDA), his land for development, which is nothing but a state government enterprise. Okay, now the state government, whatever is the lease amount they are going to be pay me, either the upfront amount or the yearly lease amount they are going to pay me is exempted. Now, why the central government should take this land for lease, or the state government for developing the infrastructure or for carrying out the financial business? If any long-term lease has been taken, then the lease amounts which they are going to pay to the persons or to the landowners are exempted. Next, renting of services, sir. Sir, here renting of services.
Okay, so this is the building owner. He is providing renting service, renting of such this building. Okay, if the recipient, okay, now it is exempted or not, it is dependent based on recipient. We should check whether the recipient is registered person or unregistered person. If the renting of service is taken by registered person, then it is taxable. If the service is provided to unregistered person, the renting of immobile property service, then it is exempted. Now, an explanation also has been given, sir, which says like even though it is given to registered person, if it is taxable now. But there is an exception here, sir. Exception when the registered person is individual. When the registered person is individual and the accommodation and the immobile property is used for his residence or for residence of his family, either for his own residence or for his family residence, then even though he is a registered person, it will get exempted. So see here, renting of immobile property to a recipient. If the recipient is registered person, taxable. However, exception is if the registered person is individual and using such property for his residence or for his family residence, then exempted. If the service is given to unregistered person, then it is anyhow exempted. Next, our service is about, sir, services provided by unincorporated bodies or non-profit entities. Sir, if you see here, there are two boxes here. Okay, these two boxes will be covering two different types of bodies. The first one, sir, the first type of unincorporated associations, they'll collect fees from their members. They'll charge certain amount from their members. But for what? It is by way of reimbursement of charges or share of contribution. Let's say, okay, at a place, the government has taken over 1,000 acres of land which belongs to farmers, sir. So now all these 1,000 farmers became as an association. 1,000 farmers became as an association. Then they went to High Court, sir, to cancel such kind of takeover by the government. Now, since they have to go with the legal battle, the association is collecting from every farmer 2,000 rupees. Now they got 2,000 into 1,000. So this amount is used to incur the legal expenses and other formalities and all. So now the association is collecting 2,000, but which is like a reimbursement of charges or their share of contribution. This amount which they collect is with respect of any limit, it is exempted. Whereas the other one is like just paying the membership fee, will not be getting any additional benefit from it. Okay, it's not like they are going to provide any extra service to us. Just to retain as member, you will pay certain amount. Let's say I am paying membership fee to the CMA Institute or the CA Institute. Whatever the amount I am going to pay is not exempted, is not okay. Whatever the amount which I pay is just to retain as a member. They are not going to offer me an additional added benefit or perquisite to me. Okay, so there are two types of associations here. So first one, if you see, by way of reimbursement of charges or share of contribution as a trade union, then they are exempted. However, if it is a housing society, what does it mean by housing society, sir? Let's say here there are a group of, here there are apartments. In this apartment, there are total 500 flats. So now all these 500 flats owners became an association. Now, from each member, from each flat owner or each resident, a member, the AOP collects monthly rupees 5,000 rupees. Why this 5,000 rupees is collected, sir? To provide them electricity backup, to provide them the lift and lift maintenance, to provide them security. So for providing these kind of services for every member, from every member, the AOP is collecting 5,000. So whether this 5,000 is exempted or not, yes, it is exempted where the amount charged from a member per month is within 7,500. Here it is 5,000 only, then it is exempted. Whereas if they collect 10,000, then it becomes taxable. That also in excess of 7,500 only. The extra 2,500 alone becomes taxable here. Okay. Whereas when they are in this second kind of group, sir, I mean when I am paying membership fee to the institute or a student union is there, a student paying membership fee to the student union or a labor union, a laborer paying some fee to the yearly membership fee to the union. So whatever is the amount paid, if the amount paid is within 1,000, then it is exempted. If it is above 1,000, then it is taxable fully. Okay. Next we are going into the agriculture related services, sir. Agriculture related services here, loading, unloading, packing, storage of rice and agri produce is exempted, and even warehousing of minor forest produce. Minor forest produce means such as honey, okay, and spices which come from the forest If warehousing these kind of products, they are exempted. And even warehousing of rice is exempted. Even warehousing of agri produce is exempted. Unloading, packing, storage is also exempted. Next, artificial insemination, nothing but breeding. Breeding of animals is exempted except with horses. Next, services of labeling, preconditioning, ripening, waxing of fruits and vegetables are also exempted. Next, any agricultural services, sir, by way of supplying farm labor, by way of supply of agri machinery, by way of providing agri extension services such as soil testing, okay, and land testing, and seed testing, and providing the required fertilizers, suggesting the required pesticides to be used. So those kind of agri extension services are also exempted. Farm labor is exempted. Renting of agri or vacant land for cattle grazing is exempted. Okay. Next, services by an agricultural marketing committee are also exempted. However, the points to be noted here, sir, where any activity is provided which alters the essential characteristics of agri produce and which terms or which amounts to a further processing, they are taxable. Let us say where tomato is agri producer, but the process of converting tomato into tomato sauce is a further activity which loses the essential character of agricultural produce. So the conversion of tomatoes to tomato sauce, for that if any charges are there, they are taxable. Okay, let us see here the clarifications. Tea. Okay, the green tea leaves which are plucked from the plants are agri produce. Now these plants, these leaves are sent to a factory where the factory will roll them, shape them, refine them, oxidate them, and convert into tea powder. And for that they charge for every ton, let's say 10,000 kind of charges they are charging. So the charges which they are doing, which they are collecting are taxable because they are converting agri produce into a altogether different product. Now jaggery, sir, I own a machinery or factory. So now a sugarcane farmer comes to me and provides me sugarcane. Like let's say he gives me 10 tons. Now I convert this sugarcane into jaggery which comes around 2 tons. Now I charge yes, for conversion of sugarcane to jaggery some 10,000 rupees. The 10,000 which I collect is taxable. The same way with pulses, de-husking and splitting them, for that if any charges are collected. Milling of paddy into rice, if any charges are collected, all these are taxable. Okay. Now let us see the construction services, sir. We'll understand here. The first one, I'm talking about the middle one, sir, here. So if you see, this is the road, and with this road sideways, the electric line is being going on. Okay, along with the road, an electric line is going. Now, if farmer is having farmland here, sir, and he is having a tube well here, the circle is there, na? This is the tube well is having. The bore point. Okay, now there is a distance of 2 kilometers from the electric line unto the bore well of the farmer. Now the farmer wants to get the electric line till his tube well. So the farmer went to the distribution company, the power distribution company. The power distribution company said it wants 10 lakhs to lay the electric line till the tube well of the farmer. So the farmer paid 10 lakh rupees, sir. Then the distribution company is laying the electric line from the nearest point of connection to the tube well of the farmer. Okay, so the amount 10 lakh rupees charged for laying the electric line, for construction of this electric line from the till the tube well of the farmer is exempted. So this 10 lakhs is exempted. Now, sir, a contractor, sir, he is constructing a complex, residential complex under Pradhan Mantri Awas Yojana or Housing for All scheme. And even he is constructing a original work, sir, under Pradhan Mantri Awas Yojana or Housing for All scheme. You could see either it could be original work or even repair work with respect to construction. With respect to single residential unit, I am constructing an individual house, sir. For that, a contractor is providing services to me, not as a complex, as a single residential unit. But here only the original work, not repair works covered. But whereas here the both original and repair works are covered. Now, a supplier who supplies pure labor contracts. Pure labor means he'll supply the labor. If at all this contractor requires 50 labor, he'll provide 50. 100 means he'll supply 100. He'll not supply any good or any other kind of service, only pure labor supply of service. Now this pure labor supply of service provided by the supplier to contract for construction of a residential complex under Pradhan Mantri Awas Yojana or for construction of a single residential unit, then they are exempted. Whereas this construction is taxable only, whereas this construction is also taxable only. Only the labor part, pure labor supply related part alone is exempted. Okay. Hope so you got this construction related point also well, sir.
transportation of passengers. So transportation of passengers, we can understand it in four types. Like what is the mode of transportation? Roadways, railways, airways, and waterways. Okay. If the mode of transportation of passengers is through waterways and it is inland waterways, that means within the country to transport from one place to another. There will be a question, sir. Within Andaman Nicobar Islands, there will be group of islands there. So to transport from one island to island, the ships will be used. They are meant for transportation of passengers, inland waterways. So they are exempted, inland waterways. However, if they are meant for tourism, taxable when they are meant for what? Tourism. Okay. Otherwise, they are exempted. Next, airways. If the airport, okay, if the flight is embarking or terminating from an airport located in special category states. So what are called special category states means special category states. What are special category states means Uttarakhand, Assam, Sikkim, Kashmir, Tripura, Arunachal Pradesh, Mizoram, Manipur, Nagaland, Himachal Pradesh. Out of these, Uttarakhand, Himachal Pradesh, Kashmir are excluded. That means already these states have good tourism, so air traffic is also good. So other than this, any other special category states from there, either the flight embarking or terminating. And from Bagdogra airport, if the flight is embarking or terminating, Bagdogra is located in West Bengal. Then and also the travel should be in economy class, only if it is economy class. So understand, sir, when you are traveling in economy class in a plane and the plane either embarking or terminating in special category states other than Uttarakhand, Himachal Pradesh, Kashmir and including Bagdogra port in West Bengal, then the GST is exempted. Next, railways, sir, other than AC class, all are exempted. Other than AC, exempted. And even the exemption is applicable to metro rail, monorail, and even to tramways also this exemption is available. Okay, railways done, airways done, waterways done. Now the pending is roadways. So through roadways, we can categorize them as like buses, cars or cabs, autos, and we can further categorize them as two-wheelers, the rapidos and all. Sir, buses, if they are non-AC, exempted. Cars, cabs also non-AC, exempted. However, the exemption not available to radio taxi. Autos, exempted. Two-wheelers, exempted. However, if any of these services taken through e-commerce operator, then they are taxable. You understand? In a bus, exempted, non-AC. AC bus taxable. Cars, cabs, non-AC, exempted. Autos, there is no concept of AC, exempted. Two-wheelers, exempted. If these services are provided through e-commerce operator, then they are taxable. So this is about the transportation of passengers. Okay. Next, satellite launch services provided by ISRO or Antics Corporation Limited or New Space India Limited are taxable. And any national permit given, national permits for the trucks to allow the truck to go across India, a permit will be given. The amount paid for permit is also exempted. Services by public conveniences, solo complexes, the washrooms and all. For the amount paid for them is exempted. Next, service by giving on hire. Sir, I am having vehicles. I am having some buses and all. I am giving them on hire. If I am giving them to a state transport undertaking, let's say I am giving my buses to RTC for rent, Road Transport Corporation, then they are exempted. Next, I am giving my vehicles for transportation of students, staff, faculty to a educational institution up to 12, then also exempted. Or if I am giving to a local authority and the vehicle I am giving is an electronically operated vehicle, then also exemption available. Next, Services by transportation of goods by a vessel. If it is export freight, exempted. Import freight, also exempted. Next, why exempted import freight means it is already includable in the customs value, sir, while taking CAF value. So that's why it is exempted. Next, goods transportation services to unregistered individual or to government is also exempted. You can see here the goods related. Again, for goods also there are roadways, railways, waterways. Sir, through roadways when the goods are being transported, except if it is through GTA or courier, it is exempted. That means by rickshaw or by bullock cart, then they are exempted. Okay, if they are being transported through a GTA means goods transport agency. Who is called goods transport agency? Goods transport agency means the person who transports goods using a motor vehicle and issues a consignment note is called GTA. So, okay, now coming to waterways. When the goods are being transported through waterways, inland waterways, exempted. When the goods are being transported through aircraft, no exemption available, fully taxable. Third one, when the goods are being transported through airways, fully taxable. When the goods are being transported through rail, only in those two cases exemption available. Relief materials and Onam. Relief materials. I mean, whenever a flood or disaster comes, then from various places, the relief materials will be sent. So when the transportation is when the transporter is taking money for transporting such relief materials, on that there will not be any GST. Onam means organic manure, newspaper, agri produce, military and defense items, milk, salt, edible oil. For transportation of these items, there will not be any GST. Even if the transportation is by way of GTA, okay, GTA, if the transportation is being made also, if it is to relief materials, if it is Onam, if it is to an unregistered individual, or if it is to government, then even by GTA the services provided are also exempted. Next, tour operator service. You can understand here. Tour operator service. The tourist is a foreign tourist coming from non-taxable territory, whereas the tour operator is in India. Let's say if the tour is fully in India, I mean a foreigner coming for a visit in India, he'll stay here for 10 days or 15 days, the whole tour is within India, then no exemption available, fully taxable. If the tour provided by Indian tour operator, but to a foreigner, and the tour is completely outside India, then it is fully exempted. Now see, where the tour is partly in India and partly outside India, then the exemption available is, yes, exemption available, sir, to the extent of value which is performed outside India, to the extent of tour value outside India. How could we find out the extent of tour value outside India? Take 50 percentage of the, sorry sir, take 50 percentage of the total consideration, or tour operator service should be in proportionate to the total number of days. Okay, you'll understand that it should be outside related, proportionate, or 50 percentage will be given as exemption, whichever is lower. If you see here, sir, I took an example. The tour value is total 50 lakhs and it is for 15 days. The number of days of tour is in China 5 days, Sri Lanka 4 days, and India 6 days. Now take 50 percentage of it, 25 lakhs, and 50 lakhs into 6 by 15 if you do proportionate to the, okay, sorry, the travel spent outside India, 50 lakhs into 9 by 50, okay, which will come to 30 lakhs. So whichever is lower means 25 lakhs now, so 25 lakhs will be given as exemption. Okay. Next, sir, insurance services. Sir, when you look at the institute material, there will be lot many insurances, sir. It's not even important for exams. Generally, they will not ask a question. Even if they ask also, it's not so easy because there are so many insurance schemes which they will make exempted. So I discussed only few here, which I personally think important. Okay, hut insurance, cattle insurance, okay, crop insurance, Pradhan Mantri Fasal Bima Yojana, these are exempted. And even reinsurance. Reinsurance means when we are having some risk, we'll take policy from insurance company. When insurance company is having risk, okay, the risk is like what happens if all the accident policies they took got mobilized in the same year itself. Then it's the risk to the insurance company. Then they'll take insurance from another insurance company, which is called reinsurance. The premium paid for reinsurance is exempted. Next, annuity paid under National Pension Scheme and any amounts paid for Army, Naval, Air Forces. Okay, these are also, and some famous insurance schemes are Janashri, Aam Aadmi Bima Yojana. These all are exempted. Next, services provided by notified bodies, Employee State Insurance Corporation, Employee Provident Fund Organization, NPS, Coal Mine Provident Fund. They are providing services by way of managing the fund. For that, they will be charging some considerations. Those are exempted. Next, news services collecting or providing news by an independent journalist. So let's say I acting as an independent journalist and I started a channel in my YouTube independently. Now, since I need consideration, I'm asking from the viewers to pay me some amount. So they are paying me like one person paid me 10,000, one person paid me 5,000. So like that, I'm collecting money. Okay, and acting as an independent journalist. So whatever the amount I collect for acting as an independent journalist, it is exempt. Okay. Next, Press Trust of India, United News of India, those all are exempted. Okay, I have seen somewhere like maybe it is Karan Thapar, I think. Okay, independent journalist he said like to give so much content like that. If you want, you can send some money to that particular accounts and all. I seen, sir. I'm not sure. Okay, I seen some random YouTube video. Many Telugu and in Tamil, those YouTubers are also doing like that now, acting as independent journalists and collecting money from the viewers and all. So that is fully exempted. And even Press Trust of India and United News of India, these are the broadcasting channels, news broadcasting channels of Government of India. Their services are also exempted. So now government services, where central government, state government, union territory, local authority providing any service to business entity, government providing services to business other than business entity, sorry, government providing services to other than business entity, these are what? Exempted. Government providing services to other than business entity or exempted. However, exemption is not available on these services. The government providing services to business entity other than business entity exempted. However, on post office services, on services provided with respect to aircraft or vessel within the port premises, and transportation of goods and premises, these are not exempted. Other services by government are exempted, where government providing services to a business entity, but whose turnover in the preceding financial year is within the 22 subsection 1 limits. 22 subsection limits are with respect to goods. Okay, they are 40, 20 and 10 based on the type of state they are. If they are in PT, Pondicherry, Telangana, Sikkim, Uttarakhand, Meghalaya, Arunachal, Pondicherry, Tripura, Sikkim, Uttarakhand, Pondicherry, Telangana, Sikkim, Uttarakhand, Meghalaya, Arunachal Pradesh, then the turnover limit is 20 lakhs. If they are in Mint, Mizoram, Manipur, Nagaland, Tripura, then the limit is 10 lakhs. In case of others, then the limit is 40 lakhs. This is with respect to goods, 40 for others, 10 lakhs for Mint. PT Suma is for 20 lakhs. In case of services, if it is PT Suma, service also 20 lakhs. In case of Mint, 10 lakhs. In case of others also it is 20 lakhs. Okay, when the turnover of this business entity is within these threshold limits, then they are not required to, the services provided by government to them, to a business entity whose preceding financial year turnovers are within these limits are exempted. However, exemption is not available to Department of Post, transportation of goods and passengers, renting of immobile property, and services provided within the port premises with respect to aircraft and vessels. Where the government providing services to another government, exempted. However, exemption is not available to TAP. TAP means transportation of goods and services. P for post office services, and A for services provided within the premises of airport, seaport with respect to aircraft and vessels. Next, even the central government, state government providing services to any person, that means including a business entity who is registered also, it is exempted where the consideration is within 5,000. However, this exemption is not again applicable to transportation of goods, services within the port premises and post office services. Next, where Department of Post Office is providing services to any person, and such services are postcard, inland letter, book post. Only these three are exempted. Others are exempted. Next, where the government is giving grants to any other central government, state government, union territory, then they are exempted. When the government is acting as a guarantor to PSU, let's say BSNL is in loss itself. So now BSNL wants to take a loan, but the banks are not ready. Now central government acts as a guarantee for it. Now the guarantee commission which is paid by BSNL to the government is exempted. Now government providing services to business entity by way of giving telecom license, that is also exempted. Now government providing charging any fees for registrations like testing, calibration, safety checks and all. For this kind of registration, if any amount is collected, that is also exempted. Next, government providing any services like giving passports, visa, driving licenses, for that birth certificates, for that if any charges are collected, that is also exempted. Next, government collected any amount with respect to tolerating an act or for non-performance of a contract, that is nothing but fines, penalties and damages collected are also exempted. You could see a question in supply chapter we discussed consists of this point. Next, central government, state government, union territory, local authority giving the forest land or the government land as lease to a farmer to carry out agricultural operations. Okay, and the lease rent paid by the farmer is exempted. Now, state government, sir, they'll be collecting royalty on these minings and all. Now, how the royalty will be paid based on the quantity of coal extracted or quantity of iron ore extracted. Okay, let's say for ton 300 or for ton 500 like that. Since the government wants the money it lump sum, they cannot wait for so much longer periods to that, because whenever a new government comes they want to spend lot of money on public or on welfare schemes, so that the government gets a good name, no? So that's why they try to get so much money as possible at the earlier date itself. So what they'll do, they'll transfer such royalty collection right to some other person and take a lump sum amount. So while by transferring their royalty collection rights to other persons and taking lump sum amounts is also exempted. Next, government, central government by way of deputing officers. If you see, sir, in customs, the goods imported will be unloaded at the during the supervision of proper officer, that also in the working hours only. Whereas now customs even allows to unload the goods after working hours. When they are unloading after working hours, then merchant overtime charges has to be paid. That merchant overtime charges paid are also exempted. Next, central government, state government, if it is running a old age home for residents whose age is greater than 60 years and the consideration they charge per month is within 25,000, then it is exempted for a old age home. For a person in a old age home to stay him or to take care of him in the old age home, for a person if the amount charged is less than 25,000, then it is exempted. So now look at the other services, sir. Services provided by to a recognized sports body. Okay, to a recognized sports body, a player, referee, they will be providing services. Now those are exempted. Whose services? An individual as a player, referee, player service exempted, referee service exempted, umpire service, coach, team manager for participating in a sporting event organized by recognized sports body. Okay, only if it is organized by a recognized sports body, then it is exempted. That also player, referee, umpire, coach, team manager. Okay, whose services are not exempted, sir? Selector service taxable, commentator service taxable, curators and other technical service expert services are taxable. Okay, most frequently asked one, sir. So quite important. Next, services by RBI exempted. Next, sir, this part we already covered in supply, but once again I am repeating. Services of accepting deposits and providing loans. A bank or any person, if he is offering loans and advances, he will be getting in consideration interest. So the interest and discount he earned is exempted. However, banks may charge extra service charges, documentation charges, broking charges, administrative charges. All those kind of charges are taxable. Only interest is exempted. If any late payment charges are levied for late payment of credit card, that is exempted, and discount on bills discounted is also exempted. Next, where any charges levied by bank with respect to settlement of a online transaction and the amount is less than 2,000, where the amount to be settled in a single transaction is less than 2,000, then the charges levied by bank on them GST is exempted. Next, sale or purchase of foreign currency among the banks and authorized dealers is exempted. Whereas between others, it is taxable, sir. In value of supply, there is a rule also. How to determine value of supply when there is selling of foreign currency or buying of foreign currency. Okay. However, if it is sold or purchased among the dealers, or among the banks, then it is exempted. Next, a business facilitator or correspondent. So these people will try to grab business or to get business for the banks in the new areas. If a bank is newly started here, then to get the business for the bank, these business facilitators and the business correspondents will be helping them. So the services provided by business facilitator or correspondent to a banking or insurance company in a rural area, then it is exempted. Next, services provided by fair price shops, nothing but ration shops. Okay, the ration agent will be distributing the ration to the public. No, for such job, he'll be charging some commission or some amount. That amount is also exempted. Next, the amounts collected by state governments in order to contribute to Atal Pension Yojana or Pensions Yojana are exempted. Next, services provided to central government and state governments are also by way of insurance scheme or under any training program. So let's say I'm a GST trainer. If I train to you guys, it is taxable. If I train the government or any government people, then it is exempted. Next, services by GST and to central and state government. In the first chapter, we discussed the functions of GST and settlement of revenues between central and state. That's the work carried out by GST and to the government. Now, for that, they are taking certain charges. That is exempted. Services provided by NSDC and SSC. These are like skill development services. Okay, they try to help or get the skills. Okay, to know about the skill training. Those such as like skill based training means for the women regarding the machine training, like the sieving machines will be there, sir. With respect to the training will be given, and even nowadays like the programming languages, typing, these kind of skills training is being provided by these institutions. For that they will be charging some nominal amounts. Those are exempted. Next, services provided by way of transfer of going concern. Important one, sir. Sir, a doctor is running a hospital from 20 years. Okay, and he has lot of client base and all. Okay, now since he wants to retire and none of his successors are into medical profession, so he is transferring this hospital to some other person for a goodwill of 50 lakhs. Now since he is transferring the hospital as a going concern, the 50 lakhs he received is not taxable, it is exempted. Next, services associated with the transit of cargo to Nepal and Bhutan, exempted. Toll charges, you see the toll charges, they are exempted. But whereas this services by way of access to road or bridge on payment of annuity is taxable. Next, where a new company has been started, a startup maybe in a SEZ area and okay, and it's an incubator. I mean, it's a new startup company and they are offering services. Their services are exempted from GST until they cross turnover of 50 lakhs or the 3 years period, until the 3 years period is lapsed, or 50 lakhs, whichever is earlier. Next, services provided by Food Safety Standards Authority of India by way of testing and giving the FSSAI license. For that, they will be collecting some fees, that is also exempted. Services by libraries. Okay, nowadays people are not going to libraries, they are going to reading rooms. But libraries also offer certain services like you can take membership from library, then you can take books. I mean, you can just lend books. Once you finish reading again, you have to return it to the library. So those services are exempted. Business exhibitions, any service provided to a person with respect to business exhibition. I mean, I am acting as an exhibitor for Tata products in Dubai. Okay, so I am carrying out a business exhibition outside India. So my services are exempted. If I provided them within India, then they are taxable. Services by a foreign diplomatic mission. That means US embassies, various government related embassies will be there, no? Foreign governments. So their services. What are the services they provide? They will be granting visa on payment of fees and all, no? So those services are exempted. Next, services by way of providing information under RTA Act, Right to Information Act. Under RTA Act, if you apply for any information, they'll ask you to pay certain fee, 20, 30, some amount. Such fees is also exempted from GST. Next, you opened a zero balance account under Pradhan Mantri Jan Dhan Yojana. You opened a zero balance bank account. So now bank may be levying certain charges to you, such as like credit card, debit card issue charges, statement charges, like that. On those charges, there will not be any GST for zero balance account holders. Whatever are the charges made by or levied by bank, On those charges, there will not be any GST. Next, services by rehabilitation professionals. So rehabilitation professionals are also having a lot of requirement here, because the many youngsters or many people nowadays are suffering from this depression, okay, various mental disorders and all. So rehabilitation professionals, nothing but psychiatrists, okay. So these, if they are providing services by way of rehabilitation therapies or counselings, which in a hospital, medical establishment, or in education institutions, rehabilitation centers established by central and state government or by any charitable entity, so the services offered by these rehabilitation professionals are exempted, okay. Sir, there are two clarifications, sir, which are issued newly. Clarification on applicability of GST on accommodation services by Air Force mess and other similar messes to its purpose. Sir, you know, the army, there'll be bases, and even Air Force, there'll be bases. So, a base or a team of Vizag went to Kolkata for some 30 days drill or something. Now, when they are staying in Kolkata base, they need to stay at some place. Now, so there may be a Navy houses or army related bases, so there only they are taking food and their accommodation have been provided. Now the question is, for that, if government charges any amount or recovers any certain amount from them, is it taxable or exempted? Almost all the services supplied by government to business and other than business entities are exempted. Now here, those navy employees, army employees are also other than business entities, so it is classified that accommodation services provided by Air Force mess or Army, Navy mess or military, paramilitary, police force messes, or to a police or army officer or navy officer who is not a business entity. Hence, the amount collected for such accommodation will cover under the entry services provided by government to any person other than business entity. So the amounts collected from them are exempted. Next, clarification on District Mineral Foundation Trust. Sir, this District Mineral Foundation Trusts are set up by state governments or any other government authorities. Why? Sir, whenever a mining operations or mining license has been given to a company, so that company will do the mining and then they'll fill the mining area with some soil and they'll leave the place and go. But because of extraction of coal from there, lot of pollution, the soil get polluted there, okay, the underground water may get polluted. So because of this, the nearest areas may get affected. Maybe such effect cannot be seen now. Once the mining is closed and the mining company went off, even after that, after 5 years, 10 years also, those impact can be seen. So in order to counter that, in order to give benefits and facilities to the affected people even after 5-10 years, this District Mineral Foundation Trust will be formed. So they will be collecting from these mining companies some money or some donations initially itself, but they reserve it to provide services even after 15-25 years of closing the mine also. They work for the interest and benefit of persons and areas affected by mining operation. They provided services related to drinking water supply, environment protection, healthcare, etc. These are eligible for same exemption. Okay, the services they provide are eligible for exemption. Okay, so by this we completed the exemptions chapter also, and the problems also we'll discuss, sir, few problems from this chapter also. Sir, look at few problems. Question number 1, sir. Sir, in our syllabus there is both exempted goods and services, but we in class will discuss about only exempted services. Will not discuss exempted goods. But since there is one question in study material, sir, maybe if at all they ask a question from goods, I think like this may be picked directly. So I was discussing this question. Sir, first of all, see here, where plastic bangles are supplied, they are exempted. Plastic bangles, books, date, salt, organic manure. Okay, so now if we sell plastic bangles which are exempted, okay, mobile phones taxable, printed books and newspapers exempted, dates exempted, salt exempted, whereas organic manure is also exempted and chemical fertilizers are taxable. You could see the values here. So if you see here, the value is 5,75,000, but since 30% subsidy given by central and state government shall not be includable in the value of supply. So they excluded that and only 4,02,500 is taxed. Okay. So now look at question number 4. Mary Charitable Trust registered on 12 AB provided following services. Services by way of training and coaching in recreational activities of sports, 4 lakhs. In the charitable entities, if you see the chart, the last line, okay, providing recreational activities by an individual or charitable entity with respect to sports, arts, culture are exempted. So it is exempted. See, from organizing yoga camps and fitness camps, sir, here fitness camps is also there. It is not advancement of religion or spirituality or yoga. So they are not advancing it. They are encashing it. They are making it as a business. Through that they are running yoga camps for a fee. So it is taxable only. It is not exempted. Here it is exempted. Next, organizing fitness camps in Reiki, aerobics, no exemption, taxable. Services of public libraries by way of lending of books, publications, or any other knowledge enhancing content or material. So the services by public library by way of lending books is exempted. Is exempted. You could see the answer as well. So you could see the question here. Indian Railways. Only AC class are taxable. All others are exempted. So general class exempted. Sleeper class exempted. First class AC taxable. Second class AC taxable. 3-tier AC taxable. So all these 3 are taxable. So this is with respect to transportation of goods, sir. You know, transportation of goods, relief materials and ONAM are exempted. ONAM means organic manure, newspaper, agri produce, milk, salt, edible oil, and military equipment. Transfer of postal bags, no exemption, taxable. Household effects, taxable. Petroleum products, taxable. Transport of relief materials to flood affected areas, exempted. Transport of newspapers and magazines, exempted. Transportation of milk, exempted. Alcoholic beverages, taxable. Defense and military equipments, exempted. Chemical fertilizers taxable, and other taxable goods also taxable. So here you should, the exemption is available only with respect to relief materials and ONAM. ONAM means organic manure, newspapers, agri produce, milk, salt, edible oil. So look at this question. Mr. Nawab, a registered person providing classical dance. Consideration is less than 1,50,000, exempted. In TV serial, taxable. Brand ambassador, taxable. Okay, he is coaching in recreational activities relating to arts. Since he is an individual, providing recreational activities exempted. Activities in sculpture making, there is no exemption specifically available, so taxable. Next, performing western dance, taxable. You could see the question here. Sir, look at this service. Here, question number 21, look at this question. Certain legal services are provided by senior advocates to business entities. Where the business entity turnover in the preceding financial year is greater than 22 subsection 1 thresholds, is greater than aggregate turnover greater than 22 subsection 1 threshold, then it is taxable. Sorry, then it is taxable. Otherwise, it is exempted. Here, mere contracts for representation of service provided by senior advocates to any business entity has been entered into through other advocate or firm of advocate state the turnover. Sir, here where the recipient of service, that is business entity, previous year turnover more than 20 lakhs, with the litigant applicant is liable to pay GST. CS, where a senior advocate renders representation services for a business entity whose turnover is greater than 20 lakhs, the same is taxable. GST will be payable by recipient. Recipient of service, that is business entity whose previous turnover more than. Here also, even acting as a representative, it is taxable. Sir, see the question here, sir. Well, nursing home has received the following amounts. Palliative care. While explaining healthcare, I said palliative care, it doesn't treat but improve the quality of life, so it is also exempted. Services provided by cord blood bank of the nursing home by way of preservation of stem cells, that it used to be exempted previously, but now it is taxable only. Even if answer, if it is taxable, correct it, it is if answer it is given as exempted, correct it, it is taxable now. Head transplantation, taxable. Ambulance services provided to critically ill patients, exempted. Transportation of patients in ambulance on behalf of the state governments against consideration, exempted. Naturopathy treatment, such treatment is a recognized system, so it is exempted. Plastic surgery to restore the anatomy, exempted. Pranic healing, sir, it is not a recognized medical system, so taxable. Mortuary services, these are covered under Schedule 3, negative list, flames, funeral, burial, crematorium services, mortuary including transportation of deceased. So this is not a supply item. Okay, this is about this particular question. Okay. Sir, if you look at the question number 14 as well, related to agriculture services, renting of agro machinery, 5 lakhs. Renting of agro machinery is exempted. Cultivation of ornamental flowers, whatever is the type of flower, since it is agri produce, it is exempted. Processing of tomato ketchup, sir, this is for further processing. Agri produce is converted into other types, so it is what? Taxable. Next, plantation of rubber. Sir, plantation of rubber is also agri produce, so exempted. Whereas processing of potato chips, further processing, so it is again taxable. Hello friends, our chapter is now place of supply, sir. Even in place of supply, okay, there are certain areas I am picking which are of most importance. But understand this, sir, it is little tricky to pick some areas of focus in exemptions and place of supply chapter, because an MCQ or a random point in a question can be asked from anywhere. Okay, but when a exclusive question from place of supply comes, then I can say like these could be the areas. So in your section 10, easy one, sir. Coming to section 12 and 13, so I picked certain areas of focus, but whereas I try to cover all the other parts also, all the other areas also in marathon. Coming to the workbook solving, sir, in this chapter also there are a lot many questions, sir. It's not practically possible for us to solve questions. We would try to solve at least the questions from these areas, at least. Okay. Now coming to the place of supply, sir, you see, place of supply provisions are from IGST Act, whereas the other provisions which we are discussing, okay, are from CGST Act. But whereas this chapter is purely from IGST Act. Okay, why place of supply? Place of supply is important to identify to find out the destination, because we all know GST is a destination based tax. Since it is a destination based tax, we need to find out the destination. We need to find out the destination to decide intrastate or interstate. If it is interstate, the revenue should be transferred to the destination based tax. So we'll be finding out the place of supply. So in simple, through place of supply provisions, we are finding out what would be the destination of those goods or services. Okay. So place of supply helps us in determining interstate or intrastate supply, and even to decide whether it is an export or import. So place of supply provisions are framed considering the destination based tax principle. So in this chapter there are 4 sections of most importance, section 10, 11, 12 and 13. Out of these 4, 10 and 11 refers to, okay, out of these 4, section 10 and 11 are related to goods, sir, whereas 12 and 13 are related to service, sir. Okay, before going into 10, 11, 12, 13, let us see what is called section 7. Section 7 is about interstate supply. Okay, what is called interstate supply? When location of supplier and place of supply are in 2 different states or union territory, then it is called interstate. Once again repeating, sir, location of supplier and place of supply. Okay, next, if it is an import, then also we can call it as interstate supply, where location of supplier is in India and place of supply outside India. That means supplier here, destination outside India. Okay, in general we call it as export, but here they are not referring it as export, because to call it as export there may be other conditions also. So what they are saying simply, where location of supplier is in India and place of supply outside India, it is called interstate. Next, when the supplies are made to SCZ and any other supply which is not an intra can be called as interstate. So there are 5 points, sir. Location of supplier and place of supply in 2 different states. If it is an import, location of supplier is in India and place of supply is outside India. Supplies are made to SCZ and it is any other supply other than intrastate. Export. What does it mean by export? Export of goods means taking goods out of India to a place outside India. From here, if you are taking goods outside India, then it is called as export. See the definition of export service, very interesting here. Supplier in India. Okay, let's say I am exporting. I'm a supplier, I should be here in India. But the recipient should be outside India. Even the destination should be outside India. So location of supplier in India, location of recipient, place of supply, both should be outside India. But if you see here, sir, in case of service, sir, The government cannot rely on the supplier's wordings, because I could simply say from here I am taking classes to students in Dubai or in US or in UK. Okay, and I simply claim it is an export of service and I will not pay any tax and I just claim it as zero rated supply. Okay, so they are not ready to believe me. So what they are asking me, okay, Baba, okay, you are saying it as export of service, then we need a proof. So they are going to believe me that I made export only when the payments are realized in convertible foreign currency, or if RBI approves, then fine, it can be received in Indian currency. So in general, in my case, I cannot go to RBI and RBI cannot consider me as a special case and all, not applicable. So in simply the currency should be realized in convertible foreign exchange. Okay, if I receive that means then it is export. Otherwise, they'll not call it as an export. So fourth point, sir, the consideration should be in convertible foreign exchange, and just supplier and recipient are not just distinct persons or mere establishments of distinct persons. Okay, we cannot call that here there is head office and outside India there is branch office. Then we cannot call it as export, because they are just establishments of different person, same person. Okay, so what is called export of service? Supplier in India, recipient outside India, place of supply outside India, consideration in convertible foreign exchange, and supplier and recipient are not mere establishments. Now coming to import of goods. Import of goods means simple, sir, bringing goods from a place outside India. Next, import of service. What is called import of service, sir? In import, supplier should be outside India, whereas recipient in India, and even the place of supply shall also be in India. Now we are moving to section 10 and 11, sir, which talks about place of supply of goods. So in section 10 subsection 1, the first one, section 10 subsection 1a, it talks about where supply involves movement, and even it covers the over the counter sales which are made to a registered person. Over the counter sales means, sir, I am having a shop here, I am having counter. So you came to me and you purchased some goods, okay, and you are a registered person, then it is covered here. It is assumed as the supply involves movement of goods over the counter sales made to a registered person. Or else you are there in, okay, I am in Hyderabad, you are somewhere in Kolkata, okay, so I just selling goods from here and I ship the goods to you in Kolkata. Okay, or else you yourself will send a transporter from your side and that guy will come and pick the goods and take you and deliver to you in Kolkata. So in all these cases, supply involves movement. That means goods has to be moved from one place to another. In such case, what is the place of supply, sir? Location at which such goods terminates for delivery. Location of goods at the time movement terminates for delivery. Let us see here, sir. Supplier is in Hyderabad, okay, and recipient is in Mumbai. This truck carrying goods and taking them to Mumbai, then the place of supply is what? Mumbai. Okay, it is irrespective of who is causing the movement. Okay, the movement may be caused by supplier himself or by the recipient or even by a third party. Whoever is causing the movement, if the goods has to be moved from one place to another in order to complete the such supply, okay, then the place of supply will be the movement. Place of supply will be the location of goods where the movement terminates for delivery. Next, 10 subsection 1 is, sir, it is newly added, sir. This section, okay, newly added, applicable from June attempt only. Okay, what this section says, sir? Place of supply with respect to over the counter sales to an unregistered person. Over the counter sales to an unregistered person. Let's say when you went to a DMart or went to a Reliance store, okay, okay, you majority are being unregistered persons, no? So then they are buying goods and it's not practically known to them also where they are taking those goods. Let's say, sir, I went to Bangalore and there I went to a random sweet shop and I bought some 3 kgs of sweets. Now, how could the sweet shop guy will know where I am taking those sweets? I might eat those out of the sweets 1 kg in Bangalore itself and 1 kg I take to Hyderabad and 1 kg I'll send to Vijayawada. So how could they know? Okay, so that's what they are saying means with respect to over the counter sales which are made to an unregistered person, check whether address of the person is available in their usual course of business. Okay, let's say if you went to a shopping mall and you are buying goods in a like one branded store, you are buying goods. Then while billing, they may ask your address. Okay, so they are collecting your address even though you are an unregistered person. In such case, place of supply will be address of recipient. But in the usual course of business, they will not ask your address. In such case, place of supply is location of supplier. So with respect to over the counter sales, check whether address is taken by the supplier or not. If address is going to be collected by the supplier, then place of supply is where such address is there. Where address is not recorded, then place of supply is nothing but location of supplier. So next one, sir, 10 subsection 1b, one of the important sections here, sir. Bill to ship to model. What does it mean by bill to ship to model, sir? So follow me here. Otherwise, you will not understand this diagram. So here there is a guy called Dharmateja. Okay, he ordered goods with this guy called Bhaskar. Then Bhaskar again ordered those goods with Chaitanya. Now Chaitanya raises invoice to Bhaskar and Bhaskar raises an invoice with Dharmateja. Okay, but if you see their locations, Dharmateja is in Maharashtra, Bhaskar is in Hyderabad, whereas Chaitanya is in Bangalore. If Chaitanya sends goods to Bhaskar also, again those goods has to be ultimately sent to Maharashtra only, no? So that's why Chaitanya sent goods directly to Dharmateja, who is in Maharashtra. So why it is called bill to ship to model? If you see from the supplier perspective, he is billing to one person, whereas shipment is made to another person. So this is called as what? Bill to ship to model. So how the place of supply will be decided in a bill to ship to model means the provision simply says like it shall be deemed that the third person has received goods and place of supply of such goods shall be principal place of business of third person. So here who is called third person, sir? So this person who is the original supplier, who is the person sending will be treated as supplier. Who is ultimately receiving the goods is treated as recipient. You can see here supplier, here it is recipient. Whereas this guy will be treated as what? Third party. So now what the provision says means even though goods are sent directly from Bangalore to Maharashtra, we should assume like the goods are being sent from Bangalore to Hyderabad and from Hyderabad those goods went to Maharashtra. In such a way we should assume. So what would be, sir, here there are two transactions if you see. One is supply 1, the other one is supply 2. One is between Chaitanya and Bhaskar. Between Chaitanya and Bhaskar, this transaction, this wing of the transaction. So what happens here? Chaitanya and Bhaskar. So here in such case the Bhaskar didn't receive goods actually. What the place of supply under 10 subsection 1 says means even though Bhaskar didn't actually receive goods, you should assume he received goods and the place of supply will be his principal place of business. So place of supply is determined under 10 subsection 1 clause B. Place of supply equals to location of third party giving directions. If IDC is available to Bhaskar, the goods are deemed to be received. Okay. Next, in case of supply 2. In case of supply 2, I mean this transaction. Okay, in this transaction, Bhaskar is the supplier and recipient is Dharmateja. Okay, sir, here it's a normal case, sir. 10 subsection 1 clause A. Supply involves movement of goods. So, place of supply under 10 subsection 1A where movement terminates from delivery. That is Maharashtra. Okay, you can understand now, sir. In this bill to ship to model, there are two supplies. One is this supply and the other one is this one. For this supply, that time of supply will be decided under 10 subsection 1 clause B. Whereas here it has to be decided under 10 subsection 1 clause A. Okay. So what would be the place of supply under 10 subsection 1 clause B? Even though this third party actually didn't receive goods, assume he received those goods. Okay. At his principal place of business. So which will be treated as the place of supply. Next, 10 subsection 1 clause C. Where supply involves no movement at all. Okay, how could be a supply without movement? If you see, sir, SBI Bangalore leased out a plant and machinery to ABC Limited, which is in Mumbai. Okay, since SBI already leased out the machine will be in Mumbai, ABC Limited location only, na? Plant and machinery is within the premises of ABC Limited. Let's say for 1 year, 2 years, they continued the lease. Then in the third year, they want to purchase that machinery itself. So now SBI sells that plant and machinery to ABC Limited. Here supply involves no movement because the machine is already within the premises of ABC Limited. So in such case, what would be the place of supply? Place of supply equals to location of such goods at the time of delivery to the recipient. Where such goods are located at ABC premises only within Mumbai. Whereas supply is from Bangalore, it becomes interstate transaction. Next, where goods are assembled or installed at site from various places, different spare parts or different goods has been bought and they will be installed at one place. Now what will be the place of supply for all those goods? The place of supply will be where such assembling or installation has been carried out. Now coming to food and beverages, sir. So food and beverages in certain cases they may fall as good, in certain cases they may fall under the service. Let's say when you purchase a cool drink, thumbs up coke, it will be a supply of good. When you purchase a biscuit packet, lace packet or chocolate, those are also food items, but they are goods. But when you order a biryani or when you take an ice cream from an ice cream parlor, when you take a tea, a coffee or a fruit juice, then this comes under supply of service. So how could we identify? Sir, when they are cooked foods, or they are having low shelf life, then they are treated as supply of service. Example, fruit juices, breakfast, okay, and normal restaurant food supply. Okay, when they are processed and they are preservable like chocolates, biscuits, cool drinks, they are supply of goods. Sir, however, sir, there is a case law which said like bakery items has to be treated as supply of, sorry, not supply of services, they treat it as like supply of goods only. Okay, next, goods supplied on board a conveyance, 10 subsection 1 clause C. I mean, when you are traveling in a train or when you are traveling in a plane, so some food has been offered to you in the conveyance. Okay, they are goods. I mean, some chocolate has been sold to you or some cool drink has been sold to you in such cases. So you can see train started in Kerala, whereas Trivandrum, goods boarded in Chennai, whereas passenger boarded into the train in Vijayawada, whereas ultimate destination of train is in Mumbai. Okay, so now he may be, the passenger might have bought such good at any place. Okay, so what would be the place of supply? Place of supply will be the location at which such goods are taken on board, where such goods are taken on board. Next, 10 subsection 2, sir, with respect to any transaction which are not covered elsewhere under section 10 subsection 1, but nothing has been notified as of now. Now coming to section 11, import. With respect to import, place of supply is location of recipient, With respect to export, place of supply is location outside India. So under goods are 10 subsection 1 A, B, next 10 subsection C and 10 subsection 1 clause CA, clause D, clause E. So where supply involves movement, where movement terminates for ultimate delivery. Next, where over the counter sales to an unregistered person, address available, address of recipient, address not available, location of supplier. Where bill to ship to model, in case of bill to ship to model, place of supply is location of such a third party. Fourth one, supply involves no movement, where the goods are located at the time of delivery. Fourth one, supply involves assembling, installation, trial run, etc. Okay, where such goods are assembled, installed. Next, sixth one, supply of goods on board a conveyance, where the goods are onboarded into such conveyance is the place of supply. So now we are moving into place of supply with respect to services under section 12 and 13. So it will be tricky part, 12 and 13. If you are not listening actively, simply you lose the track. So please be attentive and listen to the parts clearly, guys, because it's a marathon. We cannot repeat it for 3-4 times. So please be attentive. So let us understand first 12 subsection 1, 13 subsection. So these two subsections will tell when a service is covered under section 12 and when a service is covered under 13. You see, where location of supplier and recipient, that means both supplier and recipient are in India, both of them are in India, then such service is covered under 12 subsection 1. You need not to worry where the place of supply is going to be. Place of supply may be in India or outside India. But first of all, if supplier and recipient are in India, then under 12 subsection 1. If supplier and recipient only one of them is in India and the other is outside India, then it is covered under 13. Okay. When section 12, sir, both supplier and recipient both are in India. 12. Where supplier is in India, recipient outside India, 13. Where recipient is in India, supplier outside India, 13. Okay. So now, what the default section? So generally we are having the, first of all we discuss the different situations and others will be discussing at last. But under place of supply, sir, both 12 subsection 2 and 13 subsection 2 talks about default provisions. That means here, sir, the subsections will go till 14. I mean 12 subsection 14, 13 subsection 14, the subsections will go till there. But if at all a service is not covered elsewhere specifically, then it falls under the default section. So now first see what is the place of supply with respect to 12 when a service falls under default section. Sir, since I know all the other subsections, I am saying like, let's say that you are being a cost auditor, did a cost audit, okay, you provided tax consulting services, they are not covered elsewhere, covered here only. A lawyer providing services, not covered elsewhere, they will be covered here only. Okay. So 12 subsection 2, what it is saying, if recipient is registered, then the place of supply is location of recipient. Where recipient is unregistered, default sections are recipient registered, then place of supply is location of recipient. Where recipient unregistered, check address of recipient available, not available. Address available, location of recipient. Address not available, location of supplier. Okay, once again repeating, sir. Default section, I mean, it is not a service not covered elsewhere specifically, then it falls under default section. What we need to check? You should check whether recipient is registered or unregistered. Recipient registered, place of supply is location of recipient. Recipient unregistered, place of supply will be, check whether address available or address of recipient available or not. If address of recipient available, location of recipient. Not available, location of supplier. Next, 13 subsection 2. What 13 subsection 2 says again? It doesn't talk about even whether supplier registered or unregistered. Directly it asks whether address of recipient available or not available. Available, location of recipient. Not available, location of supplier. Okay. 13 in several places, sir, it doesn't complicate much. It tells us straight away. Okay. Here also, it is not asking about recipient registered or not. It's simply asking recipient address available or not available. Available, location of recipient. Not available, location of supplier. Now, place of supply of services. Sir, what we are doing here means, instead of discussing it in section wise, let us discuss it as service wise. Let's say, with respect to immovable property, under 12 those services are covered under 12 subsection 3, whereas under 13 they are covered under 13 subsection 4. So we'll discuss with respect to immovable property both under 12 as well as under 13. When 12 comes, comment. Okay, when 13 comes, sir, understand, when 12 comes when supplier and recipient both are in India. When 13 is applicable, when one of them is outside India. So see here, 12 subsection 3 clause A covers 12 subsection 3 clause A covers architect services, engineering services, designer, surveyor, real estate, construction, renting. Architect, engineering, designer, surveyor, real estate, construction, renting. And the incidental services to them. Architect, engineering, designer, surveyor, real estate, construction, renting. Okay, 12 subsection 3 clause A. And 12 subsection 3 clause B covers about accommodation services, where the accommodation is provided in a hotel, guest house, club, campsite, houseboat, and the incidental services to them. 12 subsection 3 clause B covers about functionals. They may be personal use related or even official or business purpose. So total there are 3 subsections are here, clause A, clause B, clause C, and even clause D, sir, everywhere it covers the incidental ones. Okay. A covers architect, engineering, designer, surveyor, real estate, construction, renting. 12 subsection 3b accommodation related. 12 subsection 3 clause C functionals related. So what is the place of supply, sir? If the property is in India, then place of supply is location of such property. If property is located or intended to be located outside India, then the place of supply is location of recipient. Property in India, where the property is located. Property outside India, location of recipient. Sir, under 13, all these are here under section 12, these are divided into clause A, clause B, clause C, clause D. But under 13, they are not divided into such many subclauses. All are covered under 13 subsection 4. Okay, whether it is construction, architect, engineering related, or accommodation related, or functional related. What is the place of supply under 13, sir? Simply it says like, you need not to bother whether it is in India or outside India. Just it is simply place of supply is where the immovable property is located. Okay, so here there may be cases, sir, where a property may spread across multiple states. One thing. Second one, okay, where I took a contract with a hotel to stay in their premises. So I want to stay for 10 days, but in 3 different locations. Okay, let's say I entered into a contract with ITC. I want to stay for 10 days, but I want 4 days in Hyderabad, 3 days in Bangalore, 3 days in Pune. So in such cases, how it would be apportioned? And the third one, when you are in a boat stay, okay, in Kerala it is quite famous, like in backwaters there will be boat stay. Okay, Kerala backwaters, sea backwaters. So if you are staying in that houseboat and the sea and the boat or vessel is being transported during your stay, so that means when you started your accommodation or stay, it may be in Kerala, but it might end up in Goa. So in such cases, how you could decide the place of supply? Sir, if there is a contract between supplier and recipient, if contract clearly specifies any conditions, then segregate the contract value as per such conditions among each state. Okay, and decide place of supply for separately for each state. Whereas if contract is silent or contract does not provide any explanation, then follow this. What? See here, sir. Service provided under a single contract related to multiple properties located in different states and union territories. It is about the ITC example. I took stay for 10 days, let's say 1 lakh rupee, but it is not at a single place. In Hyderabad 4 days, in other places 3 days. So in such case, how the contract has to be apportioned for each state based on number of nights stayed. Okay, where service provided under a single contract. Okay, the same contract, but the property is spread in multiple states. Let's say, for example, I am laying a road. The road will extend from AP, Telangana, and it will go till Maharashtra. Okay, so now the contract is into 3 states. How it would be apportioned? Or I am constructing a bridge. Half of them will be in AP and the other half will be in Telangana. How? It will be apportioned based on the area. Area means either in kilometers, meters, based on the units of measurement for that kind of project, it will be apportioned. Next, service by houseboat. I started my accommodation in a houseboat in Goa, but I will be staying in 2 days in such vessel, but in these 2 days the vessel will go till Goa. In such cases, it has to be distributed based on the time spent in each state. It has to be distributed based on the time spent in each state. Hope so you're understanding, guys. Next, performance based services. Performance based services are nothing but catering, restaurant, beauty treatment, health, personal grooming, fitness. Why these are called as performance based services? Because a recipient or a person authorizing or person on behalf of recipient must be there physically to receive this catering service, restaurant service, beauty treatment service, health, personal grooming, fitness. So what is the place of supply, sir? Where the service is actually performed. Where the service is actually performed. So this service partly covered under 13 subsection 3, that anyhow we'll discuss separate. Okay, but for performance based services under section 12, if it is covered, okay, that means supplier and recipient both are in India, then it is under then the place of supply service were actually provided. We'll see, sir, some famous hairstylists will be doing the haircut or hairstyling to celebrities and all, and they will be uploading their pictures now. Let's say I went for hairstyling from all the way from Vijayawada to Hyderabad, to Mumbai I went. Now the saloon guy, I mean the hairstylist is in Mumbai. Okay, now what will be the place of supply? Since the styling is made in Mumbai, place of supply is Mumbai. Whereas if we come all the way from Mumbai to Vijayawada, then the place of supply is Vijayawada. Now place of supply with respect to training and performance appraisal. We need to check whether the recipient is registered or unregistered. If recipient is registered, place of supply is location of recipient. If recipient is unregistered, place of supply is location where services are provided. Let's say, sir, I am taking classes physically. Okay, you are a registered person and attending my classes. Then location of recipient. You are an unregistered person. You are just you are normal student and you came to classes here. Then what is the place of supply, sir? Where the service is actually provided. Okay, this is about 12 subsection 5. Next ones are 12 subsection 6, 7 and even 13 related also we are covering here. Organizing an event or admission to an event. Okay, two things covered, sir. One is organizing an event, the other one is admission. That means admission to an event means let us going to an IPL match or going to a holy event or going to a New Year event. So such kind of event related we are entry tickets or even to a amusement park also. If it is related to admission, sir, admission with respect to entry ticket services, place of supply is where the event is held. Let's say I went to Chennai to watch the IPL final between KKR and SRH. Okay, I went to Chennai. So what is the place of supply here, sir? Where the event is organized, where the event is held? Chennai. So place of supply is Chennai. Now organizing an event, you should check whether the recipient is registered or recipient is unregistered. Let's say a event organizing company called Shreyas Media providing services to providing services to Vaijayanti Movies, I mean which is producing Kalki, the Prabhas new movie. Okay, so if the Shreyas Media is providing services to this company, so they are planning pre-release events in all the metro cities in India. Okay, let's say they are planning in 6 different kind of cities the promotional events. All those events are organized by Shreyas Media. Then recipient is registered, then the place of supply is what? Location of recipient. If recipient is unregistered, let's say a person's marriage event is being planned and this guy is unregistered, then you should check whether the event is organized in India. Place of supply is where the event is held. If outside India, then the place of supply is location of recipient. So if he is planning for a destination wedding and the destination is in Goa, since the destination is in India only, place of supply is where the event is held. But he want a destination wedding, but not in India, sir. It is somewhere outside India. Then the place of supply is location of recipient. So see here, admission to an event under section 12. When section 12 will come, both supplier and recipient are in India. Admission to an event where the event is actually held. Organizing an event, you should check whether the recipient is registered or unregistered. Recipient registered, location of recipient. Recipient unregistered, check whether the event is organized in India, outside India. In India, where the event is actually held. Outside India, place of supply is location of recipient. Sorry, outside, yes, correct. Next, with respect to 13. Sir, under 13, there are no two subsections with respect to organizing an admission to an event. There is only one subsection which says like place of supply is where the event is actually held. With respect to organizing as well as admission to an event, if either supplier or recipient, one of them is outside India, then the place of supply will be where such event is actually held. Sir, here also, sir, here event means organizing an event or admission to an event. Such event may be related to scientific, sporting, culture, artistic, entertainment, education and their incidental services. Scientific, sporting, culture, artistic, entertainment, education and their incidental services. Sir, where the event is held in more than one state or union territory. As I said, okay, with respect to Kalki movie, the event organizer is organizing pre-release events in multiple places. Then how you could segregate the value of contract if they are under a single contract? Sir, if the contract clearly specifies like for the event in Pune 2 crores, for the event in Hyderabad 1 crore, for the event in Kolkata 1.5 crores, like that, then apportionate it based on the contract. If contract is silent, then follow gap. Gap means generally accepted accounting principles, which is nothing but apportionate based on number of days. Let's say the event is held only for one day in all the 6 places, then apportionate in 1:1:1:1:1:1. Now we are into transportation of goods. Now we are into which service, sir? Transportation of goods. So transportation, again, whether it is to a registered person or unregistered person. If the transportation is being made to a registered person, then place of supply is location of recipient. Sir, here transportation even includes mail and courier. Let's say you purchased classes from BCCA. So we are sending books physically to you along with the help of Indian Post or other courier partner. Okay, what will be the place of supply, sir? BCCA is the recipient, whereas the courier partner is the supplier. What would be the place of supply, sir? If recipient is registered, yes, BCCA is registered now. So what will be the place of supply, sir? Location of recipient. That means here, Newsfeed itself will be the place of supply. Since the courier, let's say DTDC is providing services to BCCA because BCCA is sending goods to you, not sending books to you. Next, if recipient is unregistered, that is the reason BCCA is unregistered, or in any other case, you are sending goods through DTDC and you are an unregistered person. If you are sending those goods within India, then the place of supply will be where the goods are handed over for transportation. Sir, I went to DTDC office and I am sending some books or goods to some guy, personal capacity, or else I am sending a gift to a person in Mumbai. So in such cases, what will be the place of supply? Me, personal capacity unregistered. So in such cases, place of supply will be where the goods are handed over for transportation. I handed over in Vijayawada, place of supply is Vijayawada. Whereas I am sending those goods to US, outside India, then the place of supply is outside India. So transportation of goods, what we should check? Recipient registered, place of supply, location of recipient. Recipient unregistered, check whether the destination of goods is in India, outside India. In India, where the goods are handed over by the recipient for transportation. Whereas destination is outside India, then the place of supply will be outside India. Sir, in 13 there used to be a separate section for it, 13 subsection 9, but recently it got omitted. So with respect to transportation of goods, if it is covered under 13, covered by default section. What default section of 13 says? Check whether recipient address available or not. If it is available, location of recipient. Not available, location of supplier. Now we are into transportation of passengers. Again, 12 subsection 9. Here it is 13 subsection 10. 12 subsection 9. there are again two parts, sir. Normal transportation. That means I'm going from Hyderabad to Delhi, or I'm going from Delhi to Chennai. Simple. Okay. Recipient registered, place of supply, location of recipient. Recipient unregistered, where the passenger embarks for continuous journey. Sir, I'm an unregistered guy. I went to Delhi. Then from Delhi, I want to go to Chennai. So I took a flight in Delhi. What is the place of supply? Where I embark the flight? Delhi, na? Place of supply is Delhi. Next, if it is a pass, future passage kind of. So there are something like bus pass kind of passes will be there, na? With that you can use for multiple types. Even in metro, there is a card kind of thing. Okay, for future usage and all. Okay, it's not for one time use. You can use it for number of times in a month or in a year. So in such cases, again, if recipient is being registered, location of recipient. If recipient is unregistered, check whether address of recipient available, location of recipient. Address not available, location of supplier. Under 12, transportation of passengers. Okay, with respect to single transportation kind of service. Recipient registered, location of recipient. Recipient unregistered, where the passenger embarks for continuous journey. Future passage kind of, I mean the bus passes kind of passes. Next, in such cases also, recipient registered, location of recipient. Recipient unregistered, okay, then check whether address is available or not available. If address is available, then place of supply is location of recipient. Address not available, location of supplier is the place of supply. What would be under 13 subsection 10, sir? I already said previously. So 13 in several places it makes our life easy. Here see, 13 simply says, don't bother about all this. Registered, unregistered, blah blah blah. Don't worry about all that. Where the passenger embarks for continuous journey is the place of supply. Let's say David Warner came to India. Okay, he is going from Hyderabad to Bangalore through flight. So the flight carrier is Indigo Airlines only, which is an Indian supplier. Whereas the recipient is from outside India. What is the place of supply? Let's say if David Warner took a flight in Hyderabad, then the place of supply will be Hyderabad because he embarked in Hyderabad. Next, services supplied on board a conveyance. So I said, with respect to goods supplied on board a conveyance, the place of supply is where the goods are onboarded into the conveyance. With respect to service, let's say in train if you are going, if they sell cool drinks and these biscuit packets, then where such goods are loaded into train, onboard into train is the place of supply. Let's say you are going into train and this veg biryani, anda biryani will come now, anda biryani, like that. Okay. So when such kind of service is provided, okay, either under covers under section 12 or under section 12, what is the place of supply, sir? The first scheduled departure point of the conveyance. Let's say the conveyance started in Hyderabad, then the place of supply is Hyderabad. Okay, the first scheduled departure point of the conveyance with respect to service supplied on board a conveyance. With respect to goods, where the goods are onboarded into the conveyance. Whereas service, the first scheduled departure point of the conveyance. So our next service is place of supply for telecommunication services, sir. So in this fixed line connection, that means the internet, sir, here not only telecommunications, sir, here even DTH connections, broadband, cable, all these are also covered. Cable, the cable TV. Okay, if it is provided to a fixed line, same as like the LAN connection which we are having, internet connection, place of supply will be the where the LAN is installed. If it is a postpaid kind of, the postpaid SIM cards and all, no. So if it is a postpaid kind of, then the place of supply is billing address. If it is a prepaid, then telecom company prepaid, we might have seen in your younger age, like when your kids, there used to be prepaid vouchers. We need to get that voucher to recharge our mobiles, no. So then, if the prepaid vouchers are sold by telecom company to agent, place of supply will be the address of such agent. Where agent is selling it to the customer, then the place of supply will be where the voucher is sold. And if it is prepaid through internet, what we do normally, we'll be doing now the recharges over through the internet now using the mobile apps and all. Then the place of supply will be the billing address. Place of supply will be billing address. So if you see fixed line where the LAN is installed, postpaid address of recipient. Okay, prepaid vouchers by the telecom company to its agents, address of agent. Agent selling it to customers where the vouchers are sold is the place of supply. Prepaid through internet. Okay, then place of supply will be the billing address. Sir, here one more example if you see. For TCS companies, sir, TCS, Tata Consultancy Service. Jio is providing a dedicated leased wide circuit because TCS wants to connect it various branches, okay, with a dedicated wide cables or dedicated line because they don't want data theft or security breaches and all. So they want such confidentiality. So Hyderabad to Bangalore, Pune, Mumbai, one line has been given or allocated separately for TCS. So no other data will be transmitted in that particular cable. So in such cases, what would be the place of supply? Because this service is not only in Hyderabad, it is provided for Hyderabad, Bangalore, Pune, Mumbai for a single contract value. How it has to be apportioned for each state? If contract specifies, apportionate as per the contract. If contract specifies, apportionate it as per the contract. If contract is silent, then for each location here, give a weightage of 1. For each point connected, give weightage of 1. So 1, 1, 1, 1. So there are total 4 points. Now, with respect to, for each point, give 1 weightage and apportionate in that ratio. So if you see Hyderabad from Telangana, Bangalore from Karnataka, Pune and Mumbai both are from one state. So for Maharashtra, there are 2. So it has to be apportioned in 1:1:2 ratio. Okay. Now we are into place of supply with respect to banking, NBFC and stock broking services. 12 subsection 10. Banking, NBFC, stock broking. Sir, where the recipient address generally available when a banker is providing services to us. Place of supply is location of recipient. Where address is not available in any case. Let's say I went to some different place like Kolkata. There I took a DD. I went to bank and I asked for DD. And I given cash and I took a demand draft. In those cases also mostly now they are asking for address of recipient, sir. But let's say address is not available, then place of supply is location of supplier. Place of supply in case of insurance service. Whenever we are taking an insurance kind of, place of supply is always location of recipient. Next, advertisement services provided to specified persons. That means to government. Okay, let's say I'm an advertising company or I'm giving advertisements to government. Okay, if in such case place of supply is where the service is provided, but there are lot many explanation related rules given here, sir. I tried to summarize it so simple you could understand. Where such service provided in multiple states for a single contract price, let's say in newspaper. If you see, sir, whenever central government launch a new kind of scheme, welfare scheme, they will promote it by printing about such scheme in all the famous newspapers, maybe in the main page itself. Then let's say they printed it in the Hindu newspaper. Now Hindu is having circulation all over the India. Then how it could be apportioned for each state? Then based on number of editions printed in each state. Okay, it has to be apportioned state wise based on the number of editions they are gonna print for each state. If in pamphlets and posters, okay, then how many pamphlets and posters are allocating for each state? That is the base for apportion. If it is in trains, okay, on trains also we could see on the outer side there will be stickers like promoting the central government schemes and all. Then length of railway track in each state. Okay, apportionate it based on the length of railway track in each state. On train ticket backside, okay, not the online ticket, sir. When you buy it over the counter, on the ticket backside they may print a central government scheme and all. In such cases, it has to be apportioned based on the number of railway stations in each state. Next, utility bills such as EV bill, gas bill, on their backside also, backside of their bills also, they are printing about the scheme and all. Then number of connections in each state is the base. If it is being telecasted in a TV, let's say it's being coming in NDTV. So now NDTV can be watched in AP, Telangana, South India, North India. So everywhere NDTV can be seen, or even in India Today. So in those cases, how it will be based on the TRP of the channel in each state. TRP of channel in each state. If they are sent as like a SMS, then based on number of subscribers in each state. This is the conditions. Okay. So by this we almost completed section 12. But in 13 we missed certain parts, sir, that we are going to cover now. 13 subsection 3, one of the important areas, sir. I mean little complicated if you don't listen class. Here clearly means place of supply with respect to service provided on a good or person. The service has to be provided on a good such as like repairing, maintenance work, painting, such kind of, or on a person, performance based kind of, like such a beauty treatment, haircut, okay, hair transplantations, those kind of which requires physical presence of them. So let's say see service to be performed on goods physically. Okay, to make a service on the goods, let's say my bike has to be serviced. I mean, it has to, some repairs has to be carried out, or my car is having some repairs, it has to get repaired. No? So then the car or bike has to be made physically available. Okay, then what is the place of supply? Place of supply, sir. Place of supply, simply they are saying location where such service is provided. Location where such service is provided. Okay, see the proviso, sir. On satisfaction of following conditions, if the below mentioned conditions are satisfied, then even though the service is provided on a good physically, which is made available to him, this section is not applicable. 13 subsection 2 is only applicable. When, sir, those goods are came outside India to India for repairs, that also on a temporary basis. That means once the repair is carried out, they will be exported back. They will not be used in India. Maybe they are used only for the purpose of testing whether the repair has made perfectly or not. Just for the testing purpose they use. Okay, once it is made, then they will be exporting back to outside India. If that is the case, the goods are imported from outside India, repairs carried out, and they just used to test how they are working and all. Then they immediately exported back without keeping for any other usage. Then this section is not applicable, even though the goods are made available physically for performing such service. In this scenario, this section is not applicable. Then which section? 13 subsection 2. What does 13 subsection 2 says? Check whether address of recipient available, not available. If available, place of supply is location of recipient, not available, location of supply. See here, sir, example. Sea of India sent plant and machinery for repairs outside India. Sir, is it an import of plant and machinery or export of plant and machinery? Export of plant and machinery for repairs. So not covered in proviso. So, okay. In such case, which section is covered? This 13 subsection 3 is only covered. What does it say? What is the place of supply here, sir? So location where service is provided. Since I send the machine for repairs to Japan, place of supply will be nothing but Japan. Whereas the supplier is also, the person who is carrying out repairs is also in Japan. Whereas the recipient is in India. So, recipient in India, supplier outside India, location of supplier, place of supply, both are in Japan. Tax has to be paid by recipient. It is not an import or not even an export. Next, case 2. If you see, sir, R from D, R, okay, DT, a guy named DT, Dharmateja, he is from USA. He sent plant and machinery for repairs to Bharat, who is in India. If you see here, sir, now the plant and machinery coming from outside India. So it is an import of plant and machinery. Okay. Then after once the repairs is done, then they are exported back after repairs. So now it is covered under the proviso. That means here the place of supply has to be decided by 13 subsection 2. What 13 subsection 2 says? Check whether recipient address is available or not. Of course, it will be available. If it is not available, to whom you will be exporting back the machine? So his address is available. The place of supply is what? USA. So place of supply is recipient address available. Place of supply equals to location of recipient. So here, location of supplier India, the guy who is doing the repair. Place of supply USA. Location of recipient is also USA. If the payment for this repairs is made in convertible foreign exchange, then it is obviously becoming what? Export of service. Export of service. Okay. Hope so you are getting my point, sir. Where the service is to be performed on a good which has to be made physically available, then the place of supply is where such service is provided. However, there is a proviso here. What the proviso says? That there is an import of goods. Okay, on such imported goods, service has to be made, service has to be provided, nothing but like repairs. And the goods are exported back once the repair is done without putting into use in India unless which is needed for repairs. Okay, now service made on goods digitally or electronically. Let's say, sir, I bought a MacBook and there is an issue in it. So now a guy is connecting to debug it or to find out the issue with it digitally, and he sorted out the issue or he rectified it digitally itself, electronically. He didn't came physically also. In such case, what is the place of supply, sir? Physical location of goods. Next, services provided to a person. These are similar to 12 subsection 4, sir. What is 12 subsection 4? Performance based services such as like catering, restaurants, okay, grooming, personal grooming, beauty treatment, fitness, health, those kind of services. What is the place of supply, sir? Where such services are provided. Okay, sir, here there is an explanation, sir. What is here means? service has to be provided on a good physically. Okay, a technician should come and he should provide a service on this good. But at multiple locations, such service has to be provided. The good is same. Let's say there is only one machine, but the testing on this machine has to be carried out different locations. Let's say, for example, I want a drilling machine which has to drill deep down into the earth so that I'll be extracting the oil. I'm a oil and natural gas company. So I wanted perfect drilling machine where it could drill effectively at different places. Okay, let's say for example, there may be rocky soil or like the coastal areas or in the normal areas or in the desert kind of areas. So in all these places, this machine should work efficiently. So this guy should come and test this machine in coastal area, in a deserted area or in rocky areas. So how this is performing? So single machine, a single contract, but the service is provided different locations. First one. Second one, sir, a single person, single contract, but service has to be provided on multiple goods which are located in multiple locations. Let's say a technician from Singapore came to India to check or to repair the machines, but I am having those kind of machineries in three factories, and these three factories are located. One is in AP, one is in Telangana, one is in Chennai, and the other one is Karnataka. So now the service has to be provided in three states now. The fourth one, service is to be provided on an individual. Okay, let's say a hero, okay, an actor who is acting, who is a hero. Okay, he want a hairstylist, personal hairstylist. Now this hairstylist will always be along with the actor. If this actor is shooting in Hyderabad, he will go to Hyderabad. If this actor is having shooting in Mumbai, then he will go along with the actor to Mumbai. In such cases, the same service by the same person, same contract, but at different locations. So in such cases, how the value of contract will be apportioned between multiple states. If contract specifies, apportion it as per contract. Otherwise, where service provided on same goods, different locations. So the drilling machine example, place of supply, apportion it equally for each state. Let's say if it is tested in three states, apportion the total contract value equally between the three states. Next, service provided on different goods, not on single goods, but different goods. I said like a single technician came, whereas we have to provide in the repairs on goods which are located in three factories. So then different states and union territories then apportionate in the ratio of purchase value of those goods. One machine value is 2 crores, the other machine value is 3 crores. Then apportionate it in the ratio of 2:3. Next, services provided on an individual who with respect to different states or union territories, then apportionate it based on gap. What is called gap? Generally accepted accounting principles. So apportionate it based on number of days. Based on number of days. Next, 13 subsection 6. 13 subsection 6, sir, it says about place of supply with respect to service provided in a taxable territory and non-taxable territory. So place of supply equals to location where such service is provided in taxable territory. Let's say a technician, okay, a service provider is coming from outside India. So he is providing a part service in India, a part service outside India. Then for all the total service, you should assume the place of supply is in India only. Next, 13 subsection talks about the various rules. We discussed here like immovable property related, organizing an event related, and above this also. So these rules already we discussed. Now, place of supply under 13 subsection 8, which is about specified services, which is about what? Specified services. Whereas services like banks, NBFCs, financial institutions or intermediaries, so under section 12, for these kind of services, we are checking whether address is available or not of recipient. Address available, location of recipient. Otherwise, location of supplier. But here for this kind of services, place of supply is location of supplier. Location of supplier. Next, hiring a means of transport. Nothing but a car is given on rent, a bike is given on rent, a bus is given on rent, or a small boat kind of hatch has been given on rent, or an aircraft given on rent, where vessels, aircraft, and hatches up to hatches for a period greater than 1 month. Vessels, aircraft, and hatch, a small kind of boat, which is given on rent for a period more than 1 month. In these three cases, they are covered by default section. What default section says? Address of recipient available, place of supply, recipient. Address of recipient not available, place of supply, location of supply. Whereas others means the car, bike, buses, and even an hatch up to a period of 1 month. Then place of supply is location of supplier. If vessels, aircrafts, and hatches for a period more than 1 month, then it is covered by 12 subsection 2. Next, OIDR service. OIDR means what, sir? Online information, data, access, and retrieval services. Okay, so I'm once again repeating you the definition of OIDR, sir. These are where the delivery is mediated by information technology. I mean, without IT, we cannot expect this kind of service, IT or internet or electronic network. And they made such service essentially automated. These kind of services are automated. I mean, no manual or physical involvement, even though required, very remote or very less. It is highly automated with just minimum human intervention, and it is impossible to ensure in the absence of IT. You cannot expect such kind of service. Let's say, for an example of OIDR service, let's say if you are listening to my class through YouTube means it is a kind of OIDR service. So where the service is mediated only because of an electronic network or an internet connection, you can watch it. And next, the supply is essentially automated. So okay, how it is automated, sir? You can listen to the class whenever you want. You can just keep a pause button. I'm getting freezed like this when you click on the pause button. Simple now. And whenever you play, and again it will get played. Okay, so with just minimum human intervention, okay, nobody in the backside of the Google company, nobody in the servers, like whenever you click on the play button, nobody keeps a CD for you. Okay, it's completely automated, and it is highly impossible without IT. So OIDR service includes advertising over the internet, cloud services, provision of ebooks, movies, Amazon Kindle, normal Amazon Prime and all, Netflix, OIDR services. Next, online supplies of digital content, online gaming, all these are OIDR. Which are not OIDR, sir? Just because an order has been made electronically through Amazon, we cannot call it as OIDR. Or even a news subscription, a newspaper subscription has been paid online, but I'll get physical newspaper, then it is not called as OIDR. Or even me being a consultant, given my advice through an email, it cannot be called as OIDR because it can be performed even without IT. And even booking services such as like movie ticket booking, Red Bus, RB Bus, Book My Show, these are not OIDR services. Okay, and even if I'm taking a live class to you guys, okay, I'm taking live classes, that means online sessions or not the recorded classes, live one. Okay, I'll be scheduling a class, then you guys will be joining, and it will be interactive live session. Then it is not OIDR, it's a normal supply of service. Okay, so for OIDR services, sir, place of supply is location of recipient. But then how the location of recipient will be found out? Based on location of address. If the address of recipient is in taxable territory, or by using his credit debit card, if the billing address is in taxable territory, IP address which he is using, bank of recipient, country code of SIM code, or location of fixed line which they are using. So based on this, they can find out the recipient's location. Based on that, they will be deciding the place of supply. Only 33, 42, 44 and question number 4. Only these 4 questions I am solving. 44 and 42 are past exam questions. Okay. So let me go back to the question. 44. So 44, if you see the question, okay, pause it for a while and read the question, sir. Since I already read the question, so pause it for a while and read the question. Now, if you see, sir, here, Joy Private Limited being an event manager, here one person, Geet Private Limited. Actually, this Geet Private Limited wants to organize a music concert, sir. It sells tickets, each ticket at rupees 8,000 per ticket. In another alternative case, this is case 1, and they are even suggesting an alternative case where the entry fee is fixed at rupees 500 per ticket. Okay, so now for concert, doing this music concert, they took Joy Private Limited services as an event manager services of rupees 15 lakhs, and this Joy event manager took Hotel Leela Palace services. I mean, this Hotel Leela Palace has been taken, or this Hotel Leela Palace is the place where actually such concert is going to be held. So this hotel giving their premises on rent for 5 lakhs, and this guy providing their event management services for 15 lakhs. So now if you see, This is covered under 12 subsection 3 clause C, because functional kind of services. What is the place of supply, sir? Here, where the immovable property is located, where Hotel Leela Palace is located. Now for event organizing services, sir. Event organizing services are covered under where, sir? 12 subsection 7. If supplier, if recipient is registered person, then location of recipient. Otherwise, where the event is actually held. Okay, next, Geet Private Limited organizing and consent. With respect to this, the place of supply is covered under 12 subsection 6. What is the place of supply here, sir? Where the event is actually held is the place of supply under 12 subsection 6. So if you see the answer here, sir, 3 services. Geet Limited to audiences by way of admission entry ticket. Joy to Geet organizing the concert. Hotel Leela by way of accommodation. Now if you see, as per the provisions of 12 subsection 6, place of supply for admission is where the event is actually held. So considerations are 1000 tickets at 800 na 8000 na, so 80 lakhs on this tax, 14 lakh 40,000. Next, 12 subsection 7a clause 1 with respect to event organizing services, place of supply will be scientific, sporting, acting, cultural. So their cultural is also covered. So cultural event to a registered person. So location of registered person. So 18% on 15 lakhs 2 lakhs 70,000. With respect to immovable properties at 12 subsection 3 clause C, accommodation in immovable property, place of supply will be where the property is located. Next, fourth one, place of supply of service supplied by Hotel Leela by the accommodation in hotel lawns for organizing the music concert will be Hotel Leela Palace. Okay, so these are the points which we need to discuss, sir. Where the ticket price is within 500, then it is exempted. Where the ticket price is within 500, it is exempted. So this is an exam question, sir. Okay, so please read it. Now coming to 42. X Limited Chennai engaged in various businesses. So here are the certain services. Service of interior decoration. Interior decoration means covered where, sir? 12 subsection 3 clause A. Place of supply where the immovable property is located, nothing but Jammu. Services of renting of commercial buildings. This is also covered under 12 subsection 3 clause A. Where the building is located, place of supply is Delhi, here place of supply is Jammu. Next, architectural services to a Indian hotel chain which has business establishment in Mumbai, but their property is in Sydney. Service is given with respect to property in Sydney. Sir, here place of supply generally location of immovable property. If the property is outside India, then place of supply is location of recipient, that equals to Mumbai. Next, services provided as an Indian agent undertaking marketing in India of goods of a foreign seller. Sir, here it is intermediary service, sir. Agent means nothing but intermediary service. If you see agent, Indian agent, whereas seller is foreign seller. That means location of supplier being an agent is in India, whereas location of recipient is outside India. Then it is covered under 13. Under 13, which sections are 13 subsection 8, which says the place of supply is location of supplier. Since the supplier is in Chennai, place of supply is Chennai. Next, service provided as an agent undertaking marketing in India for a foreign seller. Okay, same here also, sir. Here also it is covered under 13 subsection 8. Where the place of supply is again Chennai, location of supplier. You could see here, sir, they found out the taxability. This is section question number 42. Now let me see question number 33 as well, sir. Question number 33, MG and interior decorator providing services to immovable properties. Okay, location of supplier Delhi. Location, sir, MG is interior decorator, HJ is recipient. So both are in India. So 12 subsection clause 3 clause A. One of them is in India, other one is outside India, 12 subsection 4. 12 subsection 3A is like where the property is located. If the property is located outside India, location of recipient. So in this case, location of recipient, Mumbai is the place of supply. In 12 subsection 4, place of supply, where the property is located, even if it is located outside India. So nothing but Paris, France. Here Mumbai, here it is Paris, France. So now to move into question number 4, sir. Question number 4, sir, with respect to build to ship to model, sir. Okay, not build to ship to model. Okay, I will be even solving one build to ship to model. Whether e-commerce operator like Flipkart, Amazon, Snapdeal is to be considered as an agent. Okay, under 10 subsection 1b. And applicable build to ship to model. See, sir, 2 subsection 45 defines e-commerce operator as a person who operates or manages the digital or electronic platform for carrying out electronic commerce. Okay, now electronic commerce means supply of goods and services through digital platform. Now, e-commerce cannot be considered as an agent otherwise as required by 10 subsection 1b of IGST, because eco is an independent service provider. For that, he will be charging commission, and even he is responsible to collect TCS on the net value of taxable supplies. So he cannot be called as an agent. So from the above, it is evident that he is not an e-commerce operator. So he cannot be considered as, we cannot link a 10 subsection 1b when the goods are routed through e-commerce operator. Let's say there is a supplier, Amazon, and recipient. So in this case, we cannot introduce bill to ship to model. It's not like Amazon is acting as an agent. So it's not a bill to ship to model. Now if you see the question number 6, if you see, Chandana Traders in Karnataka receives order from ASA Incorporation USA to deliver 100 cell phones at ODR dealers in Karnataka. On application of section 10 subsection B, place of supply will be USA. The question is, well, the transaction will be taxed. So see, there will be two parts. One is Chandana Traders of Karnataka and AA Incorporation. Next, AA Incorporation of USA to ODR dealers. That means Chandana Traders have to deliver to USA. USA AA Incorporation will be again giving to ODR dealers. But instead of again sending them to USA and again receiving them by ODR dealers, directly the Chandana Traders supplied to Karnataka. So if you see Chandana Traders, AA Incorporation and ODR dealers. Okay, but the goods sent directly from Chandana Traders to ODR dealers. But actually the invoice will be raised to AA Incorporation. AA Incorporation will only raise invoice to ODR dealers. So in such cases, there are two parts between Chandana and AA Incorporation and AA Incorporation and ODR. So between Chandana and ODR and the traders, sir, will it be called as an export? Means no, it cannot be called as an export, sir, because to call it as export of goods, goods should be taken out of India to a place outside India. In such case, in this case, the goods were not sent outside India, so it is not an export. Then what kind of transaction it is? Sir, 7 subsection 5, I mean section 7, if you remember, interstate, any transaction which is not an intrastate can also be called as interstate. So this transaction between Chandana Traders and AA Incorporation is an interstate transaction. Okay, above section applies in this case. So hence the transaction between Chandana will be considered as interstate supply and IGST will be levied. Between AA Incorporation and USA, between AA Incorporation and USA, import of goods means bringing outside India. So it's not even import. However, again this transaction is also covered under 7 subsection 5. It has to be treated as an intrastate. In this present case, the supply of goods in the taxable territory, it is not an intra. Sir, even though Chandana Traders as well as ODR dealers both are in Karnataka, since it covers under 7 subsection 5, it has to be treated as what? Interstate supply. Hence transaction between AA Incorporation and USA is also an interstate transaction. Okay, IGST is levied and RCM. Based on RCM cases, the tax has to be paid. This is under the question number 6. So, okay, so these are the questions, sir, we need to solve. Okay, the questions I discussed are question number 4, question number 6, question number 33, question number 42 and question number 44. Okay. Sir, some recent developments are here. 13 subsection 13 with respect to notified services, not much important. It is inserted to prevent double taxation and non-taxation. Place of supply will be effective use and enjoyment of services, such as research and development services to pharma sector. If supplier is taxable territory, recipient is in non-taxable territory, place of supply will be where such services are effectively used. Let's say development of a drug, discovery of a drug, finding out the efficiency on animals and how the metabolism is there, safety assessment. So with respect to drugs, this many services are provided. So what would be the place of supply in these cases? The location of recipient. So where the recipient is actually there. Okay, with respect to a drug, so much testing, all these are covered. Place of supply will be location of recipient. Let's say, sir, there is a pharma company in India, but the testing is carried out in China. Okay, so the supplier is in China, service recipient is in India. So now what will be the place of supply, sir? Effective use. The development, even though made in China, it is going to be used in India. Now, so place of supply is location of recipient, which is nothing but India. What are the conditions, sir? The supplier of service as per a contract. It should be as per a contract and satisfies the conditions of export. It should be like an export. Otherwise, these are not applicable. Next, MRO. I mean maintenance, repair, overhauling services to aircraft, vessels and their parts. Place of supply will be location of recipient. Next, section 14, sir. These are special provisions regarding OIDR. I already explained what is called OIDR. So if OIDR is providing services, okay, by a person in non-taxable territory, okay, OIDR is in outside India, sir. Okay, let's say Netflix outside India, and it is providing services to an NTOR. Who is called NTOR, sir? I discussed in supply charter. An individual who is receiving other than for business purpose, a charitable entity, okay, or government. These are called as NTORs. Then supplier will only pay tax. Okay, supplier shall only be liable to pay tax. RCM is also not applicable. FCM basis, supplier is only responsible to pay tax. If he is other than NTOR, then RCM is applicable. Recipient has to pay tax. If he is NTOR, supplier only has to pay the tax. Now, supplier is in non-taxable territory. Na? So, how? So, supplier OIDR services by a person in entity to NTOR. Now, an intermediary located in entity arranges or facilitates such service. Sir, the OIDR not providing such service directly, is providing such service through an intermediary, such as like Google Play Store. So such service is provided through an agent. In such case, then such intermediary shall be deemed to be the recipient. So, and that means who has to pay tax? Such intermediary has to pay tax. Okay, under RC. Now, when intermediary is not responsible, if the invoice is issued by intermediary, clearly mentions supplier is in non-taxable territory. Next, intermediary is not involved in payment process, and intermediary does not authorize or confirm that he doesn't act as a guarantee for the supplier of service, and general terms and conditions not set by the intermediary. I mean the payment and contract conditions are set by whom? OIDR only. Then intermediary is not responsible. Otherwise, intermediary is responsible to pay the taxes. Now, if OIDR is responsible to pay tax, how? Then he should register under simplified registration scheme, which is not yet notified. There he has to register and pay IGST. So if he is not physically available, since he is in non-taxable territory, instead of him, a person representing him in India may also register, maybe his agent kind of. Okay, if he has no physical presence or representative, if no representative, then mandatorily he should appoint some person as his agent. Such person will be registered under the simplified registration scheme and he will be paying the taxes. Next, sir, the new amendment, sir. Online money gaming services, sir. Like we'll be seeing like the Dream 11, online rummy, this kind of. Whereas the servers are from outside India, supplier of online money gaming, no location in taxable territory. Then they shall obtain a single registration as referred in 14 subsection 2. How? I mean, they themselves should register or their representative how to register. If no representative, they should appoint some person and such person should register. Next. So the online money gaming services to a person in taxable territory. Who is liable to pay tax? Supplier is only. The online money gaming service provider only is responsible to pay tax, not the recipient. However, person located in taxable territory representing such supplier shall get registered and pay IGST. If he is having no no representative and no physical presence, then he shall appoint a person. I mean, one person has to be authorized as his agent who will be paying the IGST. So this is totally about place of supply, sir. I covered each and every corner of place of supply. I hope I given you a better understanding. Thank you. So now we are into another important chapter, value of supply. Okay, there will be a practical question from this chapter. At least 7 marks we can expect. Most probably 1 marks question and 2 marks MCQ. So altogether it could be around 9 marks. So one of the important chapters, ITC, value of supply. Okay, these are two of some important chapters, along with introduction and supply. These three areas alone will be getting you around 25 to 30 marks, sir. Only intro, supply, time of supply and ITC. These 4 chapters alone you can get 25 to 30 marks minimum. So these are some of the important chapters, sir. So instead of wasting time, let us dive into the topic, sir. Sir, in this chapter, when it comes to areas of focus, the areas to be focused in value of supply, section 15 we need to focus, sir. Then under rule 32 there are certain special rules. Rule 32, under rule 32 there are certain cases, like in case of foreign currency, I mean currency conversion kind of. If you are in a dealer of foreign currency, how the value of supply to be determined. If you are a e-travel agent, or if you are a insurance company, how the value of supply will be decided. That area and the basic section 15 subsection 1. subsection 2, 3. These are most important areas. But again, I try to cover all the areas in the marathon. Okay. So now these are under section 15. There are 4 subsections. What are those 4? First one, 15 subsection 1, 15 subsection 2, 3 and 4. Okay. If you look at the flow of this chapter, sir, first the initial thing we decide is good, whether a transaction to call it as supplier or to go further. First thing we'll decide is whether it is good, service or what. Then we'll decide whether it is a supplier or not. Then we'll decide the chargeability. I mean, who has to pay tax. Then we'll decide whether it is exempted or taxable. If it is taxable, then we'll decide time of supply. Then even we'll decide the value of supply. Now we are into section 15 subsection 1. What does section 15 subsection 1? 15 subsection 1 says like transaction value itself can be taken as value of supply. Let's say I sold goods to A and B. To A I sold for 10,000. To B I sold for 8,000 only because B bargained. Okay, negotiated with me. So I sold to B for 8,000. But whereas A didn't bargain or negotiated, I sold it to 10,000. What is the transaction value? In A's case, it is 10,000. In B's case, it is 8,000. Okay, we can take the transaction value, the amount which is transacted between us can be taken as the value of supply. However, there should be 2 conditions. One is the supplier and recipient should be unrelated. I mean, me and A should be unrelated, and even me and B should be unrelated. And price must be the sole consideration. Whatever is the amount they are going to pay, that alone should be the consideration. There should not be any other non-monetary kind of considerations. Next, 15 subsection 2. Inclusions and exclusions to the value of supply. Very important point, sir. All the taxes, duties, cess, fee or any other charges which are levied under indirect taxes, that may be under excise duty, service tax, VAT or whatever is the taxes, okay, under indirect taxes, whatever is the tax levied either under customs, all those taxes has to be added except GST, because this is for the purpose of GST, so that's why you should not add GST, and TCS as per income tax act. So we shall not add only 2, GST and TCS as per income tax. All the other taxes, duties, cess, fees has to be added. Now see sir, here there is a car price. The car price is 12 lakhs, and on this TCS applicable at a rate of 2% and GST at a rate of 12%. Now car price 12 lakhs now. TCS 2% also has to be collected by the seller. So 24,000 levied on car price. Now the question is whether GST has to be levied on 12 lakhs or on 12 lakh 24,000. It has to be levied on 12 lakhs only because TCS shall not be added. So the total invoice price will be 13 lakh 68,000. Now tobacco, if you see 1 lakh. Tobacco here 1 lakh. On this excise duty 20% applicable. Total came to 1 lakh 20. Now the question is whether GST has to be levied on 1 lakh or on 20,000. It has to be levied on 1 lakh 20,000. Okay. Next point, sir. Any amount that is liability or obligation of supplier is met by recipient. An obligation or liability of supplier is met by recipient. See the example, sir. Anil here is a supplier. He agreed to supply goods to Mr. Raju in Bangalore for 50 lakhs. However, the goods were sent, but the truck charges 75,000. Actually, it has to be paid by Anil, but he didn't pay. So now Raju only paid these truck charges of 75,000 also. So what happens here? The value of supply to be taken is 50 lakhs, the initial amount which is transacted. Even the obligation, the truck charges is the obligation of supplier, but which is met by recipient, that also has to be added. So overall it came to 5 lakh, 50 lakh, 75,000. Any liability or obligation of supplier met by recipient has to be included. Third one, all the incidental expenses has to be added. What are the incidental expenses, such as designing cost, packing cost, except if it is returnable, commission and brokerage, weighment charges, inspection charges if they are needed as per contract, loading charges, transportation charges, transit charges, unloading, installation, trial run charges. So you can see the flow. Initially design. Once design is finalized, then they might have manufactured the good. Then the packing cost, commission and brokerage, weighment charges, inspection charges, loading charges, okay, transportation charges, transit insurance, unloading and installation and trial run. So all these incidental expenses has to be added. Next, interest, late fee and penalty for delayed payment. If there is any delayed payment, let's say if you see sir here, Teja sold goods to Seshi for rupees 15 lakhs. The amount to be paid within 30 days. How many days? Sir? Within 30 days. whereas she paid after how many days there? After 6 months. Okay, since it has to be paid within 30 days, but say she delayed for 6 months. So Teja asked him to pay late fee also some 50,000. Now, what the provision is saying, sir, even any interest, late fee or penalty for delayed payment is there, that also has to be added in the value of supply. If you see time of supply provisions, time of supply equals to day on which supplier receives interest, late fee. Now, this also has to be added. Okay. So value of supply of goods 15 lakhs. Now for this 15 lakhs we should add this 50,000 also. However, the 50,000 late fee which you are collecting may be inclusive of GST unless if the question specifies. We will think like this 50,000 is inclusive of GST. So we shall not add the total 50,000. This 50,000 is inclusive of GST. So do 50,000 into 100 by 118. So 42,373 only has to be added to the value of supply. Next one, sir. Subsidy. The next fourth one is subsidy. So already 4 points done under 15 subsection 2. All the taxes, duties and cess except GST and TCS has to be added. 15 subsection 2. Okay. If obligation of supplier or liability of supplier is met by recipient, added to the value of supply. Third one. All the incidental expenses such as packing, commission, brokerage, designing cost, weighman charges, transportation, transit insurance, loading, unloading, okay, inspection charges, trial run, okay, all those charges has to be included. Interest and late fee if any levied, okay, for delayed payment by recipient, that amount also has to be added. Here the amount which is collected as late fee or penalty might be inclusive of GST, so we need to add only exclusive of GST. Next, subsidy. Subsidy, sir, we can call it as subsidy only when it is given to supplier. Let's say when Telangana government or AP government decided to give tabs, okay, the tabs at a subsidized cost of 1500 to the students studying in government school. Okay, now for this they entered into a contract with, let's say, Lenovo. So Lenovo is the one which is supplying the tabs to the students at just 2000 rupees to a student. Okay, whereas the actual cost of this particular tab is each 10,000. Now the government is paying the 8,000 rupees to Lenovo company. So this is a subsidy which is given by whom, sir? Government to the supplier. Okay, and it should be linked to the price. What does it mean by linked to price? The government is not giving a lump sum amount like 50 crores, 100 crores. It's not giving 50 or 100 crores some lump sum amount, and it's not like selling or giving how many ever the tabs are required, they'll give it for 2000 rupees only, whereas the government give them a lump sum amount. If that is the case, then we'll ignore such lump sum amounts paid as subsidy. So the subsidy should be in this way. I mean, individually it should be paid with respect to each unit, and it should be given to the supplier. For example, where it will not be given to supplier means LPG subsidy. That means in domestic, for domestic use, we all are having this LPG subsidy, that is gas cylinders and all. On that we are getting subsidy from the central government. How it gets? Sir, first initially maybe 1100 is the cylinder, you will pay 1100 rupees. Then the government will be depositing you the subsidy amount to the direct beneficiary, I mean to the recipient only, not to the supplier. In such cases also such subsidies are ignored. So subsidy should be given to supplier and it should be linked to price. If it is given by central government or state government, then given by central government and state government, and it is already adjusted. That means the price given in the question is net of subsidy. I mean already subsidy is reduced into it. Even the provision says like reduce the subsidies given by central and state government. Since it is already adjusted, we need not to do anything. If it is not adjusted, then reduce it. If the subsidy is given by other than central and state government, the provision says like simply ignore. But whereas if it is already adjusted, then it shouldn't be adjusted, but it is already adjusted. I mean it is already reduced, so you should reverse that, add back. If no adjustment has been made, in the question also it is given as 10,000 and the subsidy is given by other than government, then no adjustment has to be done. So simply leave it. Okay. Now coming to discount. Discount 15 subsection 3, sir. Discount is of two types. One is pre-supply discounts. I mean at the time of supply or before supply itself the discount is known. The second one is post-supply discount. If the discount is known at the time of supply and if recorded in the invoice, then reduce it from the value of supply. Okay. Let's say you went to a shop and there a board has been kept like 50% discount is there. Then it is known before the supply, or else no board has been kept, but when at the counter When you're making the payment, you ask for some discount and the guy given you 10% discount. So this is also a discount which is known at the time of supply and it is recorded in the invoice. So such discount can be reduced. Next ones are post-supply discounts. Post-supply discount means initially when you are buying goods, there is no discount given. The invoice is generated for the full value, the bill generated for full value. But after the supply is completed, the discount is being provided. So there are of two types, sir. One is established by way of precondition in the contract or agreement. That means even though the discount is not given initially, but at the time of initial sale itself, supply itself, there is a condition in the contract like on satisfaction of some conditions in future or on achieving a sales target or on achieving some targets, there may be a discount given. Okay, if such kind of conditions are there, it can be called as precondition. Then this reduce such discount from value of supply. Okay, what are the conditions here, sir? Supplier shall raise credit note and recipient shall reverse the excess ITC claim, because initially it might have got invoice raised for 10 lakhs because no discount is there at time. So on the 10 lakhs, 18% GST means recipient claimed 1,80,000 as ITC. But later the recipient fulfill the obligations or conditions, so that he is eligible for discount. I mean, he satisfied the precondition. So now he is eligible for discount 20%. So the invoice value came down to 8 lakhs. On that 18% means even the ITC will also get reduced. Na? So the excess ITC which is claimed by recipient has to be reversed and supplier shall raise a credit note. If these conditions are satisfied, then such discount, even though given after supply, it can be availed as, it can be reduced from the value of supply. In any other case, ignore the post supply discount. Okay. There is a clarification also here, sir. The clarification is about when the discount is given by way of buy more, save more schemes, then reduce it from value of supply. Buy more, save more schemes means we'll be seeing in the supermarkets kind of, these heritage kind of supermarkets. What they'll be saying means when we went to buy goods, they'll ask us to take membership card. Once we take the card, they'll say like in an year, if you buy for 10,000, you'll be getting 10% discount, 20% discount. So with the sales targets, those are nothing but called buy more, save more schemes. So it is something like there exists a precondition, because at the time of sale itself, they are clearly saying like in a year, if you reach 10,000, you'll be getting additional discount. So clearly there's a condition available on the date of supply itself. And anyhow, the recipients are unregistered person, so anyhow they are not availing at it, so there is no concept of reversing them. So in such cases, discount can be reduced. In the case of secondary discounts, ignore that discount. Now 15 subsection 4, sir. What 15 subsection 4 says means where transaction value cannot be determined under section 15 subsection 1. Where transaction value cannot be determined under section 15 subsection 1. When you cannot determine, maybe because the supplier and recipient are related, or the price is the sole consideration. In those two cases, you cannot take transaction value as the value of supply. In such cases, the value of supply should be determined as per rule 27, 28, 29 and 30, 31. Okay, you could see the chart here, sir. Where transaction value cannot be taken as value of supply. It may be because of two reasons. One is because the supplier and recipient are related, or because of the price is not the sole consideration. Where price is not the sole consideration, that means the examples of where price is not the sole consideration is like barter, exchange, and permanent transfer or disposal of business on which ITC has been claimed. So let's say that I given you classes, you provided me some work to me. So this is nothing but called as a barter system. So where price is not the sole consideration. In such cases, we should go for rule 27 to determine the value. And this is applicable for both goods and services. This rule. Okay, what it is saying? First of all, it is saying asking us to take open market value. Let's say, sir, a mobile shop guy sold to X for rupees 15,000 mobile, whereas to Y he sold the mobile for only 10,000 rupees and he took a old mobile also. So here it is an exchange transaction. Price is not the sole consideration. The cell phone shop to Y, price is not the sole consideration. Now you can take open market value. What is the open market value? The price which he sold to an unrelated customer, to X he sold it for 15,000 now, that is the open market value that can be taken. Okay. Next, B1, sir. What B says means if open market value cannot be found out or open market value is not available, then take the monetary amount paid. That means Y paid 10,000 rupees, not take the 10,000 rupees plus Money equivalent value of non-monetary consideration. What would be the money equivalent value of the old mobile he given? Find out that money equivalent value. Together will be taken as the value of supply. Money equivalent amount paid or money equivalent value of non-monetary consideration. Third one, sir. If such non-monetary consideration related value also cannot be found out, then take value of goods and services of like kind and quality. Take the value of goods and services of what? Like kind and quality. Let's say, if you want to find out the value of supply of a mobile, if such you cannot, let's say this one particular brand mobile, so let's say we'll take Samsung mobile, we cannot find out the value of it, then the identical good will be other competitive company. If not Samsung, some other different companies are there now with the same kind of specification. That price has to be taken as value of supply. So first you should take open market value. If it is not available, take monetary amount paid plus money equivalent value of non-monetary consideration. Take together and that would be the value of supply. Third one, sir. Value of goods and services of like kind and quality. This is about rule 27. And if A, B, C, if all the three are not available, then we'll be moving to rule 30. What rule 30 says? If value of supply cannot be determined using rule 27, 28, 29, then determine it using rule 30 or 31. What rule 30 says? Take the cost of production. Okay, or if it's not produced, take cost of acquisition or the cost of provision of such service. Fine, it says simply like take cost and multiply it with 110%. So that is rule 30. Rule 30 is nothing but cost into 110%. So here the cost will be determined using CAS 4. Okay, the cost has to be determined using cost accounting standard 4, which is very much important, sir. These kind of questions are asked frequently in CMA exams. So we'll do one problem on this one as well. Next, rule 31. What rule 31 says means if rule 30 is also not available, then go for rule 30. It says like determine the value of supply by using any reasonable means. No standard method is said under rule 31. Best judgment method. Take any method which you find like suitable. So rule 27 gives us three options. Go with the open market value, not available. Take monetary consideration and find out the money equivalent value of non-monetary consideration. That also not available. Go with the value of like kind and quality goods. That means identical or similar goods value. That is also not available. Go to rule 30. Cost into 10%. Cost into 110%. That is also not available. Go to rule 31. Take any best judgment method which fits there. Okay. Now coming to where both supplier and recipient are related persons or distinct persons. If both supplier and recipient are related persons or distinct persons, then we could determine it using rule 28 or rule 29. So when rule 28 is applicable, when rule 29, rule 28 is applicable when supplier and recipient are related persons, but other than principal and agent. If they are principal and agent covered by rule 29. Okay, rule 29 it is applicable when supplier and recipient are related persons, but they are other than principal and agent. Rule 29 is applicable when supplier and recipient are principal and agent. Sir, in rule 28, this sub rule 2 is there, na? This is newly added. Sir. This one newly added, it's an amendment here. Okay, which is applicable only from June 2024 exams. So let us see the first sub rule one, which is the existing one only. So here if you see the option one, sir, what rule 28 is suggesting as means when the supplier and recipient are related. Let's say head office sends some goods to branch office, or between father supplied certain goods to brother, or head office and branch office, or holding company to subsidiary company. In these cases, first of all, here also they are asking us to take open market value. Open market value means the price at which the goods are supplied to an unrelated customer where the price is the sole consideration. However, here look at these explanations are very important. If recipient is eligible to take ITC, that means recipient is also a registered person and eligible to take ITC, then the value declared on invoice can be taken as open market value. Let's say, I'll explain it here. Supplier, recipient, supplier HO, recipient branch office. But whereas this branch office is also registered. Okay. Now, the supplier sent the goods at only 10,000 rupees, whereas actual open market value of these goods is 1 lakh. But since recipient is registered person and eligible to avail ITC, the value declared in invoice, that means this 10,000 will be deemed to be the open market value. So it can be taken as the value of supply 10,000 itself. Okay, not the 1 lakh. When this is applicable, sir, when recipient is eligible to claim ITC, then the value in the invoice can only be taken as invoice open market value. Okay, if these are not available, that means either the actual open market value not available. Second one, even though value determined in invoice is also cannot be taken because recipient is unregistered, he cannot avail ITC. In such cases, the second option given to us is like take value of goods and services of like kind and quality. Of like kind and quality. That means identical and similar goods. So here there are two options. One is take open market value. However, if recipient is registered and is eligible to avail ITC, the value declared on invoice, even though the price got compromised because of their relationship, still such compromised price can only be taken as value of supply. B option, sir, where take the value of goods and services of like kind and quality. Next, option 2 is also there, sir. When option 2 is applicable means when head office sends certain goods to branch office. Now branch office will not process these goods, will sell the goods as such. They doesn't do any processing or any other further activity. They'll sell the goods as such. When supplier and recipient related parties and supplier send these goods to recipient and the recipient sells those goods as such without any further processing, then what would be the value of supply will be take 90% of the resale price. 90% of what? Resale price. Let me explain, sir. A and B are related persons. A supplied these goods at a price of 10,000, but we cannot take this because price is not the sole consideration. Now they are asking whether B is selling those goods as such. Yes, B is selling those goods as such. Then to whom B is selling? B is selling to C, an unrelated customer. For what price he is selling? He is selling for 75,000 rupees. Then they take this 75,000 and multiply it with 90%. The 75,000 into 90% will be taken as the value of supply between A and B. Okay, here nothing but it is 75,000 into 90%. Take it as value of supply. Okay, next. Sub rule 2. I said, sir, it was a newly inserted rule, sir. Sub rule 2. When this is applicable, it is applicable with respect to guarantee service provided by holding company to subsidiary company. So there is a subsidiary company which might be newly started or its operations are not as large. Okay, so now the subsidiary company wants to go for a loan, but the banker said like we want guarantee or surety from the holding company. So the holding company acted as a guarantor for the loan taken by subsidiary company. Now subsidiary company is paying guarantee commission to the holding company. Guarantee commission, since the holding company acted as a guarantor, whole subsidiary company is paying guarantee commission. Now consideration received from holding company to subsidiary for providing guarantee service is a supply. Okay, supply chapter also clearly saying it is a supply. Now what would be the value of supply, sir? Value of supply is higher of 1% of guarantee offered. Let's say the guarantee offered for 10 crores. Take 1% of guarantee offered or the actual consideration paid, whichever is higher. Whichever is higher. 1% of the guarantee offered or actual consideration, whichever is higher. This is the guaranteed commission. Okay. Next one, sir, we are moving to rule 29. Rule 29 is about what, sir? When supplier and recipient are agent. What is the case, sir? Here there is option 1, take open market value. Take open market value. If that is also not available, then agent will be reselling it to his customers. Then take the resale price of the recipient into 90%. So 90% of the price charged for supply of goods by recipient to unrelated customer. Sir, here under rule 28, we have option 1, option 2. We cannot decide value based on both option 1 and option 2. Then go for rule 30, cost into 110%. 30 also not applicable. We will go to 31, best judgment method. Even here also, between principal and agent relationship also, both options are not available or you cannot determine value of supply using those two options also, or they doesn't fit you. Then go for rule 30 and rule 31. What rule 30 says? Take cost into 110%. Rule 31 says like take best judgment method. Sir, here generally we should follow sequentially now. In 27 there are three options A, B, C. If A cannot be found out, then come to B. B also not fitting to, B also not applicable, then come to C. C also not applicable, then you will jump to rule 30. Then rule 30 is also not applicable, rule 31. So that means only after rule 30, only if rule 30 doesn't fit you, you should come for rule 31. That's the general phenomenon. But if you are determining value for a service, then you could straight away go to rule 31 by skipping rule 30. When you are determining value for a service, it's not like only after rule 30. You have the option to pick straight away rule 31 also by skipping rule 30.
So now it's about Rule 31A. Sir. Rule 31A is with respect to value of supply in case of lottery, betting, gambling, and horse racing. So where the lottery run is made by state government or such lottery is authorized by state government. In such cases, value of supply will be the face value of lottery ticket. Let's say the face value of lottery ticket is 100. Multiply 100 into 100 by 128 or the price notified. What is the notified price? Sir, based on the demand for lottery ticket, the lottery ticket may be sold at 110 rupees per premium or at a discount 90 rupees as well. So such at what price it has to be sold will be notified by the government by issuing a gazette notification. So the price notified, if it is 110, then 110 into 100 by 128 you should do. Whichever is higher will be the value of supply. If it is 90, then do 90 into 100 by 128. Whichever is higher will be taken as value of supply. Next, supply of any other actionable claim in the form of betting, gambling or horse race. The 100% of the face value of the bet. Let's say you bet for 20 lakhs. Then on 20 lakhs will be taken as the face value. Okay, that would be considered as the value of supply. Now, value of supply in case of online gaming. So, online gaming means now this you might have seen in these IPL games also. So many fantasy games are there. Fantasy players means this one, sir. A Dream 11. Okay, so many applications and advertisements we are saying that one. And there are certain betting apps. What are those betting apps means? Like they might be organizing from some other countries outside India in where betting is allowed. From there they will be operating the cricket bettings, political bettings. Okay, all this will be carried out now, and even the online rummy and all. So what would be the value of supply in there? Whatever is the amount you make deposit. Let's say I deposited 50,000 into their wallets to keep a bet. Okay, just they deposited 50,000 into their wallets, then the 50,000 will be taken as the value of supply, including distillation. The amount paid or payable or deposited. Next, value of supply in case of casinos. So in movies we might have seen these casinos. Like we enter into casinos, there will be a lot of gambling games, the card games, or so other random gambling games will be seen. So what we'll be doing means generally instead of using money, we'll be using the tokens. Let's say you're having 10 lakhs. You given the 10 lakhs at the counter and they give you some tokens kind of coins kind of. Okay, each might be having some 10,000 value, 5,000 value like that. They given you coupons, that coins kind of, tokens kind of. So whatever is the value of money you given in exchange of tokens would be taken as value of supply. Sir, you took tokens for 10 lakhs, but when you entered inside, you just played for 5 lakhs worth of tokens. Okay, and you didn't play it at all, and you returned the balance 5 lakh tokens also. Still, the value of supply will be 10 lakhs. Value of supply will be how much? 10 lakhs. So the amount refunded will not be considered at all. So what value is deposited to get the tokens or the coins will be considered here as value of supply. Next, determination of value of supply in special cases. In Rule 32, we will be determining value of supply in special cases. These special cases, the value of supply deciding under these special cases is not mandatory. It's at the option of supplier. Either he can decide value of supply normally or he could even choose to decide under these options. The first one, sir, the first one is about 32 sub-rule 2, purchase and sale of foreign currency. Purchase and sale of foreign currency. Okay, there is a guy, maybe a foreign exchange dealer. He is selling and buying foreign currency. So how the value of supply will be determined to him? There are two methods, sir. Rules 32 sub-rule 2 clause A. Rules 32 sub-rule 2 clause B. So the case one, under the method one, there are two cases, sir. First one of the currency being exchanged is Indian currency. That means we are converting rupee to dollar or we are converting pounds to rupees. So one of the currencies being exchanged is Indian currency. Case one. Case two. None of the currency being exchanged is Indian currency. That means dollar to yen or dollar to pound. So like that you are converting. None of the currency being exchanged is Indian currency. Then case two. Case one of the currency exchanged is Indian currency. Case two, none of the currencies are Indian currency. So what case one is suggesting, sir? It is suggesting us to take RBI reference rate. Okay, sorry, it is again asking further scenarios here, sir. RBI reference rate available, RBI reference rate not available. Okay, if RBI reference rate available, then the difference between RBI rate and the bank buying or selling rate
take the difference and multiply it with number of units of foreign currency exchange, that will be taken as value of supply. If RBI reference rate is not available, take 1% of the gross amount of Indian rupees exchange. Okay, 1% of the gross amount of Indian rupees exchange. Okay, let us look at the example here. Raju has $1 lakh. The HDFC $1, the bank rate is 81, whereas RBI reference rate is $1.82. Since RBI reference rate is available, we should take the difference between these two, 1 into multiply it with number of units of foreign currency. So value of supply is 1 lakh. Let us assume this RBI reference rate is not available. Then what to do? Convert first into Indian currency. $1 lakh into 81. So from there multiply it with the 1%. So sir, not 1% on foreign currency, convert into Indian currency and multiply it with 1%. So it will be 81,000. Okay, na? Let us see here another example. Abhi has 75 lakhs. He wants dollars. RBI reference rate of dollar is 80 and bank rate is 81. So now between the difference is 1 rupee, but it has to be multiplied with 75 lakhs. No, number of units of foreign currency. So they are converting the 75 lakhs into dollar by using the bank rate 81. So it came to 92,592. Where RBI reference rate is not available, take 1% of 75 lakhs, which is 75,000. Okay, hope so you're getting the point, sir. If RBI reference rate is available, difference between RBI reference rate and bank rate into number of units of foreign currency exchange. If RBI reference rate is not available, take 1% of the gross amount of Indian rupees exchange. Next one. Neither of the currencies are Indian currencies. Then let's say here you could see dollar to yen. Now convert the dollar value also into rupees using RBI reference rate. Convert the yen value also into rupees using the RBI reference rate. Take both the Indian currency values and multiply them with 1% each separately. Take whichever is lower as the value of supply. Convert both the foreign currencies into Indian currencies using RBI reference rate separately and multiply them with 1%. Whichever is lower has to be taken as value of supply. So there are two cases, sir. One of the currency exchange is Indian currency, and beneath that there are two scenarios: RBI reference rate available, not available. And case 2, none of the currencies are like Indian currency. In such case, convert both the currencies, foreign currencies, into Indian currencies using RBI reference rate and multiply them with 1%. Whichever is lower has to be taken as value of supply. Next, method 2. Method 2, sir, here nothing but rule 32 sub rule B. This is kind of slab rate method. Okay, what does it say? See here. Where the gross value of Indian currency being exchanged is within 1 lakh, then take 1% of gross amount or 250, whichever is higher as value of supply. If the currency being exchanged is Indian currency is less than 1 lakh or equal to 1 lakh, take 1% of gross amount or 250, whichever is higher as value of supply. If it is between 1 lakh to 10 lakh, on the first 1 lakh it is already 1%. On first 1 lakh 1% means it comes to 1000. Whereas on the amount in excess of 1 lakh and which is between 10 lakhs, apply 0.5% of the amount. Let's say we are having 5 lakhs. On first 1 lakh 1%, that is 1000. On the balance 4 lakhs, multiply it with 0.5%, which comes to 2000. Total the value of supply will be 3000. Where the total amount of Indian currency to be exchanged is more than 10 lakhs, then 0.1% on the amount in excess of 10 lakhs. 0.1% on the amount in excess of 10 lakhs and 5,500. How this 5,500 came, sir? On first 1 lakh 1000. Up to 10 lakhs, I mean 1 lakh to 10 lakhs there is 9 lakhs. On that if you multiply 0.5% means it comes to 4,500. So total up to 10 lakhs it would be 5,500 plus in excess of 10 lakhs it is 0.1%. This you need to do, and 60,000 whichever is lower. I mean in method 2, the minimum value of supply will be 250. The maximum value of supply will be 60,000. However, if method 2 once opted, it cannot be withdrawn until the expiry of 1 financial year. This is about the purchase or sale of foreign currency. Next one, sir. Value of supply with respect to booking of tickets for an agent, a travel agent who books flight tickets on a commission basis. So now what is the value of supply for this agent? Let us check whether it is domestic travel or international travel. If it is domestic travel, take 5% of the base fare, sir. Base fare means the fare without giving any discount, the fixed fare. Let's say the fare actually is 40,000. Maybe at discount it is getting for 20,000, but you should apply the 5% on the 40,000 only. So domestic travel 5% of base fare. If it is international travel, then it is 10% of base fare. Next, rule 32 sub rule 4. Value of supply in relation to life insurance. Value of supply in relation to life insurance. Here there are 4 different types of policies, sir. So the policy with the dual benefits, that means risk plus investment. So let's say the most popular life insurance policies are like with the dual benefits only, which promises like either on the expiry of policy holder or on expiry of a fixed term, you will be getting the matured amount or the sum insured. Let's say the sum insured is 50 lakhs and the policy term is 25 years. That means you will be getting 50 lakhs even after the expiry of the tenure 25 years, or even in before the 25 years itself. If the policy holder got expired, then also they will be getting the sum insured now. So that means it is covering both risk and investment. But here the value of supply provisions here clearly states like only the risk part alone can be taxed. The investment part cannot be taken as value of supply, cannot be taxed. So what they are saying, taxable value of supply will be take the gross premium. Out of the gross premium, the amount which is allocated for savings, which is allocated for investment, and it is and if it is communicated to the policy holder, such amount has to be reduced. Let's say the premium amount to be paid is 25,000. But out of this, 18,000 will be allocated for investment and it is communicated by the insurance company to the policyholder. Then subtract this 18,000, only 7,000 will be taken as the value of supply. Next, if it is a single premium annuity, what does it mean by single premium annuity? And here also, the amount which is going to be allocated for investment is not communicated. The amount which is going to be allocated for investment is not communicated. So we don't know how much is for risk and how much is for investment. Single premium annuity means I'll pay just only one time the premium. Okay, and it covers me for the coming 25 years, and even I may get the sum insured after the expiry of 25 years also. So here value of supply has to be taken as 10% of the single premium charge, where allocation for investment is not intimated. Next, where the policy covers only risk, that means there is no investment at all. Let's say I pay 10,000 as term insurance, okay, and no investment at all. If in this 1 year, if something happens to me, I'll get insurance, otherwise I'll not get anything. Then the value of supply will be entire premium, because the total premium is for risk only. In any other case, what could be any other case? Okay, the policy involves dual benefits, risk as well as investment. But the part of investment or the amount allocated for investment in the premium is not communicated to the policyholder. In such cases, the value of supply will be in first year 25% of the gross premium. In the subsequent years, it would be 12.5% of the gross premium. Okay, next, value of supply in case of second hand goods. So see, if you are a dealer of second hand goods, we'll be seeing lot many ads with respect to second hand goods or second hand supplier of cars, car wala, car deco, car trade, like that. So they are having two options, sir. The first option is they are availing ITC on the cars they purchase. Then this option is, then they can follow that regular rule and regular value of supply. If they are not availing ITC on the cars they purchase, then they have this margin scheme. What this margin scheme is, sir, I bought a second hand car for 5 lakhs and again I'm selling it for 7 lakhs. Now this margin scheme says like, okay, you are selling it for 7 lakhs now, take 7 lakhs. From there, subtract your purchase price. I bought it for 5 lakhs. So I'm subtracting 5 lakhs from the 7 lakhs. So the margin 2 lakhs will be taken as value of supply. Sir, okay, let me put it in a different way. I bought it for 5 lakhs, sold it for 7 lakhs, but I incurred some expenditure of 1 lakh. So do I need to subtract this expenditure as well? No. We are not calculating profit here. We are only calculating the margin. Margin is the difference between the selling price and purchase price only if it is positive. I mean selling price minus purchase price, if you subtract, if the answer is positive, then take it as value of supply. If it is negative, then ignore. Next, in case of repossessed from a defaulting borrower. So this is a tricky question area, sir. I mean, when you read it on your own, generally you will not understand this. Repossessed from a defaulting borrower. Let's say I'm a banker. Okay, I'm a bank. I financed purchase of a machine. Okay, some X a guy called X purchasing a machine. So I financed him. Okay. But later on, after 6 months or after 1 year, this guy is not paying me EMIs. So what I did, I took the possession of the machine or the car or the vehicle and taken that control of it. Okay. So let's say if a car is bought on EMIs, if you don't pay EMI means the bank will take away the car. No? The same way happened. Me being a banker, I taken the possession of the car or the machine. Now it's a second hand good to me now. I bought a second hand good. Now I am selling it. So I am a dealer kind of who is purchasing second hand good and selling it. But here I don't know the purchase value. What? Understand? Are you able to understand? I don't know the purchase value because I am not actually purchasing. I am just taking the possession of a machine or car because the borrower is not paying me the installment. So that's why I taken over the possession. So I didn't actually purchase. I just taken over the possession. So I need to know the purchase value. So how purchase value can be found? If the recipient is an unregistered, if the borrower is an unregistered person. Yes, that guy unregistered person. He just bought a bike on EMIs. Since he is not paying EMIs, I took back the bike. So unregistered person. So what I should take as my purchase value? Take the initial purchase price. Let's say he bought the bike for 1,50,000. Take it. From there, subtract 5% for every quarter from date of purchase to date of disposal. Sir, here date of purchase to date of disposal means not his purchase date, not the borrower's purchase date. My purchase date. My purchase date means the date when I took the possession of such bike. From such day till I sell that bike. Whatever is the time period is there na, for such time period, divide it into quarters and for every quarter reduce 5%, then you will be arriving the purchase price. Okay, understand? If the borrower is unregistered person, take first what is the actual purchase price? Let's say 1,50,000. Okay, sir, he ignore the period which he has held. Ignore the borrower's time period which he held. Ignore that. Take the date from which the being the banker or who is taking away the possession from such day when I took the possession of such bike, repossession of such bike from that date till the bank actually sells, whatever is the time period is there now for such time period, divide it into quarters and for every quarter subtract 5%, that will be the purchase price of lender. So take the sale price and subtract this purchase price, you will be again into the margin scheme if positive. Okay. What happens if he is a registered person? If he is a registered person and if I simply taken away the possession means it amounts to disposal to him. Disposal of business assets on which IDC available to the borrower. So he will be raising an invoice. The value which he shows in invoice will be taken. Okay. So see the question here, sir. Shivani purchased a car for 20 lakhs for which she took a loan from Sundaram Finance. Sir, she purchased car on 1st June and loan was taken from Sundaram Finance for 15 lakhs on 1st May. Since Shivani fails to repay the loan, the car has been repossessed and sold it for rupees 16 lakhs on 31st December 2023. Okay, so when the car repossession is taken the 1st May 2023 and when it is sold 31st December 2023, here it is simply selling price minus purchase price, but we need to find out what purchase price. So how they are finding out purchase price? See, they took initially the actual purchase price of borrower which is nothing but 20 lakhs. From there subtract 5%. 5% for how many quarters, sir? From the day when the bank took repossession, 1st May 2023, not the date when Shivani purchased the car. The only you should take the date when the banker took the repossession, 1st May 2023, till the date of actually sold. I mean 1st May to 31st December. Okay, May, June, July, August, September, October, November, December. Part quarter also has to be treated as full quarter. So 3 quarters if you subtract means 17. So the purchase price is 17, whereas the sale price is only 16 lakhs, which is negative. So there is no value of supply at all here. Next, value of supply in case of vouchers, stamps, coupons or token. Whatever is the monetary value considered for, whatever is the monetary value of such goods, such vouchers, stamps or coupons, that would be taken as the value of supply. Next, value of supply in case of a pure agent. Sir, a pure agent means there will be a main contract with this person. Sorry. Okay. A client came to me asking me to file his GST returns. So I said like I will charge 20,000 rupees for filing his GST returns. So there is a contract between me and the client. initially. Okay. Now, while filing GST or 3B is having some tax payable of 5,000. So what it means, I paid the 5,000 rupees tax also on behalf of the client. Now, while raising invoice, I charge 20,000 and I am even asking the 5,000 tax which is paid on behalf of him. So now with respect to the 5,000 tax which I paid, I acted as a pure agent to the client. Okay, because that 5,000 is not for my benefit. I am not collecting any extra charges on this 5,000. Whatever is actually incurred, that only I am collecting from the client. And in between the client and me, there is a separate contract for providing service for this GST returns filing. And coming to the tax 5,000 part, it is an additional one. Okay, where I am not taking any margin, I am only charging the actual amount. I am not retaining any benefit, and it's not my for my personal purpose. So for that 5,000, I am acting as a pure agent. So the amounts or the expenditures which are incurred as a pure agent shall not be includable in the value of supply. The expenditures and costs incurred by the supplier as a pure agent has to be reduced from value of supply. A person who is called pure agent enters into a contractual agreement with recipient to act as his pure agent and to incur costs or expenditures on behalf of him. Next, neither intends or holds any title. Okay, with respect to client, if any, sir, here just tax payment, if any kind of expenditure met also, I'm not retaining any benefit relating to it. Everything I am transferring to into the recipient only, and not uses that for my personal interest and receives only actual amount. Then I can act as a pure agent. The expenses incurred as a pure agent shall not be includable in the value of supply. Next, rate of exchange with respect to currency. The rate of exchange with respect to goods is the rate notified by CBIC as on time of supply. With respect to time of service means the rate notified by, rate determined as per gap on the date of time of supply, which is determined by CBIC only. Where value is inclusive of tax, we should multiply value into GST by 100 plus GST rate. Clarification on no claim bonus. No claim bonus means I took a insurance policy, sir. It's a health insurance policy. But in the year I didn't got hospitalized, nothing happened to me. I'm very much well. So I didn't even strike. I mean, the policy didn't utilize. So then, since I didn't made a claim, the company is offering me no claim bonus in the next year. So instead of the 30,000 premium, they are offering me a bonus of 10,000. So I need to pay only 20,000 as the premium in the second year. So the question is whether the no claim bonus which is given by insurance company can be called as the amount paid for non-performance of an act by me. Since in the first year I didn't made any insurance claim, they are offering me no claim bonus na 10,000. So can we say that 10,000 is paid for not performance or for non forfeiting my right to claim? Sir, what actually happened? If at all there is a situation to hospitalize, then I might have actually claimed insurance. I didn't even have such situation, so that's why I didn't claim. Understand? So there is no question of tolerating an act or forbiddance to act or non-performance of an act. Okay, so no claim bonus paid 10,000 cannot be called as supply. First point. Second one, sir, the next question is in the second year while paying the 30,000 premium, they are reducing the no claim bonus now. So can such reduction of no claim bonus can be called as discount? Yes, such the reduction of no claim bonus can be called as reducing the no claim bonus from the actual premium amount to be paid is called as, it can be called as discount. Why? Because they at the time of taking the policy itself they clearly says like if you don't make a claim you will be getting this amount as no claim bonus. No, so there is a precondition. Okay, insurance company disclose about no claim bonus in policy documents and even show it in invoices. So pre-disclosure of it will satisfy the conditions in 15 subsection 3. So it is a permissible deduction. Next, clarification on guarantee service by a director. Sir, a director acting as a guarantee to the company. So now if company is paying any guarantee commission, what is the value of supply for it? Generally, it should be value of supply will be open market value. But RBI guidelines suggest that no company shall pay any consideration to the director for giving guarantee. So hence, the open market value has to be taken as 0. So this is about the topic value of supply. So coming to the workbook questions, sir, from BCCA material. Question number 4, 6, 12, 17, 24, 25, 26, 28, 29, 33. So these are the questions which are of importance here. Question number 4, 6, these are the questions. Okay, out of them I try to solve at least some 3 to 4 questions, sir. Sir, look at this question number 29, sir. Sir, before this here, 32 question is there. This question you could solve only after looking at the job work provisions. So once you solve job work provisions, then look after question number 32. Now I am under question number 29. So Shankar Texmo Private Limited registered office in Tamil Nadu, manufacturer of dyeing machinery. It manufactures and installs the machine. Okay, and for each machine manufactured, it gets subsidy of 3 lakhs. Next, Purni Dyers Limited, who is having an office in Coimbatore, ordered a machine for 25 lakhs and handling charges 50,000 has to be added, and took an additional warranty 20,000, incidental charges has to be added, installation cost 80,000 has to be added. Next, offers a cash discount of 2% where the payment is made within a month. Okay, if not so, they will recover the discount as well along with the interest rate of 18%. Now, on 21st November, it has been supplied, invoice also raised. They are asking us to make the value of supply. Okay, so take the base price of the machinery. How much? 25 lakhs. Handling charges 50,000 added, incidental. Warranty charges 20,000 added, incidental charges. Installation charges 80,000 added. Next, subsidy. Sir, here subsidy 3 lakhs. Why we are adding means, okay, for each machine manufactured, subsidy they are getting 3 lakhs. And registered Tamil Nadu have added the office and the base price is 25 lakhs. So they are assuming here, sir, the subsidy is directly linked to the price excluding subsidies provided by the central and state government. Here it is not given by central and state government. So they assume like subsidy is received from agent and hence it is added to the price. Okay, so this subsidy they are considering like is already adjusted, they are thinking like. So that's why they are adding the 3 lakhs. Now it comes to 29 lakh 50,000. Now they have to reduce the discount of 12% of 25 lakhs. But if you see here, sir, the payment is made only on 10th of January. That means not made within 30 days. But still, why we are giving discount? Because on the date of transaction, we don't know whether the payment is made within 30 days or not. If it is not made, then this has to be reversed by way of using a debit note. But for prima facie now, discount has to be given 50,000. Then it came to value of supply 29 lakhs. The tax would be 3 lakh 48,000. Sir, question number 26. Arihant is an insurance company. It started in 22-23 operations. Okay. It has charged a gross premium of 180 lakhs from the policy holders, out of which 100 lakhs is allocated for investment. Okay, that means 80 lakhs is only risk related. Now compute, they are asking us to compute GST liability, assuming if the amount allocated for investment has been intimated at the time of providing service. If it is intimated, from the gross premium 180, subtract the 100 lakhs and 80 lakhs will be the value of supply. On that, apply the GST rate of 18%. Next, if the amount allocated has not been intimated at the time of providing service, if it is not intimated, what to do? And since this is the first year of operations, okay, here also correct it to 22-23. Since it is the first year of operations, we'll assume the total premium collected is for the first year premium. So 180 lakhs into 25% we should do, and again we should multiply it with 18%. And next is the gross premium total amount 180 lakhs is for towards risk, then 180 lakhs into 18% because the total amount will be considered as value of supply. So now see the question number 25, sir. So what question number 25 says? Srinidhi Limited exported goods from USA. It received US $9,000 and foreign currency 61 per US dollar. Compute the value of supply. So $9,000 is there, sir. 61 is the bank rate. Whereas the RBI reference rate is 62. So now take the difference between 61 and 62, 1 rupee into 9,000. So the value of supply will be here 9,000. Where the RBI reference rate is not available. Then not available means convert into Indian currency 9,000 into 61 and multiply it with 1%, which will be 5,490. If what would be the value of supply of $9,000 are converted into 4,500 pound and RBI reference rate of dollar is 63 and pound is 101. Now convert both 9,000 into 63 and even 4,500 into 101. And again multiply both of them into 1% and 1%, whichever is lower will be the value of supply. If you do that, 4,545 will be the value of supply here. Next, question number 24, sir. So what question number 24 is saying, asking, compute the GST liability in case of 8 travel operator. How to calculate, sir? Basic airfare calculated for domestic ticket booking 50 lakhs. Airfare collected for international booking 80 lakhs. Where the actual commission received is 4 lakh 50,000 and year ending bonus is 50,000. In the above case, what would be the liability if you opt special provision? Okay, they are asking us to compare, sir, which would be better. So in the actual cases, he got commission of 4 lakh 50 and bonus 50. Together, the value of supply will be 5 lakhs in normal provisions. Whereas if you apply rule 32, then 50 lakhs domestic booking into 5%, yes, domestic fare into 5%, and international booking 80 lakhs into 10%. So which would be 2 lakh 50 plus 8 lakhs. Total it came to 10 lakh 50. Whereas here it is only the value of supply is only 5 lakhs. So it is better for them to go for normal provisions only instead of coming into the rule 32. Sir, here question number 17, sir. It is about pure agent service, sir. Buckley Manufacturers is a company, manufacturer of footwear. It imports a machine. Okay, for importing, it took the services of Dada Logistics, a customs broker, and even given them the right to meet all the legal formalities and even the expenses, and even authorized to incur on behalf the expenses. That means Dada Logistics can act as a pure agent. So they given the statement of what are the charges. I mean, we should take, while calculating value of supply, we should exclude the transactions which were incurred as pure agent. Sir, agency charges. Okay, this is for the benefit of Dada Logistics, so it should be included. Unloading of the machine. Sir, unloading related expenses are incurred by Dada Logistics on behalf of the client. So, no benefit written. So, this is not includable. Only 5 lakhs includable as of now. 50,000 not includable. Charges for transportation of machine from Kandla port to Dada Logistics go down in Ahmedabad. So this transportation is also pure agent. From Dada Logistics to warehouse, this is also pure agent. Custom duty pure agent. Dock dues pure agent. Port charges pure agent. But when it comes to hotel expenses, traveling expenses, telephone expenses, these are for the benefit of agent only. The agent will stay in hotel. The agent traveling expenses, the telephone is used by agent. So for these, the benefits are retained by agent. No benefit has been passed on to the original client. So these has to be included in value of supply. So 5 lakhs plus 45, 50 and 2000. So then it will be 5 lakh 97,000. So this is the concept of what? Pure agent. So this question is about the rule 27, 28, 29 is there. No? Kamal & Co manufactures certain products. Cost of production is 20 lakhs. Those products require further processing. So for further processing, it is transferring it to their unit in Punjab. Okay, their own unit in Punjab. Okay, that means branch transfer. When there is branch transfer, related persons. Rule 28. So the question is related to what? Rule 28. Okay. Now, the Punjab unit processes its own parts and thereafter sells. I mean, after further processing only it sells. That means option 2 in rule 28 is also not available. Option 2 is available only when as such is sold. When they are sold as such. But here, after further processing. There are no other factories in neighbor area which engage in the same business. Okay. Products are the same kind and quality are sold for 19 lakhs. So then 19 lakhs is the open market value. Take the open market value as the value of supply 19 lakhs. Okay. So they wrote the whole provision as well here. Sir, question number 6, a simple question, sir, which is regarding this TCS part and all. So I am not discussing it. You can understand it on your own. If you see the question number 4, sir, from the following particulars, compute the transaction value by using rule 30 of this one. Okay, this type of questions are very much interested to CMA Institute, sir. So that's why, since it is linked to CS4, many times they are asked question on this. So if you see, they are giving the cost particulars. So we need to arrive the cost and then add 10% of it or multiply it with 110%. So to arrive the value as per rule 30. Direct material consumed inclusive of GST. So you should make exclusive of GST, which comes to 2 lakhs. Next, direct labor and direct expenses to be added. Works overheads to be added. R&D costs to be added. Next, administration overheads 75 only related to production. So only 75% to be added. That means only 60,000 has to be added. Input received from free of cost has to be added. Abnormal losses, yes, can be abnormal losses can be. Sorry, normal loss only can be considered, sir. Abnormal loss has to be ignored. Next, advertisement and selling. This is post-production, after the production cost. So has to be ignored. VRS compensation to employee. That also shall not be included. Next, realization of scrap. So the realization of scrap has to be reduced here, sir. The scrap value has to be reduced 20,000. If they reduce, then the cost of production will be 5 lakhs. On this, what they should do, sir? They should multiply it with 110 percentage. However, this is for 1000 units, sir. But they have only supplied 800 units to the sister unit now, so that's why first 5 lakh into 110% you do. It comes to 5,50,000. So simply this is for 1000 units. Now make it for 800 units into 800 by 1000. If you do also, you'll be getting 4,40,000. So this is the value of supply. Hope I given a better understanding, sir. Even 10 problems we picked from value of supply and almost 8 to 9 problems I covered here in the marathon as well. And you also practice those questions. Take your time and practice. You'll be having better marks from value of supply. Okay. Hello all. So now we are starting with the topic input tax credit. Okay. In input tax credit, first of all, we'll identify the areas of focus. Once we identified that, then we continue with our discussion. So see here in ITC, sir, the areas of focus are section 16, 17 subsection 3, 17 subsection 5 and section 78. So 16 consists of the basic conditions like when ITC can be availed and what are the conditions to be satisfied. 17 subsection 3 consists of when you are making exempted supply and taxable supply, then you can avail the credit proportionately only with respect to the taxable supply you do. Okay, with respect to that, there are two rules, rule 42, rule 43. Rule 42 says like with respect to inputs, how you can avail ITC. Rule 43 talks about like how with respect to how capital goods you can avail ITC. 42 is important, sir, but 43 till now they didn't ask the question, so not much focus the question. 17 subsection 5 it's of blocked grades and section 18 is about ITC in other cases. Whereas coming to section 19, 20, 21, 19 is job work, sir. When you are following BCCA material, job work will be having a separate chapter, but in this only I'll be discussing now. And when it comes to section 20 and 21, it is about input service distributor. It also not much relevant for exam, even though they ask like they are going to ask like a MCQ, not as like a question kind of. Okay. So, sir, even if you are following the material also, whatever I'm showing in the notes will reflect even in the material as well. So don't worry. Or else, I already said in the introduction part itself, this handwritten notes, we are making it available in our app. Okay. For just since some price has to be given there, we'll keep for nominal price of 1 rupee. This PDF. Okay, IDT handwritten notes like that will keep one folder. So there you can go and just pay that 1 rupee and download this one. It's available for download as well, sir. Okay, then you can take printout and you can follow this one also. But the problem is like I didn't have handwritten for all the chapters, sir. Like I have handwritten for like up to some 8 to 9 chapters, but the important chapters like input tax rate, place of supply, value of supply, returns, these areas are not returns covered. So these three areas are covered and supply charge. Okay, so some important areas are covered. If needed, you can do this one as well. Okay, let me go into the topic. What is called ITC first, or why ITC? Sir, understand A sold goods to B and B is selling goods to C. Understand? A sold goods to B and B is selling now goods to C. Now, when A to B, when in the transaction between A to B, there is tax. And now when the transaction between B to C also, there is again tax. If you see, the good is same, which is went from A to B and which is from B to C. But there are two places it's getting taxed. Okay, the same good, it's getting taxed at multiple points. Okay, so in this way, what happens means, let's say that the good value is 1 lakh. A is selling it to B for 1 lakh. Now the 1 lakh got taxed one time. Now B is selling it to C for like let's say 1 lakh he purchased now. So now he is selling it for 1,30,000. Now again on 1,30,000 they are going to tax. So what happens when B2C is sold for 1,30,000? If the tax is levied on 1,30,000, even the previously taxed 1 lakh is also included in this 1,30,000. No. So the same 1 lakh amount is taxed in between A and B, and the same, since it is including in 1,30,000 in between the transaction of B and C, it is also getting taxed once again. So there is double taxation. To eliminate double taxation, there shall be input tax credit. Okay, there shall be input tax credit. So see here, there are inward supplies and are outward supplies. If you see, on inwards, the goods are at 1 lakh rupees. On this, the tax is paid at a rate of 18%. So this can be taken by the registered person as ITC, which can be used to pay the tax on his outward supplies. To pay the tax on his outward supplies. Next, if let's say the tax on inward supplies is eligible as ITC, which can be used to make the tax payment on outward. So ITC availed on inward supplies can be used only to discharge the tax liability on outwards. Okay, so only you can use the ITC for discharging the tax payment on your outward supplies. So see one more point, sir. Here there are inwards. On this tax is paid. Okay, these inwards may be goods or they may be services. Goods are further divided into capital goods and inputs. What are called capital goods are the goods which are capitalized in the books of accounts are called as capital goods. The other goods are called as inputs. So in simple, what this point is going to communicate as means, the inward may be either capital good or input service. The tax paid on such inward can be availed as ITC by registered person. See here, irrespective of whether the inward is capital good, input service, ITC can be availed fully. Next point, sir. So again, on the inwards, the tax may be paid under FCM or even under RCM. So you don't bother how the tax liability is, FCM or RCM. Just think whether it is your inward supply or not. If it is your inward supply, you can avail it as ITC. So tax paid under RCM can also be taken as ITC. But remember one point, sir. ITC can be used only to discharge tax liabilities on what? Outward supplies. ITC can be used only to discharge the tax liability on outward supplies. So ITC cannot be used to pay taxes under RCM. Next, RCM, okay, a thumb rule kind of, sir. Remember this, sir. Even if you are having little confusion also, stick to this point. RCM liability shall always be discharged through cash ledger. Okay, register it in your mind, sir. You should not get confusion regarding this point. ITC and RCM shall always be paid through, RCM liability shall always be paid through cash ledger. RCM liability shall always be paid through cash ledger. But when you are claiming ITC, close your eyes. When you are claiming ITC, simply check whether it is your inward supply or not. If it is your inward supply, you can avail ITC. Now, see what is the manner of apportionment of ITC. Sir, let's say if you are having IGST credit, such IGST credit can be adjusted with IGST tax first, then with CGST tax or SGST tax. So, okay, it can be adjusted with CGST or SGST in any ratio, in any proportion. There is no priority ranking. IGST grade can be first adjusted with IGST, then with CGST or even SGST. Okay, there is no ranking or priority. So IGST grade has to be first used with IGST tax, then with CGST tax or SGST tax in any ratio, in any proportion, in any order. Okay, now before coming down, we should remember this. Unless until IGST grade is fully utilized, we cannot start utilizing CGST or SGST grade. Only when IGST grade completely exhausted, then you can start using CGST grade or SGST grade. Now CGST grade has to be first adjusted with IGST tax, then with CGST tax, then with CGST grade first with CGST tax, then with IGST tax, but never with SGST. Same way, SGST grade has to be first adjusted with SGST, then with IGST, but never with CGST. Now see, where you are having need of IGST, where IGST is in need, first CGST grade has to be used, then use SGST grade. Let's say for example, sir, I am having IGST liability of 5 lakhs, sir, but I am having IGST grade of only 3 lakhs. So adjusted, still I am having liability of how much? IGST 2 lakhs now. Now I am having CGST grade of 1.5 lakhs, CGST grade of 1.5 lakhs, and now I am having even SGST grade of 1.5 lakhs. So which has to be first adjusted, either CGST grade or SGST grade. First you should adjust what? CGST grade, then with SGST grade. So to sum up, when IGST credit is surplus, that means IGST is in a giving position. CGST and SGST are both are like same. When IGST liability is more, I mean the credit is not enough, that means IGST is in a taking position. then first take from CGST, then from SGST. Here, there will be some standard model questions are here. The question can be like, they are going to give us some inward supplies and they are going to give us some outward supplies and opening balance of ITC. So how to solve this kind of questions? There are 3 steps to be followed. The first one, take the opening balances and calculate the input tax rate on our inward supplies. So step 1 would be computation of ITC eligible. Next, step 2, computation of tax liability. So you should compute the tax liability on your outwards. Either it is FCM or even RCM, we should calculate it separately. And the next step 3 is adjust the ITC. Okay, whatever is the ITC available, that should be adjusted with FCM liability, and then finally compute the cash, the tax to be paid through cash ledger. Okay, so now inwards can be goods and service. Okay, definitions given, sir, I already explained. On any type of inward you can avail ITC. Now 16 subsection, if you see, only registered person is eligible to take ITC, fine. Credit of input tax charged on inward supplies of goods and services on our inward, either goods, service or both. But such goods and services should be used in the course or furtherance of business. Then such ITC will be created into your electronic credit ledger. Next, 16 subsection 2. So 16 subsection 2 is about notwithstanding clause, sir. If you see this photo, this is a Telugu movie related one, sir. Okay, in this movie there is a dialogue like Sitaya Evermata Vinadu. It's the Telugu dialogue, sir. If you translate to English, you can even say like the Bahubali Shivagami kind of. Okay, if she says a word, that word itself is a law. Same way, this guy, the famous dialogue of this guy is like, he doesn't listen to anyone. Okay, his name is Sitaya and he doesn't listen to anyone. Okay, that's the name here. So why I kept this image here means 16 subsection 2 is also same like that. Okay, still till now we discussed like on inward supplies we are eligible to get ITC na, but 16 subsection 2 says like whatever I say you listen first that. Only if these 6 conditions are satisfied, then talk about ITC. If these 6 conditions are not satisfied, then no ITC. It will simply say who are you. Okay, so registered person is not eligible to ITC unless he satisfies these conditions. Only if he satisfies these conditions, then he is eligible for ITC. What are those? Goods and services must be received. Goods and services must be received. First one. However, an exception to it is like bill to ship to model. Generally, only when goods and services are received, then ITC can be availed. So, what is the exception here, sir? Bill to ship to model. What is bill to ship to model, sir? Bill to ship to model concept will be we already discussed in the place of supply, sir. Okay, you already watched place of supply. There I explained already bill to ship to model. Whenever we explain bill to ship to model, you should a triangle should come to your mind. So there will be a person here, okay, and there will be a recipient. Okay, there is a middle person here. Okay, if you should remember what triangle was. Okay, all these 3 endpoints should have here supplier, here recipient, and here there will be a middle person. So what happens? Actually, the supplier should send it to the this middle person, but what he sends, instead of sending to this person, he sends directly to the recipient. Okay, ultimate recipient. So what happens? Actually the consideration is paid by, let's say for example, sir, once again I'm taking A, B, C here there, sir. B is the one who pays the consideration, but A sends goods directly to C. But as per the directions of B only, he doesn't. Okay, B gives directions like, okay, invoice to me, I'll pay the consideration, but send the goods to C. This is called bill to ship to model. In this case, B doesn't receive goods because it was received by C. So even though B didn't receive goods, he can avail ITC. This is bill to ship to model. Next, recipient should be in possession of tax paying document. If you are a recipient, you can avail ITC only when you are in possession of a document. What documents are? Invoice issued by supplier, self invoice or ISG invoice, debit note, revised invoice, bill of entry. Out of these things, one should be there with you and it should contain tax, description of goods and services, value of supply, GSTN of supplier and recipient, place of supply. These are the minimum details to be there in that, to call it as a valid document. Next, it should contain the details. Okay, next 2 points we said till now. One is goods and services must be received, exception bill to ship to model. Second one, the recipient should be having a tax paying document. Third point, sir. What is third point means? The supplier. Okay, supplier. He supplied goods or services to us now. He should report such supplies in his GSTR1. When he report in his GSTR1, it will be reflecting to us in GSTR2A to B. I mean, when we furnish it in his outward statement, then it will be reflecting to us in our inward statement. So then only you can avail ITC. Supplier should furnish the details of supply in GSTR1 and it should reflect to us in GSTR2A to B. Third point. Fourth one, sir. Even though ITC reflecting in 2A to B, it shall not be restricted. Okay, sir. When you go to section 38, it's about GSTR 2A and 2B. There, it says like the ITC which is going to be reflected in 2B is divided into two parts. One is ITC which is available for usage or which is available for adjustment with tax liability. Whereas the other ITC which is got restricted temporarily, maybe permanently also. Okay, temporarily. Why? Because of some negligencies from the part of supplier. Because of the negligencies of supplier. So what are those cases? When the ITC will get restricted? See here, there are 5 cases. 1. Supplier is a newly registered person and the prescribed time period is not at lapse. Okay, so they are not believing suppliers. Maybe he might have registered, he got a dummy registration, a bogus registration. So that's why they want to wait for some time. Okay, to prove that he is a genuine, to make themselves confirm themselves like he is a genuine guy. So where the supplier is a newly registered person and prescribed period is not at last, then you cannot avail. Okay, then your ITC get restricted. Second one, the supplier has made default in payment of GST. Supplier, not recipient, or supplier. Third one, supplier has a mismatch in GSTR 1 and 3B. Fourth one, the ITC availed by supplier is in excess of the ITC which he should avail. Fifth one, sir, supplier defaulted 49 subsection 12. 49 subsection 12 will comes in the end of this chapter, sir, which says simply like, you cannot utilize 100% of your input tax credit to discharge your liability. Maximum 99% of your credit can only be used. Sorry, maximum 99% of your liability can only be used to discharge. Okay, I'm saying it wrongly, sir. Please let me clear it. You are having 10. Okay. Your liability, out of it, maximum 99% can only be discharged using credit. At least 1% of your liability should be paid in cash. You understand my point? So that rule has been violated. So what are the 5 conditions, sir? Supplier newly registered person, sir, and the prescribed period not at lapse. Supplier didn't pay taxes. Third one, supplier has mismatch between GSTR 1 and 3B. Fourth one, supplier wrongly availed ITC. Fifth one, supplier violated 49 subsection 12. Okay, if these violations or these negligencies are there on part of supplier, then recipient's ITC will get restricted. Okay, so 4 conditions I said, sir. Okay, goods and services must be received, invoice must be there, invoice or tax paying document. Fourth one, the transaction should be reported by supplier in GSTR1 and reflected to recipient in 2A to B. Fourth one, sir, what is fourth one? Even though reflecting in 2A to B, it shouldn't be restricted. Now fifth one, sir. What fifth one says, like supplier shall pay the taxes to the government. Supplier shall pay the taxes to the government. Sir, but this concept has some exceptions kind of, sir. Because in general, if you see the due dates of GSTR1 and GSTR3B, supplier files GSTR1 by 10th. Recipient has the due date till GSTR3B. So before supplier makes the payment of taxes also, if recipient files GSTR3B, he can avail ITC. So technically, a recipient can avail ITC even though the supplier didn't pay the taxes. Okay, it's going on. Okay, provisional basis. But the government wants to check it in second or third months at least. But now they introduced the scheme saying like, where supplier reported invoice in GSTR1, okay, but fails to file GSTR3B. That means what happened? Supplier showed it in GSTR1. That means recipient availed ITC, but he didn't file 3B, or even though he didn't file 3B. That means just shown the transaction in 1. So that recipient can avail ITC, but supplier didn't pay taxes. So government is having revenue loss because without getting the taxes from supplier, it is giving ITC to recipient. So to avoid such circumstances, what they are saying means, if at least by end of September of the next financial year, so see how much time they are giving. Okay, at least if the supplier makes the payment GSTR 3 by September end in the succeeding financial year. Let's say we are in April 2023, sir. Okay, so April 23 means we are in financial year 23-24. So the whole year they given. By the end of September 2024, at least if you make the payment of taxes in GSTR 3B, then no problem. If that is also not made by end of September following the financial year in which ITC availed, then the said amount of ITC which already claimed as ITC by recipient has to be reversed while filing 3B on or before 30th November. If by 30th September supplier didn't make the payment, then by 30th November recipient has to reverse the ITC. Okay, see here sir, example July 2023, that means financial year 23-24 now. A is a supplier, he supplied 10 lakhs goods at 18% tax rate. Recipient, so recipient already availed ITC because this is July, means in August recipient availed ITC. Filed GSTR1 by August 9th, so recipient availed ITC, but 3B not yet filed. A didn't even file 3B till 30th September 2024, that means by succeeding financial year end of September also. Now B has to reverse the ITC while filing 3B on or before 30th November. So this is an important concept, sir, because it came as an amendment or a new point in for this attempt. Next, okay, recipient should file return as per 39. That is nothing but GSTR 3B. So there are okay the last two conditions, sir. Supplier has to pay the tax payment. Recipient has to file the GSTR 3B. If all the 6 conditions are satisfied, then ITC can be availed. This is 16 subsection 2. Here proviso 1. What proviso 1 says means where goods services are both covered under a single invoice or received in batches, lots or installments, then ITC can be availed only on receipt of last lot or last installment. Okay. Next, proviso 2. What does proviso 2 says like? Sir, supplier made a credit sale to recipient. That means he supplied goods services are both on a credit. Okay, now the recipient has to make the payment within 180 days. Within how many days, sir? Within 180 days from date of invoice. Within 180 days from date of invoice. Okay, recipient didn't make the payment. What happens? Sir, even though recipient purchased goods on credit basis, no, but still he can avail ITC. Okay, if let's say supply is made in August month, then in September recipient will avail ITC. But the problem is not making payment to supplier. If such payment is not made within 180 days, what happens? Check whether full amount is not paid by recipient or only a part amount is not paid. If full amount is not paid, then reverse the total ITC along with interest at 18% per annum. If only part amount is not paid, then reverse ITC also partly along with interest at 18% per annum. So now the question is, in which month this ITC has to be reversed? In which month ITC has to be reversed? Sir, ITC has to be reversed. Okay, let's say 180 days expired in August month. Now filing 3B of August. By when August month 3B will be filed? September 20. Na? So when filing 3B of August month, August is the month in which 180 days expired. So then this ITC has to be reversed. So reversal means you cannot do just like backflip, you cannot do here. Okay, you cannot backflip the ITC to do reversal. So because ITC you might have already utilized, so what you do means you will add it to your liability. Reversal means nothing but you will add it to your liability. Okay, now interest. Interest has to be calculated from date of availment of ITC to date of reversal. However, if subsequently recipient makes the payment, then recipient can re-avail the ITC. So, however, these are exceptions or exceptions to these rules. One is deemed supplier, since there is no consideration at all there. Second one, RCM transactions. Third one, sir, this is the point from value of supply. You will have here this point in value of supply. If the obligation of supplier is met by recipient, that part has to be added in value of supply. Na? Okay, but okay, in that cases also, this 16 subsection 2 provision need not to be checked. Provision 2. Okay, look at an example here, sir. Invoice issued on 10th August for 15 lakhs at a GST rate of 18%. August means recipient availed ITC on 19th September because he filed 3B on 19th September only, so he availed on 19th September. However, the payment is made on 16th May 2024. Okay, what are the repercussions? So if you see, 180 days are expired by Feb 6th only. But the payment is made on 16th May. So before 180 days, no payment has been made. So what has to be done? Whenever, in which month the 180 days is expired, while filing 3B of such month, the ITC availed has to be reversed. Here, the month in which 180 days expired are February. So total ITC has to be reversed while filing 3B of February is assuming February 3B filed on due date. Assuming, because in the question there is no due date when the 3B of February is filed. So that's why we are assuming Feb month 3B is filed on 20th of March. So interest calculation, if you see, sir, 2,70,000 into 18% from 19th September. By 19th September, 19th September they availed ITC. Next to 20th March. Why 20th March? Because for February month 3B is assumed as filed on 20th March. That means that is the date of reversal. So till then 184 days. So if you calculate interest, it will come to 24,500. Since the actual payment is made in May, then they can re-avail the ITC, not interest. Okay. Next 16 subsection 3, sir. Simple concept. I purchased a capital good for 20 lakhs. On that GST is there, sir, 3 lakhs. Okay, I purchased the capital good 20 lakhs. On that GST, let's say 3.6 lakhs is there. Now what I am doing is, in income tax, I am capitalizing this 23.6 lakhs and availing depreciation. That means on GST part also I am availing depreciation as per income tax. Then I cannot avail ITC. Whereas alternatively, if I capitalize only 20 lakhs, 3.6 lakhs GST part I didn't capitalize, and I avail depreciation only on the 20 lakhs, then I can avail input tax credit. Okay, so coming to 16 subsection 4, it is about time limit for availing ITC. Sir, mistakenly you missed an invoice in a month. Okay, you didn't avail ITC on it. Neither the supplier didn't shown it in the GSTR1. You also didn't identify it. Then after 6 months or 7 months, you identified that there is a transaction on which you didn't avail ITC. Now you want to claim it. Now you want to claim such ITC. Is there possibility? Yes. You can avail ITC till 30th November of succeeding financial year. Let's say 23-24 is the current financial year. Till 30th November of succeeding financial year. That means till 30th November of 2024 or actual date of filing of annual return. Sir, how annual return will be filed? Annual return will be filed in GSTR 9. Okay, so the GSTR 9, if it is filed before 30th November, then GSTR 9 filing date is the last date. If GSTR 9 is filed after 30th November, then 30th November is the last date for availing ITC. So let's say here, invoice dated 18 September 2023 on that 1.8 lakhs ITC. For financial year 23-24, annual return is filed on 10th December. 10th December means after 30th November only, no? Then what is the last date? 30th November of succeeding financial year. Nothing but 30th November 2024 is the last date. Next, date of issue of debit note. Sir, with respect to debit note, whether we should check the original invoice financial year as relevant for calculating time limit, or debit note financial year has to be taken as relevant financial year. So the date of issue of debit note is relevant to determine the financial year for the purpose of 16 subsection 4. So with this we covered 16 subsection 4, sir. So anyhow there is debit note concept, no? So I am even here we discussed about the debit note. Sir, if you see, the same time limits of 16 subsection 4 applicable even for making amendments in GSTR 1, GSTR 7 and GSTR 8, and even for raising a credit note also, that is the time limit. So let's see what is debit note and what is credit note. Debit note issued by supplier, credit note is also issued by supplier. Okay, when where the value of supply on invoice or tax rate charged is less than the amount to be charged actually. So actually you should charge 18%, but in invoice it is only 12%. So for the 6% increase you should make, you are raising a debit note. Next, in invoice you mistakenly raised value, took value of supply as only 9 lakhs, but actually it is 10 lakhs. So you should raise the value of invoice by way of raising a debit note. In opposite way, if the value has to be decreased, invoice it is showing 12 lakhs, but it has to be reduced to 10 lakhs, then you will be raising a credit note, where value of supply or tax rate in invoice is greater than value of supply or tax rate actually. Okay, in invoice it is greater. So then sales returns, and even in case of sales returns, goods sent defective, in all these cases credit note has to be raised. Next. So now this is about 17 subsection 5 blocked grade. Okay, 17(1)(3), those we'll discuss after the blocked grade. So if you see here, this is an immovable property. With respect to immovable property, either you take a works contract. Works contract means it is a contract with respect to immovable property and involves both supply of goods and services. So with respect to immovable property, you received a works contract service, or you received separately tanya, okay, construction service as well as the goods also separately you received. In both the ways, okay, in both the cases, either you took it as a works contract or you receive construction service and goods separately, you are not eligible to avail ITC. So now immovable property excludes here. Sir, what we said means, with respect to immovable property, either you took it as a works contract inward supply, or you took a construction service inward supply, or you took a goods. Let's say this building is owned by BCCA. BCCA wants to construct this building, so they took a works contract service. On that inward supply, BCCA cannot avail ITC. Or instead of that, they took separately construction service and they bought themselves cement, iron and all. But still, they cannot avail ITC on them also. However, here, immovable property excludes plant and machinery. That means, If such immovable property is the plant and machinery, then ITC can be availed, such as like rice factories. Okay, those are like immovable properties but plant and machinery, so they can avail ITC. And however here, plant and machineries excludes pipelines which are laid outside factory premises. Within the factory premises, for water supply or for wastewater or for any other materials transfer from one place to another, if any pipelines are laid, they are part of plant and machinery. But if they are laid outside the factory premises, then they are not plant and machinery, so ITC cannot be available. And even mobile towers also. Okay. However, sir, if supplier and recipient are in the same line of business, let's say there is a main contractor, sir, he need to construct 4 floors building to BCCA. There is a main contractor who should construct 4 floors building to BCCA. So he given an invoice to BCCA. BCCA cannot avail ITC. But this main contractor subcontracted it to another person. Now this subcontractor will raise it to the main contractor. No. Since subcontractor and the main contractor are in the same line of business, the invoice raised by subcontractor, whatever is the tax part is there, that can be availed as ITC by the main contractor. Okay. Next, the next one is about motor vehicles. Here there are two types of motor vehicles. One is goods transport motor vehicle and the other one is passenger transport vehicle. With respect to goods transport vehicle, ITC is allowed. Okay. With respect to passenger transport vehicle, you should check whether the seating capacity is greater than 13 or within 13. If it is greater than 13, ITC allowed, such as like staff buses and all. If the seating capacity is less than 13, cars, like kind of. Okay, on them generally the ITC is blocked. However, there are 3 exceptions, sir. When if they are running a driving school, okay, if the car is purchased by a driving school guy, then he can have a ITC, provided he is registered. If the car is purchased for further supply, I mean, if a car showroom purchased a motor vehicle car, they can have a ITC. Or next, if the registered person's business itself is transportation or hiring, then also he can have a ITC. So see here, motor vehicles, goods transport vehicle, ITC available. Passenger transport vehicle, seating capacity greater than 13, ITC available. Within 13, ITC not available, blocked generally. Exceptions, driving school, further supply or transportation business. Next, this point, sir. If a motor vehicle is eligible, if the tax part on motor vehicle is eligible to be claimed as ITC, then the tax part on repairs carried out on such motor vehicle, insurance paid on such motor vehicle is also eligible to claim as ITC. Now we are into the concept of aircrafts and vessels. So aircrafts and vessels, with respect to aircrafts and vessels also same as like motor vehicles. Goods transportation ITC available, but passenger transportation there is no differentiation between seating capacity, sir. Generally ITC is blocked. However, exceptions are same as like above motor vehicles. I mean here we cannot call it as driving school. We should call it as if the aircraft is purchased for imparting flying or navigation skills, aircraft or vessel, then ITC is available. For further supply, ITC available. Third one, for making, for using for transportation business or hiring business, ITC is available. Okay. Next, healthcare service, plastic surgery, cosmetic and beauty treatment, catering service. Okay. See here, sir. Health, plastic surgery, cosmetic and beauty treatment, catering service, rent-a-cab service, supply of food and beverages, membership of a club fitness center, leave travel benefit to employee. In all these cases, the generally ITC is blocked. Health and plastic surgery, cosmetic beauty treatment, catering service, rent-a-cab, membership of club fitness center, leave travel benefit to employee. In all these cases, generally ITC is blocked. However, there are exceptions, sir. When if it is mandated by a statute, let's say Factories Act says like if more than 150 employees are there, such organization should mandatorily run a canteen. Okay, so because of that reason, the company is providing, taking catering services to supply food from canteen, which is mandated by statute. Then they can avail ITC. Next, where the supplier and recipient are in the same line of business. So a catering person supplied food to a hotel. So there are same kind of, okay, a restaurant ordered food from a catering guy. So this catering guy every day supplies food to this hotel. So this hotel, the food will be dined. Okay, they will be having a dining hall and all. No, so they will be supplying that food to the customers they get. So in such cases, both are in the same line of business. They can avail ITC. Third one, sir, where let's say if you are traveling in Vande Bharat train and you even opted for food as well. So they are providing you either a composite or mixed supply. That means they offered to provide you both transportation as well as food. Now, to provide you those bundle of supplies, they want an inward supply called catering. To provide you the bundle of supply, they want a inward supply called catering. Okay, because otherwise railways themselves cannot cook. So such goods and services used for by a registered person as an element of taxable outward composite or mixed supply. So the catering contract which I took is necessary to provide my outward composite or mixed supply. In such cases, I mean railways can take ITC on their inward catering contracts since they are promising to provide to the passenger both transportation and food facility. You got my point? Next, goods and services received by a NRTP. ITC is blocked, sir. However, exception is when goods are imported by him. Next, goods and services used for personal purpose, disposed, damaged or stolen, or even received by a section 10 person. One more thing, sir. When tax is paid on account of detention, fraud, seizure. Okay, the tax paid is with respect to detention of goods or seizure of goods. In such cases, if any tax paid is also, such ITC is blocked. Okay, so these are about the blocked grades, sir. Sir, maximum we can at least, okay, whatever the question they ask from ITC, at least the content till now we discussed is very important, sir. Definitely they leave these points. At least MCQ they'll ask. Okay, so definitely, so don't ignore one line from ITC chapter also. Till now, whatever I discussed, every line, every sentence is important. Okay. In 17 subsection 1, when you are having inwards of both goods or services, and the output is used for partly for business purpose and partly for non-business purpose. In such cases, how you can avail ITC? ITC allowed only with respect to goods and services used for business purpose. Next, inward supplies. Okay, you are having inward supplies, but they are used for making both exempted and taxable. You can avail ITC only with respect to taxable. Taxable even includes zero rated supplies. Zero rated supplies means supplies made to SEZ unit or developer and even exports. Okay, 17 subsection 1 says like only avail ITC with respect to business related. 17 subsection 2 says like I avail ITC only with respect to taxable supplies, including zero rated. Now 17 subsection 3 it gives the definition of exempted supplies. In general, the definition of exempted supplies it consists of three parts: nil rated, non-taxable supplies, and even exempted supplies. Nil rated, non-taxable, and exempted supplies. Nil rated, non-taxable, and exempted supplies. It has inclusions as well as exclusions. So inclusions here. Exempted supply includes RCM outwards. The RCM outwards also has to be included here as exempted supply. In general purpose different. For the purpose of here rule 42 and 43, there is a different definition given. So first one, if you are making RCM outwards, or if you are making transaction securities, that is 1% of sale value, or if you are say into sale of land or sale of building. Okay, when you are supplying services by way of accepting deposits and offering loans, and the consideration is in the form of interest or discount. So these are inclusions. RCM outwards. When you are buying and selling shares or securities, options, futures, generally these are neither goods nor securities. But while calculating your exempted turnover, 1% of such turnover also has to be taken. Third one, sir, sale of land. When you are selling land, the land value has to be included, and sale of building also. The sale of land and building, the consideration has to be included when the consideration is received after completion. Sir, only after completion include it in exempted supply. If it is before completion, then it is a supply of service which is taxable. The consideration either partly or wholly received. A negative list in supply will discuss this, where the building, with respect to building, where the consideration either partly or wholly received before completion, it is a supply and it is supply of service and taxable. If the entire consideration is received after completion, then it is covered under negative list. Then include it in here. Okay, you got my point, right? Next, where the consideration is in the form of interest or discount, then that also has to be included in exempted supplies only if it is to banks and NBFCs. Whereas if it is from other persons, then don't include it. Excise duty, VAT, CST will not be included. Next, the land and building, except land and building, other transactions in negative list has to be excluded. Next, Rule 42. What is Rule 42? Rule 42 talks about manner of apportionment of ITC, where inputs used for making taxable supplies and exempted supplies and even non-business related. Let us take an example. Sir. BCCA, assume, okay, it is into MEC, providing exempted supplies, it is into CSMA coaching, taxable supplies, and it is having non-business related, some charity kind of, those free education is being provided. Now, with respect to CSMA coaching, assume the turnover is 90 lakhs. With respect to MEC, assume the turnover is 30 lakhs. Now, for all the three, charity related or CMA coaching or MEC, let us assume the common set of faculties are being used. So the common faculties, okay, I mean not as employer-employer relationship, they are taking as like a contractual basis, no employer-employer. So the total inward of this faculty is 30 lakhs, on that 5.4 lakhs GST is there. And even a building has been constructed where the classes for MEC or the classes for CSMA all together has been taken. So with respect to this building, 1 crore is spent, and on that 12 lakh rupees is the input tax credit. Now if you see, there are different books for intermediate MEC, I mean 11th and 12th, and even for the CSMA coaching also there are different books, and even for the charity also there are different books. On them also, if you see, there is 0.9 lakh GST, 3.6 lakh GST, 1.8 lakh GST. So if you could observe here, BCCA is making taxable supply, exempted supply, and non-business related, and it is having inputs also. So now we need to calculate what is the ITC available to BCCA, and what extent the credit relevant to exempted supplies and non-business supplies has to be reversed or has to be excluded. So for this, sir, first we should take the total ITC available. That means take this 5.4 lakhs on faculty cost and 12 lakhs on building related and books related 1.8, 3.6 lakhs and 0.9 lakhs. Even though they are related to exempted non-business, whatever it is, first of all take the total ITC. If you see the total ITC, how much they took? 23 lakh 70,000, the total of all these. Then from that you need to subtract the ITC which is exclusively relevant to non-business. So books are exclusively relevant, sir, because faculty is a common thing, books are separate. So with respect to books, it is a exclusively to non-business. So subtract that 90,000. Okay. Then subtract exclusively which are related to exempted. So the books which are spent for MEC, books which are given for MEC are exclusively for MEC. So the tax on it is also exempted. So let us take 1.8 lakh. And next, which are blocked grades. Sir, with respect to immovable property, I already said in 17 subsection 5, credit cannot be availed. So it's a blocked grade. So out of total 23 lakh 70,000 T, we are subtracting non-business related T1, subtracting exempted related T2, and subtracting blocked grade T3. When we subtract all this, we'll be getting C1. That means the common grade 9 lakhs. I mean, generally in this 9 lakhs, sir, the common credit is included, even as the exclusively taxable related also included. So what the provision is saying means, so now take this 9 lakhs to your electronic credit ledger. Then the next step is like they are asking us to subtract the input tax which is related to taxable supply, exclusively for taxable supply, that also you subtracted. Then you came to common credit. Sir, don't confuse with this 1,44,000, 90,000. This is related to another problem. Okay. Now subtract this 3,60,000 as well. Now after subtracting this 3,60,000 as well, then you are getting the common credit C to 5,40,000. If you see our example also, only the faculty one is the common one. That only we arrived here. C2 as the 5,40,000, which is used commonly for making all the three outward supplies. But already we need not to take again 5,40,000 as credit, since we already took 9 lakhs as input tax. In this 9 lakhs, this 5,40,000 is also included. No. So we need not to take it separately. But the question is, out of this 5,40,000, there is a part relevant to exempted, but we already availed as ITC. A part relevant to non-business, which already availed as ITC. That needs to be reversed. How it has to be reversed, sir? Common credit related to exempted supply. C2 into exempted turnover divided by total turnover. 5.4 into 30 by 120, you'll be getting 1.35 lakhs. Okay. This is related to exempted supply, which has to be reversed. The same way, common credit with respect to non-business, C2 into 5%, which is 27,000. So this is the reversal that has to be made. So D1 and D2 are the points which are relevant to the part of common credit relevant to exempted is called D1, non-business is called as D2. So these two will be adding it to our outward tax liability. This is rule 42. Now moving to rule 43, sir. Rule 43 is with respect to capital goods. See here. For capital goods acquired in the current month, we should classify them into three parts. One is, okay, we purchase capital goods. First, check whether it is exclusively for exempted purpose. If yes, then no ITC available. If it is exclusively for taxable purpose, ITC available. If it is for common purpose, then also ITC available. But sir, even for taxable purpose ITC available, common purpose also ITC available. But both are not same, na. So to have differentiation, which is used for common purpose, denote it as A. I mean, we'll mark it as A separately. Next, capital good which is already in use for exempted purpose shifted to common purpose in current month. Okay, understand, sir? It was priorly for exempted purpose only. Okay, maybe 1 year back or 2 years back it has purchased. Then it is for exempted purpose. Then they didn't avail ITC. But now it is shifted to common purpose. So what the point says, what the provision says, okay, now avail ITC. Okay, since you didn't avail previously because that time it is for exempted supply. Now you avail ITC because now it is shifted to common purpose. Okay, so capital good already in use. Okay, already in use for exempted purpose shifted to common purpose. So avail ITC fully. But since it is for common purpose, we should mark it as what? A. Next, simultaneously, sir, already 1 year or 2 years life of that asset is already lapsed. No, because the capital good initially it is for exempted purpose. After some time, after some period expired, it was shifted to common purpose. But that means some life of the asset is already expired. No, so with respect to expired life, whatever is the credit part is there, that has to be added to liability. Since you are taking, sir, if the total credit is 5 lakhs, first it is saying like take the total 5 lakhs as ITC. But with respect to the expired life, reverse, you should reverse. That means nothing but add it to the liability. Okay, so here for calculating the life and all, the provision has a deemed useful life. I mean, the lawmaker presumed that the capital good useful life will always be 5 years, irrespective of type of capital good. So that's why they're asking us to do add to the liability with respect to the useful life expired. So how the useful life expired has to be taken in number of quarters. A part quarter also has to be treated as full quarter. For the number of quarters expired, multiply it with 5% and multiply it with ITC. You will be getting the ITC with respect to expired life. Add it to the liability. Next, step 3, sir. What does it say? Sir, again, you purchased the capital good 1 year back or 1.5 year back. Then it is used for taxable supply. So you already availed ITC. But the question is now it is converted to common purpose. So just because it is shifted from taxable to common, you cannot again extra claim ITC because you already claimed ITC. The only thing you should do is just denote it as A because whenever a capital good is used in for common purpose, we are denoting it as A now. So that's why denote it as A. Now the question is, now to the sir, what is our goal here? We need to reverse the ITC with respect ITC on capital goods, which is to the extent of exempted purpose. Okay, so for that reason, what we did in the all the above three steps, whenever a capital good is being used for common purpose, we are denoting it as A. Now take the totals of all those A. We'll have to make aggregate of A. Okay, from that, since we are taking the useful life of a capital good as 5 years, from the aggregate A, subtract the ITC with respect to capital goods whose useful life of 5 years is expired. Let's say here the total aggregate of A came to some 40 lakhs. Some 40 lakhs. Out of these, 10 lakhs is with respect to capital goods whose useful life of 5 years is expired. So subtract that. Take the 30 lakhs only. Okay. Now 30 lakhs. Now what you have to do? Now divide it by 60. Why we should divide it by 60? Because in 5 years there will be 60 months. So now what we are doing here means, sir, capital goods related. Okay, the credit reversal will be done for 60 months. That means every month on month we'll avail credit with respect to capital good at a time. But for reversal, it has to be done monthly, monthly, monthly. Okay, so the adjusted aggregate A, adjusted means after removing the assets whose useful life of 5 years expired. That adjusted A divided by 60. Okay, we'll divide it by 60. Then we'll be getting the monthly common credit, which is called TM. Now multiply it with exempted turnover divided by total turnover. You'll be getting the ineligible part. This is the provision, sir. Let us see a question with respect to it, sir. Sir, since there are many questions, around 50 questions in this study made in workbook, sir, in this chapter, so it's not possible for us to discuss as many questions because there is time permit, time restriction is there for us, no? So that's why. So wherever it is complicated, okay, you cannot understand concept without a problem. There I am taking the question, sir. And one help I can do is like towards the last end of this chapter, I'll tell what are the questions you should focus. At least out of 50, I'll focus. I'll select some 10 to 12 questions. Okay, even though I didn't discuss those questions, you focus on those questions. If at all it really requires explanation, I'll try to cover it. Okay. Now, sir, see, sir, here this question number 22. While limited manufacture taxable and exempted goods, fine. It simultaneously provides taxable as well as exempted output services. Raw material 10,000 units were purchased at 100 per unit. Okay. Then during the month January 2018, they produced all final products. GST paid on inputs is 12%. 10,000 units they have to have na, at 100 per unit. No. On this, the tax rate is 12%. And input services are commonly used. Goods they didn't mention anywhere like commonly, but services are commonly used. Okay. ITC on inputs and input services taken into books of account is 1,74,000. So altogether the ITC on inputs and input services 1,74,000 together for goods and service. Let us find out what is for goods. How you can find out, sir? Let's say 10,000 units into 100. That is the purchase price now. 10,000 into 100 means how much? It will come to 10 lakhs. Out of 10 lakhs, if you multiply it with 12%, it comes to how much? 1,20,000. So out of this 1,74,000, 1,20,000 is with respect to goods. Whereas the other 54,000 is with respect to service. Okay, fine. Now, they have taxable supply of goods 2 lakhs and they are exempted supply of goods also 1 lakh, sir. Okay. And even they said here, note point, each unit of exempted final product needs 2 units of raw material. That means to make exempted goods, how many units of raw material is required? 2 units. So 1 lakh divided by how many units actually sold are 80. So 1 lakh divided by 80, it comes to 1,250. For supplying 1,250 units, they need 2 units of raw material. So 2 units of raw material means into 200, 1,250 into 200. Okay, 2,50,000. On this 12% if you apply, then with respect to exempted goods, sir, again listen to this point. The total exempted supply is made for 1 lakh. Okay, and each unit 80. So 1,250 units supply. For making one exempted final product, 2 units of raw material is required. Okay, into 2. That means 2,500 units of raw material are required. Each unit of raw material is cost at 100. So 2,500 into 100, if you do 2,50,000. On that, input the tax is 12%. So if you do that, you will get an amount of 30,000. Okay, see here, sir. 2,50,000 into 100 into 12%. They also did that. Okay. So what we did means out of the goods exclusively for exempted, for making this, the goods on the ITC on the goods is only 30,000. Okay. Next, services commonly used and exempted service 50,000, total 4,50,000. Now we should follow the rule 40. First, what we should take, sir? We should take the total ITC 1,74,000. From there, we should subtract ITC with respect to non-business. In question, there is nothing related to non-business, so nil. Now subtract exclusively related to exempted. What is exclusively related to exempted? Goods. Okay, so with respect to goods, we can find out how much is actually relevant to goods. So subtract the 30,000 as well. Then blocked grades, nothing is there. So then we got the credit 1,44,000. This is nothing but C1, which will be credited to electronic credit ledger. From there, subtract, which is even related to taxable supply. Sir, here total 1,20,000 is with respect to goods. Out of 1,20,000, we fixed that 30,000 is exclusively relevant to service. So if you 30,000 is exclusively relevant to exempted supply out of 1,20,000. So if you subtract that 30,000 means, then with respect to taxable it is 90,000 na? Subtract that also 54,000. So nothing but the 54,000 with respect to service alone is the common credit. Now what to do? 54,000 you should multiply it with exempted turnover divided by total turnover. What is the exempted turnover? Goods 1 lakh, service 50, 1 lakh 50 divided by total 4 lakh 50. Then the exempted related is 18,000. Okay, that is about that. Now 43 relevant also, sir. There is a question. Praja Industries is manufacturing three products, sir. X and Y are taxable, Z is exempted, and their turnovers are 2 lakh, 10 lakh, 12 lakhs. Okay, they are generally useful life is 5 years. Now see, in the current month, if you see, they purchased a machine called A on 1st April 2014 for used for non-business. Sir, since it is used exclusively for non-business or exempted purpose, ITC is not available. Next, machine B used for making zero rated supplies. Zero rated supplies are also part of taxable supplies. So ITC available exclusively for taxable supplies. Next, machine C purchased on 1st April for being used in manufacturing all the three products. Sir, it is common purpose. ITC is available, but we should denote it as what? A. Next, machine D purchased on April 1, 2 years before 1st April for being exclusively for Z. Okay. Initially, it was purchased for supplying exempted, but now it is used for what? Common purpose. So, when it is doing common purpose, what has to be done? 1 lakh. Okay. What we have to do, sir? Out of that, we can avail the total amount as ITC 1,92,000 and denote it as A. But simultaneously, we should do one more step. What is the other step? For the life expired, out of 5 years, for the life expired, that means number of quarters expired. Here 8 quarters expired, so that's why they multiplied it with 5% into 1,92,000. So what to do this 76,800? We need to add it to our outward tax liability. Next, machine E purchased on April 1, 3 years before, for being used for X and Y, taxable supplies. But now it is shifted to making common purpose. So 2,88,000, we need not to again avail as ITC because already it is spent. Just denote it as A. I'll show you the answer which I solved in class also, sir. See, machine A exclusively exempted, so no ITC. Machine B taxable, so took ITC. Machine C common purpose, taken ITC and even denoted it as A. Machine D exempted to common shifted, so take ITC and even denote it as A. Machine E taxable to common, so we shall not take ITC, we'll just aggregate the A, we'll just denote it as A. So if you see, the total ITC to be created to electronic credit ledger is the total of this. This is the ITC which in the current month we will be taking 3,26,400. But what is the common credit part reversal to be done? Take the aggregate of A, 5,76,000 divided by 60. Why? Because we are making it to monthly, 9,600. Now 9,600 into 12 by 24. Why this 12 by 24, sir? In question, if you see, the exempted turnover is 12 lakhs, whereas the taxable together is also 12 lakhs. So that's why 12 by 24. Okay, the common credit into exempted by total turnover. So 4,800 is the part of reversal to be made with respect to capital good. And with respect to machine D, there is one point, sir. What? With respect to the life expired, we need to calculate the liability. In the question itself, while reading question itself, I already said 8 quarters expired, that part. So see, 1,92,000 into 8 quarters into 5%, 76,800. So this 4,800 and 76,800 will be added to liability. Whereas ITC they can avail for this month is 3,26,400. So next one, sir. 17 subsection 4. What 17 subsection 4 says means, sir, it is little bit complicated to follow rule 42 and rule 43, especially for banks, because banks having a lot of capital goods purchases like computers, servers, okay, these things. But they are used for making both taxable and exempted supply because interest and discount for them is exempted. Whereas the others are like other services are taxable supplies. So in such cases, if they need to follow rule 42 and 43 means they need to reverse lot of trade. So they give, the act provided them some simple provisions. What is that? First option, follow rule 42, 43. Okay, the second option is like take total ITC first. Okay, from there subtract any ITC with respect to non-business purpose. From there even subtract blocked credit. Then you will arrive the eligible credit. Okay, from total subtract non-business related and blocked. Okay, you will be getting eligible credit. Out of this eligible credit, find out the ITC on inward supplies which are from their distinct persons. Let's say here we are taking example of SBI Hyderabad. If SBI Hyderabad received any service from SBI Bangalore, that is an inward supply from their distinct person, such kind of rates has to be categorized in one way. The balance ITC has to be taken in another. Okay, so with the ITC with respect to inwards on distinct persons, you can avail 100% ITC. Whereas on the balance, you can avail only 50%. Okay, what these options are? Total ITC, subtract non-business related and blocked credits, eligible ITC. From there, categorize it into two. The first category, with respect to ITC on inward supplies from distinct person. On this, you can avail 100%. The category 2, others. On this, you can avail only 50%. This is about 17 subsection 4. So, rule 86A. Okay, actually this has to be discussed towards the end of the chapter, but since it came here, I am discussing. Restrictions on utilization of ITC. Okay, in certain cases, Rule 86A gives the power to restrict the utilization of ITC. I mean, it cannot be adjusted with the tax liabilities when the supplier is found to be non-existent or not conducting any business from registered place of business. That means he is a bogus supplier, or goods and services both are not received by recipient. Next, tax with respect to such invoice is not paid to government by supplier. Next, recipient non-existent or not conducting business from registered place of business. Next, registered person is not in possession of tax paying document. Sir, these are somewhat repetitive to 16 subsection 2, but rules will be framed time to time to implement the provisions in an effective way. So that's why. Okay, currently these restrictions are there on utilization of ITC. Once a restriction is met, ITC cannot be set off with liability, or even such ITC cannot be asked as refund. So now we are moving into the section 18. Section 18 is about when you are shifting from non-tax paying status to tax paying status, you can avail ITC on the closing stock. When you are shifting from tax paying status to non-tax paying status, you should reverse the ITC with respect to closing stock, okay, or with respect to capital goods as well. How these things are going to be done is the main concept in section 18. There are other areas also. Okay, first one, sir. Section 18 subsection 6. I am talking about how much is the reversal of credit, or what is the liability to be, what would be the tax liability on transfer of a capital good. Okay, I purchased the capital good, sir, and I am selling the capital good after 1 year or 2 years usage. What is the tax to be paid? Here the case said like higher of the two has to be paid as tax. First one, the sale value will be there na. You will be selling capital good for 1 lakh, 2 lakhs. On that sale value multiplied with the GST rate, transaction value into GST. Second one, ITC availed initially. I mean, at the time of purchase, you might have availed ITC na. From that ITC, subtract 5% into ITC for number of quarters used. A part quarter also has to be treated as full quarter. 5% into ITC into number of quarters used. Then you will be getting the ITC to be reversed. So out of these two, whichever is higher, has to be here, sir. If you see here, it is written clearly, higher of the two has to pay as tax. Let us see these examples. Say she acquired plant and machinery for 25 lakhs on 15th August 2022 at 12% GST. That means 25 lakhs into 12% means it would be 3 lakhs. So in 2022, you already availed 3 lakhs as ITC. Now in April 2024, such capital good is sold for only 16 lakhs. It was sold for 16 lakhs. Now what we have to do? One thing, apply GST on the sale value. 16 lakhs into 12%, 1 lakh 92. What is the second option? Take the initially availed ITC, 3 lakhs from there. Found out how many quarters has been used. In calendar year 2022, sir, okay, it was 15th August means it is into July, August, September quarter it is there, October, November, December quarter is there. In 2022, 2 quarters. So quarter means always a period of 3 months. We cannot take any random 3 months. Jan, Feb, March, April, May, June, July, August, September, October, November, December. Only those 3 months can be taken as quarter. So here if you see, July, August, September, 1 quarter. October, November, December in 2022. In 23, all the 4 quarters. In 24, again 2 quarters. So overall 8 quarters used. So from 3 lakhs, 8 quarters into 5%, if you subtract 1 lakh 80. So out of the two options, 1 lakh 92 and 1 lakh 80,000, 1 lakh 92,000 is higher. So the tax to be paid is how much? 1 lakh 92,000. Okay. Now we are moving to 18 subsection 1. Sir, here the concept is about you are shifting from tax paying status to non-tax paying status. So how much credit has to be reversed? First one, applied for registration within 30 days from date of liability. Till now, he didn't have registration. Now he is registering and applied for registration within 30 days from date of liability. Then the ITC with respect to closing stock, either they are in raw material, finished good or work in progress, he can avail on them ITC. But conditions are invoice must be there and shouldn't be older than 1 year. Next, voluntary registration. Okay, he has no liability to register, but still he is applying for registration voluntarily. Then also ITC can be availed with respect to inputs lying in closing stock on the day preceding to date of grant. Here day preceding to date of liability. Again here also invoice must be there and shouldn't be older than 1 year. Next, previously is under composition scheme, now under regular scheme. So now normally he is paying taxes now. So that's why he can avail ITC with respect to closing stock. So inputs in closing stock on the preceding day switches to section 9. ITC can be availed and invoice should be within 1 year. Next, exempt supply previously. Now it is shifted to taxable supply. Again, ITC on with respect to inputs can be availed. Invoice must be there and invoice shouldn't be older than 1 year. So in all the 4 cases, unregistered to registered because of liability, unregistered to registered voluntarily. Next, composition to regular or exempted to taxable. In all those 4 cases, with respect to the closing stock lying either in raw material stage, work in progress stage, or finished goods stage, you can avail ITC. Invoice must be there, and the invoice shouldn't be older than 1 year. Next, with respect to C&D, C&D means what, sir, here? When switching to composition to regular or making or from exempted to taxable, you are converting. That means you are already registered, but you are in a non-tax paying status previously, but now you are shifting to tax paying status. In these 2 cases, only in C&D cases, you can avail input tax with respect to the capital goods also. In A and B cases, you cannot avail ITC with respect to capital goods, only in C and D. How much, sir? Find out the total ITC that might be available. From there, subtract 5% for every quarter lapsed till now. Okay, till now, there may be 1 year or 2 years might have lapsed. No. For the number of quarters used, including part quarters, reduce 5%. Then you will be arriving the ITC eligible. Next, they shall make a declaration with respect to the ITC they are going to avail and the inputs held in stock within 30 days. If the amount to be claimed as ITC is more than 2 lakhs, a certificate from practice in CA or CMA is necessary. Okay. Now 18 subsection 4. What is 18 subsection 4? 18 subsection 4 is about reversal. When reversal has to be made, sir, you are a registered person. Now you are cancelling your registration. So that means she exiting from you're being exited from tax paying status, registered to unregistered. Next, regular scheme to composition or taxable supplies to now exempted supplies. So in such cases, you already avail ITC, but on the closing stock also you already avail ITC because previously you are in the tax paying status now, but now you are moving to non-tax paying status. So the ITC part on closing stock has to be reversed. That means added to the liability. How? Inputs are in closing stock. Okay. Check whether invoice available or not available. If invoice is available, reverse the input tax as per the invoice. Okay, in invoice you can find out the tax partner, that amount reverse. If invoice is not available, then they are asking us to take market value and on market value multiply the GST rate, such amount has to be reversed. However, this market value has to be certified by a CA or CMA. Invoice available, reverse as per the tax part in the invoice. If invoice not available, take the market value of goods, multiply it with GST rate, the amount you will get now, that has to be reversed. Next, with respect to capital goods, take total ITC, sir. First take total ITC. From there subtract ITC into number of months used by 60. First take total ITC, from there subtract ITC into number of months used by 60. Okay, sir, here also, how much you need to reverse means take total ITC with respect to the life expired, but instead of quarters here they are saying proportionate to the months of life expired, subtract with and the balance has to be reversed. Here also part month has to be taken as full month. When you are taking number of months used, take a part month also as a full month. Okay, these are the reversals about that, sir. Next, 18 subsection 3. What is this point, sir? Transfer of ITC when there is a change in constitution. That means when there is an amalgamation, when there is any sale, when there is any demerger or death or change in ownership. So this is called as succession. So now the predecessor is the one which was there prior to succession. Successor is the newly formed entity. So the ITC of predecessor can be transferred to the successor. Okay, condition. The condition is like whenever there is succession, the contract or agreements with respect to succession should clearly indicate that the successor is taking over the liabilities as well. If they are taking over only the assets, then ITC will not get transferred. If the successor is even taking the liabilities as well, then the ITC will be transferred. See here, there should be a specific provision that for transfer of liabilities in such change of constitution certified by practicing CA and CMA. Next, transfer of ITC in the case of demerger. How it would be distributed in the demerger, sir? What is demerger, sir? See, if you see, one existing company or parent company will be splitted into multiple. So the existing company may also be continuing and a new companies may also form from them. Let's say one company is doing 8-9 businesses and 8-9 industries it is covering. So now they feel like, the board feels like we cannot look after this many issues. let us split the company so that there will be different boards for each company, which they would be focused on each area. There will be much more effective decision making and all. So that's why they split it into 4. This is called as demerger. Now the problem is the parent company having ITC. Now that ITC, the parent company is now shifting into several resulting companies. So the ITC has to be transferred now. So to whom it has to be transferred? If it is to be transferred, in what ratio it has to be transferred to? All of them. ITC of parent companies shall be transferred to resulting companies in the ratio of value of assets as on the date of demerger. In the ratio of value of assets, not on turnovers, ratio of value of assets, that also at state level. That means, sir, Seshi Limited, it has 70 crores in AP, Telangana it has 50 crores. And ITC it is having, in AP it is having 2 crores and in Telangana it is having 1.5 crores. Now Seshi Limited is split into Seshi and Junior Seshi. The total 60 crores assets it also took and total 60 crores. That means half of ITC has to be distributed now. But this is at PAN level, each got 60 crores and 60 crores. Here if you see, sir, they are having AP 70 crores, Telangana 70 crores. Maybe if in the state wise also they were exactly half given to them, it's fine. But what happened? Seshi Limited got 60, but how? In AP they got 40 out of 70, in Telangana they got only 20. Whereas Junior Seshi, they got 30 from AP and 30 from Telangana. Okay, so at a higher level, if you see, both got equally. But at state level, if you see, in AP, one got 30, one got 30. But whereas Seshi Limited got, in AP, he got 40 and he got 20. From Telangana, he got 20. That means, in AP 70, Seshi didn't got 35 and Junior Seshi 35. Not like that. It is like one Seshi Limited got 40, whereas Junior Seshi Limited got 30. So there is no equal distribution. So how ATC has to be distributed? At the higher level or at the state level, you should distribute separately. So AP ITC 2 crores is there now. This has to be distributed in the ratio of 4:3. Because this is the 4:4 AP related, 40 crores here, 30 crores here. So 4:3 ratio, AP ITC has to be distributed. Whereas Telangana registration relevant ITC 1.5 crores has to be distributed in 2:3 ratio. Why? Here Telangana 20 crores, here 30 crores. So 2:3 ratio it has to be distributed. Okay. So we discussed so many areas, sir, without leaving any concept. I know I was rushing into the concept, but since it is the marathon, we should go with the speed, sir. Whenever you feel uncomfortable with the speed, reduce the speed and then listen for one more time, sir. You'll get clarity. Okay. Hello friends. The chapter now we are going to discuss is job work. So what is called job work? Job work means any treatment process undertaken by a person on goods belonging to another registered person. Job work means any treatment process carried out by a person on the goods related to some other person, such as like repairs, such as like painting. For example, I'll give you an example for job work, sir, which is most familiar in Telugu states. Okay, I mean especially in our area. Sir, you might have heard about this Ambika Darbar Bhakti. This two sambrani sticks will be there now, which will be kept before the god. So how they used to manufacture that means the factory, the Ambika, okay, the factory will supply the basic raw material, the powder, chemical, and the sticks and the packets and the covers and all will be given to the local women, mostly housewives. Okay, they will be distributed to them. So what they do, they will be rolling that chemical to that sticks and they'll pack in each packet maybe 25 or 50 as per the requirements, and they'll make as a bundles, and those bundles maybe on weekly they'll again give it back to the factories. So the women will be getting for each packet some 5 rupees, 10 rupees, like that they used to earn. So now the woman, whatever she is doing is called job work. Okay, so the woman, you see, the factory guy principal is only giving the raw material. Okay, if needed capital goods also he is only providing. The woman just the manufacturing here. Okay, the process she is carrying out. Okay, the process she did on some other person's goods is called as what? Job work. Okay, as per schedule 2, job work has to be treated as supply of service. I mean the activity carried out by this woman has to be treated as what? Supply of service. Now registration requirements of job worker. Okay, so on combined reading with section 23, we can come to like whether principal and job worker are in the same state or different states, we should check. If they are in the same state, then it is intrastate. If they are different states, then it is interstate. If they are in the same state, I mean intrastate, then the job worker has to register only when their aggregate turnover in a financial year exceeds the section 22 subsection 1 threshold. Since it is service, it may be either 20 lakhs or 10 lakhs. In some states it is 20 lakhs and some states it is 10 lakhs. Register only when the aggregate turnover exceeds threshold. Next, if it is the interstate supply, as per section 24, actually interstate supply means compulsory registration. But section 23 gives a relaxation to the job workers. Even though it is an interstate supply of job work service, job worker needs to register only when the aggregate turnover exceeds threshold limits. So on combined reading, we can say like job worker, irrespective of whether it is interstate or intrastate, job worker has to register only when his aggregate turnover exceeds the threshold. Clear? Now let us see the provisions. This is the section 143, sir. 143. Okay. What about this section means? Principal will be sending raw material to the job worker. Now you could see here, principal sending, sir, please observe the flow clearly, sir. Principal sends inputs capital goods for carrying out job work to the job worker. Okay. Now when the inputs and capital goods are sent for job work, okay, sir, it is not a supply because the job worker will not retain those goods permanently. He will be returning back them. Na? So that's why when principal sends inputs or capital goods to a job worker for carrying out job work, it is not a supply. Since it is not a supply, invoice cannot be raised. Then what has to be raised? Delivery challan has to be raised. Along with the delivery challan, when sending the goods, e-way bill is also required. E-way bill also has to be raised. So raise delivery challan, okay, and e-way bill. And they can avail ITC on inputs and capital goods sent. So I'm a principal, sir. I'm sending the raw material on job work. Still, since they are going to be used for my purpose only, for my business only, they are processing. So I can avail ITC. Next, in certain cases, sir, me being a principal, instead of me sending the inputs and capital goods to the job worker premises, I am purchasing from a supplier. So I ask the supplier to send directly goods to the job worker premises. My supplier is there now, so I ask that supplier to send directly goods to the premises of job worker. So this is becoming a bill to ship to model, bill to ship to model. You understand now? Why? So supplier bills to me, principal, whereas the goods will be sent to job worker. So it is called as bill to ship to model. In such case, me being principal can avail ITC. Yes, under 16 subsection 2, I already said, in case of bill to ship to model, even though goods didn't received by me actually, it is deemed that the goods received by me. So I can avail ITC. So you could see here, sir, the supplier invoices to the principal, okay, whereas the goods are sent directly to the job worker. So if you could see the triangle will be supplier, principal, job worker. So this is the triangle that frame. Okay, now principal being the third party who just issues directions. Okay, so now the goods has to be assumed like the goods went to principal and then they were sent to job worker. So principal can avail ITC. Even this comes in place of supply also. The place of supply will be under 10 subsection 1 clause B, which says like the place of business of principal, third party who is giving directions will be the place of supply with respect to supplier and principal. Okay, and between principal and job worker there is no supply. You understand my point now? Okay, now the goods were sent to job worker. Now job worker has to complete such treatment or process. Now yes, he'll be doing such treatment or process. And once the treatment or process is completed, they should be returned within 1 year from the day they were sent. Okay, from the 1 year from the day they received, within 1 year. Okay, the time limits will be calculated here, sir. You could see here the time limits will be calculated here. Okay, they have to be returned by the job worker after completion of processing within 1 year from the day they were sent and within 3 years from the day they were sent. However, in certain cases, they can ask for extension for another 1 year with respect to inputs and for another 2 years with respect to capital goods. Okay, returning means they can directly give it back to the principal or they can send from their premises to another job worker premises for carrying out some other treatment or process, or they can be sent directly to a customer from the premises of job worker. I mean, there is a customer here. So instead of again sending those goods to principal and again principal sending them to customer, why too many shipments are there now? So that's why job worker can send goods directly from job worker premises to the customer. So job worker, once the completes the treatment or process, he should return them within 1 year in case of input, 3 years in case of capital goods. However, there is an extension allowed of another 1 year for input and 2 years for capital goods. Okay, they could be either directly returned to principal or to another job worker, or even they can send directly to the job worker premises. You can see that where the goods are sent or supplied directly from job worker premises, then the supply should be considered as made by principal. Even though goods are sent from job worker premises, it has to be considered as the supply is made by principal only. Job worker shall raise invoice only to the extent of value of service. I mean his job work charges for the treatment or process he carried out. He will not be raising invoice for the goods value. Next, the time limit mentioned above to return the inputs and capital goods by a job worker not applies to tools, molds and jigs. Here we said like they have to be returned after processing within 1 year and 3 years now. But those time limits not applicable to tools, molds and jigs. Next, where goods sent directly to customers from job worker premises, then principal has to declare, since the principal is supplying directly from job worker premises, so the principal has to declare job worker premises as his additional place of business. Okay, now the question is, this is regarding the section 19, sir. What happens when the job worker didn't return? This is section 19, sir. This is section 143, job worker procedure. Okay, what happens when the job worker didn't return the goods, return inputs or capital goods within the time limit or extended time limit? See here. With respect to principal, it is deemed that the inputs and capital goods are supplied by principal to job worker. For example, sir, let's say on 1st April 2023, the inputs were sent to job worker. That means he has to return them by 1st April 2024 now. Or if extension is there, then by 1st April 2025, job worker has to return now. But job worker didn't return by 1st April 2025. Now what they are saying means, it will be considered as principal supplied those goods to job worker. Since the goods are not returned within the time limit, the goods has to be considered as supplied by principal to job worker. When on the date of actually sent, I mean on 1st April 2023 itself, it has to be considered as the goods have been sent to job worker. That means now we are checking 2 years back itself, it has to be considered as supply made. That means 2 years back itself liability arise. From there till now you need to calculate interest also. You understand my point? So it is deemed that the inputs and capital goods are supplied by principal to job worker. Date of supply shall be the date on which they were initially sent. And it shall be declared in GSTR1 of the month in which the time period lapsed and the paid tax along with interest. I mean in April the time period lapsed now. So while filing the return for April month, they need to pay the tax applicable along with interest. You got my point, right? Now, from job worker perspective, whereas subsequently he returns the capital goods. Subsequently means not within the 1 year or the extended time limit of another 1 year. With respect to capital goods, 3 years. Job worker didn't return within such time limit, but afterwards he is returning. Then, since from the point of view of principal, it is already treated as supply. No? So again, while returning from job worker also, again it has to be treated as supply as per the normal provisions applicable. So the point here is, job worker has to return the goods, inputs and capital goods within 1 year or 3 years time period. Extended period of another 1 and 2 years are applicable. Okay, now if the job worker fails to return the goods within such time limits, then for principal, it would be considered as supply. The inputs and capital goods will be considered as supply to job worker. Okay, that also when the day when they were initially sent, that day it will be considered as supply. But now we came to know that now after 2 years. So for the 2 years they can calculate interest also. Time limits. From when the time limits has to be calculated. When the goods are directly sent by principal from his premises, then 1 year, 3 years has to be checked from the date of removal of goods from supplier premises. So from the day the goods are removed from supplier premises, then from within 1 year they have to be returned, or within 3 years, or within the extended time periods. When they are directly sent from the supplier premises to job worker, then the 1 year, 3 years time period has to be checked from the date of receipt of goods by job worker. From the date of receipt of goods by job worker. Okay. So see here, Aqua Limited sends the goods to Lego Limited for making finished goods on 30th September 2022. That means Aqua is principal, Lego is job worker. Now in this case, what are the tax implications in the following cases? If GST 18% is levied, when the goods send the goods back to Aqua Limited within 1 year. If the goods are sent back within 1 year, then there is no supply of goods, sir. Okay. However, on job worker charges, 18% has to be levied. As per section 143, supply of goods to a job worker without payment of tax is permissible upon an intimation. The implications. On supply of goods to Lego as per 143, no tax shall be payable. However, the tax will be payable if finished goods is not returned within 1 year or extended time period. Lego sends the finished goods to principal Aqua Limited within period of 1 year. Hence, no tax is leviable on finished goods return. If the job worker charges are not given in the question, sir, if they are given on job worker charges, GST has to be levied. Next one. Lego & Co sells the goods directly to the customers on behalf of Aqua Limited. Even though the goods are sold by Lego Limited, they should be considered as sold on behalf of Aqua Limited. Lego sells the finished goods on behalf of Aqua. Also allows the job worker to sell directly goods to behalf of principal. Whereas the liable to pay tax is of the principal and not the job worker. Aqua Limited is liable to pay GST on sale of finished goods to customer by Lego. However, Aqua Limited must declare the premises as an additional place of business, and the sale of finished goods will form part of aggregate turnover of Aqua Limited. Okay. Now job worker is to be where job worker is registered under 25 and principal is engaged in supply of notified goods. Now question number 2, sir. Zenith Private Limited, a registered manufacturer, sent steel cabinets worth 50 lakhs under a delivery challenge to Frame & Co. That means without any invoice. So they are sent for job work. For work on 28th January. The scope of job work includes mounting the steel cabinets on a metal frame and sending the mounted panels. So they should be mounted and should fix it to a frame and they'll be sent back. The frame is to be supplied by Frames & Co, which has agreed to a consideration. The metal frame is to be supplied by MS Frames & Co, which has agreed to consideration of 55 lakhs for the entire mounting activity, including the supply of frame. Including the frame, they are supplying for 5 lakhs. Sir, in the course of job work, they may send some raw material also. They may use their own materials also. But that is not the main activity. Now, the main activity is here mounting, which is the treatment or process carried out. During the case of mounting activity, metal waste is generated, which is sold by Frames & Co for 45,000. Okay, Frames & Co sent the steel cabinets on 31st December. Sir, 28th January they received, 31st December sent. That means within 1 year only. Assuming GST rate for frame is 28, metal waste 12% and standard rate for service is 18%. You are required to compute GST liability for Frames & Co. Also given reason. Sir, first of all, it is a job work. That is only explained. As per para 3 of schedule 2, treatment process applied on some other person's good is called as service. In the given case, Frames & Co. undertakes the process of mounting steel cabinets. In view of para 3, it is a service. So the job charges will be 18% is applicable, even though a metal frame also supplied along with the principal supply is job work. So 18% is only applicable. So there is no need of taking 28%, will be taking only 18%. With respect to the metal scrap sold, the metal scrap is a separate supply, sir. Since it is a registered person, the metal scrap will be taxable at 12%. So the 5 lakhs will be taxable at 18%. And the metal scrap 45,000 will be charged at 12%. So altogether the tax will be 95,400. Okay. So we discussed exclusively the job work also. So now let us jump into the topics of input service distributor and the last part in ITC 49 subsection 12 or rule 86B that is still pending from ITC chapter. Now we'll complete it ITC. So what are the two sections here? The section 20 and 21. So first of all, understand who is called an input service distributor. See, in a head office or a corporate office, if it wants to distribute ITC to its branches, okay, register itself as IST. Okay, if the head office or corporate office wants to distribute its ITC to the branch offices, then it would be registering itself as IST. Why it have to distribute? So if you see corporate office, generally it will not provide any output service. It will just to coordinate their branches and factories. Okay, the actual outwards will be made from the factories or from the branches. So that's why when the corporate office is having credit, what it can do, it cannot utilize it. Whereas the branches are paying taxes. So there is a working capital being blocked with the corporate office. So instead of it's being accumulated with the corporate office, they can transfer it to the branches, and branches can utilize it now. So that's it. However, the concept of distribution is available only with respect to input service. So invoice received with respect to input service. The tax part on such input services can be distributed to the branches by the head office if it register itself as an input service distributor. While distributing, it issues ISD invoice, and even if any differences are come, like maybe excess distribution or deficit distribution has been made, then to correct it they may raise even debit note and credit notes also by the ISD person to the recipient. So without ISD registration also, sir, so that means an input service, I mean on the input service the tax component, if it has to be transferred to the recipient, the section says like ISD registration, but recent clarification, sir, which is applicable from June 24 exams only, which says like clearly, even without ISD registration also, if I am having any, me being a corporate office, if I am having any input services, the tax component on them can be supplied to the branch offices even without me being registered as a ISD. How? So head office, I mean the outsiders will be raising an invoice to me being corporate office. Now again I'll raise invoices to my recipients. Okay, invoice on input services commonly used. Instead of register as ISD, issues tax invoices. Now with this provision, actually there is no much relevance to the ISD concept actually, because why again they should register as ISD? But still the concept is there, we should discuss, and even the examiner asked for a question. So that's why. Distribution of credit by ISD. Head office distributes that credit attributable to one branch. Okay, I'm having 5 branches, sir. Me being corporate office, I received an input service, but the credit is relevant to only one branch. Then the total credit on transfer to the total credit has to be transferred to one such branch only. Then the credit is attributable to multiple branches. Then split, I mean, distribute the credit to that multiple branches. How? On what basis? In the basis of ratio of their turnovers. Which turnovers, sir? Turnover means here state turnover. Turnover means what? State turnover. State turnover also for the preceding financial year. Yes. Take the state turnovers of preceding financial year and take it as a base and distribute it among the branches. Okay. However, if a branch is newly started, I mean, the state, that particular branch is not there throughout the financial year or not there in the preceding financial year, in such case, take the turnovers of quarter in which all the branches are operating. Okay, now if the credit is attributable to all the branches, then distribute it to all the branches based on the respective branches or respective state turnovers. Okay, now IGST, CGST and SGST, all of them has to be distributed separately. Okay, now distribution of taxes. How? Let's say me being a corporate office, I'm having input tax of IGST, I'm having input tax of CGST and SGST. How these will be transferred to the branch offices? Will they reflect to the branches also same as like IGST and CGST, SGST, or they have to be transferred? For that, see where the head office is located and where the branch office is located. If they are in the same state, then it is intra-state distribution. If they are in different states, then it is interstate distribution. If it is intra-state distribution, I mean head office and branch office are in the same state, then whatever is the type of credit to the head office, the same way it will be transferred to the branch office. Let's say I'm head office, I'm having IGST grade, I'm transferring it to my branch office which is in the same state, then transfer it as IGST only. If it is CGST and SGST, also same, transfer it as like same CGST and SGST if the branch is in the same state. Now the branch is in a different state, then IGST will be distributed as IGST only, whereas CGST and SGST will also be distributed as IGST. So see here, different states, then both IGST, CGST, SGST all are distributed as IGST. Whereas they are in the same state, then IGST as IGST, CGST and SGST also as CGST and SGST. Now understand little procedural aspects. Supplier, when he sends goods to head office, he raises the invoice. Based on that invoice, ITC will be availed by head office. The supplier will file GSTR1. Based on GSTR1, it would be reflected to the ISD person in his GSTR6A, because the ISD person will file his return GSTR6. Okay, so it will be reflecting to the ISD registered person in GSTR 6A. So we'll take that ITC. Now he will be issuing an ISD invoices to the branch office. Based on this ISD invoice, branch office can avail ITC. And this ISD person will file GSTR 6 to the GSTN within 13th of the succeeding month. Then GSTN will reflect in 2A 2B of the branch office. So branch office can avail ITC. Okay. So ISD registered person will issue ISD invoice and he files return in GSTR 6 and his invoice will be reflecting to him in GSTR 6A and the due date for filing GSTR 6 is 13th of succeeding month. Next, ISD cannot accept an invoice on which tax is payable under RCM because ISD registration does not enable you to pay tax because that registration is only for the purpose of distribution of unutilized ITC. Now, recovery of excess credit, section 21, sir. Recovery of excess credit which is distributed to a recipient. The excess ITC distributed will be recovered from the recipient along with interest, sir. Because, sir, while distributing, there is one more point. ISD, while distributing the credit from the head officers to the branch officers, arithmetical accuracy has to be checked. I mean, in no case, if the credit available to head office is 5 lakhs, the amount distributed can never be more than 5 lakhs. Now, such arithmetical accuracy has to be maintained. Now, because of some mistake, the excess ITC has been distributed to branches. That means head office is eligible for only 10 lakhs, but branches got 20 lakhs worth credit distributed. Then the excess will be recovered from the recipients along with interest. If tax not paid, I mean even after a notice, if the tax is not paid, then proceedings under 73 and 74 will be initiated. This is about the concept of input service distributor. So now look at the concept of Rule 86B and Section 49 subsection 12. Restriction on ITC, electronic rate ledger. Applicability. Registered person whose value of taxable supplies exceeds rupees 50 lakhs in a month. To whom this rule is applicable, sir? For whom the value of taxable supplies made in a month is in excess of 50 lakhs. While calculating this, exclude zero rated supplies. Generally in taxable supplies will include zero rated, but here exclude zero rated and take that monthly turnover. If it is more than 50 lakhs, and this rule is applicable. What this rule says, maximum 99% of the liability can only be discharged using credit ledger. That means if you are having 100 lakhs liability and you are having 120 lakhs ITC, you cannot adjust your whole ITC with the liability. Maximum 99 lakhs only you can adjust. The balance 1 lakh has to be paid in cash. Got my point? Now, exceptions to the rule. However, this rule is not applicable in the following cases: when where the income tax paid is greater than 1 lakh in preceding 2 financial years. Where the income tax paid is more than 1 lakh in the preceding 2 financial years. Whose income tax payment will be checked? In case of individual, I mean sole proprietor, that persons or proprietors. In case of HUF, Kartas. In case of company, MD. In case of partnership firm, it has to be checked for 2 partners. I mean for 2 partners in the preceding 2 financial years, their individual income tax paid should be more than 1 lakh. Then this rule is not applicable. Second one, where the refund claimed in preceding financial year. What's the refund claimed in preceding financial year on account of zero rated supplies on inverted duty structure is greater than 1 lakh. The refund claimed on account of zero rated supplies. Zero rated supplies are nothing but exports and supplies made to SEZ units and SEZ developers. Inverted duty structure means the tax paid on your outwards is lesser than compared to the tax on your inwards. Example, your inwards are taxed at 28%, whereas your outwards are taxed at only 12 or 5%. So then that is called as inverted duty structure. Because of zero rated supplies and inverted duty structure, you will be having accumulated ITC. If you are asking for refund of such accumulated ITC, then the refund will be processed, and the refund you claimed is more than 1 lakh. Then also this rule 86B is not applicable. Next, where the registered person is government department, PSU, public sector undertaking, local authority or statutory body, then also this rule is applicable. Next, the last one, sir. Where the cumulatively tax paid in the current financial year up to the current month. Okay, let's say you are in Jan month of a financial year. Already 9 months expired, you are in the 10th month. Then what this point is saying means, now cumulatively check for all the 10 months, how much is the liability discharged in cash or through credit. Whether cumulatively, if the tax paid through credit is within 99%, then it acts as an exception. In the current month, they can utilize 100% ITC. For example, We are checking for February 2024, turnover 75 lakhs, so 86 be applicable. ITC they are having in this month 25 lakhs, whereas liability is only 22 lakhs. So they can adjust the total liability with ITC. But since 86B is applicable, they cannot do that. However, we are checking if they are covered under exceptions. If you see the current financial year 23-24, 23-24 is from April 24 to Jan 2024. Okay, cumulatively till this month. Okay, Jan till Jan 24, the tax paid in cash is 35 lakhs, whereas the cumulative liability is 4 crores. Sir, out of 4 crores, the tax which is paid in cash is 35 lakhs. That means as a percentage, through cash they paid 8.75 percentage. Here they are asking 1% minimum to be paid in cash, but he paid already 8.75 percentage through cash. So for him, in the current month, 86B is not applicable since cumulatively tax paid is greater than 1% of total liability. Rule 86B is not applicable. Okay, with this we completed the whole ITC chapter, sir. Okay. Hello boys. Today is our refunds topic. So in refunds topic, there are only 5 to 6 areas where we should focus. This chapter is like a quite a big chapter, sir, which covers a lot of topics, but we restrict ourselves to the important areas only, which are focused by the examiner, especially for CMA final exams. The 5 areas which I picked are very much enough. Okay, these I can surely say that the question cannot go beyond these 5 areas. 5 areas. So even my explanation in marathon is also restricting to these 5 areas only. Maybe here and there I cover some other topics also, but main focus will be only on these 5 areas. First one, sir. Whenever we export goods, okay, this is the preliminary, sir, the background before we enter into the topic of refunds. Whenever we export goods, we have 2 options. One is export goods with payment of IGST. The other one is export goods without payment of IGST. What are the 2 options, sir? One is with payment of IGST, the other one is without payment of IGST. Sir, if there is an option to export without payment of tax, then everybody will do that only now. I'll explain. Hold on for a minute. Sir, when we are exporting without payment of tax, then we need to will be presenting a shipping bill and all the basic export documents. Such shipping bill itself will be considered as the refund application. We need not to again separately need not to make a refund application. The shipping will be present at the time of export itself will be considered as the refund application. Next, when we export without payment of tax, since we are exporting without payment of tax, they ask for surety, they ask us to execute a bond and letter of undertaking, so that we'll be executing and we'll be exporting without payment of tax. Now see, here in with payment of tax, then we'll be getting the refund of tax paid. Whatever is the tax we paid on export, that will be getting as refund. Whereas without payment of tax, then you'll be getting the refund of unutilized ITC. Okay, since you're making exports without any payment of tax, you'll be having ITC which is unutilized. No, so that part you can avail it as refund. Okay, so then why to pay tax and again to get it as refund, unless early working capital is being getting stuck there? No, if you export without payment of tax, still you're getting the unutilized ITC as a refund. No, so then the second option is only better. Now yes, maximum cases the second option is only better, but when the first option will be better means, sir, in second option, when they are refunding the unutilized ITC, they are going to refund only the ITC with respect to inputs and input services. The capital goods relevant ITC is not going to be refunded. The capital goods ITC is not going to be refunded. So in such cases, let's say I'm having so much of ITC on my capital goods, I have a lot of investment in capital goods and I have a lot of ITC, then it would be better to pay tax and get it as a refund. No? So while paying taxes, there is no bar on me or restriction on me to use only the input tax on input or input service. Such restriction is not there. So I can use ITC on input or ITC on input service or even on capital goods for payment of tax. And the tax which I paid can be claimed as refund. No, so that would be better. Okay, so the first option is beneficial when you're having so much of ITC relevant to capital goods, which you will not get refund in the second option. So now what you can do, you just pay the tax using this ITC and bring the tax as refund. Okay, you understand my point now? So but okay, Now you should understand there are 2 points, two types of export processes. One is export with payment of tax and the other one is export without payment of tax. Next, let me tell you sir, shipping bill and bill of export. Shipping bill and bill of export are the forms. Shipping bill will be presented when the export is made through aircraft or vessel. When the export is carried through land road, then bill of export will be filed. In simple, shipping bill or bill of export means nothing but the form we present to the customs officer to let our goods export. Okay, I want to export my goods. So then I shall took a permission not to export my goods. Then the form I presented to took a permission or to let the goods export is called as shipping bill or bill of export. Next, sir, then we will be also having the concept of SEZ and SEZ developer. So there are basically SEZ units and SEZ developer. So what is the difference between these two means? Sir, SEZ unit and SEZ developer. So what is the basic difference between these two means? SEZ unit. Sir, SEZ unit means a industry or a business which is started in an SEZ area is called as SEZ unit. So these boxes we can call them as what? SEZ units. Now, who is called SEZ developer? Sir, SEZ developer is the authority who is overall taking control of the SEZ area. Generally, these can be state governments. Sir. Let's say in Telangana, Hyderabad, a lot of software companies will be there in one area. That is an SEZ area. So, who will be acting as the developer of that SEZ? Telangana government will be acting as SEZ developer. The software companies which are started in that area are called as SEZ units. Hope you can understand my point. Okay. Now we are jumping into the refunds chapter. So refund chapter. Refund means what? The amount of tax which is the amount of tax paid on exports or the unutilized ITC on zero rated supplies. I mean again exports or supplies made to SEZ. Okay. The tax with respect to tax paid on exports. First one. Unutilized ITC with respect to zero rated supplies. Zero rated supplies means the supplies, I mean the exports made without payment of tax and supplies made to SEZ unit and developer. In those two cases, whatever is the unutilized ITC will be there now, that can be claimed as a refund. So see again, once again, zero rated supply means export of goods, services are both without payment of tax, and that means by executing LUT or bond, and supply of goods, services are both to a SEZ developer or SEZ unit. These are called zero rated supplies. So when I make a zero rated supply, the unutilized ITC which I asked to repay me is called as refund. Okay, the tax I paid on exports will be taken back my way, which is called as a refund. Next, when I am having inverted duty structure. Now let us understand what is called inverted duty structure. Inverted duty structure means, sir, my input is taxable at a rate of 28%. My input at what rate? 28%. Whereas my output is taxable only at a rate of 12%. My input 18%, my output 12%. Because of this, I am having so much of ITC, around 28% ITC I will be having. But whereas my tax payable is only 12%. So due to this reason, I will be having accumulated ITC, which also I can get it as a refund. So inverted duty structure means what? The input is at higher rate than compared to the output. The input is taxed at higher rate than compared to the tax rate on output. So in such inverted duty structure also, whatever is the accumulated ITC is there, that we can ask to repay, nothing but called as what? A refund. Okay. Now refund of tax processor. If you see any person, if he wants to claim refund, then refund of what? Refund of either tax, interest, penalty, fee, whatever it is. Okay. If he wants to claim refund, then he will be filing a refund application in RFD01. Which forms are RFD01. Then he needs, if it is an export with payment of tax, then RFD01 is not required. He can simply file what? Shipping bill. And this RFD01 will be filed electronically, that also within 2 years from relevant period. We'll understand later like what is called relevant period, from which date and all. Okay, in the common portal. Next, if he is an unique identification number holder, UIN holder, who are called as UIN holders, sir, like embassies, consulates, okay, or for UNOs, these are called as UIN holders. If they claim refund, okay, if they claims refund under RFD10, they claims refund under application RFD10 electronically within 2 years from relevant period in the common portal. Okay, so unique identification number holders are also will be claiming the refund application. Sir, why they will be getting refund? Because the tax on their inward supplies will be given as refund to them. So they also can be applying for refund, but the format for them is RFD 10. Next, if you have deposited any amount in your cash ledger excessively, erroneously or mistakenly, such amount in cash ledger can also be taken as refund by way of RFD 01A, RFD 01A. So I said totally three forms are RFD 01, RFD 10, RFD 01A. RFD 01, the general refund application. RFD 10 for UAN holders. RFD 01A, when you want to claim refund of the balance in cash ledger. In case of deemed exports, what are called deemed exports, sir? So deemed exports is a topic which we'll be discussing elaborately in FTP. But in general, okay, to have a brief understanding, I'll be telling you what is called deemed exports also here. So deemed exports means, let's say here there is a supplier, okay, he will not actually export the goods to outside India. He will not export goods to outside India. He will not do this. If that is done, then it is a normal physical export. Now what happens means, sir, there is a company called A Limited. Okay, this A Limited has a right or a option or a benefit or a privilege given to import either raw material or capital goods without any duty. Okay, this A Limited has an option to import raw material or capital goods without payment of any duty. Now, B Limited is an Indian company which is supplying raw material to A Limited. So now understand, sir, because of B Limited is there and B Limited is supplying capital goods, A Limited, instead of importing the raw material or capital goods without payment of duty, it is purchasing the goods from B Limited. Now understand, A Limited has an option to import duty free, but still it is purchasing from whom, sir? B Limited, na? So because of this B Limited, A Limited is not spending foreign currency. Since A Limited can find a right supplier within India, A Limited is not spending foreign currency to import goods. So now to encourage this kind of B Limited, the supply which is made by B Limited to A Limited will be called as what? Deemed export. Will be called as what? Deemed export. That means this person will not supply outside India. He will be supplying to a recipient within India. But such recipient is an exporter and he has an option to import goods without duty. He has an option to import goods without any duty. Now, against such right, he has this right. Now, this right will be mentioned in the documents of this. So, against such right, without payment of taxes, he will be purchasing goods from the local suppliers. Then the local supplier, whatever is the supply he made, I mean B Limited, it is called as what? Deemed export. Why this kind of deemed export means, sir? There is a concept like we need not always try to maximize our exports. Sir, our main objective is to maintain our foreign reserves. For that, we can encourage exports. As well as there is another option also to discourage or to reduce our imports. Because of B Limited, A Limited is not spending foreign currency on imports. It is buying from B Limited. So to encourage B Limited, the supplies made by B Limited are called as what? Deemed export. Sir, I explained only 1 or 2 points from deemed export. There are so many other points as well. But to understand, if you physically sending goods outside India, it is called normal export. In deemed export, you will not directly send your goods to outside India. You will send your goods to a person in India, but such person may be an exporter who has the option to import goods without any payment of duty. If you are making supplies to such kind of person, then your supply will be called as what? Deemed export. Okay, so in deemed exports, the refund application can be made either by supplier or even by a recipient. But recipient shall not have an ITC to process the refund. Next, in case of SEZ unit and developer, we'll understand it further also. Even the CDPs and NRTPs can also ask for refund. So if you know the CDP and NRTP concept, CDP means casual taxable person, NRTP means non-resident taxable person. They occasionally involved in supplying of goods, services, or both, either as principal or as an agent, but there doesn't have any fixed place of business in such state. If he is a CTP, if he is NRTP, he does not have a fixed place of business or residence in India at all. Okay, then they are NRTP. So the point is, okay, the whole concept you got it, but why they'll ask for refund? Sir, the concept for them says like before registration itself, I mean prior to registration, they need to pay or deposit tax in advance on an estimated basis. But on an estimated basis, they deposited now. This estimate may go wrong. So they deposited, they end up in depositing excess amount. So the excess amount they can ask for refund. So now we are going into the topic of what are the different situations when you can make a refund claim. In such situations, by when the refund claim has to be made, and in such situations, what are the documents to be submitted? Okay, three things are situations with respect to refund, and in each situation, what is the time limit and what are the documents to be presented. First one, export of goods without payment, with or without payment of tax. Then goods, if they are exported by sea or air route, then the refund application RFD01 has to be made within 2 years from, sir, here relevant date plus 2 years. So within 2 years it has to be. So from which date 2 years has to be counted? Date ship aircraft leaves India, from there 2 years. Next, goods are exported by land. Date such goods crosses customs frontier, from then 2 years. Goods are exported by post. Date of dispatch by post officer to a place outside India, from such date to 2 years. These are the time limits. Now, what are the documents to be submitted? Statement showing number and date of shipping bill and shipping bill or bill of exports. A statement has to be prepared consisting of the shipping bills regarding the exports or bill of exports and the invoices. This has to be presented. Okay, next, export of service. Now, in export of service also there are two situations. What is that one? What are those, sir? First one, an export of service has made and the payment is made before completion of such service. Okay, payment for service has been received in advance prior to invoice. That means advance payment has been made. Whereas in this case, the service provided prior to completion of payment. So payment has been made at a later date. So if the payment going to be made at a later date, then 2 years has to be counted from date of receipt of payment in convertible foreign exchange. If payment is made in advance, then 2 years has to be counted from date of issue of invoice. If payment is later, then from payment date 2 years. If payment is earlier, then from invoice date 2 years. What are the details to be presented? Statement show containing the number and date of invoices and the relevant bank realization certificates and foreign inward remittance certificates. I mean the proof of payment. Next, in case of deemed export, the refund application has to be made within 2 years from date of filing of such return. Let's say the deemed export is made in September, then return has to be filed by October 20th. Let us assume October 19th, the 3B has been filed. From there, within 2 years, what are the documents to be presented? The statement containing number and date of invoices, an acknowledged from the jurisdictional officer of the recipient. Okay, so in deemed export also, there is a recipient will be there now. So such recipient jurisdictional officer has to give an acknowledgement that actually such supply has been made. If supplies are made to EOUs, then invoice filed by such EOUs and a declaration from the recipient that he doesn't claim ITC. These are the documents to be presented. Next, fourth one, a refund is applied consequence to a court order or court decree. Then from the court order within 2 years and along with the refund application, the copy of the order also has to be provided. Next, taxes paid in provisional assessment. So in assessment chapter, the next chapter, sir, if you want to listen that, go forward a little bit and listen to provisional assessment and come back here, sir. In provisional assessment also, we'll pay taxes provisionally first of all. So, but after the final assessment, the tax we paid in the provisional assessment may be more than we should pay actually. So excess we paid, now that excess we can get it as refund. So from when the 2 years has to be counted, from the date of final assessment. Okay, from the date of adjustment with the final assessment. What are the documents to be provided, sir? The final assessment order. Next, inverted duty structure. I already said what is called inverted duty structure, sir. Our inwards are taxed at a higher rate than compared to our outwards. Then date of filing of return, inverted duty structure. Then in such cases, date of filing of return. Then along with that, statement of outwards, inwards and invoices. Next, supply of goods made to SEZ and supply of service made to SEZ. In both the cases, 2 years has to be counted from due date of filing of return, not date. Sorry, if you see, in deemed export and inverted duty structure, it is saying like date of filing of return. Date of filing means it may be before due date or even after due date. From there 2 years. But in case of SEZ, If you are supplying to SEZ, either goods or service, then the time limit has to be counted from due date of return. That means if let's say these supplies are made in August, then from September 20th, even though return is filed on September 18th itself, you should count from September 20th only 2 years. Now what are the documents to be provided? In case of goods to SEZ, statement number and date of invoices, evidence for receipt of goods, and an endorsement by the SEZ officer. In case of services, along with the above three documents such as like invoices related statement, an endorsement of by SEZ officer, evidence of receipt of service, and even there should be a proof of payment. These documents. Next, tax wrongly collected and paid to the government. Sir, let's say instead of IGST, we paid CGST and SGST. So what we have to do? We should claim refund of CGST and SGST paid, and we should pay separately the IGST. So while claiming such SGST, CGST as refund, such refund has to be asked within 2 years from the date of receipt of goods, services, or both, along with the statement of transactions. Whenever there is an excess payment of tax, we paid excess payment. Okay, actually the tax rate is 12%, but we mistakenly paid 18%. Then from 2 years from date of payment of such tax, along with the statement regarding the details, I mean with respect to which supplies we made excess payment, such statement has to be prepared. Next, refund with respect to UN bodies, I mean UN holders. So then they need to ask for refund quarterly, sir. For every quarterly related inward supplies, they shall ask for refund. So that's why the refund application has to be made within 2 years from the last day of the end of the quarter to which such inward supplies are related. Let's say the inwards are related to Jan, Feb, March. Then from 31st March, from there 2 years is the time limit. Next, statement of inward supplies of goods and services. What should be the attachment of the documents are here? Statement of inward supplies of goods and services in form GSTR 11. Next, 12th one, sir. So 12th one you should understand little clearly. So the point is, sir, I purchased so there is a guy, contractor, who is constructing a building. Okay, I booked a flat in that particular building. I booked a flat. Then I paid also advance, sir. Actually the flat is for 1 crore. I already paid 50 lakh rupees as advance. Okay, then because of some reasons, after 2 years, because still the building is going to be constructed, so I said like cancel my contract and refund my 50 lakhs amount. So but the contractor said like on the 50 lakhs which I paid, he already paid GST also. Okay, since the advance 50 lakhs I paid is inclusive of GST, out of that assume 5 lakhs he paid as GST. So he is refunding me only 45 lakhs. Okay, so I made a contract with the contractor that he is constructing a building, or in that building he is going to give me a flat. For that I paid 50 lakhs. But now the contract is cancelled. So I asked him to refund my amount. So not GST refund, my amount refund. Okay. Out of 50 lakhs, he said like he already paid 5 lakh rupees as GST to government. So he can refund only me 45 lakhs. So he refunded me 45 lakhs. Now my question is, why government is taking 5 lakh rupees? Because there is no supply happened. The contract got cancelled. No. So I am asking, so I have the right to get refund from government? Yes, this point said like that only. Where an unregistered buyer or recipients for claiming refund of amount of tax burdened by them in the event of cancellation of contract or agreement. Here also the contract got cancelled, no? So that 5 lakh rupees I can ask refund from the government. From what time, sir? Within 2 years from the date of cancellation of agreement. What are the documents to be submitted, sir? This cancellation agreement and original contract letter and the payment which is made by my supplier details. So all those has to be provided. So in that cases we'll be getting the refund amount. Okay, next. The next concept, sir, unjust enrichment. There is a principle called unjust enrichment. It simply says like we cannot get benefit at someone else's expense. Sir, if that is the cost, nobody can do business in this country, because one person's income is obviously some other person's expense. If I am selling a class, it will be my income. That would be your expense. So I am benefiting at your expense then. Okay. So that is not the question. So see here, unjust enrichment means a person is getting benefit or retaining the benefit which is not unjustifiable or inequitable to him. So okay, you are retaining a benefit which is not justifiable to you to retain. You got my point? So Sir, I am giving classes and I am taking money. So this is a justifiable benefit. If I am retaining any benefit which is not justifiable to me, then that is called as unjust enrichment. So when it happens, sir, let's say there is an exempted supply made, sir. There is an exempted supply made. So I made an exempted supply, but I mistakenly collected taxes. Okay, or mistakenly, not mistakenly, wantedly I collected taxes even though it's an exempted supply. So now on exempted supply I collected taxes. Okay, if it is mistakenly I collected means two things I should do. One is like I should refund it to the customer, or I should pay the tax to the government. If I am retaining, then that is unjust enrichment. One thing. Second one, sir, on a supply, I paid taxes at a rate of 18%, and I collected from my customer also 18% as tax. But actually, the tax rate already is only 5%. That I came to know after some 1.5 years. So in last 1.5 years, I made supplies considering it as 18% and collected from my customer 18%. And even to the government also I paid tax at a rate of 18%. Now I found out like the tax rate is only 5%. So I'm asking government to refund me the excess amount. So now if they refund me also, that's a benefit which I am getting unjustifiable or inequitable, because I cannot now find out all the customers and I cannot refund them. Okay, so if I get the excess tax from government as refund, then what I should do? I should give it back to my customers, but I cannot identify my customers. So what I am simply saying, I am taking it from government and I am retaining it for myself. Then that is called as unjust enrichment, because that is a benefit which is not justifiable to me. When it is justifiable, if I paid it from my pocket, then it is justifiable. I didn't pay it from my pocket. I just collected it from customer and paid to the government. Now, if refund comes also, I'm not the right guy to retain such benefits. So that's why it is called as what? Unjust enrichment. The principle stipulates that no person can be allowed to enrich inequitably at the expense of other. So if I get that excess amount from government, I mean actually 5%, but 18% I paid. If I'm getting that 13% as back as refund, I'm becoming rich at the cost of customers. That is not allowed. So that is the concept of unjust enrichment. So whenever a refund application is made, they will check for unjust enrichment. They'll ask us to submit documents to prove that there is no unjust enrichment. Only when there is no unjust enrichment, then the refund will be processed. If there is unjust enrichment, the refund will not be given to us. The refund amount will be transferred to consumer welfare fund. Okay. The amount of tax being recovered from the recipient, it shall be deemed that the incidence of tax has been passed on to the ultimate consumer. In such cases, there will be definitely unjust enrichment. But here there is a concept, sir. This is important. Cases where theory of unjust enrichment is unapplicable. In these situations, theory of unjust enrichment is not applicable. When the tax paid on export of goods, services, or both, or inputs or input services is used in making such exports. In case of exports, whatever is the tax you paid, and you are asking refund of such tax. While refunding such tax, they will not check about unjust enrichment. You need not to prove that there is no unjust enrichment. Second one, when you made zero rated supplies and you are asking refund of unutilized ITC, in such cases also you need not to prove unjust enrichment. Third one, when you are having inverted duty structure, that means your inwards are taxed at higher rate than compared to your outwards. In such case also you need not to prove your unjust enrichment. Refund will be processed. Next, tax paid on a supply. Okay, you paid tax on a supply, but it is not yet provided. It got cancelled in the middle itself, and you didn't even raise any invoice to the customer, but you already paid tax to the government. In such cases also, tax paid on supply which is not provided and for which invoice also not raised, that also you can ask for refund. You need not to prove unjust enrichment. Next, refund of a tax on transaction. You paid tax on a transaction considering it as an intrastate, but actually it is an interstate. Understand, sir? You paid tax on a intrastate transaction, that means CGST and SGST, but actually the tax to be paid is IGST. So now what happens? You'll ask for refund of CGST and SGST paid, and you have to separately pay IGST. So when you are asking this kind of refund, then also inverted duty structure need not to be proved. Sorry, then also you need not to prove unjust enrichment. Next, the tax and interest, if any or other amount paid, had not passed on the incidence. Sir, I paid taxes to the government and I am asking it for refund. In such case also, we need not to prove unjust enrichment if the incidence of tax is not passed on to the consumer. Okay, I paid tax from my own pocket and I am asking refund. In such cases, unjust enrichment need not to be proved. In any other cases, where the government specifies. So overall, there are 6 reasons. The tax paid on exports, unutilized IDC in case of zero rated supplies, unutilized IDC in case of inverted duty structure. Next, the tax paid on a supply which is not provided and even invoice is not raised. Tax paid on a transaction considering as intrastate, but actually it results into a interstate. Next, tax paid on a transaction, but where the incidence of tax is not passed on to the consumer. And the last one, any other cases which are notified by government. So in those situations, unjust enrichment is not applicable. Okay. Next, whenever you make a refund claim, if it is less than 2 lakhs, then you need not to provide any document evidences to prove yourself that there is no unjust enrichment. If the refund amount is more than 2 lakhs, then you should submit additional documentary evidences than specified above to prove that there is no unjust enrichment. Okay, not only that, even a certificate from chartered accountant or cost accountant also should be there. Like the chartered accountant, cost accountant should certify that there is no unjust enrichment. How the refund will be, claim will be made, sir? It should be, refund application will be made in RFD 01 or 10 or 01A. Okay. Once it is found to be complete, they'll issue an acknowledgement. And refund application has to be processed within 60 days from the date of acknowledgement. However, even after refund application is accepted and issued acknowledgement, but then they found out like there are some defects in the refund application, then they will release their deficiency memo. What are the defects in the refund application which have to be rectified? So they will issue the deficiency memo. Once the deficiency memo is raised or issued, then the refund application will not refund application made will be considered as rejected. So you need to make a fresh refund application. Next, provisional refund, sir. This concept is also important. Provisional refund. What is this concept? In this concept, the refund will be given provisionally even before the final calculations are made. Provisionally, a part of amount will be given as refund. When the PO may, in case of any claim for refund on account of zero rated supplies. So provisional refund concept is applicable only in the case of zero rated supplies. Once again repeating, sir. Provisional refund concept is applicable only in the case of zero rated supplies. Zero rated supplies. Next. Okay. After scrutiny of claim. Okay. Me being a exporter, zero rated supplier, made a claim to the government in RFD 01. So on prima facie, okay, on prima facie scrutinizing the claim, they believe that refund has to be made to me. Then they shall make an order sanctioning such refund provisionally, even though they didn't did the final calculations, but they feel prima facie like refund has to be paid to me. So they'll grant me provisional refund of 90% of the amount I claim. Let's say I asked for refund of 10 lakhs. So they'll grant me provisional refund of how much, sir? 9 lakhs. That also within a period of 7 days, excluding the IDC provisionally accepted. Next. Sir, here one more thing. So understand, sir, only in case of zero rated supplies, provisional refund will be claimed. On making an application on prima facie, on scrutiny and on prima facie, they believe that refund is due. Then 90% of the refund claimed can be given as provisional refund. That also within 7 days. 4 points. Next, the provisional refund will not be made to a person. Okay, provisional refund will not be made to a person. To whom? Sir, let's say the refund I asked is for July 2022. Now, the refund claim is related to July 22. Now, check 5 years preceding to July 22. That means till July 2017. From July 2017 to July 2022, in this 5 years period, I should not have prosecuted for any offense under this act or any other act where the tax evaded exceeds 2.5 crores. If I am being prosecuted for an offense where the tax evaded is more than 2.5 crores, then I will not be granted any provisional refund. Then once the provisional refund is approved, then they will be issuing a payment order to process the provisional refund. Next, order of refund. So an order of refund will be made after adjusting the provisional refunded amount. If any refund amount which they want to withhold, okay, such amounts will be withholded and the balance amount will be refundable, and the refund will be processed to my original payment mode. If I paid through cash, it will be reflecting to my bank account. If I paid through input tax rate, then it will be reflecting to my credit ledger. Okay, however, reflecting, I mean the refund amount again reflecting to credit ledger is not applicable in case of zero rated supplies, because in zero rated supplies I am asking for my accumulated ITC. If they refund it again to the credit ledger, it's of no use. So that's why in case of zero rated supplies and inverted duty structure, the refund amount will be credited into our bank accounts. In all the other cases, they will be refunding into the original mode of payments. Okay, so this is and all are the procedures, are not much important. Now we are into the, so now our area is about the refund calculation. How much amount the refund will be there, how the refund will be calculated, how the refund amount will be calculated under the two different situations, especially when you are asking refund of unutilized ITC. Sir, when we are asking refund of unutilized ITC, there are two cases. One is zero rated supplies without payment of tax. You made a zero rated supply without payment of taxes, either to SEZ or outside India. And the other one is inverted duty structure. In these two cases, you are going to ask refund of your unutilized ITC. Even in the beginning of chapter, I said about these things. Okay, so you are going to ask for refund of what? Unutilized ITC. So now understand the point, sir. In these two cases, there is a formula, sir. There is a simple formula, sir. What it says means simple formula. It asks us to take ITC, okay, into export turnover divided by total turnover. This is the base formula, sir. Okay, when you look at the actual formula in the material, it's look quite confusing, but this is the starting base. ITC into export turnover divided by total turnover. So the point is, yes, you are making exports without payment of tax, but maybe you are making some extent within the domestic, okay, some extent within the domestic area also some sales you are making now within India. So with respect to such part, you cannot avail ITC as refund. Na? So that's why they are finding out the ITC which is relevant to your exports. Okay, so now this is the base formula. Now I'll be making small improvements to it, sir. While doing this, sir, while taking this ITC, or while taking this export turnover, or while taking this total turnover, first you should not take in export turnover or total turnover the turnover with respect to deemed exports. With respect to deemed exports, whatever is the turnover is there, that you should not take it here. Why you will not take it? Because that ITC with respect to deemed exports can be claimed as refund 100%. Okay, no formula adjustments and all that can be applied separately, and you can ask for 100% as refund. So in your export turnover or total turnover, or even in the ITC relevant, you shall not include the ITC which is relevant to deemed exports, and even in the turnover or export turnover also you shall not include the deemed exports relevant part. Okay, first one. So first one I said like about with respect to, sir, with this base formula I am writing some additional points. Okay, this is the actual formula. The first point I said is like exclude deemed exports related ITC and such turnover also in taking export turnover and total turnover. One point. Next, second point, sir, while taking this ITC is called as net ITC. While taking this net ITC, you should take only ITC equal to only inputs relevant ITC and input service. That means capital goods relevant you cannot take. Even in the beginning of chapter also I said, okay, the capital goods relevant ITC we cannot take here as a refund, so that shouldn't be included. So what are included, sir? Only the inputs and input service relevant. So the ITC relevant all the adjustments are done. From the net ITC, from the actual ITC, Ignore the deemed exports relevant one. Okay. Ignore the capital goods relevant one. Then whatever is there, that can be taken as net ITC. Now you should calculate export turnovers. What you should calculate? You should calculate export turnover. So how can you calculate export turnover, sir? They are asking us to. So here, sir, export turnover means they may be goods or they may be service also now. So how they are saying us to asking us to calculate export turnover of goods. Export turnover of goods. Nothing but zero rated supplies of goods. How you have to calculate means take the actual FOB price because the exports are valued at FOB price, sir. So that's why take FOB value. Okay, step 1 I am writing. Take FOB value, fine. Compare it with the invoice price of export, FOB price or invoice price, whichever is lower. Take out of those two, whichever is lower. Next, they are asking us to do step 2. Okay, what step 2, sir? Step 2 suggests us to do take step 1 or 1.5 times of market value or local sale price in India, 1.5 times. Now also take whichever is lower. So this will be taken as the export value of goods. What is the export value of goods? FOB value or invoice price, whichever is lower. That is step 1. Next step 1 or 1.5 times of market value, whichever is lower. So we found out the export value of goods. That value will take here goods part. Now service. Sir, whenever there is zero rated supply of service, I mean export of service, for a service, goods means technical, I mean physically they cross customs borders. So the proof can be the customs documents. With respect to service, okay, service is intangible, na? It need not to be passed through the customs barriers and all, no customs also applicable on that. So how could we prove that there is really an export of service? Let's say I'm recording these classes and let's say I'm selling simply I'm selling my classes across the world. Dubai, from Singapore, from so many countries, my classes are being purchased. If I'm claiming like that, and I'm saying like it is an export, then what's the proof for it? How could government prove that it's not an export, or how could they believe me? If I simply say like 100 classes are sold by me in Singapore, or 100 classes of maybe are bought from Dubai, if I simply make a claim like that, how could the government know? So the government asked me simply, okay, you sold, we agree. Show me the bank statement which consists of remittances, because when they are from Dubai and Singapore, they will be buying in foreign currency. So show me that remittances. Simply they'll ask and it will get proved. So that's why with respect to service turnover, export turnover, they are taking the total payments in convertible foreign exchange. The total payments in convertible foreign exchange will be taken in the current year. Whatever are the payments. Out of these payments, again, we should add the payments which were received in last year. Last year the payments are received, but service provided in current year. That also we should add. Sir, I am not writing it. I will show simply here. Take the aggregate of payments for services rendered in the financial year. For that, add advances received in previous year, but service provided in current year, minus the payment received in current year, but service not yet paid. Service not yet made. That has to be subtracted. Then you will be arriving the turnover of service. So if you see the simple formula, there we found out goods part and even we found out service part. Now take the total turnover. Total turnover simple now. Take the above export turnover as it is. For that, add the turnover within the domestic supplies. And third one, sir, here while calculating export turnover or while taking total turnover or while taking ITC, exempted turnover shall not form part. Exempted turnover and exempted supplies related ITC has to be excluded completely. If you do this way, then you will be getting the formula. So once again, for your understanding, I am repeating, sir. The formula is simple, sir. ITC into export turnover divided by what? Total turnover. This is the base formula. While taking ITC, first thing I said is like ignore deemed exports relevant ITC as well as turnover. First point I said. The second point I am saying, sir, while taking ITC, exclude capital goods relevant when ITC has to be excluded, sir. The third point I am saying is like exempted supplies relevant ITC, if any is there, that also has to be excluded, and exempted related turnover also has to be excluded. Next, fourth one, sir. Okay, only these 3 points now. Okay, there is no fourth point. Sorry. The fourth point which I want to say is like while taking this export turnover, I mean, while calculating this export turnover, we need to segregate this into two ways. One is, okay, we need to segregate this into two ways. One is goods one and one is one service one. For calculating goods one, I said like the actual FOB price or invoice price, whichever is lower, compare it with the 1.5 times of market value, whichever is lower has to be taken. Service, the total payments realized in convertible foreign exchange in the current year minus the advances received in the current year but the service not yet provided, and add the advances received in the last year but service is provided in the current year. If then you will be finding out the export turnover of service. So this is the simple formula, sir. You need not to worry much. Okay, even if you don't understand, also repeat it one more time, sir. Go back and listen to one more time, you will get clarity. Let us take an example, sir. I wrote an example, sir, on my own to understand it better. Okay, I'll show you even the book, even in the workbook examples also we'll do. Workbook questions also will at least do two problems. So don't worry. First, look at this example. FOB value of goods given, invoice price market wise given, total payments, I mean service related part given, supply of goods in DTA, supply of service in DTA given, ITC available also given. So now what we should take, sir, here there is no transaction I given with respect to deemed exports. If at all with respect to deemed export, if any ITC turnover is there, that has to be excluded. If at all any ITC or turnover with respect to exempted supply, that also has to be excluded. Now simply we'll take the first ITC, sir. While taking ITC, I said take inputs relevant, input service relevant, but not capital goods relevant. So net ITC we should take now. That net ITC is nothing but 8 lakhs into. We want what, sir? The zero rated supply of goods turnover. Sir, here if you see, the goods turnover here is 35 lakhs, actual FOB value. But whereas the invoice price is 40 lakhs. Out of these two, the step one, whichever is lower, that means 35 lakhs. Then market value in India, 20 lakhs. We should multiply it with what? 1.5 times. So it come to 30 lakhs. In simple, out of these three, whichever is lower has to be taken. FOB value, invoice price, market value into 1.5 times. Out of these three, whichever is lower you should take now. Whichever is lower is nothing but what? 30 lakhs. Okay. Next, this is the goods turnover. We got export turnover. Now we want what? Service relevant export turnover. So services, if you see, the advance is the total payments realized are 30 lakhs. Yes. Out of this advance received in preceding year, but service provided in current year, this 5 lakhs has to be added now. Yes, we'll add this. Next, advance received in current year, but service not yet provided. So what we have to do? We need to subtract it. So out of, for 30, we need to add 5 lakhs and we need to subtract 4 lakhs. So total it came to how much, sir? 31 lakhs. Okay. So now what we need to take as the denominator, sir? Numerator 61 lakhs. What is the denominator? Denominator, sir, the DTA sales we should take. Okay. Assuming all those are taxable. This came to 30. And the numerator part anyhow we should take 61 lakhs total. So this will be the total answer. So 8 lakhs into 61 lakhs divided by 91 lakhs. So if you do that, we'll be getting the amount of refund. So let me do, sir. 8 lakhs into 61 divided by 91. If you do, we'll be getting the refund of how much, sir? 5,36,264. This is the refund amount we are getting. Okay, so the formula is, the problem is not going to be more complex than this. Simple formula, sir. Okay, many students believe like refund is so much bigger chapter. Okay, this, that and all. Simple formula, very basic formula. But the problem is like generally when giving the explanation, they will not bring it to the basic level. Okay, so now what we did means like the formula has been brought to a very basic level. From there, we just step by step upgraded it now, so it looks easy. Okay, let me take to the material. Okay, at last I'll take to your material, sir. So next, there is one more formula, sir, with respect to inverted duty structure. Okay, even for inverted duty structure also, very simple question, sir. Even if they ask, just remember the concept. So inverted duty structure relevant also. Okay, here we are having input service, input capital goods. All the three are there now. On input service, we are having tax of 2 lakhs. On inputs, we are having some tax of 4 lakhs. But if you see, the inputs are taxed at 28%, whereas the input service is at 18%. Okay, now they produce out of, by using these things, they produce two units, sir. One is A and one is B. Now on A, the tax rate is 28%. Even the input tax rate is also 28%. So input is also 28, output is also 28%. So they are at the same rate. So there is no inverted duty structure with respect to A. With respect to A, there is no inverted duty structure. But when you see with respect to B, the good B turnover is 8 lakhs. Okay. Tax rate is how much, sir? The tax rate is only 5%. So with respect to B, there is inverted duty structure. How could you say, sir? The input is taxed at 28%, whereas the output is at a rate of 5%. So input 28, output just 5%. So there is a gap. So there is inverted duty structure. So with respect to B alone, we should get refund. Okay, understand point, sir. We are having two outputs, A and B, but only with respect to B there is inverted duty structure now. So we shall get refund only with respect to what? B. Okay. Now how it will be made? See, what we have to do, sir. Sir, here below this formula, sir. Before I explain you this formula, understand one thing here. Sir, inverted duty structure will be. I mean, the lawmaker says like, inverted duty structure concept is applicable only with respect to goods. With respect to service, inverted duty structure is not available. So we'll be getting refund with respect to only this 4 lakhs, not with respect to this 2 lakhs. Okay. So what shall happen, sir? Here I'll show you. First, look at this part. Sir, I am taking 4 lakhs, sir. What? This input relevant ITC. Why I am taking this 4 lakhs? Because only this 4 lakhs is eligible for refund. Okay. Then what I am doing means, sir, since this input relevant ITC may be related to A and B now. So I wanted to get the refund which is exclusive. I mean, I want to find out the ITC which is exclusively relevant to B. Okay. This input 4 lakhs is used for both A and B now. So I want only which is related to A. So what I am doing, 4 lakhs into the turnover of inverted duty divided by total turnover. So total it came to 18 lakhs. So 4 lakhs into 8 by 18 if I do, I got the ITC which is relevant to inverted duty. So this is one part of the formula. This is one part of the formula. Minus, sir, I got the share of inverted duty. I mean B related input tax I separated. But the point is, from this we paid tax with respect to B na, this 5% tax we have to pay na. This tax we might have paid by using ITC only, no. So now out of this relevant ITC, we need to separate the ITC we used. Okay, sir, the previous formula used to be simply like, from this we used to minus 8 lakhs into 5%, 40,000 we used to minus. Okay, the second part, sir. Okay, this is the second part, I could say. And the last third part is this. Okay, sir, previously in formula there is only two parts. The third part is not there. That means simply we used to find out the refund ITC with respect to product B. From there the tax paid on product B will be subtracted and we will be calculating the refund amount. But then they made a, okay, the refund formula got updated, sir, like at least like some 1 year back this refund formula got updated, amended. So what happened means, at that time the people generally raise the question here, sir, for product B I am paying taxes now 5%, that means 40,000. For this 40,000 I may use the input on service, or I may use the input on I may use the ITC on input, or I may use the input ITC on service also. No, sir, for getting refund you said only the goods part can be claimed as refund. Fine, we are agreed. But there is no bar on me to use any kind of ITC while paying taxes now. So this 40,000, I mean B, on B there is 5%, 40,000. While paying this 40,000, I can either use the ITC on good or ITC on service. There is no bar on me, no. So that's why what they are doing means, out of my total ITC 6 lakhs, proportionately, okay, they are saying like, now don't assume the 40,000 is paid from input of goods only. If you see here, there is 4 lakhs with respect to goods and 2 lakhs with respect to service. Now what they are saying, on this B related 40,000 tax has to be paid now. This 40,000 may be paid from this 2 lakhs or maybe from this 4 lakhs. Now the formula is now making it amendments and saying like simply, okay, let us assume like this 40,000 paid proportionately from both this 4 lakhs and 2 lakhs. Okay, we cannot prove that. It may be paid only from 2 lakhs or it may be paid only from 4 lakhs. It may be in both the situations now. So that's why they came to a neutral formula saying like this 40,000 will consider as paid from 4 lakhs or even from the 2 lakhs proportionately. So that's why this 40,000 is multiplied by 4 and considering the numerator as considering the denominator as the goods part as well as the service part. So what we are doing here is the tax on inverted duty with respect to proportionate credit used from goods. Okay, so we are out of this 40,000 with respect to this 4 lakhs 26,667 has been used. So when you subtract 1,77,770 minus 26,667, then you'll get 1,51,110 as the refund amount. So now you see the formulas. First take net IDC into turnover of inverted duty structure of goods by adjusted turnover. Nothing but total turnover you are taking. Minus tax on inverted duty structure goods. That B product is there now. On that multiply it with 5% into net IDC. What is net IDC? Net IDC is only with respect to goods relevant. Okay, the IDC which is relevant to goods alone is called as net IDC. Divided by take the total IDC available, goods and services, all that one. Okay, then you will be getting the answer. So the two differences between the first formula for zero rated and for inverted duty is there. For net IDC you are even considering the service part. For here net IDC you will be considering only the goods relevant, I mean inputs relevant IDC only be taken. Okay sir, once again you understand, go back and look at the formula or listen to the formula once again, or just take a random example and put some 5 minutes, you will be understanding sir. Okay, it is as simple as that. Okay, or to my okay, let me take it another way. So first what we are doing, taking net ITC. Net ITC means here what? ITC with respect to goods into turnover of what? Inverted duty structure. Inverted duty structure product we are supplying that relevant turnover divided by we are taking total turnover. That means inverted duty structure product related turnover and the other product related turnover. This is part 1. Part 1. Okay. Minus what we have to do, we should take tax on inverted duty structure supplied goods. I mean in our example we took product B na 8 lakhs is the turnover, on that 5% that 40,000. So this is the part 2. Let us divide the formula into 3 times. Part 2, then we should multiply it. Simple. Take again net IDC. Net IDC already you calculated here now. Take that net IDC, you should divide it by the total IDC. Total IDC. What is the difference between net IDC and total IDC? Net IDC is only with respect to goods, whereas the total IDC may even include goods relevant and as well as service relevant. If you do like this, then you will be getting the refund amount. Simple na? Okay. Next one sir, there are another 2 concepts sir. Here let me show you. Sir, what is the refund amount will be given is, sir, this para sir. If you could see in 15.7 there is a para. This para is also again important. What does it say? Refund amount as calculated as per the formula. Now we calculated as per the 2 formulas. Now one is 89 subsection A, rule 89 sub rule 4, 89 sub rule 5. Those are the 2 formula rule numbers. Refund amount as per the formula take. Then find out for which month the refund is related to. Let's say I am taking July month related refund. It is July month related, July 2020-22 related. Okay, refund amount as per the formula we got like 5 lakhs. Okay, now second line if you see, balance in the credit ledger at the end of tax period for which the claim is being filed. So for which the refund? July 2022. So they are asking what is the input tax credit balance at the end of July. So let's say it is 5.5 lakhs. Okay, next third one, the balance in the credit ledger at the time of filing refund application, whereas the refund application is filed in September 2023. While filing the refund application, but when the refund application is filed, then the balance in the credit ledger at the time of filing of refund application is only 4 lakhs. Now what is the refund amount we are getting? 5 lakhs, 5.5 lakhs, 4 lakhs. Out of these 3, whichever is lower, that means 4 lakhs we are getting it as the refund amount. Now see how the refund amount will get debited. Sir, let's say the refund amount here it has to be given as 4 lakhs now. Okay, so the 4 lakhs amount, first if you are let's see how much IGST balance it has to be. So with what balance it has to be adjusted, adjust it with the IGST. Let's say you are having IGST 3 lakhs. So now first adjust with IGST, so IGST became 0. Next with CGST and SGST equally. Okay, the balance 1 lakh will be adjusted, 50,000 with CGST grade and 50,000 with SGST grade. So in that way the refund balances will be adjusted. Okay, na? Next, there is a concept, sir, minimum refund claim. The refund will not be allowed where no refund shall be paid to an applicant if the amount is less than 1,000 for every each tax set separately. Sir, you are asking only 500 CGST and 500 SGST and 500 IGST. Maybe total it is more than 1,000, but individually, okay, individually it is less than 1,000 na, for each tax set, so it will not, the refund application will not be processed. However, these limits not applicable to cash ledger. Those are applicable only to what? Credit ledger. Okay, na? Next, sir, all these concepts are not much relevant to us. Okay, interest on delayed refund. Where the refund is not made within 60 days, then the interest is applicable at a rate of 6% from 61st day. Next, consumer welfare fund. Consumer welfare fund was created to protect and promote the welfare of consumer and strengthen the consumer movement and all. Okay, so where any refund amount has to be first transferred to the consumer welfare fund. Only if there is no unjust enrichment, it will be transferred to the applicant. Otherwise, it will be transferred to consumer welfare fund. So from consumer welfare fund again, if they could find out the actual beneficiary or actual person who is eligible for such refund, then from consumer welfare fund the amount again will be transferred to such person. Okay, so you got a better clarity about the refund chapter. Now we'll be discussing few problems. Sir, look at this question number 4, a study material question. Sir, this is X Limited, a unit in SEZ, received services from various services providers with respect to authorized operations. Okay, the value of taxable services used exclusively for making authorized operations within SEZ 5 lakhs. However, exemption from GST availed. Sir, since already exemption availed, I already said if it is exempted, then we shall not claim any refund with respect to them. So input services 5 lakhs. IDC nil. Since no tax paid on inputs, no refund is allowed. Input services used exclusively for authorized operations and exempted. So that's why with respect to that, no refund is allowed. Next, value of taxable services used by SEZ and DTA 8 lakhs. And on this GTA is also paid. Value of taxable services used by SEZ and DTA. So on this 8 lakhs, 18% is the tax paid. 8 lakhs into 18%. Okay. Into 18%. Sorry. One lakh 44,000. So this 1,44,000 here is the tax paid. But on this we'll have to apply the formula. Formula we need to apply and then we'll be getting the refund amount. Next, value of taxable supply is used wholly for DTA. So this is exclusively for DTA. Then no refund will be there on this. Only if the inputs are used for zero rated supply, then we'll be getting refund. Here it is exclusively for DTA. So on this no refund. Export turnover will be given 1 crore and local domestic turnover also they given 60 lakhs. So we need to calculate here. So what is this, sir? 1,44,000 here into 100 by 160. Then we'll be getting the refund amount as 90,000. The balance 54,000 will be claiming as ITC. With respect to exclusively used by DTA 54,000, we are getting ITC simply. Okay. Question number 4. So see here, question number 6. Determine refundable amount X Limited for the month of April 2021. Okay. In case refund of unutilized ITC on account of exports without payment of tax supplies made to SEZ or accumulation due to inverter structure. Okay. The amount calculated as per formula is 5 lakhs. Okay. The balance in ledger of applicant for the period in which they made the claim is 4 lakhs. The balance in the credit ledger at the time of filing application is 6 lakhs. So here if you see 5 lakhs is as per formula. 4 lakhs is the balance in credit ledger with respect to the month to which the claim is related. And next, the balance in credit ledger at the time of filing application. What the procedure sets are out of these three, whichever is lower. Lower means 4 lakhs. So the refund amount that they are eligible to get is only 4 lakhs. Maximum refund amount is only 4 lakhs. So this is question number 6, sir. Okay. We will even do question number 5, sir. So question number 5, if you see, ABC Limited India has received an order for supply of services amounting to $5 lakh. Okay. Let me take here, sir. ABC Limited. Okay, it has got an order for how much? $5 lakh. Okay, to a US based client. So ABC Limited actually has to supply how much? $5 lakh worth to a US client. Okay, we understood question till here. Next, ABC Limited is unable to supply entire services. So ask XYZ Limited Mexico, it's not a distinct person in accordance with explanation 1 to supply part of the service, let's say 40%. So out of this 40% sir will be supplied by another company called XYZ Limited, but this would be considered as what? Outsourcing na. So how we should assume XYZ Limited is providing services, even though the service directly it provides to US client, but the billing generally will be made to ABC Limited only na. Okay, for 40% of 5 lakhs. So how could we understand this? ABC is the actual person who should make export of 5 lakhs. Since it cannot provide fully, it outsources it to some other person. So that outsourced person cannot directly route to US client. No. So it will be invoiced into ABC Limited. So this is the case. Now what is the question? We'll see. Now identify exporter, importer and value of exports and imports from the above. Sir, in this case, who is exporter and who is importer means ABC Limited is the exporter, and even ABC Limited is importing this transaction from XYZ Limited. Na? So it also acts as importer. With respect to transaction between ABC and US client, ABC is exporter. With respect to XYZ and ABC Limited is the importer. It itself. This company only is in $5 lakh transaction, it is acting as exporter. By taking 40% of that as outsourcing, it is acting as an importer. Okay. Next, what is the other question, sir? And value of exports and imports from the above. That is the value of exports and imports. So ABC Limited shall be exporter for the entire value. The service provided by XYZ Limited Mexico shall be import of service to ABC Limited. So here itself we got the total answer. And it would be liable to pay IGST on reverse charge basis and take input tax paid also on that. Even RCM basis, if you pay tax also, we can avail ITC. Next, the point where they are saying means, if at all US client still, if the US client making only $3 lakh payment to here and $2 lakh payment to here, still it will not be considered as a different transaction. We need to consider all together as the same transaction only. ABC Limited will act as an exporter as well as an importer. This is the question here, sir. Okay, so I explained here question number 4, 5, 6, and in this chapter there are 2 questions which are like duplication only. You will easily understand them. So you need not to worry much about this chapter, sir. We covered only this chapter. Okay, almost 1 hour discussion we took for this chapter. Everything we covered. Okay, thank you all. Hello friends. So now we are into the topic assessment and audit. Very simple chapter. Okay, and if at all there ask the question, you can easily answer it. Just wait for 20 to 25 minutes. We can finish this whole chapter and we'll have excellent understanding after this part. Okay, so now what are the sections that are going to be covered in this chapter? Section 15A, which is nothing but self-assessment. Section 60, provisional assessment. Section 61, scrutiny of returns. Section 62 and 63 are best judgment assessments. One is in case of non-filers of return, one is in case of a person who is not registered. And section 63, it is about 63 is about that best judgment assessment. Next, 64 is about summary assessment. Then we are having 2 sections, sir, which talks about audit. One is department audit and the other one is special. So you see here in this chapter the areas of focus. So since it's a simple chapter, I give it touch with respect to all the topics, but the areas of focus will be provisional assessment, because the only chance of asking a problematic question in this area is provisional assessment. The rest all other topics are like only for the straight theory questions only. We can't even expect a case study based question also. There will be only straight questions. So provisional assessment, recourse available in case of scrutiny, summary assessment, and audit. Both the audits. So these are the guest concepts for this area. Okay. So let me dive into the explanation. Self-assessment. So self-assessment means nothing but when we are filing a return, we need to assess the tax liability ourselves by considering the input tax credit, by considering the outward tax liability. We need to compute the tax liability on our own. That process is nothing but called as self-assessment. Okay. Now we are discussing the concept of provisional assessment under section 60. What is called provisional assessment means? So let us take an example. I'm a manufacturer. Okay. So I'm a manufacturer. So now I came up with a new kind of good into the market. I brought a new kind of good into the market. So now the problem is like I cannot classify this good. Okay. So what does it mean by classification? Classification means there is a rate chart kind of there for every good a tax rate has been given. So now my problem is since I have brought a new kind of good, I couldn't identify where this good has to be classified and what is the tax rate applicable to this good. First case. Second one, sir, I didn't brought any new kind of good. I'm selling the existing goods only which were already carrying out by me. But the problem is like I entered into a different kind of transaction. Let's say till now I sold or I supplied goods for cash payment or for monetary payments. But now I supplied these goods for some non-monetary payments, such as like I supplied these goods and I took shares in a company. So now how it should be valued. We all know there are valuation rules, but even with valuation rules also, we cannot found out exactly the values or it doesn't feel suitable for it. Then you understand my concept. So I'm a taxable person. I'm making taxable supplies, but I'm unable to determine two things. What are those two things? Are one is tax rate because I don't know where to classify. The second one is value of supply. Okay. In those two cases, we can go for provisional assessment. Now let's see how we can apply for provisional assessment. So a taxable person applies for provisional assessment in ASMT 01 stating the reasons why he is going for provisional assessment to proper officer. Now the proper officer will ask for additional information since he has to find out the value of supply or tax rate. So he should understand clearly the picture. So he'll ask for additional details in ASMT 02. It's not mandatory to us. If needed, he'll ask for additional details. Then the taxable person replies to him in ASMT 03. Now, the proper officer passes the provisional assessment order in ASMT 04. So, the provisional assessment order will be passed in which form? ASMT 04. Now, what is the time limit for carrying out this provisional assessment, sir? The time limit for carrying out this provisional assessment is 90 days. So within 90 days, provisional assessment has to be carried out, and this order should state the value of supply or the rate of tax. I mean, the question which we asked or the where we are facing the problem. So that answer should be given. So the order should clarify the value and rate of tax and even specify the value for which a bond has to be executed. So whenever there is provisional assessment, the taxpayer needs to execute a bond. So here the value for which a bond and security has to be executed also has to be mentioned. So now provisional assessment is done. Then what happens, sir? Now within 6 months from the date of provisional assessment order, within how many days, sir? 6 months from date of provisional assessment order, the final assessment order has to be carried out. Okay. I mean, provisionally means for the time being, they will decide one value. Maybe the provisional order and the final assessment order also may remain same. Okay. Sometimes it may be more than the provisional order. The liability may be more than the provisional order. Sometimes it may get reduced. So it may be in any of those ways. So the final assessment order has to be passed within 6 months. However, if AC and DC are satisfied that there are, sorry, okay, it can be extended by AC. I mean, that 6 months time limit can be extended by assistant commissioner or deputy commissioner for another 6 months. Even that time is also not enough. Then you can go with commissioner. So then the commissioner can extend up to overall 4 years. That means initial 6 months, original time period given, Then if you go to ACDC, another 6 months. And if you go to commissioner, overall 4 years, means additionally you will get another 3 years when you go to commissioner. Okay. Now bond has to be executed. Now the bond will be executed in AS7005. One bond is enough for CGST, SGST, IGST. Okay, you need not to execute separate bonds. Now here interest is applicable, sir. When interest is applicable, sir, in provisional assessment, the tax based on the value of supply or the tax rate they given, let's say the tax as per provisional assessment order is 3 lakhs. But whereas the final assessment order said like the liability is 5 lakhs. Provisional order said 3 lakhs, whereas the final assessment order said like it is 5 lakhs. So there is a difference in tax liability, na 2 lakhs. So on this differential tax liability, we need to pay interest at a rate of 18% per annum from the date which the tax has to be paid actually. So that means, let's say if the supply is made in January month, then the tax has to be paid by February 20th. Na? So from that February 20th till the date of actual payment of this differential tax, interest has to be calculated. Now we'll take a different situation. Sir, the tax paid as per provisional assessment is 3 lakhs. Okay, 3 lakhs. But the tax to be paid as per final assessment order is only 2 lakhs. That means we paid excess tax in provisional order now. So that excess 1 lakh will be refunded to us. Okay. So now whenever, okay, will be refunded to us. Now the applicant has to make a refund application RFT01 where the refund is not processed within 60 days. Then from 61st day, interest is applicable at a rate of how much per year? 6% per annum. So when we need to get refund interest at 6% per annum, that also after making an application and after expiry of 60 days. When we need to pay interest has to be paid at a rate of 18% per annum. That also from the due date of payment of tax till the actual date of payment of tax, interest is applicable at a rate of 18% per annum. So once this refund or differential taxes has been paid, then applicant files in AS7008 to release the security after final assessment. And the release order will also be passed in AS7009. So this is the concept now. Now we'll see an example on it. So there are in BCCA workbook, there are 2 questions with respect to provisional assessment. In other way, there are only 2 problematic questions in this chapter. Those 2 problematic questions are related to provisional assessment only. So this is one of the key area. There are high chances of picking this question from this chapter. So see here, Anna and Sons has entered into a contract to supply 2 consignments. Okay. They are unable to determine value of supply. So they applied for provisional assessment. Now Assistant Commissioner of Central Tax issues an order allowing to pay tax on provisional basis. So then they supplied on 25th January and paid tax provisionally on 19th February. Provisionally tax paid on 19th February. But consequent to the final assessment order, it came to like there are 2 consignments now. On one consignment they found out like tax paid deficit. I mean provisional order, the tax paid is deficit. That means they need to pay additional 1,80,000. Whereas it comes to second consignment, they paid excess 4,20,000. That means they should get 4,20,000 as refund. Now Anna and Sons pays the differential tax on 9th April and even applied for refund of 4,20,000 also same day, and it processed on 5th June. So they are asking us to find out the interest payable. See the solution, sir. When the supply is made on 25th Jan. So when the supply is made on 25th Jan, actually what is the due date for payment of tax? 20th February. 20th February. But here provisionally some part of tax is paid on 19th February, which is within due date. So on provisionally paid tax, there is no interest. Fine. Now there are 2 consignments. No, out of those 2 consignments, consequent to final order, with respect to consignment 1,80,000 differential tax is there which has to be paid. So on this interest is applicable at a rate of 18% per annum from the actual date of payment. Actual date means when, sir? The supply is made on 25th Jan. That means the tax has to be paid by 20th February. No. So this is the actual due date for payment of tax. So what is the actual due date for payment of tax? 20th February. And interest has to be calculated till the date of actual payment, 9th April. So if you see that number of days, 48 days. For 48 days on 1.8 lakhs, 18% interest if you calculate now, it comes to 4,261. Now see consignment 2. What about consignment 2, sir? They should get 4,20,000 refund. Okay. And refund applied on 9th April. Refund processed on 5th June. That means it is processed within 60 days only, no? Okay. So since it is paid within 60 days, there is no interest payable. Simple as that, sir. Provisional assessment concept. So now we are into the concept scrutiny of returns. Sir, in scrutiny of returns, so first what happens means a registered person files a return. Okay, you file return PSTR 1 3B, you file. Then the portal, GST portal will run say security check based on the parameter, prefixed parameter. It will identify the taxpayers. So those selected taxpayers will be taken for scrutiny. Okay. Let's say some X person related return has been selected for scrutiny. Then once it is selected for scrutiny, proper officer will verify the return details with the information available with him. Sir, the GST officer might be having information from the banks, customs authorities, or the information shared from income tax authorities. So from various sources, he'll be gathering information. So he'll compare that information with the return file. If he found any significant differences, okay, if he see here, sir, if any discrepancies is found, okay, first thing he do is like he'll verify the correctness of return with the information available with him. Verify its correctness with reference to information available with him. If any discrepancy is found, then he'll be issuing a notice to the registered person seeking explanation within 30 days from the date of service of notice. So within how many days the reply has to be given? Within 30 days. Now what the registered person has to do within these 30 days, either he can accept the discrepancy and pay tax, interest, penalty, whatever is applicable. Okay. The other case is like he should give an explanation. So now what happened means he accepted but not paid tax, interest, penalty. So what's the meaning of accepting? What's the purpose of accepting? If you accepted means what you have to do? You should pay tax, interest, and penalty. But this guy accepted but didn't pay interest, tax, or penalty. And the second thing, he furnished the explanation that is acceptable to the proper officer. No situation, sir. Two scenarios, no problem, sir. Then the proper officer will close the assessment. When what are the two cases? Paid the difference, tax, interest, penalty. Then no issues. Case will be closed by the proper officer. Or else explanation is given by the taxpayer and the explanation is convincing or satisfactory to the proper officer. Then also case closed. So when the problem will arise, either no explanation is provided or the explanation provided is not satisfactory to the proper officer, or the taxpayer accepted the tax, interest, penalty but he didn't pay it. So these are the three situations where the proper officer has to go with some other actions. So what are the recourses available in those situations? One is like he can go for a department audit under section 65. Very important areas of this is also. Okay, what are the recourses available to the proper officer when the taxpayer does not cooperate with him? When we call it as not cooperating, he didn't pay the differential tax or he didn't give an explanation, nor the explanation given is not satisfactory. Then the recourses available are go for department audit under section 65 or go for special audit under section 66 or initiate inspection, search, seizure procedures or proceed with 73, 74 demand proceedings. So what are the four recourses available, sir? I'm repeating once again. Section 65, department audit, or you can go for a special audit, section 66, or you can initiate inspection, search, seizure proceedings, or you can proceed with demand proceedings under 73 and 74. Now, we are going to section 62, sir, which is about assessment for non-filers of return, best judgment. So that means you are a person who need to file return, but you didn't file any GST return. Then only if you file return, then they can come up with a regular scrutiny assessment. You not even file a return. Okay, then the option available to them is best judgment assessment. But so the department cannot be so harsh like if you don't file a return, we'll come up with assessment, not like that. First, they should encourage a taxpayer to file returns. Then even after that also, if he didn't file return, then they should give notice first. Baba, tax. The time limit is expired. Okay, so you should file returns. So that reminders has to be given. Even after that reminders, even after that encouragement, if a taxpayer fails to file return, then the only option available for them is best judgment assessment. Now you could see, so what are the guidelines given to ensure encouraging the taxable person to file return? Before 3 days, they'll give before 3 days to the due date, a message will be sent to the registered person. Before 3 days, a message will be sent to the registered person, like due date is arriving, please file your GST returns. Then post due date also. That means even after due date also, a mail and message will be sent to the registered number and mail ID. Second alert, first alert before due date by sending a message. Second alert after due date. Then even after this also no response means after 5 days from due date, a notice under section 46 will be given. Notice under 46 will be given to file the return within 15 days. Within 15 days. So there are three kinds of reminders or alerts. First one before the due date, 3 days before to the due date. Second one after the due date. Third one after 5 days to the expiry of due date, they will be giving a notice. Okay, and in the notice they'll ask the taxpayer to file return within 15 days. Even after that also no reply means then best judgment assessment will be initiated. So you could see here, notwithstanding, sir, if you see here, there is a word called notwithstanding anything 7374. That means if there is a non-failure of return, the department has the right to proceed with 7374 demand proceedings. They can initiate the proceedings from 7374 route also. So this section doesn't talk any contrary to 7374. If proper officer chooses to go in that way, he can go in that way. Otherwise, he can even initiate the best judgment assessment. So notwithstanding anything in 7374, where a registered person fails to return under section 39. That may be a monthly return or quarterly return and even includes a final return. If these returns are not filed, and notice under 46 is issued to file the return within 15 days. Even after such notice also taxpayer fails to file the return, then proper officer can propose a best judgment assessment. So now the best judgment assessment order will be passed in AS 7013. The time limit for passing best judgment assessment order is, let's say the return to be filed is with respect to financial year 2021. Now take the due date of filing annual return for that financial year 2021, annual return filing due date, that means 31st December 2021. From there 5 years is the time limit. See here, within a period of 5 years from the date of furnishing of annual return from the finance year to which the tax not paid relates. You could even see the example here, sir. Within a period of 5 years, no, see. The return related to July 2019. That means financial year 1920. Now, for financial year 1920, the annual return has to be filed by 31st December 2020. From there, 5 years means the time limit for filing the return is, the time limit for passing the best judgment assessment order is 31st December 2025. Next, assessment to unregistered person. Sir, here in this chapter, when you are following BCCA material, so there are a little typing errors. Sir. In some places, instead of BJA, it got typed as BJP. So please correct it to BJA. Best judgment assessment. Same here also, notwithstanding anything contained in 7374. A taxable person fails to register, even he has liability to do so. I mean, me being a person who is carrying out a business, my supplies in a financial year exceeded 40 lakhs. That means I have a liability to register, but still I didn't register. Or whose registration has been cancelled. Okay, I'm a taxable person. I'm already registered. I made some taxable supplies also, but in the meanwhile, my registration got cancelled. Okay, but still I'm having some tax to be paid to the government in those two instances. Sorry, once again repeating. I'm a taxable person. I'm liable to pay tax, but not registered. I'm a taxable person, but my registration got cancelled. Even after cancellation also, I have some taxes to be paid, taxes due to be paid. In those two cases, a best judgment assessment under section 63 can be initiated. But before initiating any assessment, a notice has to be given. So even here also, before making assessment, proper officer issue a notice to the taxable person and then make his summary assessment also. If taxable person gives reply within 15 days, then consider his reply and carry out the assessment. Otherwise, do the summary, do the best judgment assessment and pass an order. So here the time limit for carrying out the best judgment assessment is same. Okay, the tax liability is pertaining to a certain month now. So for that financial year, take the annual return due date from their count 5 years. That is the time limit for filing the time limit for passing the best judgment assessment order under section 63. So one thing I missed in section 62, that means in case of non-filers of return, there is one more point which means proper officer will pass an assessment order now. If within 30 days from passing the assessment order, if the taxable person even then files a valid return, then the best judgment order passed will be revoked by the proper officer. But this is available only in the case of section 62 best judgment assessment, not in the section 63 best judgment assessment. So now we are into the topic summary assessment, section 64 summary assessment. So see here, where the proper officer, so this is also important here. 62 and 63 are not quite important. Just if you look at the time limit also it would be fine, but 64 there is a chances of asking for straight question. Proper officer, okay, the proper officer has evidence that taxable person has incurred a liability to pay tax. So I am proper officer. I have certain solid reasons that this guy called X has the liability to pay tax. Okay, so this person has to pay tax. I have solid reasons. Along with that, just because I'm having a solid reason that this guy has to pay tax will not be enough. There should be another thing also. What is that? Has sufficient grounds to believe that delay may adversely affect the interest of revenue. That means if I do some delay in carrying out the assessment, this guy will go outside India. Okay, he'll just simply fly away. So we cannot recover the taxes, which will be against to the interest of revenue. So what are the two things that should be there in order to initiate summary assessments? Are first one, the proper officer has sufficient evidence, strong evidence that the taxable person has incurred a liability. The taxable person has incurred a liability. First one. Second one, has sufficient grounds to believe that. What are the grounds? That delay may adversely affect the interest of revenue. So summary assessment means we'll do the assessment in a quicker way, okay, in a faster way. Why? Because if you do delay, then there may be again it will affect adversely to the interest of revenue. So that is called summary assessment, sir. The summary assessment will be initiated when the taxable person has evidence to believe that the taxable person has some liability to pay tax and he has sufficient reasons to believe that delay may adversely affect the interest of revenue. Then what the proper officer will do? He will go and take the permission of additional commissioner and joint commissioner. Whom, sir? Additional and joint commissioner. Then he will be initiating summary assessment. Then he passes summary assessment order in AS 7016. Now, okay, there is another kind of question, sir. Does the summary assessment order passed can be withdrawn? Yes. The summary assessment order passed can be withdrawn by additional commissioner or joint commissioner when the applicant or the application has been made by the taxable person on whom this summary assessment order has been made. So let's say the summary assessment order is passed on X. So now X applied to the additional commissioner or joint commissioner like, sir, the proper officer mistaken me that delay may adversely affect the interest of revenue. He thought like I may fly away, but I'm not going anywhere. I'll stay in India only. So I'll cooperate with the assessment also. Please, okay, revoke that summary assessment and do the regular assessment means then the assessment can be carried in the regular way. Application filed by a taxable person within 30 days from receipt of order. Then the summary assessment order can be withdrawn. As well as by the additional and commissioner and joint commissioner on their own itself they can. Okay, no application has been made. They themselves felt like, okay, here summary order is not enough. Even with summary assessment also, this guy is not going to listen to us, is not going to pay any tax. So it's better to go with 73 and 74 demand proceedings. Then what's the benefit with 73, sir? If you give 73 notice or 74 notice and the person doesn't pay the taxes within 90 days, then they'll initiate recovery proceedings. So the additional commissioner, joint commissioner felt like that is the best route. So they opted for that and withdrawn the summary assessment order. So our next concept is about 65 and 66, sir. Many times these are asked as the straight questions. So it's relatively important, sir. 65 and 66 also. Audit by tax authority. So commissioner or officer authorized by commissioner can initiate this audit. Who can do this audit, sir? Department audit, commissioner or any other officer authorized by the commissioner. So first point, you're getting my point, right? Audit by tax authorities. So who is the one doing audit? Commissioner or the officer authorized by commissioner. And the audit can be done for a financial year or part of a financial year or even for a multiple financial year. Audit by commissioner or officer authorized by commissioner for a financial year, part of financial year or multiple financial year for a registered person at his place of business or office. Okay. Now this is first point. If you take second point, when can we consider as the audit is commenced? Okay, when will consider the audit has been commenced? Sir, in workbook there is a question regarding this date of commencement of audit also. So please listen carefully. The audit will be considered as started when the records books are made available to the department or when actually the department guy visits the place of business of registered person. So let us assume like me being the commissioner of GST. So when I enter into the place of business of the taxpayer or when the person, the taxpayer made the books available to me or records made available to me. Out of these two dates, whichever is later will be taken as the date of commencement of audit. Records information made available or actual institution of audited place of business, out of these two, whichever is later. Next, the audit has to be generally completed within 3 months from commencement, sir. However, if applied for commissioner, it can be extended for another 6 months. Okay. So now, during the course of audit, proper officer may ask for registered person. Okay, he'll ask some help, no? So now, if proper officer asks registered person, then what registered person has to do? He should facilitate verification. So I want to verify stock. So he should take me to the warehouse or wherever the godowns where stock is preserved. So he should show me all the stock details. Then he should provide information. I'm asking for some invoices, I'm asking for some proof of documents, and then he should provide me such information, and he should even render me assistance. Let's say he's maintaining data in a software, so I want to generate certain reports, so I don't know how to use that software, so he should providing me some assistance. So what the registered person has to do, sir, he should facilitate verification, provide information and render assistance. Okay, so now after this, what actual audit means, the proper officer and team will verify the books of accounts, returns, statements. They will be verifying the books of accounts, returns and statements, and even verify the correctness of turnover, exemptions, deductions, rate of tax and ITC error. So they'll verify books of accounts and they will even verify the correctness of turnover, correctness of rate of tax which I took, correctness of ITC I read. Then they'll record the observations. Now, last step, what they do, the proper officer will inform those observations and discrepancies to the registered person. Now, registered person will file a reply to the observation. Sir, maybe we thought it in this way, but actually it is this. So, like this, he'll be giving explanations. No, so he has to give explanation. Now, considering all those explanations, the proper officer finalizes the finding after considering the reply. Now, the final audit order has came. When the final audit results into tax not paid, the final conclusion of audit said like there is tax not paid, short paid, or erroneously refunded, or ITC wrongly affected. 4 things are tax not paid, short paid, erroneously refunded, or wrongly availment of ITC. Then the proceedings can be initiated under section 73 and 74. So there are questions on this also in workbook. You could see in workbook, sir, there are questions on this also. X Private Limited receives a notice under 65 subsection 3. That means about this question only. Documents on which it is made available or okay. The proper officer asked for documents on 1st December. They were made available on 1st December only. However, actual institution is made on 5th January. So out of these two, whichever is later means 5th January is the actual commencement of audit. What should be considered as date of commencement? 5th January. By which audit shall be completed? 5th July to from there. How many months are here? 3 months from commencement of audit. So from 5th January within 3 months. However, if they apply for commissioner, there is an extension of time limit given here, sir. How much time limit is given, sir? The time limit extended here is 6 months. Okay, plus 6 months. You could even see in the answer. 4th April 2023. As per the audit shall be commenced within 3 months. Next, third question, sir. By which date audit should be completed if period is extended another 6 months? So it will come to 4th October 2023. Okay, so this is about the departmental audit questions. Now, if you see the first question, it is on special audit. It's a quite theory based question, sir. That also we'll discuss now. So let us continue with special audit. So what here the concept means, sir, an officer not below the rank of assistant commissioner is carrying out some inspection, scrutiny or inquiry of a registered person. So let us assume I'm an officer, I'm carrying out some inquiry, investigation of a guy named A. So while carrying out this inspection or inquiry, I came to know that he is not declaring the values correctly. I mean, his value of supply is not declared correctly, or the ITC he availed is not within the limits. So then, what's the issue? I can decide it no, but the problem is regarding to the nature. So the nature of the business is so complex. So there are a lot of holding and subsidiary companies. So there is a transaction from this company, that company. So the nature of the transactions are and complexity. So nature is one more thing I can say, like there are voluminous transactions, like there are lakhs, thousands of transactions, and complexity. There are so many holding subsidiary relationships and transactions between them, and considering the interest of revenue. Yes, because if value is not declared correctly means it is against to the interest of revenue. The revenue, I mean the government is losing revenue, or ITC availed excess of the limits, that also against to the interest of revenue. So where value not declared correctly, the proper officer feels like, or he has availed ITC in excess, and considering the nature, complexity, and interest of revenue, he feels like there is a need for special audit. Okay, then okay, if he feels the need, also still he should take the permission of whom, sir? Commissioner. Then with the approval of commissioner, he can issue directions to the registered person to get his books of accounts audited by a cost accountant or chartered accountant who is in practice. Sir, the taxpayer or the registered person cannot get his books of accounts audited by any chartered accountant or cost accountant he like. Only from a chartered accountant or cost accountant who is notified by the commissioner. Sir, understand it. Okay, a registered person. Proper officer, not below the rank of assistant commissioner, believed that there are reasons for special audit. He took permission of commissioner, then he issued directions. But this registered person is saying like, sir, I already got my books of accounts audited in Companies Act or in Income Tax Act. So do I need to get once again audited? Already one time audit is done now. Yes. Irrespective of the audits already made, special audit has to be carried out if any directions has been given. So now within what time the audit has to be completed, sir? 90 days. However, assistant commissioner extended it for another 90 days. Okay. Once the audit materials has been gathered, observations has been taken, an opportunity of being heard has to be given to the registered person before finalizing the audit by the special auditor. On conclusions of audit findings, that will be informed to the registered person. Then here, sir, since a chartered accountant or cost accountant is going to do the audit here, no. So now who is going to pay the fees to him? Does the registered person or the department? Sir, here it is the requirement of department to get special audit. So the fees also has to be paid by the commissioner, and which is also fixed by the commissioner. So now ultimately the special audit also results deduction of tax not paid, short paid, erroneous refund or excess ITC. What are the four cases, sir? Tax not paid, short paid, erroneous refund or excess ITC. Then again it leads to 73 and 74. Very easy chapter, sir. With this we are winding up with the assessment chapter. Hello all boys and girls. Our next topic is demand and recovery. So demand and recovery topic. Sir, coming to the exam point of view for CMA final exams, this is not an area which is asked frequently. Only quite a few times it has been asked, even in old syllabus or the new syllabus. Okay. So in this chapter, you can do selective study. Only the guest questions or the areas of focus which I say, if you prepare them also, it would be fine. So what are those time limits under 73 and 74 for issue of showcase notice and for issue of order? Majority times the question can be on this. Next one, the modes of recovery. It's a straight theory question. When the taxpayer is not paying the demand, not paying the tax interest penalty even after a demand notice, then what are the recovery proceedings available? Then, if a notice given under 74, 74 notice will be generally given in the case of a fraud or misstatement. If these things are there, suppression of facts, then 74 notice will be given and order will be passed there. Notice will be given under 74. But the fraud cannot be established. Okay, the notice is issued stating the grounds of fraud, but the fraud cannot be established. Then, in such cases, what is the option available? Can they again go back to 73 and continue with the proceedings, or how it could be done? All these things are there. So, these are the three areas of focus. Now, we'll understand the flow, how we'll be coming into this chapter. So, the prima facie thing in GST is like we'll decide whether it is a good or service. Once we decided it is a good or service, then we'll decide whether it is a supply or not. Once we decided it is supply, then we'll look after the levy. Who has to pay tax, either the supplier or recipient or then. Then we'll decide whether it is taxable or not. If it is taxable, then we'll think after, we'll decide the time of supply, value of supply, place of supply. Then if all these are decided, then we'll go for payment of taxes even after considering ITC and adjusting ITC. Once the tax is also paid, then we'll go for the filing of returns. Then we'll go for filing of return. Now, if return is not filed, return has to be filed, no? Then if return is not filed, then demand and recovery proceedings can be initiated. If return is not filed, this is one way. Next, if return is filed, then assessment will be the next step. So when carrying out assessment, they found out like tax not paid, short paid, erroneous refund or wrongly availment of ITC. Then also they can opt to, or they can go to demand and recovery proceedings. Then assessment carried out, but in assessment the proper officer felt like it requires a departmental audit or special audit, and they went for audit. Even the audit outcome is tax not paid, short paid, erroneous refund or wrongly availment of ITC. Then again they go back to the, or then they can initiate demand and recovery proceedings. So demand and recovery proceedings can be initiated from three different, the demand and recovery proceedings can be triggered from 3 points. One is return is not filed, one is return filed, assessment carried out, then they feel like going for, if you see sir, under section 61 I said like there are 4 recourses available to the proper officer when a taxpayer has not given reply to the notice he given to explain the reasons, or reply given but not satisfactory, or he agreed to pay differential taxes but didn't pay it. Then there are recourses available, 4 recourses. What are those? Go for department audit, special audit, inspection, inquiry, set seizure, those things, and the last one is demand and recovery. So from there, assessment they came to demand and recovery, or the last one is like already from assessment they initiated audit. Even the audit outcomes is like there is tax not paid, short paid, erroneous refund, or wrongly availment of ITC. Then demand and recovery proceedings can be initiated. Now, first we look after 73 and 74. Sir. When 73 can be initiated, when 74 can be initiated. Sir, in the both the sections, the common points are tax not paid, tax short paid, erroneous refund, or wrongly availment of ITC. These 4 reasons must be there. Along with it, if it is in case of fraud or suppression of fact, if there is fraud or suppression of fact or willful misstatement, then it would be under 74. If there is other than fraud, willful misstatement or suppression of fact, then it is under 73. Okay, so now we understand when 73 can be invoked, when 74 can be invoked. Sir, this is not 75, sir, correct it to 76. When 76, 76 is altogether a different way, like you collected taxes but not deposited to the government. So some people I might be having a question like, so what is the difference between 73 and 76 or 74 and 76? Sir, here also you are saying tax not paid, short paid. Here also you are saying almost the same. Sir, understand? Where the value of supply actually is 10 lakhs, but you are paying taxes only on 5 lakhs. That means Even you collected from your customer also tax on 5 lakhs only, and on 5 lakhs only you deposited to the government. You didn't pay it on the other 5 lakhs. So on this 5 lakhs tax not paid or short paid. It is may be willful or may not be willful. If it is willful, 74. If it is not willful, 73. So what happening here? You didn't even collected tax from customer and not paid to the government. This is under 73 or 74. When it comes to 76 means, sir, let us assume like it's an exempted supply. Still you collected taxes from your customer, but you are not paying it to the government. So understand, when you collect taxes from customer, you should deposit to the government. If not, section 76 will be initiated. So now going to 73 and 74, sir. And 76 parallel. 73, when it can be invoked? When there is tax not paid, short paid, wrongly availment of ITC or erroneous refund by any reason other than fraud, willful misstatement or suppression of fact. 74, because of fraud or willful misstatement or suppression of fact. When 76, when tax collected but not deposited to the government. So we'll understand time limit for order. Okay, so when 73 has been invoked, then the order has to be passed within 3 years from the due date of annual return or the date of return. Sir, in case of tax not paid, short paid or wrongly availment, tax not paid, short paid or wrongly availment of ITC, for the tax period, there will be financial year. For that financial year, you need to ascertain the last date for due date for filing the annual return. From there, 3 years is the time limit for passing the order under 73. When it is under 74, the same time limit, sir. The same starting point. Due date of filing of annual return. From there, 5 years. If it is in the cases of erroneous refund, from the refund date itself, 3 years or 5 years. For 76, sir, the order has to be passed within 1 year from issue of notice. Once again, repeating the time limit, sir. 73, 3 years. From when? From date of filing of annual return for which the tax paid or short paid or wrongly availment of ITC is related. In case of erroneous refund, from the date of refund to 3 years. In case of 74, instead of 3 years, we should take 5 years. In case of 76, that means tax collected but not paid, the order has to be passed within 1 year from show cause notice. Now the question is, when show cause notice has to be issued? So understand here, 73 and 74 order cannot be passed without issuing a show cause notice. If an order passed without show cause notice, it is not valid. So first they have to issue show cause notice, then they have to pass order. So for order 3 years, then what is the time limit for issue of show cause notice, sir? See here. The show cause notice has to be issued at least 3 months before the order. So order has to be passed within 3 years, no? So the show cause notice has to be given at least 3 months prior to that. That means if for order 3 years, then it is for show cause notice 2 years, 9 months. In case of 74, show cause notice has to be issued at least 6 months prior to the order. That means for order it is, the time limit is 5 years. For show cause notice it is only 4 years and 6 months. Okay, I think like you are able to get it, sir. Whereas under 76, sir, 76 when it comes, sir, tax collected but not paid. Under 76 there is no time limit. Even after 20 years also, if the department finds out like you collected taxes from customer but not paid to government, then they can issue a show cause notice. So in order to understand it in a better way, I have written it in a better way with an example, sir. Let's say the period under consideration. That means we are thinking like tax not paid, short paid or wrongly availment of ITC in between the period 1st August 2018 to 30th November 2018. That means financial year 18-19. And we think like the tax not paid, short paid or wrongly availment of ITC, the department thinks like it is other than by way of fraud or willful misstatement. Now, for this period financial year 18-19, what is the due date for filing annual return? 31st December 2019. From here within 3 years, time limit for order, that is 31st December 2022. But whereas show cause notice has to be issued at least 3 months prior to it. That means within 2 years, 9 months. So time limit for show cause notice is 30th September 2022. Hope so you are able to understand it, sir. Next 74. 74, sir, again the period under consideration for tax not paid, short paid is 1st September 2017 to 31st December 2017. And the financial year here is 31st. So the financial year is 2017 and 2018. 2017, 18. So what is the due date for annual return, sir? Nothing but 31st December 2018. So what is the time limit for passing the order under 74? 5 years. So 5 years means time limit for order is 31st December 2023. Whereas showcase notice has to be issued at least 6 months prior to it, no? So that is 4 years, 6 months. So time limit for showcase notice is 30th June 2023. So this is very important, sir. Out of the whole chapter, these 2 points are very, very important. So please have a note of it. If you didn't understand, again go back and once again listen, no problem. This requires attention. Okay, so let me show you a problem as well, sir, on this concept so that you will retain it much more better way. You could see there is a straight question also. Discuss briefly the time limit for issue of showcase notice under 73 and 74. Next, you could see here also Rahul Associates has been issued a showcase notice on 31st December 2021 on 73 under 73 subsection 1. That means tax not paid, short paid, other than reason by way of fraud. During the period and the period under consideration here is 1st July 2017 to 31st December 2017, and they have given an opportunity for hearing on 15th January 2022. Advise Rajul Associates with respect to submissions to be given. So first of all, we'll check whether the notice given is a valid one or not. See, sir, the period under consideration here is 1st July 2017 to 31st December 2017. That means it is related to financial year 17-18. So financial year 17-18 means the due date for filing annual return is 31st December 2018. The due date for filing annual return GSTR 9 is 31st December 2018. So here notice is given under 73. That means the order has to be passed within how many days, sir? 3 years. The order has to be passed within 3 years means by when? 31st December 2021. Whereas showcase notice has to be issued within 2 years, 9 months. That means by when? 30th September 2021 is the time limit for issue of showcase notice. Because showcase notice has to be given at least 3 months prior to the order, whereas the order date is 31st, time limit for order is 31st December 2021. 3 months prior means 30th September 2021. Whereas in the question, the notice is given under 31st December 2021. So the notice is a time barred one. Time barred one. After the expiry of time period, notice has been given. So it is not a valid notice. So they should drop the proceedings. They cannot continue to proceed under 73. Okay, you can see the conclusion also. Since the notice has been issued after 30th September, the entire proceedings is time barred and deemed to be concluded. Okay, so you understand the essence of this topic, sir. 2 questions in study material, and even in past questions and mock test papers also there are questions on this. So important. So now proceeding to other. Sir, when showcase notice has been issued, okay, where any taxpayer, sir, either is covered under 73 or 74, if tax interest is paid before issue of showcase notice itself, under 73 only, if tax paid and interest paid before showcase notice, then the department will not issue showcase notice and there will not be any penalty also. Whereas under 74, that is by way of fraud or willful misstatement, if they pay tax and interest and even penalty up to 15% on tax. Sir, how much, sir? 15% only on tax, not on interest. Then department shall not serve any showcase notice and the matter will get closed here. However, the taxpayer paid some 3 lakhs as tax, but department feels like the tax short paid or not paid is 5 lakhs. That means there is a difference between the paid and to be paid. So further 2 lakh rupees again they can issue a showcase notice. Now showcase notice is issued. So after issue of showcase notice, if the tax and interest is paid within 30 days, tax and interest under 73, then also the proceedings will be considered as closed. Whereas under 74, if the tax and interest paid before showcase notice, 15% penalty. After showcase notice within 30 days, then the penalty is 25% of tax. Next, order has to be issued. Okay, if no tax is paid within 30 days from showcase notice, then the order will be passed. While passing the order, under 73, a penalty will be levied at 10% of tax. Whereas under 74, sir, it goes up to 50% of tax. So see, notice given within 30 days, no tax interest is paid, then they will be going to proceed with the to pass the order. Even after passing the order, if the tax is paid within 30 days, then under 73, tax interest along with the penalty of how much, sir? 10% of tax or 10,000, whichever is higher. Whereas under 74, it is tax plus interest and penalty of 50% of tax. Okay. Next, if the tax is paid after 30 days of order, under 73, the same penalties are 10,000 or 10% of tax. Whereas after 30 days of order, the penalty under 74 will go to 100% of tax. So let me write it in another way to understand for you better. 73. Before showcase notice only tax interest penalty paid before showcase notice. Then there is no penalty under 73. After showcase notice but within 30 days but less than or equal to 30 days, then also no penalty, tax interest paid. Next, after issue of order but within 30 days, then penalty will be there, sir, 10% of tax or 10,000, whichever is 10% of tax or 10,000, whichever is higher. Next, after 30 days, I mean greater than 30 days from showcase notice, so not showcase notice, sir, order, then also the same penalty, 10% of tax or 10,000, whichever is higher. Next, coming to 74. Coming to 74, sir, where the tax is paid before showcase notice. Before showcase notice itself, the tax interest penalty paid. Then the penalty is 15% of tax. Where after showcase notice, but within 30 days, then the penalty will be going to 25%, sir. If you could see here, the penalty will be went to how much? 25% of tax. Next, after order but within 30 days, after passing the order, the tax interest has been paid, then the penalty is 50% of tax. After 30 days of order also passed, after 30 days, then the tax interest penalty is being paid, then 100% of tax will be penalty. Okay, so this is about 73 and 74. Next, sir, what happens, sir? You are just increasing the penalty only. If not within showcase notice, not within order, whatever you do is not paying, whatever the notice, whatever the order you are giving, is not paying tax nor even penalty. You are just simply increasing the penalty. If he is not paying, what's the use of increasing penalties also? Sir, what happens means, if the payment is not made even within 3 months from demand order, then recovery proceedings will be initiated. Recovery proceedings means, sir, such as like freezing the bank accounts, recovery, withholding the refunds to be processed. So like that they will be doing. Okay. So the next concept is like here. Sir, while already showcase notice is issued for, let's say, August 2018, but subsequently they found out like there is tax short paid or not paid in not only in August, even in September, October, November, December, even in other periods also, there is tax short paid, not paid. So now the question is, do the department again have to issue a showcase notice? No. The initially given showcase notice, which is for August, is enough. Now for the other tax periods which has to be included, for that a statement has to be prepared. Showcase notice given for a financial year, there is tax short paid for other financial years also. So instead of issuing showcase notice for those years, can issue a statement. Now these concepts are little bit tricky, understand, sir. Sir, tax not paid short paid means generally we didn't self-assessed it. I mean, we ourselves missed it, we didn't shown it in the return, and that was not paid or short paid. Then we are levying the penalties actually. Now here there is a question about, sir, self-assessed tax. That means GSTR 3B filed, but the tax not paid within 30 days from due date. Sir, self-assessed tax it is, but not paid. Sir, how it could be self-assessed tax? Sir, in GSTR 1 you reported your outward supplies as 10 lakhs. But in GSTR 3B, you reported it as only 6 lakhs. That means here 10 lakhs on 10 lakhs, sorry, here you reported as only 5 lakhs. On GSTR 1, 10 lakhs on the tax will be 1.8 lakhs. Whereas as per 3B, you paid only 90,000. That means there is a short paid of 90,000 low, 90,000 no, and it is a self-assessed one, sir. It's not like you missed an invoice bona fidely and you didn't pay the tax. Not that case. You shown it in 1, but you didn't pay it in 3B. So, and it is a self-assessed tax. So, in these cases, if there is tax short paid and not paid, if such tax and interest is paid before issue of show cause notice, but after 30 days, after 30 days from due date, but before issue of show cause notice, then no penalty as per 73 is applicable. If any general penalty is there, that has to be paid. If it is paid after show cause notice, then penalty is applicable. So what's new here? Sir, if you see the points I wrote, generally under 73, penalty will come only when the payment is made after 30 days from issue of show cause notice. If the tax interest is paid within 30 days from show cause notice, generally there will not be any penalty in case of 73. But it is in the case of normal taxes. But if it is a self-assessed tax, that means you yourself declaring in GSTR1 that on that tax has to be paid, but you didn't pay it in 3B. So in such case, if show cause notice is raised, then you are liable for penalty. So in other way, we can conclude it as like there is tax short paid, not paid. And for this show cause notice is issued. We need to check if it is a self-assessed tax or other tax. If it is self-assessed tax or other tax. If it is self-assessed tax, if show cause notice is read, then penalty is applicable. Penalty 10% of tax or 10,000, whichever is higher, is applicable. If it is other tax, if it is what? Other tax, then we need to check whether it is paid within 30 days from show cause notice or after 30 days from show cause notice. If it is within 30 days from show cause notice, no penalty. Only if it is after 30 days from show cause notice, then penalty is applicable. Hope so you are able to understand this, guys, sir. So now if you see the para, sir. So what does this table means? So who is the authorized officer to issue a notice or order? Okay. So based on the monetary limits, the board will decide who are the officers that can issue a notice or order. Sir, if the CGST amount is either the tax, interest or penalty together, if the amount is within 10 lakhs, then superintendent of central tax is the person who can issue a notice. If it is IGST up to 20 lakhs, both CGST and IGST together also 20 lakhs. Deputy and commissioner and deputy commissioner or assistant commissioner is the authorized person to issue notice, where the amount only in case of CGST is the tax demand notice is for more than 10 crores up to 1 crore. More than 10 crores but up to 1 crore, then the person authorized is DC or AC. If in case of IGST or both CGST and IGST, then the limits will be 20 to 2 crores. Sir, here not 10, sir, it is 20 to 2 crores. Next, if it is more than 1 crore in case of CGST alone, if it is more than 2 crores in case of IGST or both together IGST and CGST, then the officer authorized is additional commissioner or joint commissioner. Now 75, sir, it talks about procedures. So one point it says, sir, if in the process of this notice given and passing the order, if the applicant or the taxpayer went for an appeal, either with the appellate authority or with the tribunal, the time spent between the appellate authorities has to be excluded while calculating the time period for show cause notice or while calculating the time period for passing the orders. The 3 years or 5 years time limits is there now. While calculating those time limits, the time spent for going for an appeal for the appellate authority of a tribunal has to be excluded. Next, while passing an order, while passing a demand order, OBH has to be given. Before an adjournment can be made maximum of 3 times. Every time the order passed must be a speaking order. That means it should clearly explain what has been included, why it has been included, or why such tax has been levied. Next, the tax, interest, and penalty in the tax, interest, penalty given in the order shall not be more than the tax, interest, and penalty for which it is mentioned in the notice. If in notice they said like 10 lakhs is the tax, interest, and penalty, then in order definitely the tax, interest, penalty should be lower than that. It can never be more than that. Next, even in an order, even in the order passed, the proper officer mistakenly not mentioned about interest, but still interest is applicable. Next, the time spent between tribunals has to be excluded. Sir, now the next question, sir. One more important area. I said like total 3 important areas. No, now the second one. Sir, what happened means Department issued show cause notice initially under 74. That means they think like there is fraud, willful misstatement, or suppression of fact. Now, SSC is not, I mean, the taxpayer is not agreeing with it. He says like maybe there is tax paid or tax not paid or short paid, but there is no fraud, there is no willful misstatement. His argument is like that. So he went to tribunal asking like department wrongly issued notice under 74 since there is no fraud. Now the matter is with the tribunal. Even the tribunal came to know that, okay, even in before the tribunal, department cannot establish that there is fraud, suppression of fact, or willful misstatement. It's a simple thing, sir. Notice given under 74. That means department has to establish that there is fraud or suppression of fact or willful misstatement. No, but before the tribunal, they cannot prove it. So now the notice under 74 is not sustainable. So what happens? Does the proceedings have to be dropped? No. The notice issued under 74 will deemed to be given under 73. Okay, so we need not to drop the whole proceedings. That notice which is given under 74 now will be considered as given under 73. So let us check it with this example. Let's say for financial year 17-18, 18-19, 19-20, there is tax not paid, short paid, or wrongly collected, wrongly awarded ITC. Now notice under 74 has been given under, notice under 74 is given under 2nd February 2023 notice is given. Okay, but taxpayer appealed it and fraud cannot be established. Now what happens, sir? The proceedings will automatically move to section 73. So now notice under 74 itself will be considered as deemed to be issued under 73 notice. But the problem is the time limit for issuing notice under 74 and the time limit for issuing notice under 73 are not same. Okay, you remember that now? For 74 notice, it is 4 years, 6 months. For 73 notice, it is only 2 years, 9 months. So both are not same. So in such cases, what they are suggesting means, see here. Financial year 17-18, annual return to be filed by 31st December 2018. Order, if at all order has to be passed under 73, then it has to be passed by 31st December 2021. And show cause notice has to be issued by 30th September 2021. Whereas the notice under 74 is given under 2nd February. Okay, since fraud cannot be established, this itself is considered as 73 notice, 2nd February 2023. But it is given off for financial year 17-18. But whereas the last date for issue of show cause notice here is only 30th September 2021. It is given on 2nd February. Since it is time back, 73 cannot be invoked for financial year 17-18. Now come to 18-19. For 18-19 also annual return December 19 or 31st December 2022, whereas show cause notice has to be given by 30th September 2022. Whereas the deemed 73 notice is given on 2nd February 23. It is also after the time limit only. So this is also time back, not valid. Come to 19-20. 31st December 2020 is the annual return date. Order date is 31st December 2023, time limit. Whereas time limit for show cause notice is 30th September 2023, whereas the deemed 73 notice is given on 2nd February 2023 itself. So it is within the time limit. So now the proceedings are shifted from 74 to 73. But even though shifted to 73, for 17 and 18 and 18-19, it became time back. So we cannot continue proceedings under 73 for 17-18 and 18-19. We can only continue for 19-20. Okay. Hope so you are able to understand for this concept. Now, next concept, sir, section 17. What does it say in section 77? Sir, you paid CGST, UTGST on a transaction, but it was an interstate transaction. Okay, you paid CGST and SGST, but it was an interstate transaction. So interstate transaction means you should pay IGST, but you paid CGST and SGST. So you paid wrongly, no. So what happens means you should take refund of CGST and SGST you paid, but and again you should pay the IGST along with interest. So are you able to understand? You made a supply, but you considered it as intrastate and paid CGST and SGST, but it is actually an interstate transaction, hard to pay IGST. So what the section is saying now, the CGST, SGST paid initially can be taken as refund. The IGST to be paid has to be paid now along with interest. IGST plus interest has to be paid. The CGST and the SGST paid will be given as refund. Now, the other case, sir, you made a supply, on that you paid IGST, but the tax to be paid is CGST and SGST. What you paid? IGST, but the tax to be paid is what? CGST and SGST. So what happens means the IGST you paid can be taken as refund. Okay, and now you pay CGST and SGST, but now there is no interest. So IGST will be refunded, shall not be required to pay any interest on the amount of CGST and SGST. That is that concept. Next, modes of recovery. I said, sir, this is also an important topic. So, demand notice issued, demand order passed. Even after order passed also, within 3 months, the tax or interest penalty not paid, then recovery proceedings will be initiated. How it would be recovered? Sir, recovered. How the recovery means? Recovery by deduction from any bond. Let's say department has to process a refund with respect to such person. Since recovery proceedings are initiated, the refund will not be processed. The amount from refund will be adjusted to this recovery proceedings. First one. Next, recovery of sale of goods under the control of proper officer. Sir, proper officer detained your goods or detained your conveyances and is asking, he given a demand notice to pay taxes. You didn't pay any taxes, the time period also expired. Then what he can do? He can sell the goods available with him and recover the taxes. Third one, garnishing proceedings. What does it mean by garnishing proceedings, sir? Let's say I am the defaulter. For me, government issued a demand notice, so I need to pay taxes, no? Okay, but I'm not paying. So since recovery proceedings are initiated, what government will do means now, from A, I need to receive 3 lakhs. Okay, A is the debtor to me. So government sends a notice to A. Okay, we know as per the records available with us, you, Mr. A, we know you have to pay 3 lakh rupees to Mr. Maniji. So don't pay 3 lakhs to Maniji, pay that 3 lakhs to the government, and okay, in that way the 3 lakhs can be collected by the government directly from a debtor of the defaulter. Debtor of defaulter. I'm a defaulter, my debtor. From my debtor, the government can collect the taxes. So that is called as garnishing proceedings. Next, fourth one, recovery of by sale of mobile or immobile property. They can sell my mobile and immobile property, and from there they can recover. Next, how the areas of land revenue. If I am not paying municipal taxes, property taxes, how the local authorities will recover the taxes, no? In such a way, even this also can be recovered. Or recovery of fine imposed by magistrate. If any court, a judge imposed a fine, how it would be collected with the use of police force or freezing bank accounts. The same way, these taxes also can be collected. And the same way, how a court order will be executed, same way this recovery also can be made. Next, recovery through surety. Okay, Mr. A acted as my surety. So now, since I am not paying taxes, the government can give notice to my surety and recover taxes from the surety. Next, they can even issue a notice for insolvency. Okay, they can even issue a notice for insolvency since I am not paying taxes. From the insolvency profits, I mean, when the company went to liquidation, from the share of liquidation profits, they can recover their taxes. Next, there is the concept of payment of tax and amount in installments. So let's say, sir, demand notice, sir, from past 3-4 years, the department carried out the assessment and said like, together for the last 4 years, there is a tax short paid of 20 crores. Okay, why short paid means I mistakenly considered it as 12%, but department said like it is 18%. So it's a genuine mistake, bona fide mistake. 6% additional liability has arisen to me. 20 crores amount I had to pay. So what I requested to the officer means, sir, even though it's not my mistake, I bona fidely acted in the transaction. I had a liability of 20 crores now. So I'll be paying that 20 crores to the government, but give me some time. I cannot pay the total 20 crores at a time. So then government may grant me installments to pay the taxes. Okay, interest applicable anyhow. On declining balances, they'll be giving interest. So, but they can give me installments. However, the maximum installment they can offer is 24. See here, taxable person seeking extension or installment apply to commissioner. Commissioner will call for a report of jurisdictional officer about the financial ability. That means whether I can repay the 20 crores at a time or do I really need installments. From like that, they will be taking an inquiry or take a report from the jurisdictional officer. Then if there is any default in paying one installment, they given me 24 installments, no? Let's say I defaulted 7th installment. So if I make 7th installment as a default, then all the other installments will also become due now itself. That means 7th installment only due now. But since I defaulted 7th installment, all the other pending installments also will become now due. That means the total balance tax I have to pay now itself. So I cannot even have a chance. I don't even have a chance to default one installment also. So when installments are not allowed, when already recovery proceedings are on, okay, when already recovery proceedings are on, then you cannot ask for installments, pay the taxes. Next, when not allowed to pay installment in any other preceding financial year. Last year, why it might not allowed to me? Because they think like my financial capacity is enough to pay the tax at a time, or else like I already made certain defaults in the recovery proceedings, or in previously if any installments has been given, I didn't fulfill it properly. So that's why in last year it has been rejected. So in the current year also it will be rejected. Third one, sir, when the amount I am asking for installment is less than 25,000. Next concept, sir, there is one. The last concept is like, sir, when already demand notice is given, understand the question. Government given me a order, demand order passed that I need to pay 20 crores. No, I have a property worth some 15 crores. So what I thought means if I didn't pay taxes means the government will take over my property. So what I did, I transferred this property to my mother name or brother or spouse name for inadequate consideration, 2 lakhs, 3 lakhs. For that amount I transferred to them. So that if government person came, department person come to me for taxes means I simply say, I don't have anything to pay to you. Only this 2 lakhs is available, take this and go. Does the department will do that? So what happens means if already a demand order is issued, after that if any charge is created on the property, that means any mortgage is created or if any transfer of property is made, that is void. Okay, that is void. It is not void only if it is made for an adequate consideration or if it is made with the prior approval of the commissioner, prior permission of the commissioner, then the transaction is valid. Otherwise, it is a void transaction. So they can even sell the property under the name of my wife or under the name of my brother or mother, which I transferred. By selling that property also the government or the department can recover the taxes. This is about the chapter demand and recovery. So we have come a long way till here. Various concepts we understood. When you see assessment chapter, their best judgment assessment order or the regular assessment order can be passed. Okay, then when you come to the demand and recovery chapter, even a demand order can be passed. So now if department passes a assessment order or department or a demand order, the taxpayer who is aggrieved, I mean who is not accepting the orders, can go for an appeal, can challenge that order. Like if he finds like it is not justifiable, okay, he can go for an appeal. So the chapter which we are going to discuss now is appeals and revision. Sir, in this chapter also, you need not to focus on every line and each and every concept. So there are certain areas of focus, just like us when it comes to assessment chapters, almost majority topics are like under the focused area. But when it comes to demand and recovery, I said like only the time limits part for issue of showcase duties and uh, passing the order. Then modes of recovery. Then how a notice under 74 can be considered as deemed notice under 73. Those three areas. Even under appeals and revision also, the areas of focus are appeal to appellate authority, appeal to appellate authority, that also the basic time limits for making an appeal, how department will make an appeal, how taxpayer will make an appeal, that basic process, and that time limit, not time limit, sir, it is pre-deposit. The pre-deposit to be made for making an appeal. So what is the pre-deposit to be made? And as well as tribunal also, when the appeal is made to tribunal, so what is the pre-deposit to be made? Okay, so while making an appeal, an amount has to be deposited in advance. So what is the amount or quantum of pre-deposit has to be made? And next, the third area, sir, there are certain orders on which we cannot go for an appeal. So we are discussing the focus areas of these three. Okay, even though maybe I'm covering the other areas also, but your focus should be on these three areas. These are the expected questions, expected areas where the question might be. Officers under this act, sir. This is section 3. Even this is there under the first chapter as well. So who are the officers under the act, sir? So if you see the hierarchy, inspector or superintendent is the lower level. Above him, assistant commissioner, deputy commissioner, joint commissioner, additional commissioner, commissioner, principal commissioner, chief commissioner, and principal chief commissioner. Once again, we are going now from top to down. Principal chief commissioner, okay, then chief commissioner, then principal commissioner, commissioner, beyond the commissioner, additional commissioner, beneath him, joint commissioner, beneath joint commissioner, deputy commissioner, beneath him, assistant commissioner, next any other inspector or superintendent. Okay, let us dive into the definitions and the concepts also very quickly, sir. Focus. Next, adjudicating authority. Who is called adjudicating authority means the authority competent to pass an order or to take a decision under this act is called as adjudicating authority. Sir, nothing but the proper officer who passed the assessment order, who passed the demand order is called as adjudicating authority. However, these following, I mean, I'm making a table, I'm rounding it as a boxer. The persons who are covered under this box are not called as adjudicating authorities. I mean, even though they are competent to pass an order or to take a decision, but they are not called as adjudicating authorities. Who are those? CBAC, the Central Board of Indirect Taxes and Customs. And next, revisional authority, authority for advanced ruling, appellate authority for advanced ruling, appellate authority, appellate tribunal, and authority for anti-profiteering. So these are authorities constituted for different purposes. So they cannot be called as adjudicating authority. Next, coming to the definition of appellate authority. Who is called an appellate authority? The authority who is appointed or authorized to hear appeals which are referred in section 107. Okay, once again repeating, sir. The authority which is appointed or authorized to hear with respect to appeals referred under section 107 are called as appellate authorities. Next, appellate tribunal. The tribunal, I mean the Goods and Service Tax Appellate Tribunal, which is constituted as per CGST Act, is called as the appellate tribunal. Next, revisional authority. Again, the authority which is appointed or authorized to revision the orders under section 108 is called as revisional authority. So what is called appellate authority, sir? An authority which is authorized or appointed to hear appeals with respect to matters under section 107 is called as appellate authority. The same way, what is called revisional authority, sir? The authority which is appointed or authorized to revise orders as per section 108 is called as revisional authority. Sir, this flow chart, if you see, this flow chart will give an overall understanding of this chapter. Okay, now? So let us see, sir. First, there is adjudicating authority. What there is? Adjudicating authority. So this adjudicating authority passed an order. It could be an assessment order or it could be a demand order. Now, the taxpayer and even the department may be agreeing the order. Agreeing. I mean, they are confirming, they are okay with the order. Then no action. If they are aggrieved, that means they are not convinced or not satisfied with the order. So they want to challenge it. So they can go for an appeal. With what they can go and appeal, sir? With appellate authority, they will go for an appeal. Sir, we'll understand in the coming parts, sir, like who can act as an appellate authority, who will be the appellate tribunal. So all this we'll understand in the process. So now just focus on the overall outer layer or the overall picture of this chapter. Okay, so adjudicating authority passed an order. It could be a demand order or assessment order. Now department or the taxpayer is not accepting such order. He is agreeing with that order. So what he can do? He can file an appeal with appellate authority. Now appellate authority passes an order. Appellate authority order, again the taxpayer or department, again even with the appellate authority order also, if the taxpayer or department is not convinced, is not accepting, so they are agreeing with that, so they can go for a appeal with what? Tribunal. So first, adjudicating authority order. This order can be appealed with appellate authority. This appellate authority order can be appealed with tribunal. So in tribunal there are two different types of benches, sir. One is state bench, and the other one is national bench. Okay, so now when we go for an appeal with tribunal, when it will goes to national bench, when it goes to state bench, where the order, okay, we are appealing is with respect to place of supply, then the issue will go to national bench. Where the order we are appealing is other than place of supply, then it will go to state bench. Okay, so when national bench, when state bench. National bench when the issue is regarding place of supply, other state bench when there are other issues. Now with the state bench order also, either the taxpayer or department is not convinced, then they will be appealing to the high court. Then they will be appealing to what? High court. So see again, okay, adjudicating authority passed an order, you can go for an appeal with applied authority. Applied authority passed an order, with this you can go for an appeal with tribunal. In tribunal there are two benches, state bench, national bench. Okay, when the appeal can be taken by state bench, when the issue is other than place of supply. Now state bench passed an order, with the state bench order you can go for an appeal with high court. However, high court takes an appeal only where there involves a question of law. Where there involves what? Question of law. So there are two things, sir. One is question of fact and the other one is called as what? Question of law. So when we can call it as question of fact and what is called question of law? Sir, let's say I am saying like the 17 subsection 5 itself is an invalid provision. The total 17 subsection 5 has to be striken off. 17 subsection 5 is about what are blocked credits. So let's say on my immovable property, the government is blocking my credit. The department, I mean the GST Act saying like my IDC will be blocked. So I am contending, I am filing an appeal on the section itself. How could you block my input tax, even though just because it is an immovable property? How could you block it? The immovable property is used for my business, so I want to claim it. So if that is my question, okay, if the question or the issue is with respect to such, then it is called as question of law. We are even asking the validity of such provision, validity of such question, interpretation of such question, that is called as question of law. What is called question of fact? Sir, I claim that it is based on invoice, based on an invoice. Now department says like this invoice is forged, this invoice is a duplicate one, this invoice is a dummy one. So now this is a question of fact, there is no interpretation issue, just it has to be proved whether it is a bogus invoice or forged invoice or a original invoice. So then this is called as question of fact. So with respect to question of fact, the appeals can be maximum go till tribunal only. Tribunal is the highest fact finding authority. Okay, when the issue has to be go to high court, then there should involve a question of law. Next, okay, sir, even with the high court order, high court given an order, then high court order also you are not accepting, then you can go to Supreme Court. And the same way, sir, with the tribunal there is national bench with respect to place of supply. If you are not accepting the national bench order, then also you will go to Supreme Court. So now see, adjudicating authority, with this appeal will go to applied authority. Applied authority, from this the issue will be with the appeal will go to tribunal. Tribunal two benches, state bench, national bench. When the appeal is with the state bench, then again the state bench order can be further appealed with high court, but there it should involve a question of law. The high court order can be further appealed with Supreme Court, whereas the tribunal is national bench. The national bench order can be straight away appealed to Supreme Court, not with high court. Okay, now see who is called appellate authority. Sir, we cannot say like only these are called appellate authority. The appellate authority will be decided based on the adjudicating authority. If let's say assistant commissioner is the adjudicating authority, then we'll decide the appellate authority. If joint commissioner is the additional is the adjudicating authority, then there might be a different appellate authority. So see, if the adjudicating authority is additional commissioner or joint commissioner, so additional commissioner or joint commissioner is what, sir? Adjudicating authority. Then who will be the appellate authority? Commissioner. If you see the hierarchy we wrote, sir, in this chapter, let's say if additional commissioner or joint commissioner, these two are adjudicating authorities, then who is higher rank to him, sir? Commissioner. So commissioner will act as appellate authority. If at all this deputy commissioner, assistant commissioner or any other officer acted as adjudicating authority, then the additional commissioner and joint commissioner will be acting as the appellate authority. So if you see, additional commissioner and joint commissioner, in certain cases they themselves are adjudicating authorities, in certain cases they are becoming appellate authorities. In simple, the officer above the adjudicating authority rank will be acting as appellate authority. So see here, sir, once again. Okay, so if the adjudicating authority is additional commissioner or joint commissioner, then commissioner will be the appellate authority. If the adjudicating authority is deputy commissioner, assistant commissioner or superintendent, then the appellate authority will be any officer not below the rank of JC, that means joint commissioner or additional commissioner, they will be acting as appellate authority. So now see the process of appellate authority. The taxpayer, he is not convinced with the order of adjudicating authority, so he is aggrieved. So he can file an appeal within 3 months from date of such impugned order, date of within 3 months from date of service of such impugned order. That means we are challenging the adjudicating authority order now from when such order has been communicated to me. Okay, from then within 3 months I need to make an appeal with the appellate authority. However, appellate authority can condone the delay for a period of 1 month. Next, department. Department has to make the appeal within 6 months. Okay, from when, sir? From the date of service of such adjudicating authority order. However, even for department also there is a condonation of delay possible up to 1 month. Sir, adjudicating authority is also department. Even now, department itself is going for appellate authority. I didn't understand, sir. Then why in the first instance itself adjudicating authority can pass an order properly, no? Why again they themselves pass an order and on that order itself they are going to appellate authority, no? That means, sir, adjudicating authority means a rank below the appellate authority, no? So initially he passed an order, sir, but commissioner reviewed it. Okay, reviewed it and he found out like there are some tax, there is some tax laws or certain provisions has not been considered, then the commissioner will direct the officer, jurisdictional officer, to go for an appeal in such cases. Okay, there is no fees for filing appellate authority, sir. Fee is not there, but there is pre-deposit. Okay, there is no fees. What is the pre-deposit, sir? Let's say, sir, adjudicating authority passed okay, adjudicating authority passed order like the tax has to be paid is 10 lakhs, interest 2 lakhs and penalty 1 lakh. Okay, now out of this nothing you accepted, you said like nothing has to be paid, then what is the pre-deposit means? Out of this tax 10 lakhs you need to pay 10% as pre-deposit. That means 1 lakh you should make as pre-deposit. Second case, sir, the tax 10 lakhs, interest 2 lakhs and penalty 1 lakh. Okay, this is the amount as per adjudicating authority order. Now out of this you accepted tax 5 lakhs, you accepted interest 1 lakh, you didn't accept anything as penalty. So now first you should pre-deposit the amount you accepted. How much you accepted? 6 lakhs. Next, plus what is the amount of tax you are contending, you are not accepting? 5 lakhs I accepted, that means 5 lakhs I am not accepting. Out of this 5 lakhs into 10%, which is another 50,000. So the total pre-deposit to be made in this case is 6 lakh 50,000. So the pre-deposit is the total amount of tax, interest, penalty accepted plus the total amount of tax which is disagreed, which is not accepted, into 10% is the pre-deposit to be made by the taxpayer, by the registered person who is going for an appeal. Where department is going for an appeal, there is no pre-deposit, and while making an appeal for appellate authority, there is no fees required. Okay, sir. Next, what are the other points? Sir, the appeal has to be made by the taxpayer in APL 01, and when the appeal is filed, a provisional acknowledgement shall be issued. So what would be considered as the date of filing of appeal? Sir, we are challenging the order, no? Adjudicating authority order. We should check whether such adjudicating authority order copy is available in the common portal, or if it is a manual order, it will not be available in the portal. So you should check the order you are challenging is already available in the common portal or not available. If it is available, then the date of provisional acknowledgement itself will be the date of filing of appeal. So see, sir, the order copy available in the portal, then the date of appeal is nothing but date of filing of appeal, nothing but provisional acknowledgement issued date itself is considered as the date of filing of appeal. If order copy not available in the portal, that means maybe such order passed manually. Okay, then within 7 days from date of issue of provisional acknowledgement, the order copy self-attested should be uploaded in the portal. Okay, in the appealing portal. So if it is uploaded within 7 days, then the date of provisional acknowledgement, see here sir, where the order uploaded within 7 days, then date of provisional acknowledgement will be considered as date of appeal. If not, whenever you upload the order copy, that day itself will be considered as the date of filing of appeal. If department is filing an appeal, it will be filing in, okay, APL 03 sir. Next, the process sir. Appellate authority has to follow the principles of natural justice. That means it should consider, like as a court system, like they should uh, verify the details given, evidences given. Based on that only they could decide whether an appeal has to be disposed, modified, confirmed. So those things. Next, appellate authority can make further inquiry. Appellate authority, if needed, it can make further inquiries and either confirm the original order or modify the original order, can even nullify the original order. It can do anything, but it can no case refer back the case to adjudicating authority. Okay, it cannot say like, okay, Mr. Officer, you did it correctly. Again, go back and correctly do the assessment and come back to me. Like that, referring the case back cannot be made. Next, appellate authority can also increase the rigor. That means adjudicating authority fixed the tax as 10 lakhs. Now, appellate authority can make it as 15 lakhs. But whenever the rigor is being increased, an opportunity of being heard has to be given to the taxpayer. What's up? Whenever the rigor is going to be increased, an opportunity of being heard has to be given to the taxpayer. Okay, next one sir. Whenever an order is given, order always should be a speaking order. Next, the appellate authority in general advisory time limit to dispose is 1 year. However, in this, while calculating this 1 year, if any court stay is provided, such stay period has to be excluded. Okay, next, once the order is disposed, once the appeal is disposed, a final order will be passed. Such order has to be given to appellant, respondent, and even to the adjudicating authority. Whatever the order passed by appellate authority is binding on department as well as on the taxpayer. We cannot say like I will not follow this order. It is binding on us unless we go for a further appeal. So this is about the appellate authority process. So now we are into the concept of revisional authority. Okay, sir, what is this revisional authority? Sir, the government, the department side, they want a foolproof system, sir. Let's say adjudicating authority passed an order. On this order, in this order, the department came to know that the officer who passed initially the order did certain calculations properly or didn't consider certain evidences or gatherings. So it was erroneous. That means not calculated properly. So what the commissioner can suggest him? He can suggest him to go for an appeal. But the appeal by department has to be made within 6 months now, or within extended period of 1 month now. Now what happened means such time limit is expired. If such time limit is expired, department cannot go for an appeal. Then in such cases, department will be suffering with revenue loss. No, they are affecting here. So to safeguard the interest of revenue, they even introduced the concept of revisional authority. Now what happens means this revisional authority can take up the case. Okay, you understanding my point? If within 6 months they identified that there is some erroneous order has been passed, then department can go for an appeal. If after 6 months they found out means, then they can go for revisional authority. Okay, so now see first who can act as a revisional authority. Same like as appellate authority only, sir. Little difference, that means, okay, where the adjudicating authority is additional commissioner or joint commissioner. Then the revisional authority may be principal commissioner or commissioner. Where the adjudicating authority is deputy commissioner, assistant commissioner or superintendent. Then the revisional authority be additional commissioner or joint commissioner. Okay, so now see the process. So revisional authority, even though nobody suggested, nobody referred to it, revisional authority on its own, it felt like in a particular case, the adjudicating authority passed an order erroneously. See sir, revisional authority is view of that the decision or order passed by an officer subordinate lower to him is erroneous and it is prejudicial to the interest of revenue. Against to the interest of revenue, there is tax loss because of it, and it is illegal or improper on consequences to the or even on consequences to the observation of C&AG. C&AG CAG will do audit, no, in such audit it found out such it given certain observations like there is revenue leakages here. So consequent to such observations, or it found out like the order passed by the subordinate is erroneous, prejudicial against to the interest of revenue, and it is illegal or improper. In such cases, revisional authority on its own can take up an order and can revise it. Or if the SGST commissioner or UTGST commissioner found out that one, and then he requested the revisional authority to take up this order for revision, then also they can take up for revision. So but the revision can be taken only after 6 months from date of communication of original adjudicating order and within 3 years. That means the appealable time limit has to expire, then only revisional will apply. Okay, for going to revisional authority from date of communication of order. Next, issue taken by revisional authority is already subject matter of appeal. Sir, let's say we wanted to revise it, sir, for X. I mean, let us take it. Department, sir, it wants to go for revisional authority in the issue of X. But what happened means, with respect to the same kind of issue, already an appeal is pending with Y. So now department is waiting for the judgment which will be there in the Y case. Okay, so if in Y case the decision comes in favor of department means then department will revise the order of X. Okay, if it is comes in favor of the decision of X means then in favor of Y means then they will not revise the order in case of X. So with respect to taking up for X issue, they are waiting for the result of Y's appeal. Okay, so now what they are saying means, sir, generally appeal process will take a lot of time. No? It may go for tribunal, court, high court, supreme court. So if such long time is waited, they are going to wait means then here the revisional authority time limit will get expired. So what they are saying means, if department is waiting for Y's result, Y's appeal result, then the time spent for the such appeal process has to be excluded while calculating the time limit for appeal, revision, time limit for revision. Okay, hope you are understanding this, sir. Now, revisional authority will also make inquiry and necessary it passes the order, either enhancing the tax or modifying, annulling the order. So, and it should issue a summary of order also whenever it is going to increase the rigor, whenever it is going to increase the rigor, an opportunity of being heard has to be given. So, this is about the revisional authority. Sir, before going further, there is one more important area, sir. I already, in the starting of this chapter also I said, there are certain orders. Sir, revisional authority concept finished. Appellate authority concept finished. Now I am talking about orders with respect to which we cannot even go for an appeal. What are those? An order of the commissioner or authority empowered to direct the transfer of proceedings from one officer to another officer. So let's say an assessment, an assessment has been carried, a demand order has been passed on maybe, or else in certain, let me frame it in a different way. Assessment is carried out on my records. An assessment is being carried out. Now, my assessment is being carried out by an officer called X. Now, an officer passed an order to transfer my assessment proceedings from X to Y. Now, I don't like such order because X is good friend of me, so he'll pass assessment order like in favor of me. So I want only X to do my assessment. But the department officer passed an order like the proceedings has to be transferred from X to Y. Now I want to challenge the order of transferring my case from X to Y. This cannot be appealed. That is the first point. Next, second point, sir. An order pertaining to seizure of retention of books. Sir, my books are an order already passed to seize my books. Okay, my books has to be seized. So now I cannot challenge the order of seizing my books. How could they seize? They shouldn't seize. So like that I cannot appeal an order on seizing the books. Why? Because even though they seize the books, they'll give me photocopies. Whatever the photocopies of books I want, I can take them. Next, they will not retain my books for forever. Okay, they will be returning once they verify for a reasonable period of time, they'll retain with them, then they'll go to return it to me. So I cannot go for an appeal on them. Third one, sir, on an order of sanctioning prosecution. Sir, an assessment or in a process is being carried out with respect to my assessment. There a prosecution is there. Prosecution means calling the evidences and questioning them, whether a supplier has really made to you, whether you really supplied goods to this person. Like that, the questioning may be carried out. Such questioning, I'm saying like, you cannot make such question. questioning you cannot do. Whatever I say, you should believe. Like that, I cannot say. So, an order questioning the prosecution cannot be appealed. Next, an order passed under Section 80. Section 80 is about the demand and recovery chapter, sir, installments. Let's say I asked to give me installments with respect to the demand order passed. Okay, then they given me certain installments, like 18 installments given. Why I'm going for an appeal on that. Why they are giving 18 installments? I want 24 installments, like that I cannot go for an appeal. So there are 4 areas where you cannot go for an appeal. An order transferring the proceedings from one officer to another. Second one, an order seizing the books of accounts. Next, an order giving the prosecution an order with respect to number of installments. So these orders cannot be appealed. Next, sir, generally revisional authority cannot exercise the revision where the time limit is expired, or the order to be revised itself is the revisional order, or the order to be revised is already pending with appellate authority, tribunal or high court. So they will decide. Now why again revisional authority in such case? 3 cases I said, sir. When time limit is expired, then revisional authority can take up. Then second one, sir, when revisional authority, the order to be revised itself is the revisional order. Third one, the revisional authority wants to revise an order, but already this order is pending with appellate authority, tribunal or high court. So then they will decide. Revisional authority need not to interfere. So this is about the revisional authority. So now we are into the concept of what, the appellate tribunal. So we know there are 2 kinds of tribunals. What are those, sir? One is, sir, one tribunal, but under the tribunal there are 2 benches. One is national bench, other one is state bench. So with respect to issues of place of supply, national bench will hear that appeal. If it is an issue with respect to other than place of supply, state bench or area bench will hear the appeal. So see the process, sir. So see, with respect to state or area bench other than place of supply, and the order passed by state bench will be appealed with high court. And national regional bench, the issues which will be heard by national bench or regional bench is place of supply related issues. And if such national bench order has to be appealed, then it will directly go to Supreme Court. Now we'll just see the process. Aggrieved person, I mean the taxpayer, he is aggrieved with the order of appellate authority. Then he can file an appeal with appellate authority, that also within 3 months. Within 3 months from date of communication of order. So here there is plus 3 months. Now this is nothing but condonation of delay. In general, the appeal has to be made within 3 months. However, condonation of delay is possible for a period of another 3 months. Next, department also has to make the appeal within 3 months. However, condonation of delay is possible for another 6 months. So when can department can go to the tribunal? Either the commissioner on his own, or on recommendations of CGST, SGST or UTGST commissioner. Like in the appellate authority order also, it was not justifiable. They feel like the appellate authority itself has some flaws, it has to be rectified or it has to be further reviewed, then they can go for appellate tribunal. So appellate tribunal, whenever they receives an appeal, then they will send a notice to the respondent. That means when taxpayer files an appeal, then respondent will be the department. When department files an appeal, then the respondent will be the taxpayer. To the respondent, a notice will be given to file memorandum of cross objections within 45 days. So this guy filed an appeal. So what are your objections? Okay, can we accept this guy's contention or any cross objections for you? If you file any cross objections, then we'll listen to those both the issues, then we'll decide. So the appellate tribunal will ask to file the memorandum of cross objections. Next, sir, here if you see where the tax involved or ITC involved or the total penalty involved does not exceed 5 lakhs, then in a bench there are generally 3 members, sir. But where the tax involved, ITC involved or the penalties together, everything involved is less than 5 lakhs. Okay, less than 5 lakhs. Then it has to be listened, it can be listened by a single bench. Okay, single member bench. Okay, in that bench there will be only 1 member, sir. And it should not involve any question of law. If question of law is involved, then even though it is less than 5 lakhs, all the 3 members will listen. If there is no question of law and the amount is also less than 5 lakhs, then 1 member will listen to the case. Next, appeal will be filed in APL 05, sir. Whereas department will file in APL 07. So this is an important point, sir. Last attempt, it was the first MCQ in new syllabus. The fee for filing an appeal is 1000 for every 1 lakh or rupees 25,000, whichever is lower. The fees for filing an appeal. Sir, for appellate authority there is no fees. For tribunal there is fees. For every 1 lakh 1000, maximum 25,000. Sir, if there are appeals made with respect to 2-3 issues, then consolidatedly we cannot decide fees. For every appeal, the fees will be separately. Okay, now the appeal shall be treated as filed only if the final acknowledgement is issued. Next one, sir, this one part is also where the ATC involved or the tax involved or the fine penalty is involved is less than 50,000, then the tribunal can even reject to take the appeal as well. If the amount involved is less than 50,000. Okay, pre-deposit, very important, sir. Again, pre-deposit. So what is the pre-deposit here means, sir? Again, pre-deposit, tax, interest, penalty. Let's say tax 40 lakhs, interest 10 lakhs, and penalty is some 5 lakhs. Let us take in this way, sir. Tax 40 lakhs, interest 10 lakhs, penalty 5 lakhs. Okay, nothing is accepted. So what they have to do means out of this tax 20% has to be made as pre-deposit. That means 8 lakhs is the pre-deposit. Sir, understand, when the only when the appeal went to appellate authority, then only the appeal can be made to tribunal. Straight away we cannot make an appeal to tribunal. So maybe the adjudicating authority first it was appealed with appellate authority. Even the appellate authority is also with the appellate authority order also the taxpayer or the department is not convinced. Then they will be coming to the appellate tribunal. So at the time of appellate authority also a pre-deposit has been made. 10% of the tax plus the amount accepted. Okay, so the pre-deposit which is to be made at tribunal is in addition to the pre-deposit which is made at the appellate authority. Okay, let's say already 10% of tax, some 5 lakhs is already made at the appellate authority level. So now while making pre-deposit to tribunal, 20% is given. So you cannot say like already 10% paid at appellate authority level, now I'll pay only balance 10%. No, it's not in that way. The appellate authority, with the appellate authority, whatever is the pre-deposit you made, that is there. When you are going for an appeal with tribunal, additionally you have need to deposit another 20% of tax. If any amount of tax, interest, penalty is accepted, that you have to pay. The 20% is applicable only on the tax which is not agreed or which is not accepted. Okay, I hope you understand this, boys. So let us look after a question here, sir. Sir, see question number 4. Pursuant to an audit, demand notice has been issued. Okay, joint confirming a demand of 54 lakhs, CGST 27, SGST 27 lakhs, and impose the penalty equivalent amount. That means equivalent to 54 lakhs penalty imposed. Since Shine Makers does not agree with the order, so they are not convinced with the order of paying 54 lakhs tax and 54 lakhs penalty. So it decides to file an appeal with appellate authority against the order. It has approached you to advise. Okay, so they came to us to advise. So what are the, can Shine Makers file an appeal with appellate authority against the adjudication order passed by joint commissioner? Yes. Even the joint commissioner also. Then who will be acting as appellate authority, sir? Commissioner. Next, if yes, till what date appeal can be filed? Sir, the appeal has to be made. See the answer also, sir. Okay, appeal has to be made within how many days, sir? Within 3 months. However, condonation of delay is possible up to 1 month. Okay. Next, second question. Does Shine Makers need to approach both central and state authorities for exercising the right of appeal? No. We need not to go for both the authorities. Let's say adjudicating authority is passed, the adjudicating authority is a central authority, then go for the appeal with central authority. If it is a state authority, go for the appeal with the state authority. Okay, you need not to file two different appeals with two different authorities with respect to one issue. Okay, you can see here. Make provisions for cross empowerment. That means the order passed by one officer can also be considered as an order passed by SGST officer. Okay, is treated as proper officer under SGST Act. Next, third question, sir. Shine Makers is of view that there is no requirement of pre-deposit. No, it's wrong. Whenever you are going to appeal for a appellate authority, a pre-deposit of 10% of tax, which is disagreed. Okay, if any tax, interest, penalty is agreed, then the total amount has to be paid. Okay, that is one question, sir. Next, this is the question, sir. Question number 5. X Limited received a demand notice for Department Assistant Commissioner, which says like tax 5 lakhs, interest 15% per annum, and the penalty 10% of tax or 10,000, whichever is higher. Now, what the question they are asking, sir? SSC went for an appeal with appellate authority. Appeal heard on 6th October. Now, case 1. How much pre-deposit has to be made when the appeal is made with appellate authority? Case 1. Okay, if the whole amount is contingent, okay, they are not agreeing single rupee also. Case 2, in this case they are appealing only for part of amount 3 lakhs, that means they are agreeing 2 lakhs as tax, only for the other 3 lakhs they are going for an appeal. So see here, in first case, since the total 5 lakhs is disputed, 5 lakhs into 10%, 50,000 is the pre-deposit to be made. 10%, no, that's right. In the second case, 2 lakhs they agree, accepted. So only 3 lakhs is the disputed. So 3 lakhs means, so that means 3 lakhs into 10%, 30,000 plus the amount accepted 2 lakhs. So the total pre-deposit to be made in this case is 2 lakh 30,000. So there is an additional question. Considered the appellate authority passed the same order. Whatever is the adjudicating authority order, the same order is confirmed by the appellate authority. Now the appeal went to tribunal. So now they are asking what is the pre-deposit to be made with the tribunal. Sir, whatever you made with the appellate authority, that is already you paid. In addition to that, you make some pre-deposit when you are going for an appeal with the tribunal. So what is that, sir? Pre-deposit is rupees 1 lakh. That means 5 lakh into 20%. If the total amount is not agreed, okay, now if the total amount they are having a differences, they are not accepting, then total amount into 20% on this pre-deposit has to be made. If they accepted 3 lakh out of 5 lakhs, 2 lakhs, they are accepting it as their liability. Okay, so that's why they already paid when they are making an appeal with the appellate authority itself. Now what they have to pay? Find out the disputed amount. Disputed amount how much? 3 lakhs. Now plus 3 lakhs into 20%, this is 60,000. Okay, so now they have to pay not additionally 2 lakh 60,000 or not 2 lakh 60, just 60,000, because already they paid 2 lakh 30,000 now. So this is a question. Okay, so these are important questions, sir. Please don't neglect them. Even though if you didn't understand, since I am going in a rushed way, you can come back and listen one more time, follow this material and do these questions for sure, sir. They are going to be asked in exams. Okay, so now what is the process of tribunal, sir? Tribunal may modify, confirm or nullify this order, or refer back the case to appellate authority or even to revisional authority. Tribunal can maximum adjourn a case for 3 times. Advisory time limit for disposing the appeal is 1 year. Okay, na? Once the order is confirmed, then they can pass the order copy to revisional authority, appellate authority, and even to the jurisdictional authority, and even to the appellant. Once a tribunal passes an order, it is binding on the taxpayer as well as on to the department, if it is not appealed with High Court or Supreme Court. Next, rectification of errors. Sir, if tribunal passed an order and if any mistake is there in that, then the tribunal on its own or by an application by commissioner or by the taxpayer, it can rectify such error. Okay, only within a period of 3 months, if it is brought to their notice, then they can rectify it. But however, if such rectification increases the tax liability or decreases the ITC availability or admissibility, then OBH has to be given. Okay, next one, sir. If we made pre-deposit, sir, understand this point is also important. We made a pre-deposit, but the tribunal or appellate authority say passed order in favor of the taxpayer. Me being a taxpayer, while going for an appeal, made some pre-deposit, but the appellate authority tribunal passed an order in favor of me. So they have to refund back me the pre-deposit. No, so now they have to refund me the pre-deposit along with an interest at a rate of 6% per annum. From when to when? From the date of pre-deposit to the date of refund. Interest has to be paid at a rate of 6%. Understand, sir? Not from refund application 61st day. Refund has to be made along with interest from date of pre-deposit to the date of refund. Okay. Next, an authorized representative can appear behalf of the taxpayer. He can be a relative, regular employee, advocate, CS, CMAs, CS, gazetted officer, but he shouldn't be dismissed from government services. He is not convicted with an offense, or he is not found fraud, guilty, misconduct, and is not adjudged as an insolvent. Now the last two cases, sir, when the appeal can be made to High Court. The High Court, whenever an appeal has to be made to High Court, it should involve substantial question of law. Generally, when you are making an appeal to the High Court, the total amount of tax, interest, penalty, okay, even though which is disagreed, disputed amount also has to be fully deposited. However, High Court may stay such thing, okay, instead of, okay, if you make a request to the High Court, then High Court may stay regarding the pre-deposit. High Court, the time limit for filing an appeal. Okay, next one, sir. Civil code of procedures has to be followed. Next, Supreme Court. So when the appeal will be went to Supreme Court, sir, either from national bench directly to the Supreme Court, or when the order of High Court is passed and High Court made a comment like this is fit for taking it to Supreme Court, then the appeal will be with the Supreme Court. Even Supreme Court, when the appeal is being made with the Supreme Court also, tax, interest, penalty fee, even the disputed has to be deposited. But however, Supreme Court can give a stay. This is about the Supreme Court and High Court, sir. This part already I discussed. Appeal not to be filed in certain cases. When there is transfer of proceedings from officer to officer, when the tax is agreed to be paid in installments, I am questioning about that installment. Such appeal cannot be made. Third one, sir, when the books of accounts are seized, you want to make an appeal with respect to such seizure, cannot be made. Fourth one, when prosecution, an order has been given with respect to prosecution, you cannot appeal such order. This is about the appeals and revision. Hope I gave you crystal clear clarity about this chapter. Okay, thank you all. We'll meet you in the next chapter. Hello all, welcome. Now our chapter is advanced ruling. So advanced ruling. Why advanced ruling? First we'll understand. Then I'll even tell about the areas of focus. So let's say that a person, let's take his name as A. He wants to commence a new business. He may be a foreigner or within India, non-resident or even resident, whoever he may be. He wants to start a new business, or he's already doing business, but he wants to come up with a new kind of product. Now, he's having some questions regarding what is the taxability of these goods, or whether these are exempted or not, what will be the value of supply, how these are going to be valued, or if there is any kind of notifications or their exemption kind of, can he take such exemption notification? Like this is having lot of questions. Okay, now he cannot take his own assumption and can fix to one thing. What happens means if he take his own assumption and decides on his own and he move on to do the businesses, then in future, maybe after 2 years, 3 years, 3 years, department may come and says like the approach you took is absolutely wrong. So it should be in a different way. So you need to pay taxes. So because of this, the whole business will be in a problem. So that's why, in order to have certainty, in order to have such clarity prior to the commencement of business or prior to doing such transaction or making such supply, in advance itself, you will go to the authorities and you put your question. Then they'll decide whether it is applicable or not, whether it is taxable or not, whether it is exempted or not. So they will be giving you a confirmation. So then in future you will not be having any litigation. So that's why we are going for advanced rulings. So in this chapter, sir, first of all, this chapter is a simple chapter. There will be only 2 pages in this. Out of this also there are 3 areas to be focused. So these 3 areas, like 3 small paras, like all the 3 paras will come to some 1/4 of the page. What are those? Objectives of advanced ruling. Why an advanced ruling has to be taken? What are those objectives? Next, in with respect to which a question to advanced ruling can be made. What are the questions with respect to we can take advanced ruling? Third one, if advanced ruling order is passed, if there are any mistakes, how they could be rectified. So these are the 3 areas to be focused. So now I'm going into the concept, sir. Now what is called advanced ruling? Sir, I explained it in a better way. If you see the definition, it says like, see, the authority, the decision given by authority for advance billing or appellate authority for advance billing. So there are two authorities constituted, sir. One is authority for advance billing. An authority, I mean, authority means same as like appeals and revision chapter on this, so you need not too much worry about it. Who will be their commissioner, joint commissioner, that and all not required for us. So if any authority is constituted as appellate authority, sorry, authority for advance billing, the order or the decision taken by it or the appellate authority for advance billing, if any decision taken by it with respect to questions under section 1 or 97 subsection 2 or 100 subsection 1, then they are called as advance billing. Not understandable now. What I said is only better now. So when we are going for a new business or coming with a new products, we are having various questions regarding exemptions, taxability, value of supply, like that. So we cannot take a decision on our own. If we take, then in future there might be litigation. So that's why we want a clarity, certainty. So we'll go for a authority. We'll go with the authority and we'll put our question. They'll give a decision. That is called advance billing. If such a decision given by authority for advance billing is not convincing to us, then we'll go for appellate authority. Then the decision given by them is also called as advance ruling. Now understandable? Okay. Now authority for advance billing and appellate authority for advance billing, these are constituted under SGST Act. They will not be there under CGST Act. So the authorities which are constituted under SGST Act will be deemed to be authorities under CGST Act also. Now we'll see what are the objectives for going for advance billing. First one, to provide certainty in tax liability. Okay, in future, okay, you thought it is 12%. In future, if the department says again 18% means you have to pay the additional 6% from your pocket. So that's why you'll have a certainty of tax liability. Next, it reduces litigation because first itself you are taking advance billing and it is everything is clear. So there will not be any future litigation. Third one, the rulings will be pronounced in a expediently and a transparent manner. So they give rulings in a faster way and also in a transparent manner. So you'll understand and you can rely on them. Fourth one, sir, since prior to the business itself, you are having clarity, you are having the certainty of tax liability, and you have an understanding that there is no future litigation. So it will attract foreign investments, to attract FDI, ensuring certainty in taxation aspects. So there are four objectives. One is there is certainty in tax liability, reduced litigation, next pronounce rulings in an expeditious and transparent manner, and attract FDI. So the code for this particular objectives are like CRPF. What are CRPF? Are certainty in tax liability, reduced litigations, P for pronounce rulings in an expeditious and transparent manner, F for attract FDI investments. Next, questions on which advance ruling can be made. What are the areas with respect to which you can go for an advance ruling? So here also there is a code, sir. Viral cat, that means V for value of supply related, I for ITC admissibility, R for whether registration is required or not, A for whether an activity carried out amounts to supply or not, L with respect to liability, how the liability has to be decided, FCM or RCM. Next, C for classification. Classification only decides about the tax rate. Next, A for applicability of a notification, and T for time of supply. So what are the areas with respect to which we can go for advanced billings are viral cat, V for value of supply determination, I for ITC admissibility, R for registration requirement, A for activity carried out amounts to supply or not, L for whether liability, who has the liability determination, viral. Next, C for classification of those goods services. Next, A for applicability of a notification, and the last T is for time of supply determination, viral cat. Next, we'll see the procedure. Okay, already out of two important areas completed. Applicant, sir, the person who is going for advance billing can be a registered person or even can be an unregistered person, because before commencement of business also we can go no. That's why he can be unregistered also. Files an application along with fees to the authority for advance billing. Then authority for advance billing will send a copy to the concerned office. Like I got a application regarding these questions. So give me the relevant details for me to analyze it. So then the proper officer, the concerned officer will provide relevant facts. Then examines the application, authority for advanced ruling. It may admit the application or even reject the application. When it can reject the application, if already such question is pending with authority for advanced ruling, already the same question is pending. Now again, why to take up another case? So they can reject that one. Or already it is decided by a tribunal or court. Okay, already a settled matter by tribunal or court cannot be again altered or can be interpreted by the advanced ruling. So that's why those questions will be rejected. Whenever an application is rejected, it should be speaking order. That means it should clearly explain the reason for rejection. Next, when the application is admitted, then the ruling has to be given within how many days, sir? 90 days. Sir, here in the appellate authority for advanced ruling, there will be two members. However, those two members are having two different opinions. There are two members. Two members are having two different opinions. Then they cannot take a decision. The case will be referred to appellate authority for advanced ruling. Okay, now? Now, with appellate authority for advanced ruling, either the applicant or even the jurisdictional officer, whoever is aggrieved with the or not convinced with the order of appellate authority for advanced ruling, then they can come to the appellate authority for advanced ruling. So see here, sir. An appeal with appellate authority for advanced ruling has to be made within 30 days from the order or ruling of authority for advanced ruling. Then here the application fee for jurisdictional officer, no fee. For applicant, 10,000. Sir, for authority for advanced ruling, the fees is 5,000. For authority for appellate authority for advanced ruling, the fees is 10,000. For jurisdictional officer, there is no fee. Even the appellate authority for advanced ruling shall also pass the order within 90 days. Wherever here in appellate authority for advanced ruling also there are members, no? If all those members cannot come to a common conclusion, then it will be considered as no ruling has been made. Authority for advanced ruling can either confirm the original ruling or even modify the ruling. So now, in order a ruling has been made by authority for advanced ruling or appellate authority for advanced ruling. Now there is an error, omission or mistake which is apparent on record. Okay, which could be seen. So how such error or omission can be rectified? They can amend or rectify within 6 months from the order. Only within 6 months they can rectify. Afterwards, there is no concept of rectification. When either they themselves found out like there is an error, they can rectify themselves. Or if it is brought to their notice by jurisdictional officer or applicant, then they can amend it. However, if it may adversely affect the applicant, that means initially they said like 12% as tax rate in the initial order, but actually it is now coming to us 18%. In such case, it is adversely affecting, then in such case, OBH has to be given. Next, applicability of advanced ruling. Sir, once a advanced ruling has been taken, it is binding on the applicant and even to the concerned officer of such jurisdiction. There is no fixed time period, like how long the advanced ruling is applicable, whether for 1 year, 6 months. There is no such time limit. Unless until the facts does not change, the advanced ruling continues to be applicable. Okay, advanced ruling given to one person may not be make it applicable for other persons. Maybe the situations may change, so we cannot confirmly say like the advanced ruling to X given to X is applicable even to Y. Sir, in certain cases, advanced ruling is void, sir, when the ruling is taken by way of providing false information with misrepresentation, fraud, suppression of facts. Then the ruling given can be void. However, before making it as an void, making it void, to the applicant an opportunity of being heard has to be given. Okay, so powers and procedures, the same as like principles of natural justice, and they are empowered with the powers of civil code. All those will be there. So once again, I'm saying like 3 areas of focus. One is like objectives. What are the objectives? CRPF, certainty in tax liability. R for reduced litigation. P for pronounce the ruling in an expedient and transparent manner. F for attract FDI investment. These are the objectives. Next, questions with respect to which advanced ruling can be sought or asked. What are those? Viral cat. V for value of supply determination. I for ITC admissibility, R for registration requirement, A for whether an activity amounts to supply or not, L for liability determination, Y. Next C for classification of goods, services or both. Next A for whether an applicability of a notification, exemption notification such like T for time of supply. So these are the areas with respect to which you can go for advanced ruling. Next third one, sir, where there is a mistake, error in the order or ruling given by authority for advanced ruling or appellate authority for advanced ruling. Can it rectify, can it amend it? Yes. But within a period of 6 months from the date of order. The such mistake can be brought to the notice of authority for advanced ruling or appellate authority for advanced ruling either by jurisdictional officer or applicant or on their own. However, if such rectification or correction will adversely affect the are going to cause adversely effect to the taxpayer or to the applicant being the business entity, then an opportunity of being heard has to be given to him. So this is the advanced ruling chapter. So simple, sir. Okay, 2 questions will be there. I'm not even focusing on them also because you can straight away understand them, sir. Even now, I don't discuss also. Just pause the video, go and check those 2 questions. You will definitely understand. Hope I covered the chapter in quite a decent way.
Hello friends, our next chapter is Transitional Provisions and Anti-Profiteering. So this is our last chapter in GST. So I want to appreciate you for coming till this part of the video, because I know if you are watching till this much length means I can understand how much committed you are, how much dedicated you are. I wish you all the very best, guys, and I think you're understanding the concepts also very well. Okay, please, if you understand the concept, comment your name and the place from where you are seeing this video. Okay, let us dive into the topic, sir, without wasting the time here. Sir, as we all know, for every chapter generally I'll fix the areas to be focused, then we'll discuss as per that. Sir, here this chapter is a small chapter, sir. Okay, with respect to transitional provision, there is only section 140, and anti-profiteering also there is not much content. If you see the material also, it contains total, considering the anti-profiteering, it's only 5 pages, sir. So I cannot segregate it again. What are the areas of focus? So I just quickly cover all the areas. Okay, you'll understand it in a better way, and I will be solving also 3 to 4 problems. So please practice those 4 problems, then you'll have better understanding. Okay. So transitional provisions, sir. So what does it mean by transitional provisions means? Let me give you a briefing about it. Sir, in pre-GST era, there used to be excise duty, VAT, these taxes. Okay. Now, from 1st July 2017, GST came. Okay. So now, I'm having this excise duty credit. I'm having this VAT credit. Okay. I mean, Sun VAT credit, VAT credit, these type of credits I am having. So, the question is about, can they be transferred into the GST era? Can they be called as our ITC? Can they be automatically taken as our ITC? So if so, how? What are the conditions to be satisfied? Okay, or else like previously in the pre-GST era used to be under composition scheme. I mean in service tax or even in excise duty, there may be similar composition kind of schemes. So then I might not take the self-VAT credits under. But now I am into regular scheme. Then on the closing stock and all, I can take ITC now. The same way previously it used to be an exempted, but now it is taxable. I can take ITC on closing stock. So those kind of transitional issues we are going to understand here now. And what are the availability options available for them to avail the ITC, those parts. So in this chart, if you have any toughness in understanding, because I can understand this chart also, but to make it much more simpler and to make it faster, I wrote a summary of it. What does section 140 subsection 1 says? Mean a registered person, the amount of VAT credits. So previously the excise duty or the service tax credits are called as VAT credits. Such VAT credits which are carried forwarded as per the return. Okay, I mean 1st July 2017 GST came. So on 30th June till 30th June 2017 they might have filed the excise duty service tax returns. Na? So as per that returns, whatever is the VAT credit they carry forwarded, such VAT credit can be
taken into the electronic credit ledger as ITC. So that it can be whatever they show it in the written as the standard rate, that can be taken as ITC into the electronic credit ledger. But what are the conditions, sir? That registered person, I mean, under GST, he shouldn't have opted under the section 10. If he's a composition scheme person under GST, then he'll not be eligible for ITC now. Next, such ITC may not be a blocked grade, or such ITC is not an inadmissible thing. Such ITC should be allowed to taken as credit as per the GST rules as well. Okay. Next, for the past 6 months, I mean prior to GST, the past 6 months they filed returns. And next, the finished goods which were going to be cleared. I mean, you are availing ITC now as per the returns, but the ITC with respect to the goods are exempted under GST. Okay, let's say previously I used to buy a good called A, but on A I used to avail ITC, and it is carried forward in my return as well. But now in GST era, the A is exempted. I mean, the A I is going to sell is exempted, so I need not to avail ITC now. So that's why the finished good which is going to be cleared is not under an exemption notification. If these 4 conditions are satisfied, then you can avail the SENVAT credit which is shown as per your return as ITC in the electronic credit ledger. What are the 4 conditions, sir? Registered person not opted for section 10, ITC is admissible, returns furnished for the past 6 months, and finished goods didn't cleared under exemption. Next, 140 subsection 2, sir. So you need little background before going into the section. Sir, what happens in pre-GST era means, let's say a capital good is purchased on 1st August 2016. The capital good purchased for 20 lakhs. On this, assume the excise duty at a rate of 20%. That means how much, sir? 2 lakhs now. What happens means, in the current GST era, we are availing this total 2 lakhs as ITC in the month of acquisition itself. But what happened prior to GST means, out of the total tax part on a capital good, the total tax part cannot be availed as SENVAT credit at a time. Only 50% of it can be availed at the time of purchase. In the year of purchase, the balance has to be availed in the subsequent year. So what happened means, only this 50% they might have availed prior to GST. The other 50%, since 1 year not yet completed, they didn't avail GDC, they didn't avail ITC. So now this 50% is claimed and it will reflect in returns. Okay, which it will be there in the returns as closing balance, or it might be used also. So such balance is already transferred as per 140 subsection 1. Now the part is, this other 50% we not even claim till, because the 1 year is not lapsed. So now what happens to that other 50%? See here, registered person is entitled to take unavailed SENVAT credit which is not carried forwarded in his return as on 30th June. Why it is not carried forwarded, sir? Because it didn't become eligible to claim by 30th June, because the 1 year is not yet lapsed. Okay, so it is electronic credit ledger. So now what here it is saying, registered person is entitled to take which is not carried forward also into electronic credit ledger, but the conditions are, such person is not opted for section 10 in GST, and such SENVAT credit is not a blocked one or inadmissible one. Fine. Now we are into the same relevant points answer. The closing balance of SENVAT and VAT can be taken as credit in electronic credit ledger. 6 months returns has to be filed. And one more thing, sir, the GST Tran 1. To reflect such balance credits into our electronic credit ledger, we need to file GST Tran 1, and it has to be filed within 90 days from 1st July 2017. Okay. The balance ITC on unavailed capital goods can also be taken. I already said. Excise duty, CVD, special CVD will be carried forward as CGST, whereas VAT to be carried forward as SGST. See, sir, how they will be carried forward. Excise duty, CVD, special CVD. These 3 will be carried forward as CGST, whereas VAT will be carried forward as what? SGST. Okay. Next, one more thing, sir. Credit on duty paid stock. So this concept is about, let me take one more fresh page and, sir, pre-GST era, you are a first stage or second stage dealer. First stage or second stage dealer. So what happened means, SENVAT credit available? No. For first stage and second stage dealer, SENVAT credit is not available. But when it comes to post GST, in the GST era, for them ITC is eligible. They can claim ITC. But previously they are not eligible to claim SENVAT credit. Understand this. Next, second point, sir. If they are a manufacturer of exempted goods,
Now, in previously, what there is no Senvat credit allowed, but in GST they became taxable. So again, ITC is allowable now. Next third one, in pre-GST they are unregistered. So whether Senvat credit is availed? No. But in GST they are registered. So can they avail ITC? Yes. So these are the three. If you see, not liable to register under previous law, engaged in manufacture or provision of exempted goods and services. Third one, first stage and second stage dealers, nothing but they are wholesalers. So what happened means pre-GST era, the first stage and second stage dealers, wholesalers are not availed as ITC. Wholesalers are not eligible to take the Senvat credit as input tax. Senvat credit means nothing but excise duty part or service tax part. These are not allowed as input tax or Senvat credit in the pre-GST era. But in GST, there is no such kind of distinction. No, whether you are a manufacturer, or wholesaler, or you are a service provider, you are eligible to take the input tax as ITC. So the point is, previously they didn't avail Senvat credit. Now on 30th June 2017, they are having closing stocks. Okay, they are having closing stock, let's say worth 30 lakh rupees. On this 30 lakhs, they didn't avail any Senvat credit because that time they are not available or eligible to take Senvat credit. But from 1st July, they are into GST, and when they sell this 30 lakhs, they need to pay GST on this. Okay, so now what the law giving them a provision to take the Senvat credit part on this 30 lakhs as ITC, which will be credited into your electronic credit ledger. Hope so you are getting my point, sir. Previously they are ineligible or they are not authorized or not eligible to claim as Senvat credit, but they are having closing stock regarding that, a part of closing stock on which they are not eligible or not claim Senvat credit. But now this closing stock is coming into GST era and it is becoming taxable under GST. So since it is becoming taxable under GST, the tax paid on this closing stock value also can be availed as ITC. Na? So that's why they are giving us a provision to take the tax part on this closing stock as ITC. So see, registered person. Okay. So now what are the conditions they are saying, sir? Check whether documents available or not available. If documents are available, then what they are asking? Check whether they are in possession of invoice. Yes. And the invoice shouldn't be older than 1 year. Okay. Documents available means for the closing stock, invoice must be there and the invoice shouldn't be older than 12 months. Then the ITC is allowed. Okay, the service tax, central excise duty part, CVD, special CVD part will be reflected as CGST, whereas VAT entry tax and central sales tax will be reflecting as SGST. So what if documents are not available? If documents are available, not available, they proposed an alternative scheme like if the rate of GST on those goods is 18% or more. Okay, so this closing stock, okay, see here I am saying closing stock now. This closing stock, we don't have documents available. Now what they are asking is, like, take the selling price of this closing stock in GST. Let's say they are selling it for 45 lakhs. Okay. Now find out whether it is intrastate or interstate. Okay. Okay, we are taking two options, intrastate as well as interstate. And check now whether the tax rate is 18% or less than 18%. Okay, greater than 18% or less than or equal to, not equal to, sir, only less than 18%. Here it is. Less than 18%, greater than or equal to 18%. Okay, so now what they are saying is calculate the tax on this 45 lakhs. Here greater than or equal to 18% means, so 45 lakhs into 18% here. Okay, into 60%, now you can take it as ITC into 60%. If it is interstate, sir, 45 lakhs into 18% into 30% only you can take it as ITC. So you see here they are giving the value, no, 60% and 30%. This is on what? On that sale value in GST era. Okay, on that multiply it with the tax rate, whether 18% or less than 18%. If it is more than 18%, take 60%. If it is less than 18%, take 40%. Here it is 20%. So no C. Okay, if it is less than 80%, then 45 lakhs into 18% into 40%. Here it is 45 lakhs into 18% into 20%. There is a problem also, sir. While we doing that, we'll understand it clearly also. Next, credit in respect of exempted and non-exempted goods. Sir, we used to supply both exempted and non-exempted goods in the pre-GST era. But when it comes to GST, both the goods became taxable. So what we might have done in pre-GST era, we might have taken ITC only with respect to the taxable goods. I mean, not ITC, Senvat rate, which will be reflecting in our return. That anyhow, as per 140 subsection 1, we can avail as ITC now. But what about the tax which we didn't claim previously?
Okay, because of they are used for exempted supplies that now we can avail as ITC even from the common inputs also. The part which we didn't claim previously now can be availed as ITC. Senvat credit carried forwarded which can be taken. Credit or Senvat or VAT in respect of input semi-finished goods in stock attributable to exempted goods and services which are now taxable can also be availed. Okay. Now coming to 140 subsection 6 sir. What this section says? Previously you are under composition scheme sir, but now you are under the regular, now under GST era you are under a regular scheme person. Now on 30th June 2017, since you are under composition scheme, you didn't avail any Zenvat credit or VAT credit, nothing you availed, but you are having some closing stock. So on such closing stock now is brought into GST and now it's becoming taxable now. So that closing stock relevant tax part also you can avail as ITC. So taxpayers paid fixed rate or fixed amount before GST, nothing but composition schemes kind of. Now they are under normal scheme. They can claim credit on input semi-finished goods and finished goods. So they can claim the tax part as input tax now, which were relevant with respect to the inputs, semi-finished goods and finished goods. Conditions. They are used for making taxable supply. Sir, important one sir. There is a question also regarding this. They are used for making taxable supply, and again they are not registered under section 10. They are under the regular scheme. They are eligible to claim ITC. They are having invoice, and the invoice is not older than 12 months. What are the 5 conditions, sir? Those are used for making a taxable supply. I mean the closing stock with respect to which you want to have now avail ITC. They are used for making a taxable supply. Clear. Second one, the person who is availing this ITC is not registered under composition scheme. Third one, he is eligible to claim ITC or such inputs are eligible to claim ITC. Next, he is in possession of invoice and the invoice is not older than 12 months. Next, credit on input service by an ISD. So what is here, sir? Now, ITC on service prior to 1st July 2017 by an ISD shall be eligible for distribution even if received after 1st July 2017. What is this concept, sir? Sir, what does it mean by input service distributor concept? It's not a new concept. It is there even in service tax. If a head office receiving, okay, sorry, it was not there in pre-GST era, sir, because their service tax used to be centralized registration. Now, what happened is, now I am registered, the day GST came, I registered under the ISD, okay, input service distributor. Now the problem is, I want to distribute the credit to my branch officers based on the old excise duty invoices, service tax relevant invoices. Can I do that? Yes. If any service prior to 1st July 2017 by an ISD shall be eligible for distribution even if invoice received after 1st July 2017. Next, sir, as I said, previously in service tax or excise duty, there used to be centralized registration. So even though they are having 4 or 5 factories in different states, they used to have only centralized registration. So they have Senvat credit for all the 5 branches or the 5 factories commonly. Now the problem is, the moment GST came, these 5 factories which are there in different states cannot take a single registration. They should go for different registrations for each state. So now in GST there are 5 registrations. But whereas in pre-GST era, there is only 1 registration. Now, from this 1 registration, okay, there is in pre-GST era only 1. But now there are 5. So, the question is, to which registration the credit has to be given? Or whether the previously on the credit, I mean, which is reflected as per the return or not reflected as per the return, but which is eligible. So, such credits, can it be given to only one particular person? Or it has to be given to all the 5 registrations which were now came? If so, has to be distributed to all the 5, whether it has to be distributed as per the turnover basis or what basis. See, previous service tax law or excise duty, they are centralized registration. Senvat carried forwarded, okay. If return filed within 3 months, okay. Such credit may be carried forwarded to any of the registered person having same PAN. Since all these 5 factories will have same PAN, you can carry forward the credit to any of those ones, no problem with it. Okay, you need not to distribute based on the ratio of turnovers. Okay, this made our life a little easy. Now, reclaim of the reverse ITC, another concept, sir. Reclaim of the reverse input service claim due to non-payment. Sir, if you already watched ITC chapter, so that's why I am saying. 16 subsection 2 has a proviso 2, sir, which says recipient has to make the payment to the supplier within 180 days from date of invoice. Otherwise, the ITC he availed has to be reversed. So, okay, such concept is there now. Fine. Okay, it was there even in service tax also. How it is there in service tax means if a recipient didn't pay for the service within 3 months, then the send-back credit he availed has to be reversed. Now it became 180 days, but in previous era, in service tax era, it used to be 3 months period. So see, send-back credit on input service allowed on credit basis. Payment not made within 3 months from date of invoice. Yes, credit needs to be reversed. The problem is, if you see the 16 subsection 2 provision 2 also, it says like, yes, if not made within 180 days, reverse it. Reverse the ITC event, add it to your liability and pay the interest also on it. But subsequently, okay, maybe after another 1 month or 2 months, recipient makes the payment, he can re-avail the ITC na. In the same way, in service tax also, if he didn't pay the payment within 3 months, and that credit will get reversed. But subsequently, if the recipient makes the payment, then he can avail ITC na. The same way, so he can avail ITC. But in the meanwhile, by the time he makes the payment subsequently, GST came. So now the question is, can he re-avail it? Yes. Payment made within 3 months from 1st July 2017, credit can be reclaimed. But see the conditions, sir. Subsequently, you have to make. But in GST, there is no time period for subsequently. By within time, what time he has to make the payment to reclaim the ITC. There is no such time limit. But here they are saying like the payment has to be made within 3 months from 1st July 2017. Okay. Next. Goods and capital goods belonging to principal are lying at the premises of agent. Now agent can avail the credit. Agent should be registered person. Principal and agent both should declare the details of stock. Invoice should be older than 12 months and principal should reverse and not avail ITC. Okay. Now we will jump into the question, sir. If you see the first question, Mr. Gopal is a taxable person under GST who is a wholesaler having stock of 5 lakhs. Such person has supplied these goods for 5 lakh 60 and on which he paid CGST 9%. So in GST, okay, pre-GST era, okay, GST is having stock, okay. On the day GST introduced, he is having closing stock of 5 lakhs. That means the stock carried forwarded from the pre-GST era. Now these are sold for 5 lakh 60,000 at 9%. Okay. Now they are asking us to calculate the ITC allowed under 140 subsection 3. So that means what? In pre-GST era, since he is a wholesaler, he cannot take it as send-back trade. Now they are asking us how much he can take. First, if he is in possession of invoice. Second, if he is not in possession of invoice. If he is in possession of invoice and assume it is not older than 12 months, then the total basic excise duty, which will be reflecting as CGST, and the total VAT will be reflecting as what? SGST. Okay. Next one. If he is not in possession of duty paid document, that means he is not having any invoice, then what to do? Sir, I already said, check whether it is intrastate or interstate. Okay, is there any clarity here? Since it is given as CGST and SGST, we are taking it as intrastate, and the tax rate also together it is 18% or more. Then what is the percentage we should take, sir? 60%. This part, sir. This example we did not. This one. Okay, 60%. So 5,60,000. On this we should do what? Tax calculation 9% and 5,60,000 into 9%. Okay. Now into 60% which is CGST credit and into 60% which is SGST credit. See here. 50,400 will be the tax. 5,60,000 into 9% on that 60% and the other one also 60%. Clear? Next see, sir. Write a short note on the conditions to be satisfied to take credit under 140 subsection 6. Nothing but previously under composition scheme, now under regular scheme. I already said, sir. The first condition is like he should be registered in GST as a regular scheme person. Not under composition scheme. Second one, sir. So, such closing stock which were now brought into GST should be used for making taxable supplies. Second point, sir. Third one, they should be having an invoice and such invoice shouldn't be older than 1 year. Fourth point, sir. Fifth one, sir. Those goods are eligible to claim ITC even under GST. ITC is admissible or eligible. So that is about the question number 4, sir. Now question number 5. Okay. Question number 5, if you see, sir. Manufacturer of product A and B, sir. Product A cleared on payment of duty, whereas product B is exempted from excise duty. Sir, they are referring excise duty. That means pre-GST era, they used to produce two products, A and B. A is taxable, B is exempted. Now, inputs with respect to A are 2 lakhs, suffered excise duty 25,000. Okay, this already they might have claimed as credit. Why? Because A is the taxable product. So, this 25,000 they might have taken as send-back credit, which will be reflecting in their return.
pre-GST returns. Whereas product B 1 lakh suffered excess duty, paid 12,500. Okay, with respect to 12,500, they didn't avail previously, nor it will be reflecting in their return. But now they can take. Because if it becomes okay, let me tell you. Finished goods of product A worth 10 lakh and product B worth 5 lakhs is in stock. How much IDT is available? Now in GST, both A and B are taxed. Since both A and B are taxable in GST era, with respect to B, whatever is the input which was not availed previously can be availed now. So how much this 12,500 we can avail? This 25,000 already it reflects in return. Now they are having common inputs also, sir. Common inputs 3 lakhs. Out of this, product A and B related total duty is 37,500. Now this 37,500 has to be apportioned between A and B. Why? Because A related part will be reflecting in return. Why? Because it is taxable related, so it will be reflecting in the return, obviously. What happened previously? Since B is exempted, the inputs exclusively related to B, they didn't avail the SITs. The inputs which are commonly used for both A and B also, they might have availed proportionately with respect to A. The other part they might have left because it is exempted previously. Now it also can be availed as ITC. See, inputs used exclusively for A, 25,000 claim, and commonly related 25,000. How it came? 37,500 is the common criteria, they took that and multiplied it to by 10 by 15. How this 10 by 15 came, sir? Here they given the turnovers as turnover of product A 10 and product B 5. So since they are finding out for the product A, they made it as 37,000 into 10 by 15, 25,000. This 50,000 will be reflecting in return and it can be availed as ITC even now. But now as per 140 subsection 4, sir, input used exclusively for a product B, 12,000, sorry, 140 subsection 3. Sorry, here total 3 sections are coming. 140 subsection 1, which says like you can take credit which is reflecting in your return. 140 subsection 3, previously that is exempted, but now it became taxable. So the credit with respect to that you can avail. So this 12,500 you can avail, which is as per 140 subsection 3. As per 140 subsection 1, 50,000. Now 140 subsection 4 says like even the proportionate part which you didn't avail, okay, it's not exclusively related to exempted supply, it is related to taxable and exempted. Previously you claimed only the part relevant to taxable. The part relevant to exempted you ignored because that time it is exempted. But now since it became taxable, that part also you can avail. That means 37,500 is the common criteria into what is the B's related 5 by 15, which came to another 12,500. So this also can be availed as ITC as per 140 subsection 4 note. Now question number 6. Mr. X has cleared goods from his factory on 20th May for sale to Y for 5 lakhs. Effective rate of excise duty 12.5%. However, excise duty 62,500 as paid on 6th June. The consignment received on 5th July. Sir, since even though the tax paid in previously, but if it is received once GST has arrived, they can avail ITC. Yes, why eligible to avail ITC of 62,500 provided he deals with supplying the taxable supplies. However, they should be accounted for in books of accounts within 30 days, within a period of 30 days from the 1st July 2017. If such 30 days is not enough, then they can ask the commissioner. Commissioner can extend the time period for another 30 days. So these are the questions, sir. I discussed 3, 4, 5, 6. These are relatively important from this chapter. So continuing with other topics, sir. First one, section 170, rounding of tax. Sir, in GST, either the tax, interest, penalty, fine or any other sum payable has to be, or even the refund amount shall be rounded up to the nearest rupee. Okay. Now we are into the concept of anti-profiteering. So now let us understand what is called anti-profiteering. So see, if you in pre-GST era, sir, there used to be excise duty, VAT, service tax, entertainment tax, luxury tax, octroi tax. So there used to be so many such kind of taxes on a product. Let's say we are talking about one specific industry. Let us assume the pre-GST era taxes average of all those taxes, either the state or central levies, altogether the taxes used to be around 20% in pre-GST era. But we know on majority of goods and in major industries, the tax rates compared to post-GST era and GST era, the tax rate has come down. So whereas previously the average tax rate used to be 20%, but now in GST it came to only 18%.
So there is a decline of 2% tax rate now here. So which is beneficial only, no? So such 2% tax is decreased, means the price, the cost or the prices will get decreased. Na? So the price has to be decreased compared to the pre-GST year. Okay, and such a benefit of reduction in taxes has to be passed on to the consumer. Same way, in pre-GST era, we know in certain places SENVAT credits are not allowed. Let's say in interstate transaction, let's say wholesalers are not allowed to take. So because of that, since SENVAT credit is not allowed, that would be added to their cost, and their cost has hiked up. The cost has been increased. But now in GST era, ITC is allowed. Even there is no such restrictions, whether you are a wholesaler or trader, whoever you are, you can avail ITC. So then cost is getting decreased. So when your cost decreases, you cannot enjoy the more profit. You should reduce the prices and shall pass on such benefit to the consumer. That's the intention of GST. But what happens means the businessmen may be greedy. So what they do, they will, instead of transferring the taxes to the recipient, they might eat away instead of transferring the benefits to the recipient, they might eat away the whole benefits which were brought by GST. To control that, to countermeasure that, anti-profiteering provisions has been introduced. To counter them, anti-profiteering provisions has been introduced. So now see, any reduction in rate of tax or supply of goods, services or both, or the benefit of ITC shall be passed on to the recipient by way of reduction in tax prices. So it should be reduced. Okay, the sale price has to be reduced compared to the previous year, and in such way, by way of price reduction, the benefit should be passed on to the consumer. So to counter check that every time, okay, whether everybody following this or not, to check this, anti-profiteering committees has been constituted. So National Anti-Profiteering Authority is being constituted by central government to implement these measures. However, later on they decided that there is no need of constituting a separate anti-profiteering authority. The Competitive Commission of India itself will act as the anti-profiteering authority. Government has empowered CCA to act as anti-profiteering authority. Okay, what are its duties? Very important question, sir. Duties of authority. So it's always look at various transactions and see whether any reduction of tax rates or whether any benefit of ITC, okay, is not passed on to the recipient or not, to determine whether in the tax rate or benefit of ITC has been passed on by the seller to the buyer by way of reduction in the prices. So they will be monitoring constantly whether it's being carried out or not, and they identify the taxpayers who has not passed on such benefit, and they'll order such supplier to reduce the prices immediately, because to pass on the benefit to consumer and return to the recipient. Okay, if already till now they collected excess prices, now such amount has to be returned, and even the authority can order to impose penalty, and they can even cancel his registration if he did it in a massive scale. Next, they even authority will even provide a performance report to the GST Council for every month 10th, like how they counterfeit this kind of profit rings. Okay, all this. Now the process you understand. Any consumer who felt like the supplier is not passing on the benefit even after introduction of GST will make an application to state screening committee, or even he can make an application to the standing committee. Okay, we can either make to a state screening committee or to a standing committee. So these two committees will confirm prima facie evidence of profiteering. They'll just do a preliminary study on prima facie investigation. If they feel like yes, maybe there might be chances of anti-profiteering, then they will be transferring that to the Director General of Anti-Profiteering. He will go and investigate it in detail. He will collect the various details of their inwards and their outwards and the previous year how it came. So detailed investigation will be carried out by the Director General of Anti-Profiteering, and he will submit a final report to the National Anti-Profiteering Authority, which will be the final person to decide whether there is anti-profiteering or not. If so, what extent, what is the penalty to be made, all those will be decided by the National Anti-Profiteering Authority, which is now nothing but Competitive Commission of India, for determining and passing appropriate order and ensure consumers benefit. Okay, order of the authority. What kind of order it can make? It can make reduction in prices, and it may order to return the recipient the excess amounts collected along with interest at a rate of 18%. And if no recipient can be found out, because it already happened long time back and they all are retail customers, so if recipient cannot be found, then the amount, at least 50% of such amount has to be transferred along with interest to the consumer welfare fund, and they should impose penalty if needed, and they can even cancel registration. So any of these kind of orders can be made. Next, what are the following noteworthy things are here? They should pass order within 6 months. Okay, I mean here, from whenever the Director General of Anti-Profiteering gives an investigation report, from there within 6 months, the Competitive Commission of India should give a order. Okay, next, whereupon receipt of report from DGAP. So even this Director General gives an investigation report. If Anti-Profiteering Authority feels that it requires further investigation or inquiry, it can order such. If the eligible person does not claim the refund amount, then it will be transferred to Consumer Welfare Fund. And penalty for profiteering will be 10% of profited amount if it is not deposited within 30 days from order. Okay, already in the profiteering order, they might give such some penalty. Now, even not for depositing the profiteering amount within 30 days from the order, also they will be levying extra penalty of 10% of profited amount. Sir, on this chapter also there are one or two questions. You could see straight theory questions only. First one, write a short note on anti-profiteering committee and its duties and powers. What are its duties, sir? Its duty is to monitor whether the benefit of ITC has been passed on by way of reduction of prices, or reduction in tax rates has been passed on to the consumer by way of reduction in prices or not. Identify who are not doing the such kind of practices. Third one, like issue an order to them for reduction of prices, and issue an order to return the amount collected excessively to the customer, or else issue an order to imposing penalty. So those orders can be given, and even they should give a report to the GST Council every month by 10th. Okay, can observe what are the observations they made, how well the anti-profiteering measures are working. So on that they should provide a report. The second question also same or like same. Write short note on duties and powers of anti-profiteering committee. Okay, we covered it very well, sir. Okay, hope so you understand it. Thank you all.